Hello friends, I hope you are all doing good. Welcome to this amazing class wherein we will be discussing about marathon. We'll be covering the marathon in this video. We'll be taking the CA Intermediate Marathon for your upcoming examination, which will this marathon which you are seeing will be applicable for your May exam, September exam and January 26 examination. May and September 25 as well as January 26 examination. And the notes which we are going to use over here, they are fully amended notes. You don't have to worry about any type of amendments or should I study anything extra. Answer is no. Already I have made I have made the amendment video which is already uploaded. But sir, I want one full revision of the entire topic, full discussion on the entire topic with amendments. If you want that, then this is the video which you have to watch. Now, before I start, there is one. There may be some questions which you may have. Sir, where will I get the material, sir? This material will be attached in the description. I'll ask the team to please attach the material also under this description. You can definitely take the material from there. Now, sir, apart from that, sir, should I purchase because I heard that there are a lot of amendments which are applicable for the May examination, September examination and January examination, and I have heard that there are a lot of changes which is made under income tax law. Should I take a new course or should I purchase the course and should I read for my examination, or if I watch this amendment lectures, will it be sufficient? See, what I would recommend you to do is watch this amendment video. If you're already done with your classes, no problem. Watch this amendment video. Go through the entire video. You'll come to know about your confidence, whether the amendments which are there, the changes which are there, whether you will be able to cope up with them or not. Meaning whether you will be able to answer those amendments properly or not. You will come to know about that. If you feel that you have not understood the amendments properly, or if you feel the changes which are made are some changes wherein I will have to need some extra question for practice, then better go for a video. But my personal recommendation is first watch the entire amendment, correct? Watch the entire marathon class. So once you watch the entire marathon class, take this material which I'm going to share with you. This also has questions, meaning I have, say for example, this is the concept of tax rates which we are seeing over here. With tax rates, I have done questions also. These questions are what's completely amended questions which is applicable to you for your examination. So this is not only with this chapter, for all the chapters, okay, for all these chapters. So if you see for direct tax only, the notes which you are going to get will be almost around how many pages, sir? The notes which you are going to get will be almost around 370 pages notes. So this is a very comprehensive notes wherein we'll be covering the entire the theory part, and we will be covering the practical questions also, and all these are fully amended. So you can definitely, my personal recommendation, instead of me telling you that directly go purchase the course, you watch the new recordings, etc., my recommendation to you will be, please watch this marathon completely because it is fully amended. Please watch it completely. Then you download this material which is there. You try solving the questions, try understanding the questions. If you feel that this is sufficient, then very good. After that also, if you feel that no, I need a little extra confidence, sir, I have seen the questions but I want to still know what approach did you follow, then I would recommend you to go purchase the course. See, majorly there are changes in two chapters, major chapter which is your tax rate topic and your capital gain topic. So even if you if you want to if you're purchasing course, definitely you can go to our website, and hardly it will cost you 1,250 rupees. You can definitely go to our website. So I think this is something which you will already be knowing, so but I'll just show it for your knowledge purpose. So please note, what is my personal recommendation? First, see the marathon classes, then solve the questions from the material. After that, if you feel that it is required, then only go for it. So you can go to our website, and if you click on this online Arivupro online mode, over there you will be able to find the courses which they are offering on recorded mode. So you can take that, and it will cost hardly 1,250 rupees. So if you feel that investing 1,250 rupees is worth and I can afford to invest so much, then definitely go for it. Okay, so shall we start now? Yes sir, we'll start now. So sir, this marathon is for whom, sir? This marathon is for CA Inter students, group 1 students, and this is for what topic, sir? Your paper called as paper number 3, which is taxation. This taxation paper which is there, that is there for 100 marks. This has two parts in it, direct taxes and indirect taxes. So direct taxes for how much marks are 50 marks, and indirect taxes for how much marks. Indirect taxes is also for your 50 marks, wherein you will have 15 marks MCQ question and 35 marks descriptive questions. So meaning what, sir? For income tax you will have 15 marks MCQs and 35 marks your practical questions, and for GST also you will have 15 marks MCQs and 35 marks will be your practical or descriptive questions. Sir, that I understood. Sir, what will be my question paper pattern in my examination? Your question paper will have two parts. One is your part 1, which will cover your MCQs, which is for 30 marks. Part 2 will be your descriptive question, which will be for remaining 70 marks. In part 2 there will be two sections, section A income tax, section B which will talk about GST. Now sir, how will my MCQ questions come in the examination? Normally you will have case study based questions. So there will be totally 4 questions which will be case study based question, meaning they will give some story to you. Based on that story they will give you some questions, and you are required to answer those questions based on the story which they have given. And other questions will be so now normally what we have seen is in each case study normally there will be 3 questions, and in some cases there can be 4 questions in one case study, and there will be other MCQ question for 1 or 2 or 3 marks, which is the leftover marks. Now case study based question, normally one question will carry 2 marks. Okay, so this is with respect to MCQ, and with respect to what, sir? With respect to your section 2, which is 70 marks question paper, which is your descriptive paper or practical paper which you have. You will have section A income tax and section B which will contain your GST. Section K income tax questions, normally meaning your 90% of the questions which are asked in the income tax, 90% of the question, meaning almost you can say 30 marks questions which are asked in the examination. Descriptive income tax is for 35 marks and GST is for 35 marks. So 30 marks questions which are asked in the examination. No, these 30 marks question which are asked in the examination will be completely practical question, meaning they'll ask you to compute something, they'll ask you to solve something in your life, correct? Sir, what about MCQ questions? MCQs will be practical based questions, as well as there will be some theoretical questions also. Basically case study based questions will be given in MCQs. But under income tax law, the descriptive paper which is there, that they will ask you to compute the income, they'll ask you to compute the tax, they'll ask you to find the income from house product, etc. Whatever that different topics they are asking. Sir, what about GST, sir? GST also it will be same. No, GST practical will be, say 50% will be practical and 50% will be case study, or I can say 30%. If I want to be exactly perfect, then 30% of your questions will be practical questions, 30% of or 40% of your questions will be case study based question. Under GST law, the questions which are there will be normally what's a case study based questions, and the remaining 30% which is there will be straight away lifted theory question. Under your GST law, straight away 8 mark question they will directly lift from the book and ask you. That is complete theory question. They'll give some points to you, you just have to write the theory for that point. That is under GST. Sir, what is the question paper pattern in part 2, sir? Part 2, it will say, now for example, if I talk about income tax as well as GST, they will have totally 4 questions, wherein question number 1 is compulsory. Out of other 3, you are supposed to answer 2 questions. So for example, under income tax law, it will contain in part 2, question number 1, 2, 3, 4 will be income tax questions. 1, 2, 3, 4 will be income tax question, wherein question number 1 is compulsory question, and out of 3 questions you have to answer any 2 questions, which will be for 10 marks. Sir, under GST will be question number 5, 6, 7 and 8. These 4 questions will be from for GST. Question number 5 is compulsory question, and out of remaining 3 you are supposed to answer 2 questions. Sir, one more question I have, sir. What is the other question which you have? Sir, what are the amendments which are applicable to my for my examination, sir? So there are a lot of changes which Nirmal Aunty is making every now and then. Whether all those changes which Nirmal Aunty is making every now and then, is it applicable to for my examination? Answer is no. Our institute says normally whatever changes are made 6 months before your examination will be applicable to you for your examination. Sir, what? All the changes made 6 months before your examination will be applicable to you for your examination. So if you're writing your examination in May, it is 30th October. For example, if you're writing your examination in May 25, for you the cutoff date is what, sir? 30th October 2024. If I am writing in September 25, sir, for you it is 28th of February 2025. If you are writing in January 26, for you the cutoff date is 30th of June 2025. Okay, so this is the cutoff date for your examination, meaning that these changes will be applicable to you for your examination. Now, you don't have to worry about the changes, because changes under income tax law normally are made during budget only. Well, normally it will be only once in a year, and that will also be during budget normally. However, under GST, the changes will keep on happening because it is a new law. The GST Council will have some meetings which they'll do, and based on that meeting, they can also make the changes. Now, sir, we have understood about this. Shall we start the discussion on the topic, sir? Okay, first point is, what do you mean by tax? Tax is important source of revenue to the government. It is a compulsory payment which you'll have to make to the government. So basically, there are two types of taxes. One is called as direct taxes. Another one is called as indirect taxes. In case of direct taxes, the incident and impact is on the same person. Whereas in case of indirect taxes, the incident and impact of the tax is on two different person. In case of direct tax, they are progressive in nature, meaning as and when your income is increasing, the amount of tax which you have to pay will also increase. And indirect taxes which are there, they are regressive in nature. Sir, what do you mean by this, sir? Meaning, I don't care how much you are earning, the amount of tax which you have to pay will remain same, because indirect taxes are on goods and services. On each and every product they have given the tax rates, and whatever tax rates is given in the law, that will be applicable to you for your examination. Indirect taxes are on goods and services, whereas direct taxes are on what, sir? Income. Now, the board which is taking care of direct taxes is called as CBDT, Central Board of Direct Taxes, and the board which takes care of indirect taxes is called as CBIC, Central Board of Indirect Taxes and Customs. Sir, okay, sir, this is clear, sir. Now, what are the constitutional provisions with respect to taxations? So there are three articles in our Constitution of India which are important from taxation point of view: Article 265, Article 246, and Article 245. Article 265 says no tax can be levied or collected unless there is an authority of law. And Article 245 gives the power to central government and state government to make the law. Article 245 says central government has the power to make law for whole or any part of India, and the state government has the power to make law for whole or any part of that particular state. And we have one more article called as Article 246. Article 246 has a schedule called as schedule number 7. In this schedule, there are three lists: union list, state list, and concurrent list. Whatever is there in union list, whatever matters are contained in union list, who can make the law? Only central government has the exclusive power to make the law. Similarly, whatever matters are there in state list, only the state government has exclusive power to make the law. And similarly, whatever matters are there in concurrent list, the central government and the state government can jointly make the law. In your union list, there is an entry called as entry number 82. This entry 82 of your union list is giving power to central government to collect taxes on income. This entry number 82 says that central government has the power to collect taxes on income except agricultural income. And sir, can we collect taxes on agricultural income? Yes. Entry number 46 of state government of state list has given the power to the state government to collect tax on agricultural income, but as of now, no state government is collecting tax on agricultural income. Okay, not okay. Yes, sir. Sir, what are the sources of income tax law, sir? What are the components of income tax law? Income Tax Act 1961, Income Tax Rules 1962. Income Tax Act will have your main provisions of the law. Income tax rules are supporting the main provisions, meaning it is supporting the act. Then you have Finance Act for your examination who are writing in May 25, September 25, and January 26 for your examination. What is the Finance Act which is applicable to you? Finance Act 2024 is applicable to you. Then notification and circulars will be issued by department, that is also one component, and also the judicial decisions or case laws. These are the different components, meaning when I say income tax law, it contains all these different things. When I say income tax law, you have to study, that means you have to study Income Tax Act, Income Tax Rules, Finance Act, notifications, and judicial decisions. Now, please, sir, what do you mean by income? Income means receipts, but all receipts are not income. Receipts can be of two types: capital receipts and revenue receipts. Revenue receipts are normally treated as income unless they are specifically excluded, whereas capital receipts are normally not treated as income. Capital receipts are normally not treated as income unless until they are specifically included. Sir, all this is fine, sir. Is there any difference between sources of income and heads of income? Yes. Sources of income means the place from where the income is earned. Heads of income are the place where you will put that income. Sources of income can be many. All the different sources of income, no, you will put in 5 different heads. So there are totally 5 heads of income under income tax law: income from salary, income from house property, income from business or profession, income from capital gain, and income from other sources. Whatever different income which you are earning, no, that will go under these 5 heads. Sir, what do you mean? What do we do under income tax law, sir? You do 2 things under income tax law. First, you compute the income and then tax on that income. So you have to compute the total income of the assessee or the person and the tax on that total income. Sir, how do I compute the total income? You should take all the 5 heads of income. Once you take all the 5 heads of income, you will get something called as gross total income. Of course, you are required to do adjustment of clubbing and also the provisions with respect to set off and carry forward. Then you will get your gross total income. From the gross total income, you subtract your deductions under chapter 6A, you will get your total income. Sir, yes, sir. What is the next point, sir? What is the next point? Section number 4 is the charging section of income tax law. Section 4 says income tax is charged for every assessment year on every person on the total income earned by such person in the previous year at the rate specified in Finance Act. What is this point telling? Income tax will be collected by the government from you in every assessment year. From whom they will collect, sir? From every person they will collect. When they, which type of person, sir? On what amount, sir? On the total income of that person they will collect, which he has earned in which year, sir? In the previous year. At what rate will they collect, sir? At the rate specified in Finance Act. See, basically, when I talk about year, a financial year under income tax law is divided into two categories. One is called as previous year, another one is called as assessment year. Sir, what is previous year? Previous year is the year in which income is earned, and assessment year means the year in which tax is required to be paid. Hey, what is previous year, sir? Once again, can you please repeat? A previous year means the year in which income is earned, and assessment year means the year in which the tax has been paid. So the year in which the income is earned is called as your previous year. For your examination, what is the previous year? 24-25. And what is the assessment year for your examination, sir? It is assessment year 25-26. Okay, not okay. See, normally the previous year is a period of 12 months. Normally, what is previous year? It is a period of 12 months. Starting from, normally it is a period of 12 months, but in two cases, the previous year will be period less than 12 months. Previous year, in which two cases, sir? See, normally previous year is 12 months period, correct? 1st of April till 31st of March. But if you are starting any business in the middle of the year, or if you started earning any income from middle of the year, then for that income, for that business, the previous year will start from that date from where you have started earning that income. So where a new business or profession is set up in the middle of the year, or where a new source of income is generated in the middle of the year, the previous year for that particular income and source will be that date in which you started earning it. Then, sir, what do you mean by persons? You said that in total income of a person. What do you mean by a person, sir? Person includes. It is an inclusive definition, meaning apart from what you generally understand by the word person is a person. Apart from that, these people are also included in person. Who are these? Person includes individual, like you and me. We are all individuals, natural person. Then person includes what, sir? HUF. HUF means what, sir? HUF means what? Hindu undivided family. Person will include partnership firm, including LLP. Person will also include a company, body corporate, private limited company, foreign company, domestic company, whatever type of company. And a person will include AOP or BOI. And person will include local authority. Person will also include artificial judicial person. Your universities are there, no? Bangalore University is there, we have Chennai University, Madras University, etc. Different universities which we have, or DATs, God, etc. They are also a person in the eyes of income tax. Sir, what do you mean by assessee, sir? I have heard this somewhere, sir. There is something called as achachi. What do you mean by achachi? Achachi means a person who is liable to pay tax or any other sum under this act. Who is an assessee? Assessee means a person who is liable to pay tax or any other sum under this act. And it will include deemed assessee, representative assessee, and assessee in default. Sir, what do you mean by representative assessee, sir? Representative assessee means, for example, I have a daughter who is 10 years old. Now, my daughter is a very good singer. So my daughter is a very good singer. So because she is a very good singer, I have she went to Super Singer competition. She went to Indian Idol competition and she won some awards over it. Now in this case, my daughter is there too. She has earned 10 lakh rupees. She won the event and she won 10 lakh rupees. Now my daughter cannot file her income tax return. I will file her income tax return. I am going to be her representative assessee. I am going to represent her. So I am her representative assessee. Sir, what do you mean by deemed assessee? Sometimes what happens is income tax department will send a notice to you. Say there are some transactions which is happening in your bank account. Income tax department is sending a notice to you telling, hey, how come you are getting so much money in your bank account? Now, though you are not a person who is liable to pay tax to the government, but because there is a notice which is sent to you and asking the income tax department is asking some clarifications from you, you will be called as what, sir? Deemed assessee. Sir, what do you mean by assessee in default? Assessee in default means a person. See, he has filed his income tax return properly. He has paid his tax also properly, but he filed his income tax return late. Because he filed his income tax return late, he had to pay something called as late fee. He did not pay late fee. He will be called as achachi in default. Then, sir, Now come to the main topic, sir. What is the main topic? Sir, now come to our main discussion, sir. What is your main discussion? Sir, now come to our discussion with respect to tax rates. Sir, what are the tax rates which are applicable for my examination, sir? Please note, tax rates are basically divided into two types. One is called as special tax rate, another one is called as general tax rates. Special tax rates are also what, sir, called as slab rates, and we have something called as special tax rates. General tax rates are also called as, general tax rates are also called as slab rates, and we have special tax rates for special types of income. See, normally special tax rates will be given under income tax law, whereas the general tax rate will be given in the Finance Act itself. And general tax rates are applicable on all the incomes except special income. So which are the special incomes for which special tax rates are applicable? It is your long-term capital gain under section 112 and 112A, short-term capital gain under section 111A, casual incomes such as lottery betting, gambling, betting, horse racing, TV shows, crossword puzzles, then online money games income, and also your undisclosed income. On all these incomes, what is the tax rate applicable? Special tax rate, which is listed over here. Anyways, we will see these special tax rates in detail later. Now, if there is any income, any other income apart from this, if there is any other income apart from these incomes which you are seeing over here, what tax rate is applicable? Slab rate is applicable, or special tax, general tax rates are applicable. Now, the slab rates are basically of two types. There are two regimes. A person can either follow optional tax regime, or a person can follow something called as default tax regime. The other names for these two regimes are, optional tax regime is called as old tax regime, and default tax regime is called as new tax regime. One common question which students ask in the classroom is, sir, which regime should I study? Should I study the old regime or should I study the new regime? Answer is, you should study both the regimes. You are supposed to study both the regimes. You should study the old regime also as well as the new regime also. So we have to study the optional tax regime as well as the default tax regime. First, we will see what is the tax rates under optional tax regime or old regime. See, the SAB rates. If you are an individual HUF, AOP, BOI, artificial judicial person, individual, who is individual, sir? Resident individual whose age is less than 60 years, or if you are a non-resident person, irrespective of your age, then for you guys, the tax rate is what, sir? Up to 2.5 lakhs, you don't have to pay any tax at all. So up to 2.5 lakhs, no tax. Yes, up to 2.5 lakhs, you don't have to pay any taxes. And for income from 2.5 lakhs to 5 lakhs, 5% you have to pay. From 5 lakhs to 10 lakhs, 20% you have to pay, and more than 10 lakhs you will have to pay something called as 30%. This is the tax rate applicable to you. Sir, can you please repeat? If you are an individual, who is an individual, a resident person, age less than 60 years, or a non-resident person irrespective of his age, or if you are a HUF, AOP, BOI, artificial judicial person, up to 2.5 lakhs, no tax. 2.5 to 5, 5%. 5 to 10, 20%, and more than 10, 30% is the tax which you have to pay. Sir, what if I am a senior citizen, sir? What do you mean by senior citizen? Senior citizen means resident individual whose age is 60 years or more. So if you are a senior citizen, then up to 3 lakh rupees, you don't have to pay any taxes. For you, basic exemption limit. Basic exemption limit means the limit up to which you don't have to pay tax. For you, the basic exemption limit for senior citizen, the basic exemption limit is what, sir? It is 3 lakh rupees. And from 3 lakhs to 5 lakhs, 5%. 5 lakhs to 10 lakhs, 20%, and more than 10 lakhs, 30% is the tax which they have to pay. Sir, what about a super senior citizen? What do you mean by super senior citizen? Sir, the super senior citizen, resident individual whose age is 80 years or more. Yeah. So if you're a super senior citizen, you, for up to 5 lakh rupees, you don't have to pay any taxes at all. From 5 lakhs to 10 lakhs, 20%, and more than 10 lakhs, 30% is the tax rate applicable to you. Sir, what about surcharge, sir? Sir, what is this surcharge? Surcharge is an extra tax which you have to pay. It is an extra tax which you have to pay on your total income, extra tax which you have to pay on the tax amount. You will pay this extra tax called as surcharge. Surcharge is applicable only if your total income is more than 50 lakh rupees. Sir, when is surcharge applicable? Can you please repeat? Surcharge is applicable only when your total income is more than 50 lakh rupees. Sir, tell me how much is the surcharge, sir? If your total income is from 50 lakhs rupees to 1 crore, it is 10% on tax amount. If your total income is from 1 crore to 2 crores, it is 15% on the tax amount. If it is from 2 crores to 5 crores, it is 25% of the tax amount. And if it is more than 5 crores, 37% on the tax amount you will have to pay surcharge. Sir, what do you mean by tax amount? Whatever tax you have calculated under slab rates as well as special rates, the total of tax, on that you will have to pay surcharge of 10%, 15%, 25%, or 37% as the case may be. Now, additionally, apart from this surcharge, you'll also have to pay something called as health and education cess. This health and education cess is 4% on tax amount, meaning the total tax amount including your surcharge. So whatever amount is coming on that, you will pay what, sir? You'll also have to pay something called as health and education cess. Now I have given question over here. Say if my income is around 15 lakh rupees, how will I do the computation? Up to 2.5 lakhs, there is no tax. From 2.5 lakhs to 5 lakhs, I'll have to pay 5%. From 5 lakhs to 10 lakhs, on 5 lakh rupees, I'll have to pay 20%. And for more than 5 lakhs, I'll have to pay 30%. So this is the format in which you are supposed to do. And you are required to add on this tax amount, you will pay what's a surcharge. And you will find the total tax. On this total tax, whatever you have found over here, you will pay health and education cess. And finally, you will get your net tax liability. You will get what your net tax liability. Sir, what if the question has surcharge, sir? Can you do a question with respect to surcharge? You see this question. My income is 83,50,000 rupees. Correct? If my income is 83,50,000 rupees, that means for me, because the income is more than 50 lakhs, surcharge will also come. Correct, sir? See, up to 10 lakhs, your income will be, up to 10 lakhs of your income, your tax is fixed. How much is that income tax? 1,12,500. And for income more than 10 lakhs, it is 73,50,000 into 30%. The tax amount comes to 22,05,000 rupees. The total of this will be 23,17,500. Now, on which amount? On this amount, because your total income is more than 50 lakhs, you will have to pay a surcharge of 10%. So 10% of what? 10% of this tax amount. So tax amount into 10% will be your surcharge. Find the total tax amount. On this total tax amount, you will pay 4% as your health and education cess. You will get your net tax liability. Okay, sir. Okay. Sir, I heard that somewhere they will give also rebate under section 87A. Yes. You will get rebate under section 87A. Sir, who will get this rebate, sir? You will get the rebate. Who will get rebate? Rebate will be given to a resident individual. Rebate will be given to whom? A resident individual if his total income is up to rupees 5 lakhs. A rebate will be given to the resident individual if the total income is up to rupees 5 lakh, and rebate will be given under which section, sir? Under section 87A. How much rebate will be given? The tax amount or 12,500 rupees, whichever is less. How much ever tax you are supposed to pay, or rupees 12,500, whichever is less, will be the rebate which will be given to you. Now please note, rebate is required to be given before adding your surcharge and health and education cess amount. Okay, the rebate is required to be given before this. Now, you see these questions I have done. And one more thing, which is anyways written on the later point, rebate will not be available against the income taxable under section 112A. That anyways we will see when we are discussing special rate income. Then, sir, what is this margin relief, sir? I have heard that there is something called as margin relief also. Sir, what do you mean by this margin relief? A margin relief is applicable whenever your income is slightly more than surcharge limit. So whenever your income is slightly more than the surcharge limit, then a concept of margin relief will come. So you are required to, while taking this margin relief, you are required to see how much, what is the limit which is there. So whether it is slightly more than 50 lakhs or 1 crores or 2 crores, accordingly you will have to calculate tax on that 50 lakhs, 1 crore and 2 crores and find the increase in tax which you are paying and find the extra income which you have earned. The difference between your extra tax and extra income is given to you as marginal relief. So there is one question over here. See, my income is 50 lakh 10,000 rupees. So because my income is 50 lakh 10,000 rupees, my income, if it was 50 lakh rupees, I would have not paid surcharge. Please note, if it is 50 lakh rupees exactly, I would have not paid surcharge. Now because I earned 10,000 more, I am paying a surcharge of how much? I am paying a surcharge of 1,31,500. So just because of a small increase in my income from, see, my income tax liability, if my income is 15 lakhs, I have to pay tax of 13 lakh 12,500. But if my income, because my income became 50 lakh 10,000 rupees, just extra 10,000 I earned, my tax liability increased by how much? 14 lakh 47,050 rupees. Meaning my income has been increased only by 10,000 rupees, but the tax amount has been increased by 34,550 rupees. So you see, if you see, there is the tax amount has increased drastically when compared to the increase in income. Now the difference between both of them will be given to you as marginal relief. Okay, not okay? Yes, sir. Sir, apart from that, what else is there in tax rate, sir? Now, one clarification which is given by the CBDT. What is this clarification, sir? So if a person is born on 1st of April 1965, will he be treated as senior citizen? If a person is born on 1st of April 1945, will he be treated as super senior citizen? Because he is going to celebrate his birthday on the first day of the assessment year. So by the end of previous year, what he'll be treated? So see, basically what government says is, say if you're celebrating your birthday on 1st of April 2025 on first of April, if you're born on 1st of April 1965, then on 1st of April 2025 you will be celebrating your 60th birthday. That means you have completed your 60 years of life as on which date? 31st of March 2025. Therefore, accordingly, you will be a senior citizen for previous year 24-25. And similarly, if you are born in 1/4/1945, you will be treated as super senior citizen for the previous year 24-25. Now, there is one more tax regime. I told you, default tax regime or new tax regime. Sir, what is this default tax regime or what is this new tax regime, sir? This is applicable for an individual. To whom is it applicable, by the way? Sir, it is applicable to an individual, HUF, firm, AOP, BOI, artificial judicial person. Meaning all those people for whom slab rates are applicable, for them this is also applicable. And section 115 BSC is applicable. Then what else, sir? Section 115 BSC is applicable to resident and non-resident. It does not make any discrimination at all. Whether you are a resident or non-resident, you can both follow. Now, what is the tax rate under 115 BSC? Up to 3 lakh rupees, there is no tax which you have to pay. From 3 lakh rupees to 7 lakh rupees, you will have to pay 5%. From 7 lakh rupees to 10 lakh rupees, you will have to pay 10%. From 10 lakhs to 12 lakhs, you will have to pay 15%. From 12 lakhs to 15 lakhs, you will have to pay 20%. And for more than 15 lakhs, the tax rate is 30%. Sir, can you please repeat? Yes. Yeah, up to 3 lakh rupees, no tax. From 3 lakhs to 7 lakhs, 5%. From 7 lakhs to 10 lakhs, 10%. 10 to 12, 15%. 12 to 15, 20%. And more than 15, you will have to pay tax of 30%. Okay, sir, are they also liable to pay surcharge? Yes, if the total income is more than 50 lakh rupees, they will also have to pay surcharge. How much, sir? If it is from more than 50 lakhs up to 1 crore, 10% on tax. If it is more than 1 crore up to 2 crores, 15% on tax. And more than 2 crores, they'll have to pay 25% on tax. Okay, sir, this is something which I got to know, sir. Sir, what about health and education cess? Compulsorily it will come 4% on tax, including surcharge amount. Health and education cess will come. Sir, what about rebates, sir? Are they also liable to, will they also get the benefit of rebate? Yes, they will also get. The new tax regime people also will get a benefit of rebate. In fact, for them, the limit is also too high. Yeah, for them, what, sir? For them, the limit of rebate is also too high. Sir, what is the limit, sir? So, if you are a resident individual, you can claim rebate under new tax regime if your total income is up to 7 lakh rupees. Sir, how much rebate, sir? Your tax amount or 25,000, whichever is less. Also, you will get an extra benefit if your income is slightly more than 7 lakh rupees. See, normally rebate will be given to you if your income is 7 lakh. But if your income is slightly more than 7 lakh rupees, then a rebate will be given to you under 87A. And what is that rebate, sir? That you see what is the extra income which you have earned. So take the difference between the total income and 7 lakh rupees. What is extra which you have earned from 7 lakh rupees? Then compute the tax on your entire income, total income. Now, if your total tax is more than the increase in income, then the difference between your tax amount and extra income which you have earned, that will be given to you as rebate. So I have solved a question for that. Please see that question, because I feel but that with respect to that rebate, no question can be asked in examination. Sir, where is the question? But yeah, see this question. Mr. Kanan has a total income of 7,10,000. Compute his income tax liability under 115 BSC. So first, his income tax liability came to 21,000 rupees. Now, since his income is slightly more than 7 lakhs, what will come? Rebate will come. How much is the rebate? Whatever extra income he has earned, which is 10,000. Income above 7 lakh. And now tax on 7 lakh 10,000. How much is it coming? 21,000. We have already done the computation. So what is the difference between this? It is 11,000 rupees. This is the rebate which is going to be given to him. Correct? So 21,000 minus 11,000, 10,000 plus 400 rupees is the tax which he has to pay. Now see, this is the format of computing the tax. First you should take the tax amount, subtract rebate, you will get some amount, then add surcharge, then subtract margin relief, it is applicable, and then add your health and education cess, that will be your total tax liability. Now, tax rates. Sir, what are the other tax rates? The tax rates for company. What is the tax rate for company? Sir, we heard somewhere that if I am opting for 115 BSE, lot of benefits will be taken from us. There are a lot of benefits which will be taken from us. No, yes. That we'll see under total income topic. We'll discuss again this point in our total income topic. Right now, we are seeing what's the basics of income tax law and tax rates. So this is sufficient for tax rate. Now, next point is what, sir? Sir, what are the tax rate for a company? For a company, the tax rate is 30%. For a company, what is the tax rate? For the company, the tax rate is 30%. For a company, the tax rate is domestic company. If you're a domestic company, the tax rate is 30% for you. And if you're a foreign company, the tax rate is 35%. There is an amendment over here. Tax rate is what, sir? 35%. Now, for domestic company, the tax rate will be 25%. If the total turnover or gross receipts of the domestic company in the previous year 22-23 is up to 400 crores. If the turnover or gross receipts in the previous year 22-23 is up to 400 crores, then the tax rate for this year will be how much, sir? Which year? 24-25, it will be 25%. Sir, is surcharge applicable for companies also? Yes, surcharge is applicable. If the total income is more than 1 crore up to 10 crores, then for domestic company it is 7%, for foreign company it is 2%. Sir, what if the total income is more than 10 crores? Then for domestic company it is 12% on tax amount is surcharge, and for foreign company it is 5% on tax amount is the surcharge. Sir, is health and education cess applicable? Yes, health and education cess is applicable. Sir, how much is it, sir? 4% on tax amount including surcharge. Sir, what about margin relief, sir? Is margin relief applicable for companies also? Yes, the concept of margin relief is applicable for companies also. Sir, what about partnership firm, LLP, local authority? What is the tax rate applicable to them? Flat 30%. Flat 30% of your income you have to pay tax. Surcharge will be applicable if your total income is more than 1 crore. How much is the surcharge applicable? 12% on tax amount is surcharge applicable. Sir, are they also liable to pay health and education cess? Yes, 4% on tax. See, health and education cess is compulsory. Whoever you are, whatever type of income you are earning, 4% health and education cess will also always come. And for them also the concept of margin relief is applicable. Sir, what about cooperative society, sir? What is the tax rate for cooperative society? If you're a cooperative society, for income up to 10 lakh rupees, income up to 10,000 rupees, you'll have to pay 10%. 10,000 to 20,000, you'll have to pay 20%. And more than 20,000 of your income, you'll have to pay tax of 30%. Surcharge is applicable to them if the total income is more than 1 crore up to 10 crores. How much is the surcharge? 7% on tax. And if the total income is more than 10 crores, they'll have to pay surcharge of 12% on tax. Health and education cess of 4% is applicable, and margin relief is also applicable to them. Now comes important thing, which is special tax rate. Here, there is a major change in your capital gain tax rates. There is a major change in what's capital gain tax rates. Sir, what are the special tax rates, sir? Can you please tell us? See, long-term capital gain is taxable under section 112. So for long-term capital gain, if the transfer is made, which is taxable under section 112, if the transfer is made by you before 23rd of July 2024, it is 20%. And if it is after on or after 23rd July 2024, it is 12.5%. Please note, there are a lot of variation, which we will see in detail in which chapter? Capital gain chapter. Apart from this, also there are some variation which we will see in which topic? Capital gain topic. Major amendment is made in capital gain chapter. Okay. So long-term capital gain under section 112, if the transfer is made before 23rd July 2024, it is 20%, and it is on or after 24th July 2024, it is 12.5%. So for long-term capital gain taxable under section 112A, the tax rate, if the transfer is before 23rd July 2024, it is 10%. It is on or after 23rd July 2024, it is 12.5%. And this long-term capital gain under section 112A will be applicable on income in excess of 1,25,000. So this 1,25,000 limit is for the entire year. This 1,25,000 limit is for the entire year. Whether it is before or after, you can take the benefit of 1,25,000. So if it is a short-term capital gain taxable under 111A and the transfer is made before 23rd July 2024, it is 15% which you have to pay. And if the transfer is made after, on or after 23rd July 2024, you will have to pay how much? 20%. And for casual income, which is lottery betting, gambling, TV shows, crossword puzzles, horse betting, etc., 30%. Online money games, 30%, your rummy circle, etc. And if it is an undisclosed income, it is how much, sir? 60% is the tax rate. Sir, which are the items which are covered under 112A and 111A? It is listed equity shares, equity oriented mutual funds, and unit of business trust of India. These are the three items which are covered under which, sir, section 111A and 112A capital gain. Now this is your capital gain topic. Now I have done very good question over here. Please note. Please have a look into this question. I have solved under both the regimes, how to solve under optional tax regime and default tax regime, wherein I have taken a question wherein you have income taxable at slab rates, you have income taxable at special rates. Sir, you tell us the flow once, sir. Before we see, you please tell us the flow. See, what is the flow? How, when the total income has an income, if you see, this is the total income 19,20,000 rupees. This 19,20,000 rupees has income taxable at slab rates as well as special rates. How do I do the computation, sir? Lawmaker says, first, how should I solve this question in examination, sir? First, compute the income tax on income taxable at slab, the special rate. First, compute the tax on income which are taxable at special rates. Then do the total of whatever income is taxable at slab rate. You do the total, so total comes to 10 lakh rupees. For this 10 lakhs, calculate the income tax by applying slab rates. For example, if you see over here, so first I have computed tax separately for each of this special rate income. Then I have written something called as balance total income. So all the incomes which are taxable at special rates, whatever is left over is called as balance total income. For this I have done a working. I should calculate tax under slab rates. Whatever tax is coming, add to this, you will get the total. On this, add surcharge if it is applicable, and whatever amount is getting, add 4% health and education cess. Now other important points with respect to your which topic, sir? Other important points with respect to your total income topic. Sir, what are the important points? Now your total income and the tax amount is required to be rounded off to the nearest multiple of 10. It should be rounded off to the nearest multiple of 10. So who is telling this? Section 288A says for total income, and section 288B says for tax amount. They both are required to be rounded off to the nearest multiple of 10. So if the last digit is 1, 2, 3, 4, then round it off to the previous multiple of 10. If the last digit is 5, 6, 7, 8, 9, round it off to the next multiple of 10. I have given one example over here. Then rebate under section 87A is not available against income taxable at long-term capital gain taxable at 112A. And normally, see, please note, very important point. Normally the basic exemption limit, which you have, no, that is 2.5 lakhs, 3 lakhs or 5 lakhs, etc. Normally that basic exemption limit should be adjusted with income which is taxable at slab rates. With whom are you supposed to adjust the basic exemption limit? Income taxable at slab rates. However, if the income taxable slab rates is less than the basic exemption limit, then that unadjusted basic exemption limit will be there. No? Whatever unadjusted basic exemption limit is there, no, that you can unadjusted basic exemption limit can be adjusted with income taxable at special rates, except your casual income and undisclosed income. Except these incomes, whatever unadjusted amount is there, that you can adjust with income taxable at special rates. So yeah, apart from that, one more point, last point. The maximum amount of surcharge which you are required to levy on long-term capital gain, on taxable under 112 and 112A, on short-term capital gain taxable under 111A, and deemed income. For all this income, how much is the maximum amount of surcharge you can levy? It is restricted to 15%. It is restricted to what, sir? 15%. So if I have an income, which is more than 2 crores, more than 2 crores also, if my, say for example over here, my this incomes is 1.5 lakhs and other income is 2.5, this income combined together is 1.5 crores and other income combined together is 2.5 crores, so total income is 4 crores. So what is the surcharge which is applicable, sir? Since the total income is more than 4 crores, so more than 2 crores, should I levy a 25% surcharge? Yes, you should levy 25% on other incomes, but on these incomes, maximum surcharge which you are going to levy is how much? 15%. Okay? Yes, sir. Now comes the next topic. What is the next topic? Oh, sir. What is the next topic? The next topic for our discussion is agricultural income. Agriculture income is exempt. Section 10 is a section which talks about exempt income. Section 10 clause 1 talks about agriculture income. It says agricultural income is exempt from payment of tax if that agricultural income is from a agricultural land located in India. Agricultural income is exempt from payment of tax, income tax, if such agricultural income is from an agricultural land in India. Sir, what do you mean by India? India means, please see. Now, India means that land region of India. Then from this land region up to 12 nautical miles is called as territorial waters. Up to 200 nautical miles it is called as exclusive economic zone. So when I say India, the area up to 200 nautical miles is covered as India. It is called as what, sir? India. Now, what do you mean by agriculture income, sir? You say agriculture income is exempt. What do you mean by agriculture income? Agriculture income means any rent or revenue which is derived from agricultural land in India. Whatever rent you are receiving, whatever rent you are deriving from an agricultural land which is located in India and which is used for what purpose? Agricultural purpose. The income from agricultural operations. Any income which you are receiving for what, sir? From what purpose, sir? Agricultural operations which you are undertaking. And income from farmland or dwelling unit which is located in agricultural land. And any income which you are receiving by way of plantation, nursery, seedling, etc. That is also your agricultural income. Sir, you said income from farmland, etc. is also exempt. If it is also called as agriculture income. Yes, only if the this farm house which is there or dwelling unit which is there, that is located in rural area. It should be a rural agricultural land. It should be located on what, sir? Rural agricultural land. Sir, what do you mean by rural area? Rural area means something which is not an urban area. Sir, what do you mean by urban area? Urban area is an area where the population is more than 10,000 or more. Okay, if your area's population is 10,000 or more, then that means you are staying in urban area. And if your area's population is more than 10,000 up to 1 lakh, your area is definitely urban area. From your area up to 2 kilometers area is also urban area. If your area's population is more than 1 lakh up to 10 lakhs, then your area is urban area. Up to 6 kilometers of area is also urban area. If your area's population is more than 10 lakhs, then your area is an urban area. From your area up to 8 kilometers is also an urban area. Sir, how do I measure this distance, sir? You are required to measure this distance aerially as the bird flies. Now, agricultural activity or agricultural operation has been is not defined under income tax law, but however the Supreme Court gave the understanding in this case law called as Raja Binoy Kumar Sahas Roy case. You don't have to remember the case law, wherein Supreme Court told that in agricultural activity, there are basically two types of operations. One is called as basic operation, one is called as subsequent operation. What type of operation the person is doing, you should see. If the person is doing only basic operation, then the income which is generating is an agriculture income. If he is doing only subsequent operation, then it is not an agriculture income, therefore not exempt. But sir, what if I am doing both subsequent operation and basic operation? Then your income is agriculture income, therefore it will be exempt. Sir, what do you mean by basic operation, by the way? All the work which you are doing up to the stage of germination of seed, sowing, harvesting, etc. All the work which you are doing up to the stage of germination of a seed, that is basic operation. Now, in agriculture income, majorly asked question is what, sir? On composite income. In agriculture income, what is the majorly asked question, sir? Composite income. Composite income means what? A person. One second. Sir, what do you mean by composite income, sir? Composite income means, let us say I am a person who is cultivating potato. I am a person who is cultivating what? Potato. Now the potatoes are cultivated by me on my agricultural land. From this potato, I am not selling in the market. I am using this potato to make potato chips. And now I sell these potato chips. So basically the money which I am getting is for chips. But can I say for these chips, whatever potato is required is also grown by me only? So now this whatever amount is there, no selling price what I have received, this will have agricultural income portion also in it, and it will have what income portion also in it? It will have agriculture income as well as your non-agriculture income portion in it. Sir, how will I do the computation? Now what lawmakers are telling is, whatever agriculture produce is there, whatever agriculture produce you have produced, you check how is it sold, whether it is sold in raw form or is it sold after putting some process. Meaning whatever potato is cultivated by me, that potatoes are sold like that only, raw form. Then if it is sold in raw form, then the entire income is called as agriculture income, therefore it will be fully exempt. But if this agriculture produce is sold after some process, after applying some process, if these agriculture incomes are sold after applying some process, then Check whether those processes are required mandatorily to be applied to sell that agriculture produce, or is it not mandatory required process. Meaning, for example, potato, once I take it out from the agricultural land, now on that potato I will have to all the mud will be attached on that. So I wash those potatoes before selling it in market. I wash those potatoes. So is it required that I should wash those potatoes before selling in the market? Answer is yes, sir. So it is a mandatory process. So I have applied that process, and after that I am selling that agriculture produce. Now also whatever income you are getting is an agriculture income, therefore fully exempt. But if the process which is there is not a mandatory process, I'm cutting the potatoes and making potato chips and selling it, then lawmaker says in this case two types of income will come. One is your agriculture income, another one is your what, sir? Business income. What is my agriculture income? These potatoes which you have used for making potato chips, if you would have sold these potatoes in the market, how much money you have earned? Take that, subtract the cost of cultivation of these potatoes which you have used for further processing. The difference is your agriculture income, which is exempt. What is business income, sir? Sale price of that potato chips, whatever amount you have got by selling that processed product which is potato chips, from that subtract the cost of potato. If you would have purchased the potato from the market, see, you have only cultivated the potato, right? So this potato, if you would have purchased from the market, how much you would have paid to the market? You subtract that, and also subtract the cost of processing. Whatever processing cost is required, you subtract that also. That will give your business income. Okay, not okay? Oh students, there are some beautiful questions which I have solved over here. You can just go through these questions, very self-explanatory questions. And I have also taken this question number 5, which is an exam question which is asked in your last examination. Now, in case you are in the business of growing and manufacturing tea, coffee and rubber, you don't have to do that rule 7 adjustment. So this whatever story you saw over here, this is given in what rule, sir? Rule number 7. But if you are in the business of growing and manufacturing tea or coffee and rubber, lawmaker says instead of doing that arrow mark, etc., straight away do one thing. I will only tell you how much is agriculture income, how much is business income. Please note, I should be growing and manufacturing tea. If I am only growing tree and selling the tea leaves, then it is agriculture income. If I am selling only the tea powder, then it is business income. If I am growing and selling tea, then this will come. Growing and selling coffee, this will come. Growing and selling rubber, this will come. If I am growing and manufacturing tea, then 60% of the amount which I receive, the final price which I receive, is treated as agriculture income, and 40% is business income. If you're growing and manufacturing coffee, coffee is grown and cured by you, 75% is agriculture income, 25% is business income. If you're growing and manufacturing coffee and that coffee is grown, cured, roasted and grounded by you, then 60% is agriculture, 40% will be your business income. In the case of rubber, if you're growing and manufacturing rubber, 65% is your agriculture income and 35% is your business income. And please note, whenever you have agriculture income in your total income, then the concept of partial integration will apply. What concept, sir? The concept of partial integration will apply. Partial integration is applicable to whom, sir? Individual HUF, AOP, BOI, artificial judicial person. When will it be applicable? If the agricultural income is more than 5,000 rupees and the non-agricultural income is more than basic exemption limit. Now tax payable will be how much, sir? Step number 1, compute the tax on agriculture as well as non-agricultural income. Compute the tax on total income, which is agricultural income. Compute the tax on both agricultural income and non-agricultural income combined together. You take agricultural income, add non-agricultural income to that and compute the tax. Then step number 2, take your agricultural income, add it to the basic exemption limit which is applicable to you and compute the tax. Whatever tax you have computed in step 1, subtract it from step 2 tax. This is the tax which you have to pay. Of course, you will have to add health and education cess if it is not yet added. So I have given one very good question for solving purpose. This is all about your agricultural income. So that is your first chapter of your institute material. The next chapter of your ICAI material is what, sir? Residential status. Residential status. Please note, residential status is important for understanding the taxability of income. So whether an income is taxable in India or not, if you want to know that, you will have to check the residential status of the person whose income you are computing. If that income is taxable, if a person is a resident of India, then he will have to pay tax in India. If he is a non-resident of India, he will not have to pay tax normally in India. Okay, so we will see on what income he has to pay tax and what income he does not have to pay tax in our future discussion. Let us first understand residential status. So basically section 6 talks about residential status. Section 6 has 6.1 which talks about residential status of an individual, and this is most important for your examination. Residential status of an HUF is given in 6.2, for companies 6.3, and for others it is given in 6.4. Section 6 subsection 1 talks about residential status of an individual. Basically section 6.1 gives the basic condition. Now an individual, first he has to satisfy the basic condition. If an individual is satisfying basic condition, he will be called as a resident, and if he does not satisfy the basic condition, he will be called as non-resident person. Now once the individual is satisfying the basic condition, I will check for what's an additional condition which is given in section 6 subsection 6. I will check for additional condition. Now, if once an individual is satisfying basic condition, I will go for additional condition. Either that individual will satisfy additional condition or he may not satisfy additional condition. If he satisfies additional condition, he will be called as resident and ordinary resident. If he is not satisfying additional condition, he will be called as resident but not ordinary resident. And if he does not satisfy the basic condition at all, he is anyways non-resident. Sir, but tell us the conditions are, what stories you are telling, resident, ordinary resident, resident, not ordinary resident, non-resident. Tell us what are the conditions. Basic conditions are given in section 6 subsection 1. What are the basic conditions? Section 6 subsection 1 says a individual will be treated as a resident of India. An individual will be treated as resident of India if he satisfies any one of the following basic condition. If he satisfies any one of the following basic condition. Which conditions, sir? If he stays in India for 182 days or more in the previous year. So in the previous year, he is staying in India for how many days? 182 days or more. Or he is staying in India, or meaning any one of the basic conditions he should satisfy. Or he is staying in India for 60 days or more in the previous year and 365 days or more in 4 preceding previous years. Or he is staying in India for how many days? 60 days or more in the previous year and 365 days or more in 4 preceding previous years. So in the previous years, he should stay for more than 60 days or more, and in last 4 years, he should stay for 365 days or more. Now, sir, date of coming to India and date of leaving India, should I take into consideration while checking the number of days stay in India? Answer is yes. It should be included for calculating the number of days stay in India. Sir, what about place, sir? Should he stay at one place only continuously in India? No, he can stay at any place in India. It should be in India. And sir, continuous stay is important. Meaning I stayed here for 2 months, then I went back outside India, then again I came after 3 months, then I stayed again. Is it important that I should stay continuously? No, it is for the entire previous year. Sir, what are the additional conditions? Sir, you said once I satisfy basic condition, I will be a resident. If I don't satisfy basic condition, I am a non-resident. Once I satisfy basic condition, you said I should check for additional condition to check whether the individual is resident and ordinary resident or resident but not ordinary resident. These additional conditions are given in section 6.6. What is the additional condition telling? The additional condition says you will be called as resident and ordinary resident if you satisfy the additional condition. Correct? So what is the additional condition? He should be a resident for a period of 2 years or more. Okay, he should be a resident for a period of 2 or more previous year out of last 10 preceding previous year. Out of last 10 previous years, for at least 2 years you should be a resident, and both the conditions should be set. And your stay in India should be for 730 days or more in last 7 years. See, in last 10 years you should be resident at least for 2 years, and in last 7 years you should have at least stayed in India for 730 days or more. Then there is one more point over here. Following are the exception to second basic condition, meaning in these cases you should not see second basic condition. So if I should not see second basic condition, what should I see, sir? You should see your first basic condition, that is 182 days condition. In which cases, sir? If you are an Indian citizen who is leaving India during the previous year, for what purpose are you leaving? For the purpose of employment outside India, or you are leaving India as a crew member of Indian ship. In these two scenarios, if you are going out of India, why are you going? Because you got an employment opportunity outside India, or you are a crew member of Indian ship. In both the cases, in both these cases, I will see what's your first basic condition to check whether you are resident or not. I am going to see 182 days condition. To check whether you are a resident or not, which condition will I see? 182 days condition. But however, if you are an Indian citizen who is coming to India, if you are an Indian citizen or a person of Indian origin who is visiting India, and if your total income from Indian sources, if your total income from Indian sources is less than 15 lakh rupees, for you I will see 182 days condition. Sir, what if my total income is more than 15 lakhs? I am a Indian citizen who is coming to India, or a person of Indian origin who is coming to India, and I have more than 15 lakh rupees income from Indian sources, sir. Then you will be treated as a resident of India if you stay in India for 182 days or more, or you will be treated as a resident of India if your stay in India is for 120 days or more in the previous year and 365 days or more in 4 preceding previous year. Meaning, for him, there are two conditions. It is just like your basic condition. Instead of 60 days, they have replaced it by 120 days. Now, very important point to be noted over here is, if you are a crew member of Indian ship, then the date mentioned in continuous discharge certificate as date of joining the ship and the date of signing of the ship should not be taken into consideration. It should not be taken into consideration for calculating number of days stay in India. You should not take them into consideration. Okay, sir. Section 6(1) capital A talks about deemed resident. What is this point telling? If you are a resident individual who is if you are an individual, sorry, not resident individual, we are seeing residency status over here. If you are an individual who is citizen of India and who lives in India and who is who lives outside India. If you are an individual who is a Indian citizen and who is living outside India and who comes to India for a visit during the previous year, and you have more than 15 lakh rupees total income during the previous year from Indian sources, and you are not a resident of any other country. If you are not a resident of any other country and if you follow all the other conditions, then you will be deemed as a resident of India. I'm going to assume that you are resident of India. Then for HUF, what is the residential status, sir? For HUF, what will I see, sir? For HUF, I'll see control and management. If the control and management of the HUF is fully in India, that is wholly in India or partially in India, that HUF will be called as resident of India. If the control and management is wholly outside India, then a HUF is called as non-resident of India. Now, once the HUF becomes resident, I will see for additional condition. Additional condition for whom, sir? Karta. Once HUF becomes resident as per section 6(2), I will see additional condition for whom? Karta. If Karta satisfies additional condition, then HUF will be treated as resident and ordinary resident. If Karta does not satisfy additional condition, HUF will be treated as resident but not ordinary resident. If for company, what is it, sir? Indian company or a domestic company is always a resident of India. And for other companies, for all other types of company, I should see the place of effective management. I should see what, sir? Poem, place of effective management. If the place of effective management is in India, it is resident, or else it will be non-resident for India. Section 6(4) talks about residential status of all other types of person. For all other types of persons such as firm, LLP, etc., I will see control and management. If the control and management is wholly in India or partially in India, they are resident. If the control and management is wholly outside India, it is non-resident. Then scope of total income. Now, the main reason why we study residential status is to check whether a person will have to pay tax in India or not. A person will have to pay tax in India or not. So we have divided an individual and HUF into 3 categories: resident, ordinary resident, resident but not ordinary resident, and non-resident. Now, these people will always have to pay tax on Indian income. All these 3 categories of people, whether you are a non-resident or you are a resident and ordinary resident, resident but not ordinary resident, you will always have to pay tax on what, sir? Indian income. And on foreign income, only resident and ordinary resident will have to pay tax. On foreign income, non-resident will not have to pay tax, and resident but not ordinary resident also will not have to pay tax. But there is one such foreign income on which resident and ordinary resident also will have to pay tax, if that foreign income is because of income from business controlled from India or profession set up in India. Sir, what is this Indian income, foreign income? Can you please tell us? What do you mean by Indian income, sir? What do you mean by foreign income? See, Indian income, basically 4 things are there over here. If there is an income which is received in India, that means it is an Indian income. If there is an income which is deemed to be received in India, then that means it is an Indian income. If there is an income which is accruing or arising in India, that it is an Indian income. If there is an income which is deemed to accrue or arise in India, then it is an Indian income. If it is an Indian income, it is taxable in India. Now, a very important point for resident and ordinary resident, the global income is taxable in India. And if there is any past untaxed profit, if there is any profits of previous years which is not taxed, now if you are bringing them to India during previous year, means last few years, profits are there, incomes are there, which was not taxable in that year when I earned, but now I am bringing them to India. Should I pay tax now? Answer is no. Now we'll start our discussion. So this one small, if you see over here, chart I have given about taxability of scope of total income. Sir, shall we start the next topic? Shall we start the next topic? Yes, sir. Which topic are you going to start next? I'm going to start with heads of income. Please note, I have a different flow for teaching this subject. What is your flow, sir? In my flow, no. In my flow which I have, I teach. I'll just show you the flow. In my flow, I take up income tax like this, and I recommend students also to study in the same manner. You start loving the subject. I take basics and tax rates, then agriculture income, then residential status. This is something which you have revised as of now, correct? After this, I start with income from house property, income from capital gain, other sources, salary, business profession, then your other chapters which are there, that is clubbing of income, set off carry forward, deduction, total income, advance tax, TDS, TCS, and return of income. So this is the flow which you are going to do the marathon also. So now I am going to start with the head of income called as income from house property. Come on, sir. Let us start, sir. Yeah. Income from house property, from exam point of view, its importance is around 4 to 6 marks question can come from this topic. Section 22 to section 27. These are the different sections which you are going to learn under this chapter. Now this, see, from a house property, you can have two types of income. You give this house property on rent, the income will be income from house property. And if you sell this house property, you will get a capital gain. It will be taxable under the head income from capital gain. Section 22 is the charging section of income from house property, which says, section 22 says, charging section says what, sir? The rental income or the annual value of the house property will be taxable under the head income from house property if two conditions are satisfied. When will the rental income be taxable under income from house property? If two conditions are satisfied. Which are these two conditions? There should be a house property and assessee should be owner of such house property. There should be a house property and the assessee should be owner of such house property. Sir, what do you mean by house property? House property means building and land appertaining to that building. Building and land attached or appertaining to that building. Sir, what do you mean by owner? Owner includes your deemed owner, beneficial owner, and legal owner. So if you are a beneficial owner, deemed owner, or legal owner, whoever you are called as owner. Now, very important, one recent clarification which has come over here is with respect to if the assessee is involved in the business. This is important. If the assessee is involved in the business of renting the house property, then the income should come under business, no? The income should come under business, so because his business is only giving the house properties on rent. Here the lawmaker says, if the assessee is involved in the business of renting of house property, then I'll check whether he is renting commercial properties or residential properties. If assessee is involved in the business of renting of commercial property, the income will go under business or profession. However, if the assessee is involved in the business of renting of residential house property, the income will go under income from house properties. It will go under what, sir? Income from house properties. Now, for our taxation purpose, we divide the house property into two categories. One is called as let out property, another one is called as self-occupied property. Let out property is a property which is always taxable and it is fully taxable, under which head, sir? Income from house property. Now, self-occupied property, no, the taxability will depend upon its use. Whether you are self-occupying the property for your business purpose or you have self-occupied the property for your residence purpose. Meaning, if it is a self-occupied, what do you mean by let out property? A property which you have given on rent. That is a let out property. Correct? No? Yes, sir. Correct. The property which I have given on rent is a let out property. Now they say let out property is always taxable. Why? Because you are receiving some rent from the property. Whereas the self-occupied property is there. No, self-occupied property. The self-occupied property, the taxability will depend on whether you are earning some, or whether it is self-occupied for business purpose or residence purpose. They say if it is self-occupied for business purpose, you should ignore. Why, sir? Why should I ignore? Because you're already generating an income under business. See, when you're self-occupying for business purpose, when you prepare a profit and loss account for your business, you will not show any rent over here. Why will you not show any rent? Because you're doing business from your own property. So when you're doing business from your own property, to whom will you pay rent? So here you will not show the rent. But if it is a self-occupied, so therefore you should ignore it. But if it is a self-occupied property for your residence purpose, if you have a property which you are self-occupied and it is occupied by you for your residence purpose, lawmaker says, I'll see how many properties you have. If you have up to 2 self-occupied properties, take exemption. If you have up to 2 self-occupied properties, take what, sir? Exemption. If you have more than 2 properties, more than 2 self-occupied properties which you are using it for your own residence, for 2 you can claim the benefit of exemption, but for remaining properties will be deemed as let out property. A remaining properties will be deemed as let out property, and deemed to be let out property is taxable. It is treated as, it is deemed as let out. That means you are assuming that it is let out, therefore it will be taxable as let out property only. Now, sir, what if I have 2 properties but one property is not occupied by me? It is just there vacant, sir. No one is occupying it. That is as good as it is a self-occupied property. Now, sir, for computation of income from house property, whatever amount I say, will the government accept it? No, I didn't get you. Sir, how do I compute the income from house property? Whatever actual rent I am earning, if I say that amount to government, will the government accept it? Lawmaker says no. Whatever actual rent you are earning, no, that will be compared with expected rent by government. Whatever actual rent you are earning, they are going to compare that actual rent with what, sir? They are going to compare that actual rent with a government expectation. They are going to compare with government expected rent, and they are going to take whichever is higher. Sir, repeat, sir. Whatever actual rent you are earning, it should be compared with your expected rent, and you should take whichever is higher. That whichever is higher will be taken as your gross annual value. Sir, how do I find this expected rent? Sir, actual rent is nothing but the rent which I am receiving. Correct? No, sir. Correct. Sir, but what is this? What is this expected rent, sir? Expected rent is your municipal value or fair rent, whichever is higher. Compare your municipal value with fair rent, whichever is higher you take. Then that whichever is higher should be compared with your standard rent, and then you take whichever is less. Once you get this, whichever is less, which is there, that is your expected rent. This expected rent you should compare with your actual rent. You will get your gross annual value. From this gross annual value, please subtract your municipal taxes. You will get your net annual value. From the net annual value, please subtract deductions, which is 2 deductions are there. Deductions under 24A and 24B, which is standard deduction and interest on loan. You will get your final answer, which is income from house property. Sir, you have taken different amounts over here. Can you please repeat once again? Yes. First, take your municipal value, compare that with fair rent. Take whichever is higher. Now this whichever is higher, you should compare with standard rent. Take whichever is lower. Now this whichever is lower amount you have got, no, this is your expected rent. This expected rent you should compare with whom, sir? Your actual rent. You compare both of them and take whoever is higher. Whichever is higher you will take, and then subtract from that municipal taxes. Whichever is higher when you are taking, no, that amount is called as gross annual value. From this gross annual value, subtract your municipal taxes, you will get your net annual value. Then subtract your deductions, you will get your income from house property. Sir, what do you mean by municipal value? Municipal value means the value of the property as per municipal records. As per the government records, what is the value of the property? Sir, what do you mean by fair rent? Fair rent is a reasonable amount of rent. Reasonable amount of rent for similar kind of property in the same locality. For similar kind of property, what is the reasonable amount of rent they would have got in the same locality? And what do you mean by standard rent, sir? Standard rent is the rent as per the Rent Control Act. So many states have this act called as Rent Control Act. As per that, whatever the rent is there, that is called as standard rent. That is the maximum amount of rent which you can legally recover from a property. Then, sir, what is actual rent? Actual rent is rent received plus rent receivable minus unrealized rent. What is this? We will see in 2 minutes. Now, what about this municipal taxes, sir? You see, municipal taxes are the taxes which you have to pay to the state government for the property. So municipal taxes is the taxes levied on the house property by local authority or municipality. It is also known as house tax, property tax, sewage tax, etc. It is allowed on payment basis, meaning only if you have paid municipal taxes, you can claim the deduction. If it is payable, can I claim, sir? No. If it is not paid by me, can I claim, sir? No. Only if it is paid by the owner, it can be claimed as deduction. Municipal tax is allowed as deduction only if it is paid by owner. Sir, what if tenant is paying it? You cannot claim the deduction. Now, if municipal tax is given in percentage form, then I should take what, sir? You should take municipal tax. If it is given in percentage form in the question, then you should take it as a percentage of your municipal value. So if it is given 10%, 10% of municipal value should be taken by you. Now, sir, you are talking about actual rent. No, sir. Yes. Sir, what is actual rent? Actual rent is rent received plus rent receivable minus unrealized rent. Whatever rent you have received, add to that whatever rent is receivable by you. Subtract unrealized rent. Rent which you are never going to receive is unrealized rent. So unrealized rent can be subtracted only if you satisfy these 4 conditions. What are the 4 conditions? The tenancy should be bona fide. Genuinely, you should have given the property on rent to someone. The person who has not paid the rent to you, you should have genuinely given the property to him on rent, and the tenant should have vacated the property. He should have left the property, and he should have not occupied any of other property of the same assessee. He should have not occupied any other property belonging to you, and you should have taken reasonable steps. You should have taken reasonable steps to recover this unrealized rent. If these conditions are satisfied, only then your unrealized rent can be subtracted from your actual while calculating your actual rent. Sir, deductions. You said there are 2 types of deductions, correct? No, sir. Yes. What are these 2 types of deduction? 24A will give you standard deduction. What is the standard deduction? Flat 30% of NAV. Flat how much? 30% of NAV. Whatever net annual value you are getting, into 30% will be given you as deduction. Meaning lawmaker says you don't have to maintain invoices for repairs, electricity, water charges, etc. Don't maintain any invoices. Directly 30% of NAV will be given to you as deduction. Sir, but if the house property is self-occupied, then I will not have an NOV only. No, sir. Yes. So you will not get this standard deduction. There is one more type of deduction which is most important deduction called as interest on loan. Sir, one more type of deduction is what, sir? Your interest on loan. Interest on loan is allowed as deduction. Yes, interest on loan is allowed as deduction. Sir, how much is allowed as deduction, sir? Interest on loan. Interest on loan. If you are taking loan for construction, purchase, repairs or renovation of an house property, and if you are taking the loan from bank or financial institution, family members or friend, it does not matter. Whatever interest you are paying on that loan is allowed as deduction under section 24B. Please note, the loan should be taken for the purpose of house property. Then that loan should be that loan can be taken from any person. That interest will be allowed as deduction whether you have paid that interest or not. Then interest on interest, that is penal interest, will not be allowed as deduction. Interest which you are paying on the fresh loan which is taken by you for repayment of existing house property loan, that is also allowed as deduction. Any interest which you are paying to non-resident will also be allowed as deduction provided TDS is deducted on that interest. Now, sir, tell me what is the amount of interest which I can claim as deduction, sir? That is important for me. The interest which you can claim as deduction in case of let out property or deemed to be let out property, the interest which is allowed as deduction to you will be how much, sir? There is no limit. Whatever amount of interest you are paying, you can take full deduction of that. But if it is a self-occupied property, and if it is self-occupied for your residence purpose, in normal cases, you will get 30,000 rupees, and in some special circumstances, you will get 2 lakh rupees deduction of interest. Sir, when will I get 2 lakh rupees? If the loan is taken on or after 1/4/1999, if the loan is taken for construction or purchase of the property, and the construction is done within 5 years. Now, please note. For self-occupied property, maximum amount of interest which you can claim as deduction is restricted to 2 lakhs. So if you have self-occupied property, 2 self-occupied property, and both combined together, you are paying an interest of 6 lakh rupees. How much can you claim? Only 2 lakh rupees is the maximum interest which you can claim as deduction. Very important is what, sir? This point. If an assessee is opting for default tax regime, sir, repeat. If an assessee is opting for default tax regime, then he will not get any deductions for interest under section 24B for self-occupied property. So if an assessee is opting for default tax regime, you remember the default tax regime or new regime which we discussed. So if you are opting for default tax regime, then you will not get the benefit of 24B interest, meaning interest if it is a self-occupied property. So what about let out property? You can claim interest deduction. No, please not. So in summary is, assessee opts for optional tax regime. For LOP and DLOP, he will get full interest amount deduction. For SOP, he will get deduction of 30,000, 2 lakh. But if the assessee is opting for default tax regime or new tax regime, for SOP, he cannot claim any deduction for interest. For DLOP and LOP, full interest allowed as deduction. Full interest is allowed as deduction. Then we have a concept called as pre-construction period interest. What is pre-construction period interest? Pre-construction period means the years before the year in which construction was completed. All the years before the year in which construction was completed is called as pre-construction period. So pre-construction period is allowed, interest is allowed as reduction in 5 equal installment. This is allowed as reduction in 5 equal installment starting from the previous year in which construction was completed. From which year can I claim deduction? From the year in which construction was completed. Sir, how much deduction can I claim, sir? So the interest amount, the deduction which you can claim will be the deduction, the interest for that particular year in which the construction was completed plus pre-construction period interest share, that is 1/5. You will take that. So if it is a SOP, maximum you can claim only 2 lakh rupees. For LOP, you can take full amount of interest as deduction. Concept of vacancy. What do you mean by vacancy, sir? Vacancy means empty. Vacancy means what, sir? Vacancy means the house property is not occupied, or it is available for rent, but it is not occupied by anyone. The house property is empty. Please note, unrealized rent and vacancy rent is not same. So in case of normally, what do we do? Gross annual value, we take it as actual rent or expected rent, whichever is higher. But whenever there is a concept of vacancy, when you are taking gross annual value, you will have to do one small extra change. What is that change, sir? Your gross annual value will be equal to your expected rent. Compare that expected rent with your actual rent and vacancy period rent. You should compare that with whom, sir? Actual rent plus vacancy period rent. Now see who is higher, whether expected rent is higher or actual plus vacancy is higher. If your expected rent is higher, then that expected rent will be taken as gross annual value. If your actual plus vacancy period rent is higher, then your actual rent, which is there, that will be taken as gross annual value. Sir, what if both are equal? Then your actual rent will be taken as gross annual value. Then, sir, what else is there? Then what if the property is partly let out and partly self-occupied? What if it is partly let out and partly self-occupied house property, sir? If it is a partly let out and partly self-occupied property, then check whether it is partly let out, partly self-occupied area-wise or time-wise. Sir, area-wise means what, sir? Say first floor is let out, ground floor is self-occupied, or 60% of house is let out, 40% is self-occupied, etc. Any of these. And time wise means what, sir? For 8 months it is let out, for 4 months it is self-occupied. Now in this case, when it is a partly let out partly let out and partly self-occupied area wise, you are required to take everything. Everything means municipal value, fair rent, standard rent, municipal taxes and interest in the proportion of let out. You will have to divide or in the proportion of how much is let out and how much is self-occupied. In our example, 60% and 40%. So compute the income from house property separately for let out portion and self-occupied portion by taking municipal value, fair rent, standard rent, etc. proportionately. Now please note, actual rent you will take only for the let out portion, and very important is interest deduction. For self-occupied portion, you can claim maximum 2 lakh rupees, and for let out portion, you can take fully. For example, I have given one example over here. Sir, what if it is let out time wise? If it is let out time wise, lawmakers are telling compute the income from house property as if there is as if the property was let out for the entire year. You treat that the property is let out for the entire year and do the computation of income from house property. Now, once you compute this income from house property, your actual rent should be taken only for let out period. When I say compute as if it is let out for full year, that means what, sir? Your municipal value, fair rent, municipal taxes, standard rent, interest, they should be taken for the entire year, full year, and do the computation. Actual rent will be taken only for let out period. Sir, what about co-ownership, sir? If the house property is co-owned or jointly owned, then if a single house property has more than 2 owners, that means it is co-owned property. So in case of co-owned property, each of those owners are called as co-owners. How do I do the computation? You'll have to compute the income as if there is no co-ownership. You ignore the concept of co-ownership. Whenever there is co-ownership concept, compute the income from house property as if there is no co-ownership. Once you compute, whatever final answer you are getting, that you should divide between each of the co-owner in the ratio of ownership. And here one very big advantage is each co-owner will get the limit of 30,000 rupees and 2 lakh. Each co-owner will get 30,000 and 2 lakh benefit for interest. Now please note, what if the ratio is not given, sir? Whether it is the co-ownership ratio is not given, assume it to be equal. Sir, what if I have more than 2 self-occupied property? If you have more than 2 self-occupied property, then you can take exemption only for 2 properties. Self-occupied benefit exemption you can take only for 2 properties, and other properties will be taken as deemed to be let out. So in this case, no, for example, if I have 3 houses which are all self-occupied by me, you will have to find the answers in 3 options by considering each of the property once as DLOP. For example, in first case, I'll consider house 1 and house 2 as SOP, house 3 as DLOP. In second case, house 1 and house 3 I'm considering it as SOP, and house 2 I'm considering it as DLOP. In last case, I'm considering house 1 as DLOP, house 2 and house 3 as SOP. I'll have to do the computation of income in all these 3 cases. Now, wherever my income is least, that is the option which I'm going to select. Yeah, these are the major topics. Yeah, one more point is there. Section 25A. 25A talks about taxability of arrears of rent and unrealized rent. If you have any arrears of rent means what, sir? Rent under dispute. Or if you have any unrealized rent, the rent which you did not receive in any past years. Now, if those rent are received, if arrears of rent and unrealized rent is received, then it is taxable in the year in which it is received. How much is taxable? The taxable amount will be whatever amount you have received into 70%. Now, please note, they are taxable in the year in which the rent of received, and it will be taxable even if you are not the owner of the property. Now, other theory points are there. Now, in case of composite rent means what, sir? You are renting the house property with other assets. If the amount of composite rent is separable, you can separately tell how much is for house property and how much is for other assets. Then whatever is for house property will be taxable under house property, and whatever is for other things which you have received is taxable under PGBP or other sources. But if you cannot separate the composite rent, then the entire rent will be taxable under business or income from other sources. Then, sir, what if the house property is held as stock in trade? What if the house property is a stock in trade for me? I am a builder. Whatever income you are getting by sale of property will be treated as business income, and whatever income you are getting by renting of the property will be treated as what, sir? Income from house property. Now, please note, if you are a builder and if you are not selling all the properties and you are keeping some properties with you only as a stock in trade, if those properties are kept for more than 2 years as stock in trade, lawmakers are telling, I'm going to assume that it is deemed to be let out property. If a self-occupied property, if a builder is keeping the house property as a stock in trade and it is not been let out during the previous year, then the NAV will be taken as nil for 2 years from the end of the financial year in which construction was completed. And after 2 years, what will happen, sir? It is deemed to be let out property. Sir, what if the property is located outside India? And what if the property is located in India? If the property is located in India, irrespective of whether you are resident, non-resident, you will have to pay tax in India. But if the property is located outside India, resident and non-resident definitely has to pay the taxes. But if you are a resident but not ordinary resident or a non-resident, you will have to pay tax in India only if the rent is received in India. Sir, what do you mean by owner? Owners are of 3 types: legal owner, beneficial owner, and deemed owner. Deemed owner means they have given the meaning of deemed owner under a section called as section number 27. So if I am transferring the house property, if the house property is transferred by individual to his or her spouse without consideration, free of cost, or for inadequate consideration, then the individual who has transferred the property will be deemed as owner of that property. Though the legal owner is the spouse, the individual who has transferred will be deemed as owner. Exception is there: transfer in connection with agreement to live apart. So if there, in case of divorce or in case you have an agreement to live apart, then the deemed owner concept will not come. If next point number 2 says, if you are transferring a house property, if there is a transfer of house property by individual to his minor child, to his what, sir? Minor child, without consideration or for inadequate consideration. Minor child shall not include minor married daughter. If you are transferring it without consideration or for inadequate consideration, then the individual who has transferred them will be deemed as owner. And if you are a holder of impartable estates, whoever is the holder of that estate will be deemed as owner. And in case you are a member of cooperative society, for example, apartments, etc., each and every person is the owner of the flat, correct? They will get something called as membership certificate. Now, in that case, those who are having that membership certificate, those who are owning those flats, they will be deemed owner of those flats. In case of transfer of property as per Transfer of Property Act, if you are transferring possession of an house property according to the Transfer of Property Act, then the person who is holding the possession will be deemed as owner. And if you are giving any property on long-term lease, then the lessee will be deemed as owner. Okay, so these are the points with respect to income from house property. Some extra points, that SOP benefit is there. The 2 houses you can claim SOP benefit, that is available only for individual NHF. And municipal tax which you are paying outside India also is allowed as deduction. Now roof is not necessary for calling something as house property. It should be a building and land pertaining to that building. So even if it is a stadium or a swimming pool, you can claim the benefit of income from house property. Sir, what if a building is containing different flats? Then each and every flat will be called as single house property. And sir, what if there is a refund of municipal taxes? Refund of municipal taxes is taxable under income from other sources, not income from house property. If the house property is acquired by the person by paying amount in installment, then each and every installment you will have to pay interest also. That interest also can be claimed as deduction by you. Now, one point says, if you are renting any house property to your employee, because of which your business is running smoothly, then now whatever rent the employee is paying, no, that will be taxable under income from business or profession. Similarly, if a partner is renting a house property to the partnership firm, then it will be treated as self-occupied property for business purpose. Correct? So this is all about your income from house property. We'll start income from capital gain after a short break. I'll take a break. For you the video will continue. Welcome back, students. Welcome back. So yeah, we have discussed our 3 topics. Which are these 3 topics, sir? Which easy topics? One is tax rates we discussed. Then we discussed income, residential status, agriculture income, and income from house property. Now comes the most important topic for your attempt. Which is the most important topic, sir? Income from capital gain. This topic is the topic wherein the maximum amendments have come. The entire tax structure only from this topic, if you see, is completely changed. So we'll be discussing this topic now. What is this topic called as, sir? Income from capital gain. So section 45 to section 55 are the different topics which are covered over here. Please note, we will do extensive discussion over here. We'll see questions also. We'll see what are the changes made properly. We'll see everything. Okay. Now, what is this topic telling? Income from capital gain says, if you have a capital asset and if you have transferred that capital asset, and by transferring that capital asset, if you have got any gain, if you have a capital asset and if you have transferred that capital asset, by transferring that capital asset, if you have got any gain, that gain will be taxable under the head income from capital gain. If you have a capital asset and if you transfer that capital asset, by transferring this capital asset, say for example, I had this house which I purchased for 10 lakh rupees, I sold it for 50 lakh rupees, I got a gain of 40 lakh rupees. This gain will be taxable under the head income from capital gain. Section 45 subsection 1 is the charging section, which says any profit or gain arising from transfer of a capital asset, any profit or gain arising from transfer of a capital asset shall be taxable under the head income from capital gain in the year in which transfer took place. When will it be taxable, sir? In the year when transfer took place. Now, sir, what do you mean by capital asset, sir? 2 important items. Capital asset should be there and transfer should be there. What do you mean by capital asset? Capital asset means property of any kind held by the assessee. What do you mean by capital asset? Property of any kind held by the assessee, whether connected to the business or not. Any type of property which is held by whom, sir? Assessee. Any type of property. It does not matter whether that is movable property or immovable property. It does not matter whether it is a tangible property or intangible property. Any type of property held by the assessee. Whether it is connected to his business or not connected to his business, it does not matter. It will be treated as capital asset. Sir, then everything is capital asset only? No, sir. Every kind of property, if they are telling is capital asset, then everything is capital asset only? No, sir. Is there anything which is excluded? Yes. There are few things which are excluded. What are those things, sir? Stock in trade. Stock in trade will not be regarded as capital asset. Sir, what do you mean by stock in trade? Say for example, I am a person who is dealing in sarees, correct? I am a person who is dealing in sarees. I have Priya sarees. So can I say for me sarees are stock in trade? These are not capital asset. Sir, what if you are selling a saree which has say golden or silver threading which is done, sir? Is it a capital asset for me? Answer is no. Why? Because this is a stock in trade for me. So, sir, what if you are a jewelry dealer, sir? If I am a jewelry dealer, can I say all the jewelries which I have, they will be stock in trade for me? So, if I sell jewelry, what is going to come, sir? Business income is going to come. So, they will not be regarded as capital asset. Okay, not okay. So, stock in trade will not be regarded as capital asset. Then, movable personal effects will not be regarded as capital asset. Sir, movable personal effects means what, sir? Movable personal effects means those items which are movable, and which you are using for your personal purpose. Those items which are movable and which you are using for your personal purpose. For example, my t-shirt. This is a movable personal effect. This is a movable item which I am using for my personal purpose. So this is a movable personal effect. Okay, not okay. Then sir, then what else, sir? Movable personal effect is done, sir. Sir, then what else is capital asset, sir? Once again. Okay, movable personal effects. Movable personal effects are not treated as capital asset. Sir, movable personal effects, my mobile phone is not a capital asset. See this pencil which I am using for writing purpose. This is not a capital asset. Why, sir? Because this is something which is movable and I am using it for my personal purpose. Movable personal effects are not treated as capital assets. Sir, what about my car, sir? Is this car treated as capital asset? Answer is no. Movable personal effects. Sir, what about this TV? Answer is no. Sir, what about this AC? Answer is no. What about this water bottle, sir? Answer is no. Because they are all movable items which I'm using for my personal purpose. But this house, if you see, it is an immovable property. Can I call it as a capital asset? Yes, sir. This sofa which you are telling, can I call it as a capital asset? Answer is no, sir. So specs which I am wearing, the t-shirt which I am wearing, are they all capital asset? Answer is no, sir. They are not capital asset because they are movable personal effects, movable property which I am using it for my personal purpose. However, lawmaker says, see, normally movable personal effects are not capital asset. Normally, movable personal effects are not capital asset except DJ Paso BV. Sir, repeat. Normally, movable personal effects are not capital asset except DJ Paso BV. Sir, what do you mean by this? Meaning, see, normally movable personal effects are not capital asset, but however, if that movable personal effect is your DJ Paso BV, if that movable personal effect is what, sir? If that movable personal effects is your DJ Paso BV, then this DJ Paso BV will be treated as capital asset. Sir, what is this DJ Paso BV? If the movable personal effects is a drawing, jewelry, painting, archaeological collections, sculptures, shares and securities, any other work of art. Drawings are treated as capital asset. Paintings are treated as capital asset. Jewelries are treated as capital asset. Archaeological collections, sculptures, shares and securities are treated as capital asset. Any other type of artwork is also treated as capital asset. Bullion means what, sir? Your gold biscuit, silver biscuit, they are all treated as capital asset. And your virtual digital asset, cryptocurrencies, they will also be treated as capital asset. Sir, they are all movable. Please note, jewelry is movable. Though you are using it for personal purpose, the jewelry which you are using, which you are wearing is your movable personal effect, but still it will be called as capital asset. Similarly, Mona Lisa painting is there, that will be treated as capital asset. Then what else is not a capital asset, sir? Rural agricultural land. Sir, rural agricultural land means agricultural land located in rural area. Sir, what do you mean by rural area? Rural area means something which is not an urban area. Sir, what do you mean by urban area? Sir, urban area means an area whose population is 10,000 or more. So if you are staying in an area whose population is 10,000 or more than 10,000, exactly 10,000 or more than 10,000, that means you are staying in urban area. Sir, what if my area's population is more than 10,000 up to 1 lakh? Then your area to definitely is urban area because your area's population is more than 10,000. Now, from your area up to 2 kilometers area is also treated as, from your area up to 2 kilometers area is also treated as, what, sir? It is treated as urban area. Sir, what if I am staying in an area where my population, where the population is more than 1 lakh up to 10 lakh, sir? Then of course your area is an urban area because it is more than 10,000. From your area up to 6 kilometer area is also treated as urban area. Sir, what if my area's population is more than 10 lakh? Then your area is definitely an urban area. From your area up to 8 kilometers of your area is also treated as urban area. Then gold bond, deposit certificates, etc., they are also not treated as capital asset. Then any securities which are held by foreign institutional investor. Please note, normally if you're a foreign institutional investor, for you the shares and securities which you are holding, they will normally be a stock in trade for you because you are going to deal in that. But still specifically they are mentioned, if you are a foreign institutional investor, whatever type of securities you are holding, they will always be treated as what, sir? They will always be treated as capital asset. Then ULIP, which is not exempt under section 1010D. So the ULIP means what's a unit linked insurance policies. So there are some unit linked insurance policies which are issued after 2021. These unit linked insurance policies are not exempt under section 1010D. Normally, whatever life insurance money you get at the time of retirement or upon the death of the policy holder, whatever money you get, no, that is exempt under section 1010D. But if that policy is an unit linked insurance policy, then the exemption will not be given to you. So those unit linked insurance policies for which exemption under section 1010D is not available, what are they, sir? They are treated as capital asset. They are treated as what, sir? They are treated as capital asset. Okay, sir. Sir, what do you mean by transfer? Oh, sir, what do you mean by transfer? Transfer includes sale. What do you mean by transfer, sir? Transfer includes what? One second. Transfer definition says transfer includes sale of a capital asset, then exchange of a capital asset, relinquishment, you are giving away your right, you are surrendering your right, relinquishment of capital asset, extinguishment of capital asset is destroyed, conversion of capital asset into stock in trade, compulsory acquisition of capital asset, allowing possession of immobile property, then transfer of shares in cooperative society and redemption of zero coupon bonds. They all are the different categories of transfer. If you are selling something, if you have a property and you're selling that property, that is called as sale of a capital asset. If you're exchanging, I'm giving you my building, you give me 1 kg gold, that is also treated as transfer of capital asset. Relinquishment of capital asset. I have some rights on some right issue has been made by the company. I have rights. I have some rights with me. That rights I am giving away to someone else. That is relinquishment of capital asset. Extinguishment of capital asset. My capital asset is destroyed. Transfer of capital asset. Conversion of capital asset into stock in trade. So whatever jewelry I had now, that was my capital asset. Now I'm starting my own jewelry business. Now I'm starting my own jewelry business. So this capital asset is converted into stock in trade. That will be regarded as transfer. Compulsory acquisition of capital asset under any law. What do you mean by this, sir? Meaning, say for example, I have a property. Now the government comes and says we want to do some construction activity over here. So please, we will compulsory acquire your property. So this is called as what, sir? Compulsory acquisition of capital asset. This is also treated as transfer. Allowing possession of immobile property as per Transfer of Property Act. So there is a act called as Transfer of Property Act, wherein if you transfer the possession, you're not transferring the ownership. If you're transferring the possession, even if that possession is transferred, and if that possession of the property is transferred as per Transfer of Property Act conditions, then it will be regarded as transfer. Transfer of share in cooperative society and redemption of zero coupon bonds. Zero coupon bonds are those bonds which are issued at a discount and redeemed at par. So when you are redeeming those zero coupon bonds, it will be regarded as transfer, and accordingly capital gain tax you are required to pay. For the purpose of income tax law, for the purpose of this chapter called as capital gain, your capital assets which are there, no, capital asset, they are divided into two categories. One is called as long-term capital asset. Another one is called as short-term capital asset. Sir, what is this long-term capital asset? See, to check whether a particular capital asset is long-term or short-term, you will have to see the period of holding of that capital asset. What should you see? You will have to see the period of holding of that capital asset. If the period of holding of the capital asset is, what is period of holding? If the period of holding is the period from the date of purchase or date of acquisition till the date of transfer. From the date of purchase of that capital asset till the date of transfer of that capital asset, the period is there, no, that is called as period of holding. If the period of holding of a capital asset is more than 1 year, 2 year or 3 year, it is treated as long-term capital asset. If the period of capital asset is less than or equal to 1 year, 2 year, 3 year, it is treated as short-term capital asset. Now please note. So capital asset can be basically of two types, long-term capital asset and short-term capital asset. If you're transferring long-term capital asset, you will get something called as long-term capital gain. And if you're transferring short-term capital asset, you will get something called as short-term capital gain. So capital assets can be of two types, long-term and short-term. If you transfer long-term, it is long-term capital gain. If you transfer short-term, it is short-term capital gain. Sir, how will I come to know whether it is a long-term capital asset or short-term capital asset? You will have to see the period of holding. How long you have holded the capital asset for. Whether you have hold it for more than 1 year, 2 year, 3 year, if yes, then it is a long-term capital asset. If you hold it for a period less than 1 year, 2 year, 3 year, then it is short-term capital asset. So say for example, for what are the, sir, you said 1 year, 2 year, 3 year, no sir. For which assets it is 1 year, sir? See, please note, our institute material uses 12 months, 24 months and 36 months instead of 1 year, 2 year, 3 years. So for which assets it is 12 months or 1 year, sir? Any securities any securities which are listed in recognized stock exchange of India. So if there are any securities which are listed in recognized stock exchange of India, for them I'm going to see 1 year. Other than units, please note, units are not covered over here. Only securities should be taken. Any listed securities like listed shares are there, listed debentures are there, they should be taken, but not listed mutual funds. Okay, units of equity oriented mutual fund should be for that also it is 1 year. Then units of business trust of India also it is 1 year, and for zero coupon bonds also the period of holding which you are supposed to see is 1 year. So if you are any listed securities, units of equity oriented mutual fund, units of business trust of India, and zero coupon bonds, if these items are transferred and if they have if someone has holded this for more than 1 year, then it will be treated as long term capital gain. If they transfer and they get some gain, that is called as long-term capital gain. And for immobile properties and unlisted shares, that means the shares which are not covered above. So for immobile property and for unlisted shares, the period of holding is 2 years. And any other type of capital asset apart from these two types, apart these two categories, for them all other type of capital asset it is 3 years. What are covered, sir? Jewelry is covered, painting is covered, drawing is covered, archaeological collections are covered. All the other type of capital asset, what is the period of holding which I'm going to see? I'm going to see the period of holding of 3 years. Note, if the transfer is after 23rd July 2024, the period of holding will be what, sir? 2 years. Now, there is an amendment in capital gain chapter. The major amendment is because of two budget which happened last year. Last year means the year 2024 was a year of election. As you all know, in the year of election, what will happen, sir? In the year of election, two budgets will happen. One is before election, one budget will happen, and after election, one budget will happen. Before election, the budget which is going to come is called as what, sir? The before election budget is called as interim budget, and after election, the budget which is going to come is called as final budget. Correct? So now when did the first budget happen? On 1st of February 2024. After that, there was one more budget which came into existence on 23rd of July 2024. So major changes have been happened in capital gain topic on this particular date. Which date? On 23rd July 2024. What is the change talking about, sir? First change which they are talking about is the period of holding. Now there is no 3 years category for checking the period of holding. So if you have holded any type of capital asset, or if it is sold on or after 23rd July 2024, then I'm going to check the period of holding of 2 years. Okay, not okay? Sir, what if the transfer is made before 23rd July, sir? Then I will see 3 years category. Meaning for jewelry and all, I will see what, sir? For jewelry and all, I will see 3 years categories. So the period of holding will be what, sir? The period of holding will be 3 years. The period of holding will be 3 years. Now this 3 years category has been removed. If any transfer is made on or after 23rd July 2024, the period of holding which I am going to see is what, sir? 2 years. Now, how do I compute the capital gain? Computation of capital gain. Sir, tell me, sir, how do we compute the capital gain? For computing capital gain, what should I do, sir? Computation of capital gain. See, capital asset can be of two types, short-term capital asset and long-term capital asset. The computation mechanism is both same for both. You should take full value of consideration. You should take what? Full value of consideration, subtract expenses incidental to transfer, you will get your net sale consideration. From this net sale consideration, subtract cost of acquisition and subtract cost of improvement, you will get your gross capital gain. Then subtract exemptions under section 54 series if it is given in the question, and then you will get your taxable capital gain. The only difference in long term and short term is that in case of long term capital asset, instead of taking cost of acquisition and cost of improvement, you will take indexed cost of acquisition or indexed cost of improvement, meaning you will give the benefit of inflation. What lawmaker says is, because you are holding some asset for a longer period of time, I will give you the benefit of inflation. Sir, how will I get index cost of acquisition and index cost of improvement? You should take your cost of acquisition. So whatever cost of acquisition is there, multiply that with index for the year of transfer. Multiply it with what, sir? Index for the year of transfer. In the year in which transfer was made, what was cost of inflation index? Multiply it with that and divide it by index for the year of acquisition. And divide it by what, sir? Cost of inflation index for the year when the property was acquired. Okay, you will get your index cost of acquisition. Similarly, for getting the index cost of improvement, take your cost of improvement, multiply it with the index for the year of transfer, divide it by the index for the year when the improvement was made. Now, very important point, if the capital asset is acquired by you before 1/4/2001, if you have purchased the capital asset before 1/4/2001, then lawmakers, what they have given is, for index, the index values which they have given, the base year for that is the year 2001-2. So if any capital asset is purchased before 1/4/2001, for that index values are not there. So in such cases, what they are telling is, if any capital asset is acquired by you before 1/4/2001, you should take the cost of acquisition to be equal to the actual cost of that capital asset or the fair market value of that capital asset as on 1/4/2001, whichever is higher. A, what will you take? The actual cost of that capital asset or the fair market value as on 1/4/2001, whichever is higher. Now, please note, there is a concept called as stamp duty value, concept of stamp duty value under section 50C. Now, we'll discuss those other concept, but while discussing that concept, we'll come across this point telling if the fair market value as on 1/4/2001 should not be more than stamp duty value as on 1/4/2001. Meaning, in case in the question, if they have given, see, if the property is acquired before 1/4/2001, and if in the question they have given along with fair market value, if they have also given the stamp duty value of that property as on 1/4/2001, then I'll compare the stamp fair market value with stamp duty value and take whichever is less first. This amount, whatever I got, I will compare with my actual cost and take whichever is higher. Normally what will I do? Normally if the property is acquired before 1/4/2001, I will take its actual cost or fair market value, whichever is higher. Normally if the property is acquired before 1/4/2001, I will take its actual cost or fair market value, whichever is higher. But as on 1/4/2001, if along with fair market value they have also given stamp duty value, I'll compare these two now. I'll compare stamp duty value with fair market value, take whichever is less. This whichever is less, I'll compare with actual cost and take whichever is higher. We'll see questions, don't worry. And any improvement done before 1/4/2001 should be completely ignored. Any improvement done before 1/4/2001 should be ignored by you completely. Now, what are the amendment which is there in this category, sir? Is there any amendment? Yes. Major amendment, most important amendment. If any capital asset, sir, what? If any capital asset is transferred, if any long-term capital asset is transferred on or after 23rd of July 2024, if any long-term capital asset is transferred on or after 23rd July 2024, the benefit of indexation will not be given. You will not get any benefit of indexation for all types of capital asset which is transferred on or after 23rd of July 2024 for computation. Oh, please note. This is for what purpose? This is for computation purpose, for computation of capital gain. Above point we wrote no, for computation. For computation of capital gain, when you are computing capital gain for long-term capital asset, you will not get what? You will not get the benefit of indexation. You will not get the benefit of indexation if the transfer is on or after 23rd of July 2024. Now here I have explained the concept of indexation, etc. That is not required. Now, what is the most important amendments? What is the most important amendment? I'll come to the most important amendment which we have. What is that, sir? With respect to tax rate. Now, instead of discussing it through what is written over here, I will write and explain you so that it will fit in your brain. Correct? That will be better. I will just write and explain you the most important amendment so that when I'm writing, you will be able to grab it even easily. See, now, normally what happens is, your capital gain which is there, no? Normally, whatever capital gain you have, that capital gain is taxable either under two sections. It can be taxable under section 112 or it can be taxable under section 111. So, if it is a long-term capital gain, then it will be taxable under section 112, and if it is a short-term capital gain, then it will be taxable under which section, sir? Under section 111. Now, we all know if it is a short-term capital gain which is taxable under section 111, it is taxable at slab rates. What is the rate applicable? It is taxable at slab rate. So, it does not matter when the transfer is made. If it is a capital asset, if it is a capital gain which is a short-term capital gain under section 111, then it is always taxable at slab rate. Always taxable at slab rate, irrespective of when the irrespective of what, sir? Irrespective of when the transfer is made. Always taxable at slab rate. Which? Short-term capital gain, always taxable at slab rate. Short-term capital gain under section 111 is always taxable at slab rate. Then we have long-term capital gain under section 111A. Sorry, we have long-term capital gain under section 111. Sorry, long-term capital gain under section 112. Now, what is this long-term capital under 112 telling? Now, is it an immobile property which you have transferred? What lawmaker says, is it an immobile property which you have transferred? What do you mean by immobile property? Have you transferred a capital asset which is a land or a building or both? Or have you transferred any other type of capital asset? Have you transferred what? Have you transferred immobile property or have you transferred any other type of capital asset? If you have transferred any other type of capital asset other than immobile property, I will check when have you transferred it. I will check when have you transferred it. Sir, is the transfer before 23rd of July 2024 or is the transfer on or after 23rd of July 2024? If the transfer is before 23rd of July 2024, the tax rate will be what, sir? It is taxable at 20% and you will also get the benefit of indexation. Meaning for computation of capital gain, you can take the benefit of indexation. So if the capital asset is transferred before 23rd July 2024, the tax rate which will be applicable will be 20%. And you can also take the benefit of what, sir? You can also take the benefit of indexation. Sir, but what if the capital asset is transferred on or after 23rd July? And if it is not a immobile property, sir, what is covered over here, sir? When you say it is not an immobile property, then what is covered over here? For example, jewelry is there. For example, unlisted shares are there. For example, paintings are there, etc. Okay, so if the capital asset, if it is a capital asset if it is a long-term capital asset taxable under section 112, then check whether it is immobile property or other. If it is others, then check when the transfer is made. If the transfer is before 23rd July 2024, tax rate will be 20% and you will also get the indexation benefit while computing the capital gain. But if the capital asset is if the transfer is on or after 23rd July 2024, then it will be taxable at 12.5%. Then it will be taxable at 12.5% and you will not get indexation benefit. Meaning no indexation benefit will be given for you if the transfer is after, on or after 23rd July. This point to just now we studied that no indexation benefit will be given. Yes, sir. Now, sir, why have you written immobile property separately, sir? Is there any other separate treatment for immobile property? Yes. So in case of immobile property, I am going to check who is transferring that immobile property. In case of immobile property, I will check the person who has transferred falls under which category. If the person who has transferred, whether he is an individual or an HUF, or is that person an any other person. Okay, I will check whether that person who is transferring is an individual or HUF or is it any other person. Now I am going to check when the transfer is made. If the transfer is made before 23rd July 24, then no problem, the tax rate will be same 20% and it will be with indexation. However, if the transfer is on or after 23rd July 24, for computation of capital gain, you cannot take indexation. For computation of capital gain, you cannot take indexation. But for computation of capital gain, you cannot take indexation. But for paying tax, you can opt either 20% with indexation or B 12.5% without indexation. You can select now whether to pay tax at 20% with indexation or 12.5% without indexation, whichever is less. At your option, you can, while computing the tax, please note, while computing the capital gain, indexation benefit will not be given to you, but while computing the tax amount, you can compute the tax at 20% with indexation benefit or 12.5% without taking indexation benefit. Sir, what if I am not an individual or an HUF? And if I transfer immobile property, then it does not make any difference. For you, the tax treatment will be same. If the transfer, if for you, the tax treatment will be same. If the transfer is before 23rd July, for you the tax rate will be 20%, and if the transfer is after 23rd July, then it will be 12.5% without indexation benefit. Okay, so if you're any other person, the treatment will be same for you. Sir, here you have told only 112 and 111. No, sir. But we have studied that capital gain is also taxable under 112A and 111A. Yes. Sir, this is only for three assets. Which are these three assets? Listed equity shares or equity oriented mutual fund and units of business trust of India. So only for these three assets, this section is available. This section is applicable. So now, if you have understood this, because this is one major amendment wherein, I mean, the impact will be huge. If you have understood this, now I'll go for the entire bigger chart and I'll start explaining the entire taxation system under capital gain. Please note, first thing you should understand before we go to this taxation system, first thing which you have to understand is what? The first thing which you have to understand over here is that you are not going to, first thing which you are going to understand is, if the transfer is made by you on or after 23rd of July 2024, you are not going to get indexation benefit. If you are making a transfer on or after 23rd July 2024, you will never get indexation benefit for computation of capital gain. Correct? Not correct? Correct, sir. Now, so type of capital gain. So here what are we doing? Discussing? Are we discussing about computation? No, here we are discussing about the tax rate for income from capital gain. So you can have either long-term capital gain or short-term capital gain. So for short-term capital gain, the transfer can be made by you before 23rd July or after 23rd July. Now I'll check what is the type of capital gain. If it is a short-term capital gain taxable under 111, always it is taxable at slab rate. If it is a short-term capital gain taxable under 111A, then the rate was 15%. However, if the transfer is made on or after 23rd July, if it is 111, of course, slab rate. And if it is 111A, the tax rate is now 20%. So in case of 111A, from 15%, it has been increased to 20%. And if the transfer is before 23rd July, you should be very careful with the dates in the question. I will take 15%. If the transfer is after 23rd July, I will take 20%. Okay, not okay. Okay, sir. Sir, what are covered under 111A and 112A, sir? Equity shares which are listed, equity oriented mutual fund and units of business trust of India. Now, sir, what about long-term capital gain, sir? Long-term capital gain also can be, transfer can be made before 23rd July or on or after 23rd July. Sir, what if I make the transfer before 23rd July? Very simple. If you are making transfer before 23rd July, check whether it is 112 or 112A. If it is 112, that means 20% and you'll get indexation benefit. If it is 112A, then the tax rate will be 10% for gain in excess of 1.25 lakhs. And of course, you will not get indexation benefit. Sir, but what if the transfer is made on or after 23rd July 2024? If the transfer is made on or after 23rd July 2024, for 112A, the tax rate will be 12.5% and for income in excess of 1,25,000 and no indexation benefit will be given. For 112 capital gain, for 112 long-term capital gain, the tax rate will be for other categories of for all properties, for all capital assets other than immobile property, it is 12.5% and no indexation benefit. But however, if it is an immobile property for individual or HUF, 20% with indexation, 12.5% without indexation, whichever is less, and for others it is 12.5% without any indexation benefit. So this is the entire summary of your capital gain taxation. Okay, I hope this point is very clear to you. Now, let me show you a question to make you understand. In examination, when question is asked, how should I answer? See this question now. See this question. What is important? What is important? What is the thing which you have to check while reading the question? Mr. Champak purchases a house property for 3 lakh rupees on 26th of May 1989. So that purchase was made before 1/4/2001. The following are the expenses incurred by him. He incurred a construction cost before 1/4/2001. That construction cost incurred before 1/4/2001 should be ignored. Then cost of construction of second floor he incurred on 3/4, 5,30,000, and he incurred another reconstruction cost in the year 910 for 2,90,000 rupees. The fair market value of the property as on 1/4/2001 was 9,50,000. Meaning, so what will be my cost of acquisition? My cost of acquisition will be actual cost, which is 3 lakhs, or fair market value, which is 9.5 lakhs. Fair market value as on 1/4/2001, which is 9.5 lakhs, whichever is higher. So my cost of acquisition of this property will be how much, sir? 9,50,000 rupees. Now please understand this carefully. Please understand this carefully. The property is sold by Mr. Champak on December 10th, 2024. When was it sold, sir? Please note. This was an extra question which I had given to the students. Okay. This is extra question which I had given to the students in the classroom to solve. Now, what is the question telling? The question says the house property was sold by Mr. Champak on 10th of December 2024 for 85 lakh rupees. And expenses incurred incidental to transfer was 60,000 rupees. Fantastic question it is. Now please note, this is a perfect case of the amendment which we just now saw. Now please note, this person is Mr. Champak. So can I say he is an individual? So for individual, he's selling what, sir? He's selling a house property. That means, can I say he's selling an immobile property? So if an individual is selling immobile property and that sale is made after 23rd July 2024, now how do I do the treatment, sir? How do I do the computation of capital gain? As I told you, for computation of capital gain, no indexation benefit will be given. For any transfer made on or after 23rd of July, for computation of capital gain, indexation benefit will not be given. Indexation benefit will be given only for checking the tax amount. Only for checking the tax amount. Now here the question is, what is the capital gain and what is the tax liability? So how will I solve this question, sir? Now please see. So we should write the name of the assessee. So very important is, what is the date of transfer? So the date of transfer is after 23rd July 2024. That means, while computation of capital gain, I should not give indexation benefit. While computation of capital gain, I should not give indexation benefit. Okay, not okay. While computation of capital gain, I should not give indexation benefit. So what is the answer, sir? What is the answer over here? So computation of capital gain. Please check only the blue part. Please check only the blue part. Okay. Please check only the blue part. Ignore this pink color whatever I have written. So Mr. Champak, particulars. What is full value of sale consideration? 85 lakh rupees. Expenses incidental to transfer is 60,000 rupees. So my net sale consideration came to 84 lakh 40,000 rupees. From that, I'm going to subtract my cost of acquisition, which is 9 lakh 50,000, and my cost of acquisition, which is whatever 9 lakh 50,000. How did you get 9 lakh 50,000? Because it was purchased before. Then I got fair market value as on 1/4/2001, or actual cost, whichever is higher I should take. So 9 lakh 50,000. Improvement made before 1/4/2001 should be ignored. And improvement of second floor I have taken as it is without indexation, and reconstruction improvement also I had taken as it is without indexation benefit. Therefore, I got total capital gain of how much, sir? 66 lakh 70,000 rupees. Please note. Can I say, because the transfer was made on or after 23rd of July 2024, while computing the capital gain, I have not taken indexation benefit. I have directly taken the cost of acquisition and cost of improvement, and therefore I got a capital gain of 66 lakh 70,000 rupees. Okay, not okay? Okay, sir. So this should be your answer for capital gain. If they ask you what is the capital gain amount, this should be your answer. Now the next question which they have asked is, what is the tax which he has to pay? Now for paying the tax, this person has two options. Either pay tax at 20% with indexation benefit, or pay tax at 12.5% without indexation benefit. Now see, if you see over here, now whatever capital gain is there into without indexation, if I do, because the transfer was made after 23rd July, the tax rate will be 12.5% on 66 lakh 70,000, which comes to 8 lakh 33,750 rupees. But he also has an option to pay tax at what rate, sir? 20% by taking indexation benefit. So only for the purpose of tax, please note students, only for the purpose of finding this tax, what am I doing? I am computing the capital gain again. I am computing the capital gain again to check what would be the capital gain with indexation. So see over here in my answer, what have I written separately over here? This is like a working note for me. Capital gain with indexation. This is only for tax purpose, only for tax purpose, only for the purpose of computing tax. Your actual answer of capital gain is this much. This is only calculated for the purpose of tax. So 85 lakhs minus 60,000, you'll get 84 lakh 40,000 rupees, and from that you will subtract your indexed cost of acquisition. You will subtract your index cost of improvement, you will get your capital gain. On this amount, you will apply what rate, sir? 20%. You compare both of them now. Whichever is lower is the tax which you have to pay. Okay, not okay. Whichever is lower is the tax which you have to pay. Now, in examination, you are supposed to write note also. First note will be, why have you taken 9,50,000 as cost of acquisition? So, first note will be that. And note number 2 is very important note. Since the transfer was made after 23rd July 2024, capital gain is computed without taking benefit of indexation. Okay, not okay, students. I hope this point is very clear to you. Very important amendment. This is very important amendment. Okay, I have showed you how to solve it in examination. I'll show it once again for one more question which I had given physically to the students to solve. Sir, tell me. Sir, you have given extra question to students. No, sir. What will be the answer if the transfer is made on 10th of May? Meaning, what will be the answer if the transfer is before 23rd July 2024? Now, in that case, can I say the answer will be this amount only? Because if the transfer is made before 23rd July, can I say I can directly take indexation benefit? Therefore, my answer will be this. And what will be the capital gain amount? Capital gain amount will be this. I will not take whichever is lower. I will directly take this amount because 20% is the tax rate. Correct, not correct? Yes, sir. Now see, one more question. See how the impact will be of this in examination. This is a beautiful question which will explain that. And please know, please see this question. You solve this question. After I explain, you can again solve this question and see this question carefully because I expect this type of question to come in examination. Mr. Dilip purchased a house on 14th of February 2004 for 10 lakh rupees. This house was sold by him for 60 lakh rupees on 15th of August 2024. So can I say it is after 23rd July? Yes, sir. Expenses incident to transfer is 2 lakh rupees. Following are the details of other incomes of Mr. Dilip. Business income I have 8 lakh rupees. Other sources income I have 4 lakh rupees. Compute the total income of Mr. Dilip and his tax liability. What is my total income and what is my tax liability? So here they have asked you what is the total income. So your main answer should be what, sir? Computation of total income. That should be your main answer. So computation of total income, they have given business income, they have given other sources income, and capital gain income I should find. So I have given working note number 1 for computation of capital gain. So if you see over here, so here working note number 1, computation of income from capital gain. I'll take my full value of sale consideration, subtract expenses incidental to transfer. I will get my net sale consideration over here. I'll get what, sir? I'll get my net sale consideration. From this net sale consideration, I'm subtracting my cost of acquisition. Please note, index cost of acquisition is only for tax purpose. So I'm subtracting my cost of acquisition. I will get my capital gain as 48 lakh rupees. So what I have done, I have added 48 lakh rupees over here. So my gross total income came to 60 lakh rupees. There is no deduction information. Therefore, my total income will be 60 lakh rupees. Now, please note, in examination, of course, they can ask you this question with deductions also, with chapter 6 deductions also. Okay. So the total income is what, sir? 60 lakh rupees. Now, what is the tax on total income? So to find the tax on total income, I should first take what, sir? I should first find the tax on special rate income. The tax on special rate income, Dilip is an individual. He has sold an immobile property. Therefore, for him, tax rate will be 12.5% without indexation, 20% without with indexation, whichever is less. So 12.5% of 48 lakhs. What is my capital gain amount? 48 lakhs into 12.5% is 6 lakh rupees. Or with indexation, what is the capital gain? So I should recompute my capital gain with indexation. Capital gain with indexation only for the purpose of tax. 60 lakhs, subtract 2 lakh, you'll get 58 lakhs, and 10 lakhs into whatever index cost you do, you'll get index cost of acquisition, and you got your capital gain, which is 24,69,725. This is only for tax purpose. So this into 20% rate, you got some answer, take whichever is less. So what is less, sir? 4,93,000 is less. So tax on my capital gain will be 4,93,945, and tax on the balance total income will be 1,72,500 rupees. So which is with the total of which is 6,66,445. To this, I will add 10% surcharge. I'll add what, sir? 10% of this will be added by me as surcharge. I will get some amount now, 7,33,089 rupees. To this I'll add health and education cess, and I'll get my final answer, which is required to be rounded off to the nearest multiple of 10. This is how I will have to solve the question in examination. Very important. Now please note, what is the impact of this? The impact of this is now when you are computing the capital gain, you should not take indexation if the transfer is after 23rd of July. Indexation benefit should be taken only for the purpose of computing tax on capital gain, and only for whom, sir? Only for individual and HUF if they have transferred immovable property. Now let us continue and go forward. Exception to section 45(1). Section 45 subsection 1 says normally capital gain is taxable in the year in which transfer took place, correct? But however, there are some exceptions. What are those exceptions? First exception is conversion of capital asset into stock in trade, then compulsory acquisition of capital asset under any law, and insurance claim for damage and destruction of asset. For example, I have purchased a capital asset. I had purchased a capital asset 100-acre land in the previous year 2001-2 for 10 lakh rupees. Now this is converted by me. So this was a capital asset. Now I have converted this capital asset into my stock in trade. When did I convert, sir? I converted this in the previous year 17-18 when the market value of this asset was 40 lakh rupees. Now this became my stock in trade. Now please note, we all know conversion of capital asset into stock in trade is treated as transfer. Because it is a transfer, the year of transfer will be taken as 17-18. Now the stock in trade was sold by me in the year 24-25. Now what lawmaker says? Whenever you are converting a capital asset into stock in trade, I will call it as a transfer. Transfer will take place in the year when conversion happened. However, capital gain tax you will have to pay in the year in which stock in trade is sold. Capital gain tax, when will you have to pay? We'll have to pay in the year in which stock in trade is sold. So can I say in the year in which stock in trade is sold, I will have two types of income. So when was stock in trade sold? 24-25. In this year, I will have two incomes. Which are these two income? One is your capital gain income. Another one is your business income. Sir, how much will be capital gain income, sir? Your capital gain income will be, for finding capital gain, you should take full value of sale consideration, which is nothing but the fair market value of capital asset on the date of conversion. On the date of conversion, what is the market value of capital asset? You take that. Then subtract expenses, if any. You'll get net sale consideration, and subtract index cost of acquisition. Sir, why have you taken index cost of acquisition over here? Because the transfer is before. The transfer is before what, sir? 23rd July. So always indexation will be given if the transfer is before. So I took indexed cost of acquisition, and the long-term capital gain was 12,80,000 rupees. Please note, it does not matter when the stock in trade is sold. It does not matter when the stock in trade is sold. The stock in trade may be sold before 23rd July, after 23rd July. It does not matter. What matters is, for checking whether indexation will be available or not, what matters is when the capital asset was sold. The capital asset got transferred on which date, sir? In the year 17-18. Therefore, it is before 23rd July. And business income will be what? Your sale price minus market value as on the date of conversion. You will get your business income. Now, sir, what if the stock in trade, now whatever the stock in trade is, no, sir, you sold the entire stock in trade for 90 lakh rupees. What if the stock in trade is sold in installment or parts? Say, for example, I sold only 70 acre land. Only 70 acre I sold. Instead of selling entire 100 acre, I sold only 70 acre. Lawmakers, in such case, computation of capital gain will remain same, meaning the capital gain amount will remain same, but however, the taxable amount will be only that portion which is sold. So our capital gain amount will remain same, which is 12,80,000. How much was sold? 70 acres was sold. Oh, so 70 divided by 100, the taxable capital gain in the year of sale is how much, sir? 8,96,000. Sir, what about balance 30%? When it will be taxable, sir? It will be taxable when 30% land is sold. Similarly, your business income will be only, you take your sale price of that 70 acres, expenses with respect to that, cost of acquisition will be 40 lakh. Cost of acquisition will be what? 40 lakh rupees, meaning the market value of the entire asset into only 70% was sold. So I'll take 70%. So you'll get your business income. Similarly, we have one more provision called as compulsory acquisition of capital asset. So there are some questions which I have solved over here. I mean, very easy questions. You'll definitely get through these questions while reading it from the material, and definitely you can find the link of the material in the description box, and you can download and use it for your reference purpose. Now please note, this is a chapter where good amendments are there. So I mean, As I told you, you just watch this completely and watch this lecture completely, this part which we are discussing, and read it from the material completely once. Okay, only after that, if you feel that no, I need extra confidence, I need to see the entire this chapter completely, then only go decide on purchasing the classes. Okay, so you don't have to purchase anybody's class, you don't have to do anything, you just watch this. If you are understanding, very good. And if you feel no sir, I have to solve some extra questions because these questions you have not discussed over here, I just want to solve these questions sir, I'm not able to understand, I got some doubt here and there sir, then you can definitely go and purchase the class, and you can, I mean, study it again from that part. Next, section 45(5), compulsory acquisition of capital asset under any law. Now what happened over here? This was my house property. This house property was compulsory acquired by government. This was purchased by me in the year 2001-2, and I paid how much sir? 10 lakh rupees. And this house property was compulsory acquired by government in the year 1718. Government told, I want to do construction of some highway over here, so I'm compulsory acquiring your property. So they compulsory acquired. On that date, the market value of this property was 70 lakh rupees, but the government decided to pay me a consideration only of 50 lakh rupees. Okay, what was the market value on that date? 70 lakhs, but they decided to pay me 50 lakh rupees. Now please note, compulsory acquisition they did on 1718. However, they paid me the money on which year sir? In the year 24-25. So lawmaker says compulsory acquisition of capital asset will be treated as transfer, and transfer will take place in the year in which compulsory acquisition happened. However, capital gain tax you will have to pay in the year in which compensation is received by you. In the year in which government is paying you compensation, that time you will have to pay capital gain tax. Okay, not okay? Now please note, now here sometimes it may happen that, see, government has given me money only of 50 lakh rupees. I can fight in the sense I can go to the court and ask for extra money. So if I ask for extra money, see, when the market value is 70 lakh rupees, if you are paying only 50 lakh rupees, that is not unfair. So I can put a case against the government on the court, and if the court decides the case in my favor, I may get some extra money. So let us say I put a case and I got some extra money. Sir, what about this extra money? Will this also be taxable? Answer is yes. See, government first paid me how much? 50 lakh rupees. I put a case and government paid me additional 15 lakh rupees. Is this also taxable, sir? Yes, this is also taxable, and it is taxable under capital gain only. So for initial compensation, which is our 50 lakh rupees, that is my first compensation or initial compensation, your full value of consideration will be 50 lakhs less expenses incidental to transferable, nothing is there. Net sale consideration will be 50 lakhs. Now here I'll take index cost of acquisition. Why sir index cost of acquisition? Because compulsory acquisition happened in 1718. Therefore transfer took place in which year sir? 1718. From this I'll get my long-term capital gain. Now please note, whenever you are getting extra money, enhanced compensation or additional compensation, from that extra additional compensation you can subtract only one thing, which is legal expenses. You cannot subtract anything else. From that additional money. You can subtract only the money which you have paid to the court, lawyer, etc. Only legal expenses can be subtracted. Okay, not okay? So compulsory acquisition of capital asset. So initial now sometimes it may happen that you may receive the money in installment, meaning this compensation which government is paying, no, they may paying in installment. For example, 50 lakh was decided to be paid to me. Now government may say, I'll pay you 20 lakh rupees now and 30 lakh rupees after 2 years. So whenever I receive the first installment, that time only I will have to pay capital gain tax. If initial compensation is received in installment, whenever I receive the first installment, that time only I'll have to pay the tax. However, if additional compensation is received in installment, you will have to pay tax as and when it is received. So I have written the theory part over here. You can read it later. Now, one important point. See what has happened in our example which we took. 1718 government took the property, but it paid the money to me in 24-25. Correct? It was 1718 when the money was taken. However, 24-25 was the date when the money was given by government to me. Now, don't you think there is a huge delay? There is almost a delay of how many years, sir? 8 years delay is there. So because there is a 8 years delay, government says, I will pay you interest. So if there is any delay in payment of consideration by government will pay me something called as interest. For that interest, that interest is taxable under income from other sources. So whatever interest you receive for delay in payment of consideration by government, it will be taxable under the head income from other sources. And how much will be taxable, sir? 50% of amount received. Whatever amount you are receiving into 50% only will be taxable. Only how much, sir? 50% of amount received by you will be taxable. Yeah. Only 50% of amount received will be taxable. Next, we have one more. Insurance claim on damage or destruction of capital asset, not that important from exam point of view. So if there is any capital asset which is damaged or destroyed because of any four reasons, which are four reasons: because of natural calamities, enemy attacks, riots, or fire explosion. And if you have received insurance claim for because of the damage and destruction of your capital asset, if you have received insurance claim, now it will be taxable. It will be treated as transfer and it will be taxable. It will be taxable when, sir, see, transfer will take place in the year when damage and destruction happen, and capital gain tax you will have to pay in the year when insurance claim is received. So very simple question it is. I mean, simple topic it is. So nothing much to worry on that. Next, there is one more important concept called as Section 50C. Section 50C talks about what's the concept of stamp duty value. Sir, what is this concept of stamp duty value? Sir, what is this concept of stamp duty value, sir? This concept of stamp duty value, sir, see, normally, I'll directly come to the provision over here. See, concept of stamp duty value, it is applicable only for immobile property. It is applicable for whom, sir? It is applicable only for immobile property. See, normally, what is my full value of sale consideration? See, when we compute the capital gain, we take full value of sale consideration less expenses incidental to transfer. So normally, what is my full value of sale consideration? Can I say it is the sale price, the price at which I sold the immobile property or capital asset? So normally, your full value of sale consideration is the price at which the capital asset is actually sold. However, Section 50 says, if the stamp duty of immobile property which you are selling is more than 110% of sale price. If what? If the stamp duty value is more than 110% of the same sale price of the capital asset, that stamp duty value will be taken as full value of sale consideration. Sir, repeat. See, normally at the price at which I am selling the capital asset, that will be taken as full value of sale consideration. However, if the stamp duty value is more than 110% of sale price into 110%, then the stamp duty value will be taken as full value of consideration. For example, I'll give one example. Say my sale price is what, sir? 20 lakh rupees. Stamp duty value is 21 lakh rupees. So what is my full value of consideration, sir? For computation of capital gain, what will I take full value of consideration? Sir, I'll take 20 lakh rupees. Why? Because, sir, stamp duty value is not more than 110% of sale price. Case number 2. Sale price is 20 lakhs. 110% of sale price is 22 lakhs. What is my stamp duty value? 23 lakhs. Is 23 lakhs more than 22 lakhs? Yes. So therefore, what is my full value of consideration? 23 lakhs. So whenever my stamp duty value is more than 110% of sale price, then that stamp duty value will be taken as full value of sale consideration. So here, second case, what is the sale price, sir? 20 into 110%. How much is it? 22 lakhs. Is stamp duty value is how much? Stamp duty value is 23 lakhs. Is 23 lakhs more than 22 lakhs? Answer is yes. Therefore, 23 lakhs, which is stamp duty value, will be taken as full value of sale consideration for computing capital gain. Sir, what if it is less? Then I will not take stamp duty value. What if it is equal? Then also I will not take stamp duty value. Only when it is more, I will take stamp duty value. Okay, stamp duty value will be taken only if your stamp duty value is more than 110% of sale price. Now, sometimes it may happen that you have genuinely sold the property for a lower price. When you have genuinely sold the property for a lower price, it is not fair on the part that you pay tax on more money. So at that time, what lawmaker says is, if you feel that the stamp duty value is too overpriced, you can always go and make a request to the assessing officer, and assessing officer will transfer your case to the valuation officer. You can make a request to assessing officer, and assessing officer will transfer the case to whom, sir? Valuation officer. Now, the valuation officer's value is more than stamp duty value. then you should of course take stamp duty value. And I went to valuation officer because the stamp duty value was more. Now valuation officer is telling even more value, then what will I follow? I will follow stamp duty value. Sir, what if valuation officer's value is less than stamp duty value? Then I'll agree with whatever valuation officer is telling. When valuation officer is telling that whatever, when valuation officer is telling, blur, hello. When valuation officer is telling what, sir? When valuation officer is giving a value less than the stamp duty value, I'll of course follow valuation officer. Sir, what if the valuation officer's value is less than the sale price only, or it is equal to sale price? Then I'll follow the sale price only. I'll take sale price. Now please note, sir, which stamp duty value should I take? Should I take the stamp duty value as on the date of agreement, or should I take the stamp duty value as on the date of transfer? You should take the stamp duty value as on the date of transfer. Normally, you should take that stamp duty value as on the date of transfer. However, on the date of the agreement, if any money is paid through account pay check, account pay demand draft, or any other electronic clearing system, then the stamp duty value as on the date of agreement should be taken. If any money has been paid, then stamp duty value as on the date of agreement should be taken. Now, one more concept is there, advance money forfeited. So if you receive any advance money, for selling a particular capital asset, and if that advance money is forfeited by you, if it is kept with, say for example, you came to me to purchase my property. Okay, I told that I will sell the property for 50 lakh rupees. Now you told, okay, I'll come back in one week and I'll pay you the money. Now I told, okay, but give me some advance. You gave me an advance of 1 lakh rupees. Now after 1 month, 1 week I was waiting for you, you didn't come. I waited for 1 month, you didn't come. You didn't come for 3 months, 4 months, 2 years, 3 years. So what will I do with this money? I will keep it for myself. This is called as advance money forfeited. So whatever advance money is there, if you forfeit that advance money, section 51 says, I will check when was the advance money forfeited. Is the advance money forfeited before 1/4/2014, or is the advance money forfeited after 1/4/2014? If the advance money is forfeited before 1/4/2014, then you should reduce it from cost of acquisition. So whatever your cost of acquisition is there, from that cost of acquisition, subtract your advance money which is forfeited by you before 1/4/2014. Sir, what if advance money is forfeited after 1/4/2014? Then you please treat it as income under section 56(2). You please tax it as under income from other sources. Under section 56(2). Okay, in the year when forfeiture has happened. So I'll just give one example. Here there is one more important concept. What is that which I have already discussed? Please note, one important point says that the fair market value as on 1/4/2001 cannot be more than the stamp duty value as on 1/4/2001. What is this point telling? The fair market value as on 1/4/2001 should not be more than the stamp duty value as on 1/4/2001. Meaning, if your capital asset is acquired by you before 1/4/2001, then your cost of acquisition will be actual cost. Okay, that is actual cost, whatever price you purchased. Now, you first compare fair market value with stamp duty value. Compare fair market value as on 1/4/2001 and stamp duty value as on 1/4/2001. Take whichever is less. Now, whatever amount you have got, you compare with your actual cost and take whichever is higher. That will be your cost of acquisition. Okay, that will be your cost of acquisition if the property is acquired before 1/4/2001. Now see this question. Mr. K, I'll just check which question is this is a better question. Now this is a better question, and so I'm taking this question number 12. Mr. X purchases a house property in December 93 for 5,25,000 rupees, and amount of 1,75,000 was spent for improvement in March 1997. I should ignore this because it is before 1/4/2001. The property was proposed to be sold to Mr. Z in the month of May 2006, and an advance of 40,000 rupees was taken from him. As the entire money was not paid in time, Mr. X forfeited and subsequently sold the property to Y for 58 lakh rupees. So Z came first to purchase and he paid 40,000 advance, but he did not honor the contract, and therefore this advance money was forfeited. After that, what happened, sir? Finally, this property was sold to Mr. Y, and for how much it was sold, sir? It was sold for how much? It was sold for 58 lakh rupees. They are giving you fair market value of the property as on 1/4/2001 is 1,90,000, and stamp duty value of the property as on 1/4/2001 is 12,90,000 rupees. And the stamp duty value as on date of sale is how much? 64 lakh rupees. Now, first question is, what will be my full value of sale consideration? I should see whether stamp duty value is more than 110% of sale price. What is my sale price? 58 lakhs into 110%. What will be 110% of 58 lakhs? 63 lakh 80,000 rupees. Now, what is my stamp duty value? 64 lakh rupees. So, can I say stamp duty value is more than 63 lakhs 80,000? So, can I say stamp duty value is more than 110% of sale price? Yes, sir. Yes, sir. Yes, sir. It is correct, sir. It is more, sir. Therefore, what will be my full value of consideration? What will be my full value of consideration, sir? Sir, my full value of sale consideration will be, as per section 50C, it will be what, sir? 64 lakh rupees. So, I'll take my full value of sale consideration to be equal to what, sir? 64 lakh rupees. You please ignore this with without indexation, with the indexation category. Why have I done this with indexation, without indexation in this question? Because why have I done, sir, in this question with indexation, without indexation? Because to find the tax amount, my actual answer will be what, sir? My actual answer will be, because the transfer was made in the month of March 2025, my correct answer is what, sir? Without indexation, capital gain without indexation. So I'll take 64 lakh rupees. Then I'll take cost of acquisition. So net sale consideration is 64 lakh. My cost of acquisition will be 11 lakh 50,000 rupees. Sir, how, sir, in 11 lakh 50,000 you are getting? How you are getting 11 lakh 50,000? Are very simple. My cost of acquisition, see, I'll compare first fair market value as on 1/4/2001 with stamp duty value as on 1/4/2001. Who is less? Sir, stamp duty value is less. 11 lakh 90,000 rupees. That I'll compare with my actual cost 5,25,000 and take whichever is more. Who is more, sir? 11 lakh 90,000 rupees. Now from this I'll subtract 40,000 rupees. Sir, what is this 40,000 rupees? Why are you subtracting 40,000 rupees? This is advance money forfeited before 1/4/2001. So I'll subtract that. I'll get 11 lakh 50,000 rupees. So I'll subtract 11 lakh 50,000. My capital gain amount will be 52 lakhs 50,000 rupees. Okay, not okay. Sir, what if the transfer was made before 23rd July? Then I would have taken indexation also. Now, please note, in examination for this answer, you will not get full marks. You will have to write extra notes. What is that note? Note number 1, concept of stamp duty value has been applied. So, if the stamp duty value is more, section 50C says, if the stamp duty value is more than 110% of sale price, stamp duty value will be taken as full value of consideration. In the present case, stamp duty value is 64 lakh, sale price is 58 lakhs, 110% of sale price is 58 lakhs into 110%, 63.8 lakhs. Since stamp duty value is more, therefore stamp duty value is full value of consideration. Then, since the immobile property was purchased before 1/4/2001, my cost of acquisition will be actual cost. Compare actual cost with FMV or SDV, whichever is less, and take whichever is higher. So cost of acquisition is 11 lakh 90,000 rupees. Any improvement done before 1/4/2001 should be ignored. Advance money forfeited before 1/4/2001 should be reduced. 1/4/2014 should be reduced from cost of acquisition. These 4 notes are mandatorily required to be given by you in the question. Okay. Okay, so okay. Section 47. I'll take one break. 2 seconds break I'll take. So next section is what's the section 47. Section 47 talks about what? Transactions which are not regarded as transfer. Transactions which are not treated as transfer. So where the capital asset became, so there are some transactions, okay? In these cases, even though you will see that there is capital asset moving from one person to another person, but it will not be treated as transfer. Which are those situations, sir? For example, distribution of asset upon partition of HUF. HUF is getting divided. There is an HUF having father, son, daughter, etc., etc. Now, whatever property HUF had, they are dividing between all the members of HUF. Now, though there is the property is getting transferred from HUF name to individual people's name, it will not be treated as transfer. Similarly, if you have got any capital asset by way of gift or will, now this here there is a small change, there is a small amendment telling that the gift is available. Now if the gift is made only through an individual, then only it is covered over here. So before it was like, I mean, before 23rd July, it was like if the gift is made by any person, it is covered. But now the provision says if the gift is made only by an individual, then only it is covered over here. So if any individual is gifting any property to you, for example, I have a property, I want to do gift that property to you. So in this case, for me, it is not a transfer. So gifting of an proper capital asset by an individual to you is not regarded as transfer. Then if you are getting any capital asset by way of succession, inheritance, etc., or there is any asset which you got because of distribution of asset upon liquidation of a company is getting liquidated and it is distributing asset, and or you have got any property under transfer of revocable or irrevocable trust. So you are transferring under a trust, and whether it is revocable or irrevocable, it does not matter. It both are covered over here. What do you mean by revocable, irrevocable? Revocable means that kind of transfer wherein you transfer the asset and you tell that I will, if I want to take back this property from you, capital asset from you on a future date, I will have all the rights. That is revocable. Irrevocable means I have given that asset to you and told I will never take it back from you. So if there is any holding company giving the assets to 100% subsidiary company, or amalgamating is giving to amalgamated company, or demerged company is giving to resultant company, etc. In all these cases, what will happen, sir? In all these cases, it is not treated as transfer. Now, if it is not treated as transfer, then how? What about capital gain, sir? Capital gain will not come, of course. When it is not treated as transfer, only capital gain will not come. Now here, what is important is with respect to the person who is getting the asset. From his angle, if you see, then the importance will start. For example, so there is a person, so one person, say Simbu gifted his capital asset. He gifted his capital asset to Nayantara. Simbu gifted his capital asset to Nayantara. Now Nayantara, please note, Simbu gifted his capital asset to whom, sir? Nayantara. Simbu gifted his capital asset to Nayantara. Can I say it is not a transfer? Why, sir? Because gifting of capital asset is not regarded as transfer. Just now we saw. Therefore, no capital gain will come in the hands of Simbu. Yes, sir. Now, what Nayantara did? Nayantara sold the same asset which Simbu gifted her. She sold this asset to whom, sir? Vignesh. She sold this asset to Vignesh. Now, can I say because there is a sale, there is yes transfer, and therefore capital gain will come in the hands of Nayantara? Now, while computing the capital gain for Nayantara, what will be the cost of acquisition is the question over here. See, the sale price is 75 lakh rupees, the price at which she has sold. Expenses are not there, no problem. Net sale consideration I got. Now, when I take cost of acquisition or index cost of acquisition, what will be that cost of acquisition? Because Nayantara to got it for free, no? Simbu gifted it to Nayantara, that means Nayantara to got it for free. So what should be the cost of acquisition or index cost of acquisition in the hands of Nayantara? What it should be? What should be the cost of acquisition or index cost of acquisition in the hands of Nayantara? Lawmaker says for Nayantara, the cost of acquisition will be the cost to previous owner. So whatever was the cost of asset to Simbu, that will be the cost of asset for Nayantara. Similarly, what will be the period of holding, sir? The period of holding means whether it will be treated as long term or short term. How will I come to know? So lawmaker says the period of holding of previous and present owner both is required to be counted for checking whether it is a long term capital asset or short term capital asset. So period of holding of present as well as previous owner should be taken into consideration. Now, sir, what will be the cost of improvement? Should I take cost of improvement done only by Nayantara, that is the present owner, or can I take the improvement done by the previous owner also? Lawmaker says improvement done by present as well as previous owners both can be taken into consideration. Sir, what about indexation, sir? From which date will I get indexation? See, law says indexation will be available from the date when the assessee first held the property, from the date when the assessee first became the owner of this property. However, you can always take advantage of this case law called as Manjula J. Shah. Manjula J. Shah says indexation benefit will be available from the date when the capital asset was first held by previous owner. See, normally what is the law telling? See, now please note. Acquisition I'll take of the cost of acquisition of previous owner. Period of holding from previous owner I'll take. Indexation improvement I'll take from the previous owner. But when it comes to indexation, lawmaker says you can take indexation. Nayantara, if you want to take indexation, you take indexation from the date when you became the owner. From the date when you became the owner. But however, so indexation benefit will be available from the date when the capital asset was first held by the assessee. Who is the assessee in our case? Nayantara. But however, there is a case law called as Manjula J. Shah. What is Manjula J. Shah telling? Manjula J. Shah says indexation benefit shall be available from the date when the capital asset was first held by previous owner. It will be available from the date when capital asset was first held by previous owner. Okay, the benefit of fair market value. Sir, what if the property is acquired, Simbu has acquired the property before 1/4/2001? Then benefit of fair market value as on 1/4/2001 will be available. Okay, very simple, concept it is, but important from exam point of view. For example, Mr. Rakesh purchased a house property on 14th of April 1999 for 1,05,000 rupees. He entered into an agreement to sell. Now, please note here, if there is any advance money forfeited by previous owner, please understand this carefully. If there is any advance money which is forfeited by the previous owner, so if Simbu has forfeited any advance money, that should be ignored. Previous owner has forfeited any advance money, it should be ignored. Yeah, so see this question. Mr. Rakesh purchased a house property on 14th of April for 1,05,000 rupees. He entered into an agreement with Mr. B for sale of the house property on 15th of September 2002 and he received an advance of 25,000 rupees. However, Mr. B did not remit the balance amount and Mr. Rakesh forfeited the advance money. Later on, he gifted the property to his friend Mr. A. So now what is happening over here? So there is a gift of property by Rakesh to Mr. A. Following are the renovations taken by Rakesh and Mr. A. What are the renovations, sir? Rakesh took it in the year 2000 and 2001, which is before 1/4/2001. So I'll ignore this. And then Rakesh did one more improvement for 50,000 rupees in 2003-04. A did in the year 2013-14 for 1,90,000 rupees. The market value of the property as on 1/4/2001 is 1,50,000 and the stamp duty value is 1,40,000. So what will be my actual cost, sir? Actual cost will be this or this, whichever is less, which is 1,40,000. That 1,40,000 should be compared with the actual cost. So my whichever is higher I'll take. So my cost of acquisition of the property will become 1,40,000 rupees. Mr. A entered into an agreement to sell the property to C on 1st June 2022 and received an advance of 80,000 rupees. Now please see this. This advance money he has received from Mr. C, and when was this advance money received, sir? After 1/4/2014. After 1/4/2014 he has received this advance money. Okay, the said amount was forfeited by Mr. A. Since C could not fulfill the terms of the agreement. So this advance money forfeited after 1/4/2014. What will I do? Sir, this will be taxable in the year 2022 only under income from other sources. Okay. Finally, the house was sold by Mr. A to Mr. Sanjay for on 2nd of July for a consideration of 25,000 rupees. Compute the capital gain chargeable to tax in the hands of Mr. A. So what I have done in this question, I have done under both the methods, Manjula case also and what is that, 49(1) also. 49(1) says indexation benefit you will get from the date when you became the owner. Manjula says you can take indexation benefit from the date when the asset was first held by the previous owner. Okay, so I'll take full value of consideration which will remain same, net sale consideration I got. So Manjula says, see, cost of acquisition, as I told you, 1,40,000 rupees. Now Manjula says indexation benefit you can take from the date when the asset was held by previous owner. But however, 49(1) says you can take indexation benefit only from the date when the asset was first held by the assessee Mr. A. Correct? So here I am taking 100, here I am taking 122. 122 is what, sir? 122 is the index for the year 2006-07. Then you got your index cost of improvement. Similarly here also, when you take index cost of improvement, you should take it from the benefit will be given from which date, sir? If it is done before 1/4 if it is done before the property is gifted to you, then you will take it from the date when the property was gifted to you. Okay. So accordingly, we got this two separate answer. Of course, it is always better to take indexation. It is always better to follow Manjula. Correct? It is always better to follow Manjula because you are going to get indexation from a longer period of time. Now, next there is one more concept called as Section 50B slump sale. A question has been already asked about this in January 25 examination, and I don't expect any question in either May 25 examination or September 25 examination, and I don't think they'll ask a question in January 26 examination also, because these questions are asked once in 5 attempts or they ask question on slump sale, or once in 6-7 attempts they ask question on slump sale. Very easy topic it is, slump sale. Slump sale means what's a transfer of an undertaking without assigning values to individual assets and liabilities. If you are transferring entire undertaking without assigning values to individual assets and liabilities, that is called as slump sale. How do I compute the capital gain in case of slump sale, sir? Slump sale, you should take full value of consideration, which is nothing but fair market value as per Rule 11 UAE. From that subtract expenses incidental to transfer, you will get your net sale consideration. From that subtract cost of acquisition. What is cost of acquisition? Net worth of the company. You will get your capital gain. It can be long term or short term. Sir, how will I come to know whether it is long term or short term capital gain? You should see period of holding of the undertaking which is transferred by you. So whichever business you are transferring, whether that business was more than 3 year old, or it was less than or equal to 3 year. So if it is more than 3 years, then it is long term. If it is less than 3 years, then it is short term. Now this period will become what, sir? If the transfer was made after 23rd July, this period should be seen as 2 years instead of 3 years. Okay. Now, sir, you said fair market value is a rule. Sir, you said full value of sale consideration is fair market value as per Rule 11 UAE. What is this Rule 11 UAE, sir? It says you take there will be two fair market values which will be given. One is the market value of the business which you are transferring, and market value of the consideration which you are receiving. So you should compare the fair market value of unit transferred with the fair market value of consideration received. Take whichever is higher. This will be your full value of consideration. Then, sir, you told cost of acquisition is net worth of the business. Yes, net worth means assets minus liabilities. Now, when you're taking assets, when you're taking depreciable assets, no, when you're taking depreciable assets, please take the WDV of that asset. And when you're taking other assets, please take the book value of those assets. Similarly, when you're taking liabilities, you should take the liabilities at book value. And while taking liabilities, you should not take shareholders' funds. Now, very important point. When you're transferring anything under slump sale, entire business is getting transferred, therefore stock is also getting transferred. So that stock which is transferred under slump sale, they will be taxable under capital gain only. So when you're taking your assets over here, you should take your stock in trade also. Any revaluation of asset which is has happened, you should ignore. So if any asset is revalued, upward revalued, downward revalued, you should reverse that effect. No indexation benefit will be available in case of slump sale. No indexation benefit is available. Section 35 AD, asset is transferred on slump sale. Okay, if section 35 AD, section 35 AD is a business income section which says capital expenditure incurred by you will get 100% deduction. So if you are transferring the under slump sale, if you are transferring any asset for which you have claimed deduction under section 35 AD, then the cost of acquisition of that asset should be taken as nil. And in case of intangible assets, which is like goodwill, brand name, etc., if it is self-generated, take the cost to be nil. And if it is purchased, then take the cost to be purchase price. So slump sale question is there. Now, please note this summary. See, there are some assets called as Devgans, debentures, equity shares, which is listed equity shares, virtual digital assets, global depository receipts, and non-resident who is dealing in shares for whom you are computing the capital gain in foreign currency. And in case of slump sale, in case of Devgans, normally you will never get indexation benefit. You will never get indexation benefit. So if you are transferring these assets before 23rd July or after 23rd July, it does not matter, indexation benefit will not be given to you. Now, as you all know, if the transfer is made on the above capital asset, indexation benefit will never be taken. However, for all the above for all the other assets except immovable property, indexation benefit will be available if the transfer are made before. I think I have written for all other capital asset, indexation benefit will be available if the transfer is before 23rd July 2024. So for Devgans, it will never be allowed. It will never be allowed. For any other type of capital asset, if it is before 23rd July, indexation will be allowed. After 23rd July, indexation will not be allowed. And for immovable property, indexation will be available only for whom? It is available only for individual and HUF. Now, capital gain in case of shares. In case of shares, also computation of capital gain is very simple, same. So it is unlisted shares. You can you compute the capital gain normally, and you will get indexation benefit. But if it is a listed shares, you should compute the capital gain normally. You will not get indexation benefit. So that is the only difference. Now, if the normal shares, unlisted shares are sold after 23rd July, then indexation benefit will not be given to you. Now, what is important in this shares is, what if I get bonus shares? What if I get right shares? In such case, what should I do? So cost of acquisition for bonus shares and right shares. In case of bonus shares, you should check whether the bonus was issued to you before 1/4/2001 or after 1/4/2001. If the bonus was given to you before 1/4/2001, then the cost of acquisition of those shares will be actual cost of the shares, which is 0, or the market value as on 1/4/2001, whichever is higher. However, if the bonus share was given to you after 1st of April 2001, then the cost of acquisition will be nil. The cost of acquisition should be taken as what, sir? 0 or nil. Then we have something called as right shares. Please note, any bonus given after 1/4/2001, cost of acquisition is 0. Before 1/4/2001, actual cost or market value as on 1/4/2001, whichever is higher. Now they have something called as right shares. Right shares means what, sir? You get right to purchase the shares of a company at a lower price. When compared to the market value, you get the right to purchase the shares of a company at a lower price. So in case of right shares, what happens? Now check whether the shareholder has exercised the right or he has renounced his right. If the shareholder has exercised the right, then whatever money he is paying, right issue price, money which he is paying, that will be the cost of acquisition of those shares. Meaning, if I am exercising the right, if I am buying those shares which are issued under right issue, then whatever amount I paid to company, that is called as right issue price, that will be taken as my cost of acquisition of those shares. Sir, what if I am not accepted the shares? Sir, what if I have renounced the right? I have given my right to someone else, I have transferred the right, sir. In that case, it will be treated as relinquishment of capital asset, and therefore whatever amount you are getting, renouncement price, that is called as, that will be your short-term capital gain. And the person who is purchasing right from you, for him cost of acquisition will be whatever money he is paying to the company and whatever renouncement price he paid to you. Now, in case of foreign see, normally this concept they'll not ask in the examination. See, in case you are a foreign, if you are a non-resident who is investing in Indian stock market, then you will there is a proviso to section 48 which says you will have to pay capital gain tax only when you will have to pay capital gain tax only when you make any profit, you make any capital gain while computing your income from in foreign currency. See, normally what happens is, whenever a foreigner is investing in Indian market, there will be loss or gain which he is going to incur because of fluctuation in foreign currency. Because there is increase or decrease in foreign currency, because of that reason he is going to incur loss. So what lawmakers has told, if a non-resident person will have to pay capital gain only when he makes any profit, only when he makes any capital gain, while computing the income from capital gain, only when he's making capital gain in foreign currency. You should do the computation in foreign currency, and only when he makes profit in foreign currency, then only you should convert that money into Indian rupees and pay the capital gain tax. So what will I do, sir? So please note, while taking your full value of consideration, you should take average exchange rate as on the date of transfer. While taking your expenses, you should take average exchange rate for the date of transfer. Meaning what? Please note, because that foreigner has invested in Indian market, all the dealings which he is going to do, it will be in Indian rupees only. All the dealings which he is going to do, it will be Indian rupees only. So on the date of sale, what was the foreign currency rate? You apply that and you find the sale price. On the date of purchase, what was the foreign currency rate? Accordingly, you apply that and you will get your purchase price. Okay, so you should take average exchange rate as on the date of transfer to find the sale value. You should take average exchange rate as on the date of transfer to find the expenses amount, and you should take, for finding cost of acquisition, you take average exchange rate on the date of acquisition, and therefore balance will be your capital gain. Now average exchange rate means what, sir? TT buying rate, TT selling rate divided by 2. TT means what, sir? Telegraphic transfer buying rate, telegraphic transfer selling rate divided by 2. So there is one good question which I have given over here, not that important. Section 50 CA 50D, not that important from exam point of view. Now in case of unlisted shares, normally our full value of consideration is sale price, but in case of unlisted shares, if the market value of those shares is more than your selling price, then you will take full market value as your full value of consideration. And if the full value of consideration is not determinable, then the fair market value of that capital asset which is getting transferred will be taken as full value of consideration. Then comes the last topic under capital gain, which is exemption. Section 54 says exemptions for residential house property. So if you are an individual and HUF, if you have a residential house property, if you transfer that residential house property, by transferring that residential house property, if you are getting a capital gain, and if that capital gain is a long-term capital gain, then this long-term capital gain will be exempt. This long-term capital gain which you are getting will be exempt if you acquire another one residential house property in India. Now, when should I acquire this another one residential house property in India? Within 2 years from the date of transfer, you should purchase it, or within 3 years from the date of transfer, you should construct it. And if you want to do it before, you can do it before, but within 1 year before the date of transfer. Okay, how much will be the exemption? The exemption will be the amount of capital gain, or the amount invested by you in the new property, or amount invested by you in the capital gain account scheme. So if you are not able to invest the money within the date of filing income tax return, because you have a limit of 2 years and 3 years, if you are not able to invest money in the new property, no problem, you invest the money in capital gain account scheme. You put that money in a bank account telling that I am going to use it for purchase of new property or construction of new property. So if you invest that money in capital gain account scheme also, you will get the benefit of exemption. How much is exemption, sir? Whatever capital gain amount is there, or amount invested by you, or the limit whichever is less will be allowed as exemption for you. Will be allowed as what, sir? Exemption for you. Now this limit, now please note, normally I should purchase one more house property, but what lawmaker says, if the capital gain amount is up to 2 crore rupees, instead of one, you can purchase 2 residential house properties. If your capital gain amount is up to 2 crore rupees, you can purchase 2 residential house properties instead of 1 residential house property. Now, if I want to explain this, say for example, Ravi owns a residential house property. Now, computation will not change. Only thing is, one extra point will come with respect to exemption. So, taxable capital gain amount will change. Ravi owns a residential house property which was purchased for 80,000 rupees in 1975. The market value of this property is 1,90,000 rupees, and stamp duty value is 2 lakh rupees is the market value as on 1/4/2001, and stamp duty value is 1,90,000 rupees. And this property was sold on 16th of July 2024 for 27 lakh rupees. So it is before 23rd July for 27 lakh rupees. Compute the capital gain. So what is happening over here? 27 lakhs minus expenses incidental to transfer. I'll get my net sale consideration less indexed cost of acquisition. I'll get my capital gain amount. Now they have told he compute the capital gain amount if he invest 5 lakh rupees in new house. So he has invested the 5 lakh rupees in new house. Therefore, how much ever amount, whatever his capital gain amount is there, or whatever amount he has invested, or 10 crore rupees, whichever is less, will be the amount of exemption which will be given to him. So the taxable capital gain will be 14,95,000 rupees. So from 19 lakhs, 5 lakh rupees, because he has invested, that will be exempted. Now what will happen if this property is sold, sir? What if this new property which I purchased, this new property which I have purchased, I should not sell it for a period of 3 years. There is a lock-in period of how many years, sir? 3 years. If I sell it within the 3 years, then whatever cost of acquisition I had taken, from that cost of acquisition, whatever exemption I had taken earlier, that will be subtracted. Sir, repeat. See, normally the new property which you have purchased, that should not be sold by you within a period of 3 years from the date of purchase or date of construction. If it is transferred or sold by you within 3 years from the date of purchase or construction, then whatever capital gain was exempted earlier will now be subtracted from the cost of acquisition of this property. Meaning what, sir? Now see, I purchased a new property for 5 lakh rupees. Now I sold it for 9 lakh rupees. So when I take my net sale consideration will be 9 lakh. When I take cost of acquisition, my actual cost was how much? 5 lakh rupees. Correct? Not correct. This 5 lakh rupees was given to me as exemption before. Now, because I sold it within a period of 3 years, this exemption will be taken back from me, and my meaning whatever cost of acquisition is there, from that exemption amount you subtract, whatever is left over, that will be my cost of acquisition. Subtract that cost of acquisition from your net sale consideration, you will get your capital gain. So that one condition is there, lock-in period condition. Now section 54B. Section 54B talks about what's an exemption for an urban agricultural land. If you have an urban agricultural land, then it is exempt under section 54B. So if you are an individual and HUF who is having agricultural land in urban area, if you are having urban agricultural land, if you transfer that urban agricultural land, on transfer of that urban agricultural land, you get a capital gain, whether it is short term or long term, it does not matter. This capital gain will be exempt. It will be exempt. When will it be exempt, sir? It will be exempt if you purchase another agricultural land in India. If you purchase another agricultural land in India. Now, what is the lock-in period for purchasing another agricultural land? Whatever new land you have purchased, no, that should not be transferred within a period of 3 years. Please note. If you are an individual in HUF, if you have an urban agricultural land, if you transfer that urban agricultural land, by transferring that urban agricultural land, if you get a capital gain, whether long term or short term, this capital gain will be exempt if you purchase within 2 years another agricultural land. It does not matter whether it is in urban area, rural area. If you purchase another agricultural land, that will be exempt. How much exemption you will get? Whatever amount of capital gain you have, or the amount invested by you, whichever is less, will be exempt. Now, the new agricultural land which you have purchased, there is a lock-in period of 3 years. So within a period of 3 years, you should not transfer it. If you transfer it, what will happen? The whatever exemption was given to you earlier, that will be reduced from the cost of acquisition. In the sense, whatever happened in the previous case, no, section 54, same thing will happen in this case also. Now, please note, what do you mean by urban agricultural land? Urban agricultural land means the agricultural land which is located in the urban area and which is used at least for 2 years before the date of transfer. It is used for agriculture purpose. It should be used by either individual of his parents or the members of HUF should use it for agriculture purpose. Then section 54D, compulsory acquisition of what, sir? Compulsory acquisition of industrial land or building or both. So this is applicable for all type of assessee, because anybody's property can be compulsory acquired. So they say any type of assessees whose industrial land and building is compulsory acquired by government under any law, not government, any person under any law, then it will be regarded as transfer. On the transfer, whatever capital gain he is getting, whether it is short term or long term, this capital gain amount will be exempt if he purchases another industrial, agricultural land or building or both within 3 years. If he purchases another industrial land or building or both within 3 years, and this property should not be transferred within a period of 3 years. Okay, so there is a lock-in period of 3 years. Please note, for purchasing the property, how many years I have? 3 years I have, and the new property which I have, industrial land and building which I have purchased, that should be holded for minimum period of 3 years, or else whatever exemption was given to me earlier will be reduced from cost of acquisition. So what is the amount of exemption? Capital gain amount or amount invested by you, whichever is less. Section 54EC, important section. Section 54EC says what, sir? Exemption for transfer of an immobile property. So what is section 54EC telling? If you are transferring any type of immobile property, irrespective of who you are. So this section 54EC exemption is applicable to everyone, all types of assessee. If they transfer immobile property, and on transfer of immobile property, if they get any capital gain, and if it is a long-term capital gain, then that long-term capital gain will be exempt if they invest their money in government bonds. Which are the government bonds? There are 4 bonds which are given over here: NHAI bond, RECL bond, PFCL bond, IRFCL bond. So if you are any type of assessee selling or transferring an immobile property, then that capital gain which you receive, that will be exempt. If you get a long-term capital gain, it will be exempt if you invest money in government bonds. Which bonds, sir? NHAI bond, RECL bond, PFCL bond, or IRFCL bond. Now the condition is that you should invest the money in these bonds within 6 months from the date of transfer. From the date when you have transferred, within 6 months you should invest the money in these bonds. Sir, what if I invest after 6 months? Exemption will not be given. Sir, what if I invest little money before 6 months, little money after 6 months? You will get only for whatever you have invested before 6 months. Sir, how much is the exemption under this section, sir? The exemption under this section is your capital gain amount, or the amount invested by you, or rupees 50 lakhs. The limit over here is 50 lakhs, whichever is less. Sir, is concept of this capital gain account scheme applicable over here? Answer is no. Now here, the government bonds which you have got, there is a lock-in period of 5 years, meaning these government bonds which you have got, no, you should not sell these government bonds, or you should not convert these government bonds into money within 5 years from the date of transfer. Sir, what if I sell it or convert into money, sir? In such cases, whatever capital gain was exempted earlier will now be fully taxable. No, now here there is no concept of reducing from value. Whatever exemption I had given you earlier will now be taxable. Section 54F, one more important section. So there are three sections which are important under exemptions: 54, 54EC, 54F. 54F says you transfer any long-term capital asset and invest in residential house property. So if you are an individual or an HUF, for them only this is available. And if you are transferring any type of long-term capital asset except residential house property, because for residential house property there is already a section called as 54. So if you are an individual and HUF, if you are transferring any type of long-term capital asset except residential house property, and upon transfer of that long-term capital asset, if you are getting a long-term capital gain, then this long-term capital gain amount will be exempted if you purchase or acquire another residential house property in India. What is the time limit? The time limit is 2 years from the date of transfer for purchase, or 1 year before the date of transfer to purchase. If you want to do the construction, then within 3 years from the date of transfer, it should be constructed. Sir, how is the exemption calculated? Very important. That is very important in this case. Calculation of exemption is very important. What do they say? Normally, we always spoke about if you are investing capital gain amount, it is exempt. But here they say if the amount invested by you is equal to or more than net sale consideration amount. What is net sale consideration? From your full value of consideration, if you subtract expenses, you will get something called as net sale consideration. So if you invest 90 lakhs or more than 90 lakh rupees, then the entire capital gain amount will be exempt. Please note. If you invest how much, sir? If you invest the net sale consideration or more than net sale consideration, your capital gain amount will be exempt. Sir, what if I invest amount less than 90 lakh rupees? Then capital gain amount will be exempt proportionately. So if the amount invested is more than or equal to net sale consideration, full capital gain amount shall be exempt. If the amount invested is less than net sale consideration, then capital gain amount will be exempted proportionately. How will I calculate that? Whatever capital gain you have into amount invested divided by net sale consideration amount. Now here also your capital gain account scheme benefit will be available. Now here there is a maximum limit of exemption. How much maximum exemption you can take, which is 10 crore rupees is a maximum exemption. And here at the time when you are purchasing this new property, you should not have two properties with you, meaning you can have maximum two properties in total. So if you want to take the benefit of this exemption, if you have one and you are purchasing one more, then allowed. If you have two and purchasing one more and taking benefit under 54F, I will not give exemption. So at that time, assessee should not have more than one residential house property on the date of transfer. Now section 1037, one last section. Section 1037 says exemption for compulsory acquisition of urban agricultural land. If urban agricultural land is compulsory acquired by government, by that whatever type of capital gain you are getting is fully exempt. You don't have to invest money anywhere. Whatever capital gain you are getting on compulsory acquisition of compulsory acquisition of urban agricultural land, whether it is long term or short term capital gain, it does not matter, it is fully exempt. Okay, not okay, students. Now taxation of amalgamation, merger, demerger, they'll not ask in the examination. So let us not break our head understanding what is given over here. And let us go to the next topic, which is an important topic called as income from other sources. Here also there are two amendments which are very good amendments and important amendments. So let us discuss this. Hardly it will take a few minutes for us to complete this, but amendment is very important. Income from other sources. Now what is this income from other sources? So if there is any income which is not taxable under any of the four heads, then it will come under income from other sources. So majorly here there are two incomes which are most important. Which are those two incomes? One is taxation of gift and one is deemed dividend. Okay, these are the 2 points which are mostly important over in this chapter. Now gift taxation we will discuss first. Section 56 to 10. Section 56 to 10 says what, sir? If you receive any gift from any person, gift received by any person, I am receiving gift from any person. Okay, gift received, I am receiving gift. Okay, so gift received by any person or asset acquired by any person for inadequate consideration. I am either receiving anything for free of cost or I am receiving something for a lower price. In such cases, lawmaker says it will be taxable under section 56 to 10. Now it depends, the taxability will depend on from whom you are receiving. Are you receiving at the time of your marriage? One second. This call I'll have to take. Okay, so yeah, taxation of gift. Now, gift you are receiving at the time of your marriage, or from your relative, or upon death of some person he is transferring, say he is dying and is giving, or inheritance, will, local authority, trust, university, hospital, no transfer case or COVID case, then it is fully exempt. If you are receiving gift at the time of your marriage from your relative, at the time somebody is dying, a will or inheritance, local authority, trust, university, hospital, then it is fully exempt. You don't have to pay any cap gain tax. Sorry, any income. It is not taxable under income from other sources. However, any other type of gift which you are receiving, any other type of gift means what, sir? If it is not under following cases, someone is just like that gifting you, then it will fall under other categories. Accordingly, it will be taxable depending upon what is it. Now, sir, what do you mean by relative? For me, my relative will be who, sir? My father, mother will be my relative. My brother, sister will be my relative. My son, daughter will be my relative, and my spouse will be relative. Apart from that, my father, mother's brother, sister will be my relatives. My spouse, father, mother, and brother, sister will be my relative. And my lenient ascendant and lenient descendant will be my relative. And for HUF, the members of HUF will be treated as relative. Now, sir, let us come to the main point, sir. How do I tax in case of gift? When is it taxable? So in case of gift, no. If you are receiving money from different people, and in a year, if the total money received by you is more than 50,000 rupees per annum, in a year, if the total money received is more than 50,000 rupees, then it is fully taxable. Sir, what if you are not receiving money? What if you are receiving movable property? If you are receiving movable property, then only DJ Paso BV is covered. If you are receiving movable property, who is covered, sir? Only DJ Paso BV is covered. Sir, what is DJ Paso BV? Drawings, jewelry, painting, archaeological collections, sculptures, shares and securities, other work of art, bullion and virtual digital asset. Only these items are covered. Check whether you have received it without consideration or for inadequate consideration. Have you received it free of cost? Yes, sir. Then it will be taxable if the total items which is received by you in a year, the fair market value, aggregate fair market value is more than 50,000 rupees in a year. Aggregate fair market value is more than 50,000 rupees per annum, then it is fully taxable. If it is received for inadequate consideration, if it is received for what consideration, sir? Inadequate consideration. Then inadequate consideration means, say 1 lakh rupees item I am receiving for 20,000 rupees. That means inadequate consideration. So in this case, lawmaker says if the total aggregate difference between the market value and consideration is more than 50,000, if the difference between market value and consideration is more than 50,000, then that difference is fully taxable. Whatever difference is there. So in our case, 1 lakh and I paid 20,000 rupees. Difference is how much? 80,000 rupees. So is the difference more than 50,000? Yes, then this is fully taxable. 80,000 rupees is fully taxable. Sir, what if I receive immovable property? If you are receiving immovable property, I will check whether you have received without consideration or for inadequate consideration. If you have received the immovable property without consideration, I will see the stamp duty value. If the stamp duty value, so in case of immovable property, I should check for each and immovable property separately. So if the stamp duty value is more than 50,000 rupees of that immovable property which you have received, it is fully taxable. If the stamp duty value of that immovable property is more than 50,000 rupees, it is fully taxable. Sir, what if I have paid consideration, but it is an inadequate consideration, less amount I have paid? In that case, lawmaker says if the stamp duty, I will see the difference between stamp duty value and consideration. That difference should be more than 50,000 rupees. And one more condition I'll check. And the stamp duty value should be more than 110% of your consideration. Stamp duty value should be more than 110% of your consideration. If both conditions are satisfied, then that difference amount is fully taxable. Okay, the difference amount will be fully taxable. Now, please note the provisions of section 56 to 10. Gift provision is applicable only when you are getting any item as gift. That item is a capital asset for you. So if you are purchasing anything for a lower value and that item which you have purchased, if it is a stock in trade for you, then this provision is not applicable. Now this amendment of COVID is no more applicable. I mean, they'll not ask that amendment, etc. Now please note, if you are receiving money from friends, it will be taxable. Gold bracelet from sister's friend, taxable. 3 BHK house from mother's brother is relative, therefore exempt. Gold ring from ex-girlfriend, yes, taxable. Mercedes car, can I say not taxable? Why, sir? Mercedes car, 70 lakh rupees car, sir, from girlfriend, sir, not taxable. Why? Because it is not a movable property covered under DJ Passo BV. Okay, so only DJ Passo BV is taxable. So I have, see this question over here, I have beautifully given over here. How should I present in examination? You should separately present what is the money received. From whom have you received? From friends, how much you have received? From others, how much? From, I mean, whomever you have received. From mother or from family members, if you are receiving, you should write, but amount should be 0 because it is not taxable, it is exempt, and write a note about that. Similarly, so you'll give 5 breakups of money received, movable property received without consideration, movable property received with consideration, immobile property received without consideration, immobile property received with consideration. So these 5 breakups will be given. Accordingly, you will find the values and you will get your total income from other sources. Okay. So these are different questions with respect to same concept. Now here, if you remember in our previous example, we discussed about this concept. In our previous chapter, capital gain chapter, we discussed about a concept called as section 47, no transfer case. So if we discussed about Simbu gifting is something to Nayantara and Nayantara selling it to someone, correct? So let us take an example wherein Chota Bhim has gifted a capital asset to whom, sir? Chutki. On the date when it was gifted, the value of this was 50 lakh rupees. The value of this was 50 lakh rupees. Therefore, can I say because the stamp duty value is 50 lakh rupees, now 56,210 will apply? Because the stamp duty value is more than 50,000 rupees, 56,210 will apply, and Chutki will have to pay the tax under income from other sources because she is receiving an immobile property for inadequate consideration. Correct, not correct? So lawmaker says she'll have to pay tax under income from other sources on that whatever inadequate consideration was there, or whatever free of cost she has received, she'll have to pay capital gain tax under income from other sources. Okay. Now tomorrow when she is selling this property, what we studied over there, I should take cost of previous owner. What we studied over there, we should take cost of previous owner. But now what lawmakers are telling, if Chutki has paid the tax under 56,210, if Chutki has paid the tax under 56,210 on the stamp duty value, that is at that time when she purchased this, when she got it for free, she has paid the tax. Then at the time when she is selling this to Kalia, for her cost of acquisition will be the amount on which she has paid the taxes at the time of receipt. Sir, no, I didn't get it, sir. See, normally, if you are gifting, for you it is not a transfer, therefore no capital gain. But the person who is receiving the gift, no. For him, he will have to pay tax under 56,210 as a gift. Income from other sources, he'll have to pay tax under 56,210. Now, what lawmakers are telling, Chutki while paying the tax, will see the stamp duty value. If the stamp duty value is more than 50,000 rupees, Chutki will have to pay the tax on that amount under 56,210. Now, since Chutki has paid the tax at the time of receipt of gift, tomorrow when she sells this property to someone, for her the cost of acquisition will be the stamp duty value on which she had paid the taxes. Okay. So over here 80 lakh rupees she sold it to Kalia. Normally we take the cost of acquisition as cost to previous owner, but because Chutki has paid the tax on 50 lakh rupees over here, I will take 50 lakh rupees as my cost of acquisition, and accordingly I will take income from other sources. So basically this is just 2 line, but the diagram I did. If any capital asset is received as gift or without consideration or for inadequate consideration and the recipient has paid the tax under 56,210, the stamp duty value of such capital asset shall be taken as cost of acquisition for that capital asset in the hands of recipient. Now comes our taxation of dividend. Now, whatever type of dividend which you are receiving, okay, whatever type of dividend which you are receiving, whether you are receiving from domestic company or foreign company, the dividend is always taxable, and it is taxable in the hands of shareholders. It is taxable under which head, sir? Under income from other sources. It is taxable under which head? Income from other sources. Okay, whatever company, type of company it is, does not matter whether it is foreign company or domestic company. If they are giving you any dividend, the dividend will be taxable under the head 50 under income from other sources, always in the hands of shareholders. Now there is also a concept of deemed dividend. And here there is one important amendment. Before you had section 222, section 2 clause 22 subclause A, B, C, D, E. Now they have added a new section called as section 222F. Okay, so this is some important point over here. So deemed dividend, section 2 subsection 20 section 2 clause 22 subclause A says, if a domestic company is distributing any asset to its shareholders, then it will be treated as dividend in the hands of shareholders to the extent of accumulated profit which the company has, whether it is capitalized or not. If the domestic company is distributing assets to whom, sir? Its shareholders, then it will be deemed as treated as dividend in the hands of shareholder to the extent of accumulated profit, whether it is capitalized or not. Okay, so if domestic company is giving any asset to the shareholders, what is the reason of why is the domestic company giving assets to the shareholders? There is no proper reason at all, right? So they are telling, because you are giving the asset to your shareholders, I am going to treat it as deemed dividend. And how much am I going to treat it as deemed dividend, sir? To the extent of accumulated profit. Whatever accumulated profit you have, that much extent I am going to treat it as deemed dividend. Similarly, there are other deemed dividend concepts over here. Section 222B says, distribution of debenture or deposit certificate. If domestic company is distributing debenture, stock or deposit certificate to any of its shareholders or bonus share to its preference shareholders, then it will be deemed as dividend in the hands of recipient to the extent of accumulated profit. 222C says, if there is a liquidation of a company happening, if there is a liquidation of a company happening, a domestic company is getting liquidated. Upon liquidation, if the domestic company is giving anything to its shareholders, then it will be deemed as dividend in the hands of the shareholders to the extent of accumulated profit. Accumulated profit means what, sir? Whatever profit is shown in their books of accounts, meaning balance sheet. Then if there is any reduction in share capital, to the extent if the domestic company is reducing its share capital and distributes assets to the shareholders for reducing the capital, then it will be deemed as dividend. Similarly, if any person, if a closely held company is giving loan to any person who has more 10% or more equity shareholding or profit sharing ratio, or if any closely held company or private company is giving loan to any concern where the shareholder has a substantial interest, or if the closely held company is giving loans or advances to any person where the share for the benefit of the shareholder, then in such cases, basically, if a private limited company is giving loan either to the shareholder himself or any other company or a partnership firm or any other person for the benefit of shareholders, then it will be deemed as dividend in the hands of shareholders. Please note what type of shareholders are covered over here. Only equity shareholders holding more than 10% or 10% or more equity shareholding, or they are only covered over here. Now please note, this loan amount, whatever is given to the shareholder, will be deemed as dividend either to shareholders or the company or any other person which they are giving. It will be taxed in the hands of shareholder only. Please note, even if it is giving it to someone else where the shareholder is having substantial interest or for the benefit of shareholder, then it will be taxable in the hands of shareholder only to the extent of accumulated profit. And please note, all these are something which are very old provisions. What is important is something which is newly added over here. What is that newly added provision, sir? Section 222F. Hey, where did that point go? One second. Section 2, clause 22, subclause F. Yeah, this is one thing which is newly added and which is most important: taxation of buyback. Now please note, what is the amendment, sir? Most important amendment has happened over here. So this question on this topic can either be asked in May attempt or September attempt or Jan attempt, definitely, but question will be asked. Buyback of shares by the company. So buyback up to, if any company is buying back its shares, what is buyback of shares? Say for example, I am Reliance Industries, I have given my shares to the shareholders. Now I am purchasing back the shares from my shareholders, then it is covered over here. So now if the buyback is happening before 30th September, means up to 30th September means on 30th September or anytime before 30th September, then it will be taxable in the hands of company. If the buyback is happening up to the period of 30th September 2024, then it will be taxable in the hands of company. How much amount will be taxable, sir? Your buyback price minus issue price. Whatever amount the company has bought it back, or whatever amount it has, and whatever price the company is giving for buyback, and whatever price the company sold the shares at the first place, the difference will be taken as taxable amount. Sir, repeat. If company is buying back its own shares from the shareholder, if it is buying back, then the buyback price minus the issue price of the share will be taxable in the hands of company. However, now the tax treatment has changed. If the buyback is happening anytime before, 30th September, then the buyback was always taxable in the hands of company, and in the hands of shareholders it was exempt. Now, what is the new tax treatment, sir? If the buyback is happening anytime on or after 1st of October, or after 1st of October, it will no more be taxable in the hands of company. If the buyback is happening on or after 1st of October, it will no more be taxable in the hands of company. It will be taxable in whose hands, sir? In the hands of shareholder. And it will be taxable under which head? It will be taxable under the head income from other sources. It will be taxable as what, sir? Deemed dividend. So whatever total money which the company is giving, total buyback price which the company is paying, which is nothing but number of shares which is bought back by the company into buyback price, the total buyback price will be deemed as dividend in the hands of shareholders and taxable in the hands of shareholders under income from other sources. Total money which the company is giving for buying back, it is taxable in the hands of shareholders under income from other sources in the year of buyback. Please note, if the buyback is happening on or after 1st of October 2024, it will be taxable in the hands of shareholders. In the hands of company, it is no tax treatment, nothing will happen. And sir, if the company is buying back, that means my shares are also going, no sir. So capital gain also will come, no sir. Yes, capital gain will come. For capital gain purpose, no, please note, because you have already paid the tax under other sources. For capital gain purpose, you take the cost of this asset to be, you take the sale value to be 0 and subtract only the cost of asset, and whatever amount you get will be a loss. Full value of sale consideration should always be taken as 0 if the buyback is happening on or after 1st of October 2024. So if the buyback is happening on or after 1st of October 2024, my full value of sale consideration which is there over here, that will always be taken as 0. Expenses will not be there. Net sale consideration will come, and my cost of acquisition I'll subtract over here. At whatever price I had purchased the shares at the first place, I'll take it, and that will be my loss. It can be long term or short term, and that will be adjusted according to set off and carry forward chapter. Sir, can you please explain this with an example, sir? Now let us say Dilip purchased shares of Priya Sarees Limited at rupees 75 per share in the year 17-18. Priya Sarees bought back 400 shares at rupees 180 per share. Now please note, how many shares did I purchase? 1000 shares, but company bought back how many shares? 400 shares at rupees 180 per share on 15th of January 2025. The remaining shares were sold by me at rupees 250 per share on 20th of March. So 400 shares were bought back, 600 shares were sold by me. What is the tax treatment? Buyback of shares by the company, Priya Sarees Limited, income from other sources. Now tax treatment in the hands of whom, sir? Dilip. The tax treatment is in the hands of Dilip, correct? What is the tax treatment in the hands of Mr. Dilip, they are asking. In the hands of company, so there will be no tax treatment. Why, sir? Because the buyback is happening after 1st of October 2024. So in the hands of company, income from other sources. How much will be income from other sources? Deemed dividend will be in the hands of Dilip. Deemed dividend will be whatever buyback price is there into number of shares bought back. What is the buyback price? 180 rupees. Number of shares bought back is 400. 72,000 will be the income from other sources. And how much will be capital gain for this shares which is bought back? Sir, for this sale value will be 0. Expenses will be 0. Net sale consideration will be 0. Whatever price he purchased for. So I purchased for 75 rupees. 75 rupees into 400 shares. So total is how much? 30,000 rupees. So this 30,000 will be taken as cost of acquisition, and this will be my long-term capital loss because I purchased in 17-18. Now what about the shares which you sold in the market, sir? For the shares which I sold in the market, I sold 600 shares in the market for 250 rupees. I'll take its sale price. And for this, I'll take cost of acquisition. How much, sir? 600 shares I purchased for 75, and I'll take that cost of acquisition. I'll subtract that, and I'll get what? I'll get my long-term capital gain. Therefore, my net impact is what, sir? This loss I can adjust with this gain, and my net capital gain taxable is 75,000 rupees. Please see this question carefully again. You please see this question carefully again. Okay, you'll get the point. but it is important because it is an important amendment. You can just pause and see it again, or anyways, you are having the material, you can see it from the material. Hey. Now, one last point with respect to income from other sources. Now, please note, there are some incomes which are taxable only under the head income from other sources. Which are those incomes? There are some incomes which are taxable only under the head income from other sources. Which are those income? Dividend income, your casual income, lottery, betting, gambling, crossword puzzles, gift income, share premium. If you're selling a share at a price, if you're selling private limited company shares at a price less than its fair market value, if you're receiving any interest on compensation or enhanced compensation, any advance money forfeited after 1st of April 2024, any money you're earning by owning and maintaining racehorses. These incomes will always be taxable under their capital gain, and there are some incomes which will be taxable under capital gain if they have not taxed under PGBP. Normally, these incomes are taxable under PGBP, but if you have not paid taxes under PGBP, if it is not taxable under PGBP, then it will be taxable under capital gain. Employees' contribution to PF, ESI, superannuation fund, interest on securities, income from letting out of plant machinery, or whatever composite rent you are receiving. Now, there are some income which will be taxable under income from other sources if they have not been taxed under salary or PGBP. There are only two incomes covered over here. See, normally these incomes are taxable either under salary or under PGBP, but if it is not taxed over there, it will come under other sources. So, some received under Cayman insurance policy or compensation received for termination of employment or modification of terms of employment. Now, other incomes which are taxable under income from other sources are income from subletting. I gave the property to you, you gave the property to someone else, income from subletting, income from bank deposits, you have money in your bank account, interest the company is giving, remuneration for paper checking given by ICI, renting of vacant land, insurance commission given by the company, undisclosed income, then private tuition I'm conducting, interest on income tax refund, family pension I'm receiving, sitting fees director is receiving, or stipend director is receiving, agricultural income I'm receiving from a land outside India. If agricultural land is in India, then it is exempt. Then royalty if you are receiving, any income of MLA, MP, MLC, etc. Family pension if you are receiving, then how much you will also get an exemption, which is 1/3 of pension or 15,000 rupees. But if you are following default tax regime, the exemption will be 1/3 of the total pension or 25,000 rupees per annum. If under default tax regime, so this is also an amendment. Under default tax regime, the limit will be what's at 25,000 rupees. And any award given by government, exempt, any other person is giving you the award, it is taxable. Now, please note, with respect to interest income, if you are receiving interest from because of compensation or delayed payment of compensation on compulsory acquisition of property, then whatever amount you have received, only 50% of that will be taxable. If that interest is because of post office saving bank account, then 3,500 rupees of that interest amount will be exempt. Only balance amount will be taxable. If it is a joint account, then 7,000 rupees will be exempt. Now, following interest are always exempt: PPF interest, Sukanya Samriddhi interest, gold bond interest, deposit certificate under gold monetization scheme interest, they are always exempt. What is important is PPF and Sukanya Samriddhi. Any other type of interest, whether it is fixed deposit interest, saving account interest, interest on any loan given by you, recurring deposit interest, they are all fully taxable. This is all about this fantastic chapter called as what, sir? Income from other sources. This is all about your income from other sources. Now, further, section 57 talks about deductions from income from other sources. If the income is taxable, lawmaker says the expenses will be allowed as deduction. If the income is exempt, expenditure will not be allowed as deduction. For casual income, you cannot claim any expenditure. And for dividend income, which you are earning from any mutual fund company or any unit trust of India, then only interest will be allowed as deduction. That interest is whatever actual interest you are paying or 20% of income earned, whichever is less will be allowed as deduction. So I have given one example over here. Then whatever expenses you are incurring for personal purpose, for casual, for earning casual income, whatever expenses you have made for which you have made payment more than 10,000 rupees, whatever unreasonable payment you have made to your relative, they all will not be allowed as deduction. If you are making payment to non-resident in foreign currency, not allowed as deduction. All these things you will see again in your PGP topic. Now, section 59, which is the last section of your other sources topic which says expenses allowed earlier will be deemed to be income if it is ceased. For example, if there is any expenses for which you have claimed deduction 2-3 years back, now that person says you don't pay this money. You have already claimed the deduction while computing the income. Now that person to whom you are supposed to pay the money says you don't pay me the money now, that amount will be treated as income in this year. For example, I sold sarees to you. So can I say you have to pay the money to me? So for you, it is an expenses. Or I'll take ulta. I purchased sarees for rupees 1 lakh rupees from you. So can I say I have to make the payment to you of 1 lakh rupees? Now, I purchased this 2-3 years back. I have not yet made the payment to you. Now, if today you told me, sir, you please ignore, sir, you don't make the payment. I have already claimed the deduction in 2-3 years back when I purchased this product from you. Today you are telling you don't want the payment against this saree. Now, today, because you told that you don't want this money anymore, this expense is no more there. So this expense is no more there. Lawmaker says this expense will now be treated as income because you had claimed the deductions earlier. Now, because you are no more liable to pay this will be treated as your income. Okay. So this is all about this fantastic chapter called as income from other sources. Now, please note one more point, concept of grossing up, that also I'll just clarify this point. Now, normally what happens is this some incomes which you are receiving, you will receive net income. In the question, no, they will give you net income. For example, I purchased a lottery ticket, I won 10 lakh rupees. Now, the government deducts TDS of 30% and they'll pay the balance amount to me. So, how much money am I going to receive? I am going to receive net 7 lakh rupees. See, please note, the TDS rate is 30%. Therefore, I am going to receive how much, sir? 7 lakh rupees I am going to receive. So, what is the taxable income, sir? Is it 7 lakh rupees the amount which I have received or 10 lakh rupees the amount which I have won? The answer is 10 lakh rupees the amount which you have won. So, in the question when they give you that the lottery income net of TDS is 7 lakh rupees, you should take the full income. You should not take 7 lakh rupees while computing your total income. You should take 10 lakh rupees, meaning gross income should be taken by you. How do I apply this concept of grossing up? See, 100 rupees you are supposed to receive, 30% is given as TDS by you, 70% is received. So if 70% is for 100%, for 7 lakhs, how much will it be? It will be 10 lakh rupees. So this 10 lakh rupees is required to be added while computing income from other sources. Okay, yeah. This is all about this. Now we'll take a chota sa break and discuss our next topic, which is income from salary. Till that, take care, enjoy. We'll meet you in short time. Welcome back, students. Welcome back. So let us continue our discussion. The next topic for our discussion is income from salary. Sir, what about amendments in this chapter, sir? Are there a lot of amendments in this chapter? Answer is no. So that means this chapter is same, sir. Yes. And please note, this is one of the important chapter. For your examination, one question pakka will come from salary, because salary topic they are going to test only at a normally they will test only at intermediate level. They don't test during final level. So 6 marks question for sure you are going to get from this chapter. Beautiful chapter called as income from salary, one of the most important chapter. So section 15, 16 and 17, there are only 3 sections. Section 15 talks about the charging section, 16 talks about the deductions which you have, and 17 talks about what is the meaning of salary. So shall we start the discussion? Yes, sir. Salary chapter says one of the most important thing, if you want to see in me what is the most important thing, sir, the most important thing is relationship. There should be a relationship. What type of relationship? Employer-employee relationship. There should be a relationship of master and servant, wherein one person is giving an order, other person is executing that order. Okay. So, and who should be the pay? The relation should be of payer and payee. The employer should be the person who is paying the money. He should be a payer, and the employee should be the payee of that transaction which is happening. Now please note, there should be a relationship. What type of relationship? Employer-employee relationship, and all the payment should be made in the capacity of employer. Whatever payment you are making, that payment you should make in the capacity of what, sir? You should make the payment in the capacity of employer. For example, see, there is a person who is my employee, and the same person is giving me services also separately, independent services. Okay. Now the person who is giving me, the person, say Priya Sarees is there, and this Miss Colin is there, who is an employee of Priya Sarees. So what is she doing, sir? She is selling sarees and she is getting salary. So this relationship which I have with Colin is called as employer-employee relationship. Now Colin is also a chartered accountant. She is filing my income tax return. Now, please note, I am not asking any other employee of mine to file my income tax return. I am asking only Colin to do that because she is a chartered accountant. Therefore, now we have a relationship. What type of relationship? Service receiver and service provider relationship, wherein Colin is the service provider, I am the service recipient. Now, whatever payment she is making now is not covered under salary. Why, sir? Because the relationship which we have is not of employer-employee. Only when there is an employer-employee relationship, and if the payment is made because of that relationship in the capacity of employer, then it will be covered under salary. Now, there can be principal agent relationship, which is not again taxable under salary. Here commission income will come, which will go under other sources. If you are employer-employee relationship, salary will come into picture. Now, there are different points which you should keep in mind. If you are a sole proprietorship concern, then whatever sole proprietorship concern is giving, the salary which is given by sole proprietorship concern to the proprietor, that salary will not be taxable. Why, sir? Because the owner and the employer as well as the employee is same. So the owner and the person who is paying the money and the person who is receiving the money is same. So lawmaker says the sole proprietor cannot take salary from his own establishment. He should be interested in the profits of the company. He should not be interested in what? He should not be interested in the he should not be interested in the he should be interested in the profit of the company. He should not be interested in the salary which he is receiving on monthly basis. Then in case of partnership firm, whatever salary the partnership firm is paying to the partners, that salary will be taxable under the head PGBP. Now, section 28 is the charging section of PGBP, which says whatever salary is paid by partnership firm to the partners will be taxable under the head profits and gain from business and profession. It is not taxable under the head income from salary. Similarly, company has directors of the company. Now, company has directors of the company. The director can be employee director or non-employee director. So, whatever salary is given by by the company to the employee director will be taxable under salary, and whatever amount is paid by the company to the non-employee director will be called as sitting fees, and that sitting fees will be taxable under income from other sources. Similarly, MLA, MC, MP, etc., they are not receiving salary. They are not government employees. MLA, member of parliament, etc., they are not government employees. Therefore, whatever they receive is not a salary. Therefore, it is not taxable under income from salary. It will be taxable under income from other sources. Now, please note, these are additional points. They may not have huge impact on whatever topic we are going to discuss, but if by chance they ask a question on MCQ, so I have covered this point. Now, similarly, judge of Supreme Court, High Court, though he is a government employee, whatever amount the judge is receiving is not taxable under the head salary. These are the different clarifications which was given by the law. Correct? Now, there is something called as contract of service and contract for service. Sir, what is the difference between this, sir? What is contract of service? Contract of service means an employment contract. Contract of service means what, sir? An employment contract. There will be employer-employee relationship over here. And contract for service means what, sir? I am entering into a contract to give a services to you. For example, I am a teacher, you are the students. So I am entering into a contract for giving the services to you. That is contract for services. It is a professional contract. Contract of service is an employment contract. Contract for service is a professional contract. Now, CA Dilip, to your marks. CA Dilip, to your marks, he is an employee of Infosys. So here it is employment contract. I am a chartered accountant in practice. I give services to different companies, Infosys, Adani, Reliance, etc. Now, in this case, I am entering into a contract for giving services to these different companies. So when I am acting as an employee of Infosys, I will be entering into a contract called as contract of service. Now, salary, section 15 says salary is taxable under due basis or return basis, whichever is earlier. Section 15 says, what's the charging section? Salary is taxable under due basis or on receipt basis, whichever is earlier. On the date when you are receiving it or when it becomes due to you, whichever is earlier, it will be taxable. Now, salary can be in cash or it can be in kind also. Sometimes the company will give you washing machine, refrigerator, or sometimes the company will give you shares, and sometimes the company will give you house to stay. So salary can be in cash or it can be in kind also. Now, so this is the basic format for computation of salary. What is the format telling, sir? Format says you will have basic pay. These are the different components of salary. So you will have basic pay, dearness allowances, bonus, commission, advance salary, arrears of salary. Then you will have lot of retirement benefits such as gratuity, pension, leave salary, retrenchment compensation, VRS compensation, allowances, provident fund, superannuation fund, and 80 CCD pension fund. And you will have what, sir? Perquisites. All this combined together will give you your gross salary. From the gross salary, you are required to subtract deductions, standard deduction, entertainment allowance, and professional tax. Now what you are going to get is called as your taxable salary or net salary or income from salary. Okay, so this is your taxable salary. Now let us understand each and every component. Once we understand each and every component, this topic is over. So first component is what's our basic salary. Basic pay is your base salary. That is the base salary. So apart from that, you will get extra amounts like dearness allowances, etc. This is something which you are definitely going to get. So basic pay is your base salary. It is a taxable component of salary. Sir, is the basic salary, if they are giving me basic pay, is it taxable, sir? While computing, should I include in my computation? Answer is yes. It is a taxable component of salary. And how much is taxable? It is fully taxable. So if the company is giving a basic pay, so for example, some company says the CT is 50,000 rupees per month, that will have basic pay, dearness allowance, HRA, provident fund, telephone allowance, etc. All this combined together will give you what, sir? This basic pay of 50,000, the CTC of 50,000. Now here the base salary is how much? 20,000 rupees. Is it taxable? Yes, it is a taxable component of salary. Now, always in question, you should be very careful with what, sir. Always when you are doing any question, you should be very careful with respect to what is the date of joining of the company, when did you join the company, what is the date of resignation, what is the date of retirement, what is the date of retirement. Yeah, resignation, date of joining, retirement, and resignation is very important, because salary is required to be computed from the date of joining till the date of resigning or date of retirement if it is happening in the same year. Now, sometimes in question, no, they will give you grade pay or grade scale pay. Sir, what is this grade pay or grade scale pay? For example, they may give you salary as 20,000-2,000-30,000. What does this mean? This means that at the time when you are joining the company, your salary will be 20,000, and for every year, when there is an increase in salary, they will give you how much, sir? For every year you complete in the company, they will increase the salary by 2,000 rupees. At the time when you are joining your company, what is the salary, sir? The salary is 20,000 rupees, and for every year you complete in service, how much extra you will get? You will get extra 2,000 rupees, and this will be till which limit, sir? This will be till the salary reaches 30,000 rupees. Okay, for example, one example will take Mr. Dilip has joined Priya Sarees on 7th of July 2021 with a grade pay of 20,000, 2,500, 25,000, 5,000 and 50,000 rupees. Compute the salary for the previous year 24-25. So what does this question? What is this question telling? When I joined the company, my salary was 20,000 rupees. For every year I complete. So when will I complete 1 year? From 1st July till 30th of June 2022, I'll complete 1 year. So once I complete from 1st of July 2022, my salary will be what, sir? 22,500. Similarly, I will complete another year, my salary will become 25,000. Once it reaches 25,000, then the increment will increase by 5,000 rupees. Then the increment will increase by how much, sir? 5,000 rupees. Compute the salary of Mr. Dilip for the previous year 24-25. So they are asking you what is the salary for 24-25. So the salary for 24-25 is nothing but this period. We have done the computation over here. You can do the computation yourself. So we have done the computation over here. So for every year there will be an increment by 2,500 till the salary reaches 25,000. Once it reaches 25,000, the increment will be by 5,000 rupees. Then dearness allowance. Next component of salary is what, sir? Dearness allowances. The dearness allowance which is there, that is also a taxable component of salary. And how much is taxable, sir? It is fully taxable. So if the company is paying you dearness allowances, so what will you do? You will take your basic pay, you will take your DA also. Whatever DA they are giving, DA can be divided into DA in terms or not in terms. That entire amount of dearness allowance, which is given by the company, whether it is in terms or not in terms, full amount will be taxable. So dearness allowances, what is dearness allowances, sir, by the way? So dearness allowances is given to meet the cost of inflation. To meet the cost of inflation at a particular place, they will give you dearness allowances. So it is a taxable component of salary. And how much is taxable? It is fully taxable. Now DA can be in terms or it can be not in terms. If it is a DA in terms, then that means it is a dearness allowances which is forming part of retirement. If it is DA not in terms, that means it is dearness allowance not forming part of retirement or salary. So DA can be in terms or not in terms. If it is a DA in terms, it means it is a dearness allowance forming part of retirement. If it is a DA not in terms, it means dearness allowance is not forming part of the retirement or salary. Now please note, sometimes DA will be given in percentage format. They'll tell DA is 10% or DA is 50%, DA is 30%. It is 30% of what? So whenever DA is given in percentage format, you should always make sure that you should take it as a percentage of your basic pay. You should take it as what, sir? A percentage of the basic pay. Now, many times it may happen that the question is silent about DA, whether the DA is in terms or not in terms. If the question is silent about the DA, whether it is in terms or not in terms, then assume that that DA is not in terms, and accordingly write a note about this assumption. So if the question is silent, they are telling that DRNS allowance is 5,000 rupees. Now what should I assume, whether it is in terms or not in terms? You should make an assumption that this DRNS allowance which they have given in the question is not in terms, and also write a note that it is assumed that DA is not in terms. Now bonus. Bonus is also what, sir? Bonus is a taxable component of salary, and it is fully taxable. But the beauty of the bonus is normally salary is taxable on due basis or on receipt basis, whichever is earlier. But the beauty of this bonus is what, sir? The beauty of bonus is that the bonus is taxable on receipt basis. The bonus is taxable on what basis, sir? The bonus is taxable on receipt basis. See, bonus is a taxable component of salary, and it is fully taxable. Bonus is taxable on what basis, sir? Bonus is taxable on receipt basis. Now bonus can be contractual bonus, or it can be voluntary bonus. So it can be written in the agreement that I'll give bonus to you, or it can be voluntary given by the company. Now you should check in the question whether they have given bonus paid. If they have given bonus paid, that means it is paid. Therefore, add it while computing, include it while computing your salary. If they are given only bonus, nothing else is given, bonus paid or not paid, etc., nothing is given, then also please include it. Because if they have given bonus, that means they would have paid it. But when the question says bonus declared, be very careful. The question is telling that the bonus is declared. Now be very careful, because they have not told you whether it is paid or not paid. So now you cannot make an assumption telling yes, it is paid, therefore I will include in salary. Answer is no. Okay, so now if it is bonus declared, then please ignore it. Don't include in your salary. Then similarly, company may pay you something called as commission or fees. So commission or fees, it is a taxable component of salary, and it is fully taxable. How much is taxable, sir? It is fully taxable, and it is taxable. A component of where is this? Yeah, commission can be profit-based commission, turnover-based commission, product-based commission. It does not matter. If the question is silent, no, you should not make an assumption that it is turnover commission. So whenever question is there, you should just see the question what type of commission it is. If it is given as a percentage of turnover, then it is a turnover commission. If they are just telling that commission will be 15,000 rupees per month, now we don't know whether it is turnover commission or not. So you should not make an assumption that it is a turnover commission, because normally what happens, that commission which the company is paying will be based on the turnover. If nothing is given in the question, lawmaker says please don't make your own assumption. Unless until it is specifically mentioned, don't assume anything. Then advance salary. Please note, all these extra checkpoints which I have written, that is not there in the law. These checkpoints I have considered all these checkpoints only after seeing so many questions. What is the adjustment which they have done in the question when they have given bonus paid? What is the adjustment when they have done in the question when they have given only DRNS allowance and not mentioned whether is it in terms or not in terms? Therefore, that is how this all checkpoints, extra points which I am writing over has come. Next is advance salary. Advance salary means what, sir? Salary received in advance. Advance salary in simple words is what? Whatever salary you are receiving in advance. Now, advance salary is also a taxable component of salary, and it is how much, sir? Fully taxable. Fully taxable. It is fully taxable. However, advance salary is taxable on receipt basis. Receipt basis. If you are receiving, it will be taxable. Advance against salary is a loan. Please note, there is advance salary and there is advance against salary. So, advance against salary is a loan. Advance against salary is what, sir? It is a loan. Therefore, it should not include it. Please note. Advance salary means I am receiving salary in advance. Advance against salary. So against your salary, company is giving you an advance. That is a loan. So that is not written as salary. So advance against salary is not a advance against salary is a loan. Therefore, should not be included in computation of salary. Arrears of salary. What do you mean by arrears of salary? Arrears of salary means any past increment which is paid to me now. Past period salary which was not paid at that time because of some dispute, now it is getting paid. So any increment in the salary with a retrospective effect which is not taxed in earlier years is called as arrears of salary. This will be taxable on receipt basis on the year when you receive, and it will be a taxable component of salary. And how much will be taxable, sir? It will be fully taxable. Okay. Now let us enter into the main discussion. Now let us enter into what's our main discussion. Let us talk about the first type of retirement benefit which you can get. You can get something called as gratuity. Sir, what is this gratuity, sir? A gratuity means, you would have seen people telling, no, I am very, you should show gratitude towards someone. You should show gratitude towards your teacher. What do you mean by this? Meaning, a teacher who is teaching you, he's putting some efforts in his life. Therefore, you please be thankful to him. Gratitude is nothing but gratitude is nothing but being thankful. So gratuity is paid because the company wants to say thank you to you. You have spent almost 25 years, 30 years of your life working in this company. Because you have paid, stayed almost for 25 years in this company, 30 years in this company, the company wants to say you thank you. So how will they say you thank you, sir? By giving a money called as gratuity. So gratuity can be received by you when you are in employment, or it can be received by you when you are retiring from the company, or it can be received by the legal heirs if the employee has passed away or died. So if the gratuity is received during the time of employment, then it is taxable. How much is taxable? Fully taxable. Whether you are a government employee or non-government employee, it does not matter. If the gratuity is received at the time of employment, then it is taxable. How much is taxable, sir? It is fully taxable, irrespective of whether you are a government employee or not. But if the gratuity is received upon if the gratuity is received by the legal heirs upon death of the employee, now because the employee is no more there, legal heirs are receiving, in their hands it will be exempt. In the hands of legal heirs it will be exempt. Sir, what if I receive the gratuity when I am still working, sir, in the course of employment? Then it will be fully taxable, irrespective of who you are. Whether you are a government employee or non-government employee, I don't care, it will be taxable in your hands. Sir, what if the gratuity is received at the time of the retirement of the employee? If the gratuity is received at the time of retirement of the employee, no, then lawmaker says that gratuity is exempt under section 1010A. What am I talking about? I am talking about gratuity which is received at the time of retirement. So gratuity received at the time of retirement, check who is receiving it. Is it received by a government employee or is it received by a non-government employee? If it is received by a government employee, then it is fully exempt. If the gratuity is received at the time of retirement by a government employee, it is fully exempt under section 1010. If the gratuity is received by a non-government employee, if who is receiving the gratuity? If the gratuity is received by non-government employee, then I will check whether you are an employee who is covered under POGA. What is POGA? Payment of Gratuity Act. Or you are an employee who is not covered under Payment of Gratuity Act. So, if you are a person who is receiving the gratuity at the time of retirement, if you are a non-government employee, I will check whether you are covered under POGA or not covered under POGA. So, if you are covered under POGA, if you are covered under Payment of Gratuity Act, then how much will be exempt, sir? If you are covered under POGA, then the amount of exemption which you are going to get will be 15/26 into salary per month into completed years of service. Compare that with actual amount of gratuity received by you. Compare that with statutory limit of 20 lakh rupees. Whichever is less will be exempt. Sir. Repeat. I'll take what, sir? I'll take 15/26. I'll take how much? I'll take 15/26 into salary per month into completed years of service. Sir, this is a formula. Okay, this is the formula. Or I'll take actual gratuity received or the limit of 20 lakh rupees, whichever is less, will be the amount of exemption which you are going to get if you are an employee who is covered under Payment of Gratuity Act. Sir, what if I am not covered under Payment of Gratuity Act and I am still receiving gratuity? Then for you the exemption amount will be half of average salary per month. You will take half of what, sir? Average salary per month into completed years of service. Half of average salary per month into completed years of service, or actual amount received, or statutory limit of rupees 20 lakhs. You will take half of average salary per month into completed years of service. Please note, here you take 15/26 and here you take half. Here you take salary per month and here you take average salary per month. Sir, what is the difference? So or you will take actual amount received or limit of 20 lakh rupees, whichever is less. Sir, what is the difference between salary per month and average salary per month? when you are taking salary per month, no, you should take last drawn salary. Meaning in the month which you are retiring, before that whichever month was there, what is the salary for that month? You should take last drawn salary, last drawn salary. When you are taking the salary, you should take only basic pay and dearness allowances. You should take only what, sir? Basic pay plus dearness allowances. We just now saw, in some times back, that there can be different components of salary. It can be basic pay, DA, then other allowances, retirement benefits, all those different types of components are there. Now, what are we taking when computing the salary per month for calculation of the exemption for a POGA employee? What will I take? Basic pay plus dearness allowances, whether it is in terms or not in terms. Okay, we'll take this. This will give me salary per month. Sir, what do you mean by average salary per month? Average salary per month means I will take average of last 10 months. I'll take average salary for last 10 months. I'll take average salary for last 10 months. Now here what will I take, sir? I'll take basic pay plus DA in terms plus turnover commission. I'll take what, sir? Basic pay plus DA in terms I will take, and turnover commission. The total of this is called as what, sir? Average salary per month. Now this average salary per month is nothing but last 10 month ka average I should take. Meaning I should take salary for last 10 months divided by 10. I'll get average salary for last 10 months. When I'm taking salary, what should I include? Basic pay I should include. I should include dearness allowances in terms and turnover commission. Please note there is a difference. For salary per month, I will take DA whether it is in terms or not in terms, but here I will take only dearness allowances in terms. So this is a little confusing, no sir? No, it is not confusing. It will be confusing to you only if you have not studied and watching the marathon. So this is a topic, this is the video which you should watch only after studying. And of course, I mean, in the classroom, if you have attended the class, then you will be, I mean, you don't have to see this at all. You will directly skip this part because you know what is the provision talking about. Now, sir, sometimes it may happen that there may be a fraction in completed years of service. You told 15 by 26 salary per month into completed years of service. So completed years of service means what, sir? How many years you have completed working in this company? Say you have completed working for 26 years 3 months. So now what will I take, sir? Will I take 26 months or will I take 27 months? So lawmaker says if there is any fraction in completed years of services for POGA employee, if there is any fraction in completed years of services and the fraction is more than 6 months, and if the fraction is more than 6 months, consider it to be a full year. If there is a fraction in completed years of service and if the fraction is more than 6 months, you treat it to be what, sir? 1 full year. For example, if it is 26 years 9 months, take it as 27 years. 26 years 4 months, it is less than 6 months. Therefore 26 years and 6 months exactly, sir, that is also not more than 6 months. So I'll take 26 years. What if the fraction has what if you are a non-POGA employee and there is a fraction, sir? Lawmaker says the fraction should be completely ignored. In case of non-POGA employee, I don't care whether the fraction is more than 6 months, less than 6 months, equal to 6 months. The fraction should be completely ignored. So how many years you have completed, that only should be taken. Now please note number 1. For calculating salary per month and average salary per month, the month of retirement should be ignored. The month in which you have retired, no, that month should be ignored. Now the limit of 20 lakh rupees is applicable for an individual as an employee throughout his lifetime. Meaning every time when you are calculating, for example, throughout my lifetime, I have joined 3 companies. And from all the 3 companies, I have received gratuity. So will I take 20 lakhs each time when I am computing gratuity exemption? Answer is no. Lawmaker says 20 lakh limit is for a single person for his lifetime. So if I have worked in 3 companies, say for example, first company I took the exemption of 5 lakhs. So now what is left over? 15 lakhs is left over. So when I'm calculating gratuity of the second company, I should take the limit as what? 15 lakhs. Now I have left the second company only also, and I got a gratuity of 8 lakh rupees from them. Now how much is left over? Now only 7 lakh rupees is left over. So from the third company, when I'm taking the limit over here, I will take what? 7 lakhs. So this 20 lakh limit which is there, it is throughout your lifetime. Now let us take a question. This is your institute material question. Mr. Ravi retired on 15th June 2024 after completing 26 years 8 months of service and received a gratuity of 1,50,000 rupees. So they have given basic pay, they have given dearness allowances, and they have given 60% forms part of retirement. Now you understand why this DA forming part of retirement is important, because in case you are a non-POGA employee, I'll take only DA forming part of retirement, that is DA in terms. In case you are a POGA employee, I'll take whether DA is in terms or not in terms. Mr. Ravi retired on 15 June 24, etc. So salary base, dearness allowance, commission they have given. Now they have given 1% of turnover. That means what type of commission it is? Turnover commission. And they have given bonus. Calculate the taxable gratuity assuming he is a private employee covered under POGA, private employee not covered under POGA, and he is a government employee. So in all these different cases, you are required to find you are required to find what? You are required to find the taxable amount of gratuity. So how will I compute? So our main answer will be computation of taxable gratuity. Mr. Ravi previous year 24-25, assessment year 25-26, particulars. So if he is a POGA employee, if he is a non-POGA employee, if he is a government employee. So all these three categories I have written separately. So I will first take amount received. I will take first what, sir? Amount received. From this I'll subtract what, sir? Exemption which you have got. So what is the amount exempt, sir? If you want to know that, you'll have to do calculation. Can I say for government employee, whatever amount you are receiving, it is fully exempt? We studied over here, no? If you are a government employee, then it is exempt under section 1010. How much is exempt? Fully exempt. If you are a non-government employee, only I will see POGA, non-POGA. Correct, not correct? So if I am a non-government employee and I am covered under Payment of Gratuity Act, then what will be the exemption which will be available, sir? 15/26 into salary per month into completed years of services. So 15/26 into salary per month is 50 plus 60. 50 plus 10 is 60,000 into 27 years. Or actual amount received, or 20 lakh rupees, whichever is less. Similarly, if you are a non-POGA employee, then half of average salary per month into completed years of service. Half of what, sir? 66,000 into completed years of service. How many years you have completed? 26. Sir, but here you have taken 27. No, sir. Array, it is more than. If for POGA, if it is more than 6 months, I will take next period. No. Correct, not correct. And for non-POGA, I will ignore the fraction amount. So I have ignored the fraction amount and computed the salary for non-POGA. And for POGA, I have taken fraction because it is more than 6 months. So whatever exempt amount is there, you add, you take into consideration over here, you will get your taxable salary. So similarly, there are different questions. You can just, go through. You would have solved these questions. If not, then you can solve this question. Pension. Next is what, sir? Pension. Pension means what, sir? Pension is a money which is given by the company at the time of retirement. Now, pension can be of two types. It can be uncomputed pension. Uncomputed pension means the pension which you are receiving on monthly basis after retirement, or it can be a commuted pension. Commuted pension means what, sir? The pension which you are receiving in one lump sum. So now, the pension which you are receiving on monthly basis after retirement, whatever pension you receive on monthly basis, it is always taxable. Whether you are a government employee or non-government employee, does not matter. The pension which you are receiving on monthly basis is always taxable. But commuted pension means the pension which you are receiving in one lump sum, that is exempt under section 1010A. Sir, once again repeat, sir. Whatever pension you receive after your retirement on monthly basis, that is called as uncommuted pension. That pension will always be taxable. Whether you are a government employee or non-government employee, does not matter. But if you are receiving any pension which is an commuted pension, if you are receiving any lump sum pension, and that lump sum pension will be exempt under section 1010A. How much it will be exempt, sir? If you are a government employee, it will be fully exempt. And if you are a non-government employee, the exemption will depend on whether you are a person who is covered under, who is also receiving gratuity or who is not receiving gratuity. Meaning, at the time of retirement, are you only receiving pension or you are also receiving gratuity? If you are a person who is also receiving gratuity, then 1/3 of total pension will be exempt for you. If you are a person who is a non-government employee and who is not receiving gratuity, then whatever pension you have received, half of that will be fully exempt. So this is with respect to pension. Sir, can we do one question, sir? Yes. Say Mr. Sagar, who retired from his job on 1st of October 2024, receives 5,000 rupees per month as pension. Meaning what, sir? So he retired on 1st of October. From 1st of October, how much he will receive? 5,000 rupees he will receive every month. On 1st of February 2025, he commuted 60% of pension. So now he was receiving 5,000 rupees every month. 60% of this pension he commuted. So what happened, sir? By commuting, how much he received, sir? 3 lakh rupees he received. Now please note, he was receiving 100%, 60% he commuted. Now how much is left over? 40%. So going forward, how much is he going to receive? He is going to receive only 40%. So 5,000 rupees was received by him on monthly basis. From 1st of February, he will receive only 40% of this, which is 5 fours are 2,000 rupees. He will receive only how much, sir? 2,000 rupees. You are required to compute his taxable pension, assuming he is a government employee, he is a private sector employee receiving a gratuity of 5 lakh rupees, he is a private sector employee not receiving gratuity. Okay, so the simple point over here is, if he is a government employee, can I say it is fully exempt? Only monthly pension will be taxable, which is 5,000 into till February, October, November, December, January. For 4 months, you will receive 5,000 plus 2,000 you will receive for how many months? 2 months, February and March, 2 months. So how much is there, sir? 20 plus 4, 24,000. Sir, 1 second. How did you get 2,000 rupees? Are 5,000 I was receiving on monthly basis? No. Correct? No. Now I commuted how much? 60%. So what is left over? 40%. So how much will I receive now? 40% of 5,000, which is 2,000 rupees. Correct? Not correct. Now the commuted pension which I have received is 3 lakh rupees. Now if I ask you, I commuted 60% of my pension and I received how much? 3 lakh rupees. So tell me, what is the total pension which I was, total pension amount? Sir, it will be 5 lakh rupees. Hey, how did you get 5 lakh rupees? Sir, 3 lakh divided by 60% is 5 lakh rupees. You okay? Not okay? So if you are a government employee, that commuted pension is fully exempt. If you are a person who is also receiving gratuity, then 1/3 of the pension will be exempt. 1/3 of 5 lakh rupees, because total pension is how much? 5 lakh rupees. If a non-government employee, half of total pension will be exempt. So commuted pension 24, 24, 24. Because that calculation I showed you. Uncommuted pension for government employee fully exempt. 3 lakh rupees you are receiving, 3 lakh is fully exempt. For non-government employees, 3 lakh you are receiving, 1/3 of the total pension is exempt. Total pension is 5 lakh rupees into 1/3. And for non-gratuity cases, half of total pension will be exempt, and therefore you found the taxable amount. Next is leave salary. Leave salary means what, sir? The company is going to pay you money even when you take leave. See, normally what company follows is, in a month you can take 1 day leave, 2 days leave, meaning that is paid leaves. In a month you can take 2 days leave. Even if you take leave, no, company is not going to cut your salary. So that is called as paid leave. Now, if you don't take leave at all throughout the year, that means every month you are supposed to get, every month the company where I am working, they say that every month you can take leave for 2 days. Even if you take leave for 2 days, I will give you salary for that. So what have I done, sir? I have not taken leave at all during the entire year. So can I say 24 days, 12 into 2 days per month. So 24 days I could have taken the leave, but I have not taken. Now lawmakers are telling, the company is telling, now please note, because you are not taken the leave, you are a very nice employee, I want to reward you. So that company will give me something called as leave salary. For that leave, the company is going to pay me money now. That is called as leave salary or leave encashment. Whatever leave is there, I am now encashing that leave. Now this leave encashment will be taxable. How it is taxable, how much is taxable, we'll see that now. Now for example, the company says you will get, in a month you will get 2 days leaves. In 12 months, how much leaves I will get? 24 days leaves I will get. So 24 days leaves is allowed to me. That is the leave, total leave which I can take. Assuming I have taken leave for 4 days. So can I say for 20 days the leave is still available with me? It is a leave balance available, or leave available unutilized leave, or it can also be called as leave credit. Correct? Not correct. This 4 days the leave which I have taken, that will be called as leave taken or leave availed by me or leave utilized by me. Can I write down this in a formula? Sir, how will you write, sir? Can I write it as leave credit? Leave credit is equal to leave allowed minus leave taken. Meaning, what is the leave available with you? If you want to see that, can I say I will subtract from whatever leave the company is giving me, I'll subtract whatever I have taken. Leave allowed minus leave taken is leave credit. Now leave salary means what, sir? Leave salary means encashment of leave credit. Leave salary means what, sir? Encashment of leave credit. As per income tax law, leave allowed is 1 month for every completed years of service. So please note, leave allowed is how much, sir? 1 month for every completed years of service. Some companies may tell you that in a year I will give you 2 months leave. 2 months leave you can take. Okay, but income tax law says, as per me, it is only 1 month. In a year, how much leave can a company can give, sir? 1 month leave. In a completed year, how much leave company can give? 1 month. Who is telling? Income tax law is telling. So if the question says no, we have a policy of giving 4 months leave in a year, then whatever computation whatever computation is there, I will have to make it as per income tax perspective. Leave salary means encashment of leave credit. As per income tax law, leave allowed is 1 month for every completed years of service. Now let us see the taxability. Now leave salary, when are you receiving it? It is received during the employment, or it is received at the time of retirement. If it is received during employment, it is fully taxable, irrespective of whether you are a government employee or non-government employee. If you are receiving the leave salary at the time of your during your employment, it is fully taxable. But if you are receiving the leave salary at the time of your retirement, if it is received at the time of your retirement, then it will be exempt under section 1010 AA. It will be exempt under which section? 1010 AA. Please note, if you are receiving when you are working, when you are still in the company, lawmaker says it is taxable then. But if you are receiving at the time of retirement, because it is a retirement benefit, it will be exempt. If you are a government employee, it is fully exempt. If you are a non-government employee, then the exemption will be whatever leave credit is available into average salary per month, 10 months into average salary per month, and actual amount received, or limit of 25 lakh rupees. Now here there is a limit of how much, sir? 25 lakh rupees. So first I'll take leave credit which is there with me. What is the unutilized leave which I have, multiplied by my average salary per month. Similarly, I'll take 10 months average salary, 10 month into average salary per month, and I'll take actual amount received and 25 lakh rupees, take whichever is less. Sir, what do you mean by average salary over here? Average salary over here is basic plus DA in terms plus turnover commission. And this salary should be, last 10 months should be taken till the date of retirement. Now leave credit which is there, no, it should be calculated as per income tax law, meaning by taking 1 month leave. And month of retirement should also be considered over here. Fraction in a completed year of service should be ignored. If there is any fraction, you should please ignore it. Now for example, we'll see this question. Mr. Gupta retired on 1st of December 2024 after completing 20 years, and he received a leave salary of 5 lakh rupees. Oh, 5 lakh rupees he received less leave salary. Basic pay is 5,000 rupees. This 5,000 is at the time of retirement. Please note, reading question is very important. This 5,000 rupees salary which they have given is at the time of retirement, and the salary was increased by 1,000 rupees with effect from 1st of April. So at the time of retirement, he is receiving how much? 5,000 rupees. So before 1st of April, the salary is how much? The salary was 4,000 rupees. Dearness allowance is 3,000 rupees per month, and 60% of dearness allowance is forming part of retirement. Commission is 500 rupees per month. Now the question is silent, what type of commission it is. So what assumption should you make? It is just normal commission. You should not assume that it is turnover commission. Because here you take what, sir? Turnover commission. Correct. Here you take turnover commission. Unless until they mention in the question that it is turnover commission, you should not take it as turnover commission. And bonus they have given 1,000 per month. Leave availed by him is 480 days. Leave entitled is 30 days in a year. So in a year he can take 30 days leave. So 20 years he worked, 30 days leave is allowed by the company. So how many days leave he can take? 600 days. So leave allowed is how much, sir? Leave allowed is 600 days. And leave taken by him is how much? Leave taken by him is 480 days. The difference is called as leave credit. Or I can also call it as unutilized leave. This is the leave which I could have utilized, but I have not utilized. How much, sir? 120 days. For government employee, it is fully exempt under section 1010A. Okay, how much is leave allowed? We have just seen. For government employee, case number 1, it is fully exempt. For non-government employee, we should see the average salary per month, which is basic plus DA in terms plus turnover commission. This I should take for last 10 months. Correct? I should take, say, 5,000 into 8 months. 4,000 into 2 months, I'll get 48,000, 3,000 into 10 months into 60% and turnover commission. I'll get last 10 months salary as 66,000 rupees. Average salary per month is how much? 66,000 divided by 10, which is 6,600 rupees. Leave credit, which is exempt. How much is the leave credit exempt? Leave credit is equal to average salary per month. I mean, this formula, whatever formula is there, you take this and take whichever is less. So leave salary exempt is 26,400. Taxable leave salary will be 5 lakhs minus 26,400 for 4,73,600 rupees. I have given additional questions which you can definitely try and do it. So 2 extra questions I have given. Next is retrenchment compensation. Very small, easy. Maybe this MCQ question may come from this point. Retrenchment compensation and VRS compensation. Normally MCQ question will come because they are very simple. Retrenchment compensation is exempt under section 1010B. Now please note, there is something called as retrenchment compensation and then there is something called as VRS compensation. Now VRS means what's a voluntary retirement scheme. When you yourself tell the company, I want to leave the job before my actual retirement. Say normally the retirement age is 60. Now my age is 54. I am telling the company that I want to leave the job. That is called as voluntary retirement. But normally the age is 60. My age is right now 56. Now the company is telling Dilip, you please leave the job. No, Dilip, your efficiency has decreased. Now you please leave the job. That is called as retrenchment compensation. When the company is only throwing me out, it is retrenchment. When I myself I am leaving, that is called as retirement. Retrenchment compensation is exempt under section 1010B. How much is exempt? 15 by 26 into average salary per month into completed years of service, actual amount received, or limit of 5 lakh rupees, whichever is less. Now when you are taking average salary per month, you should take last 3 month ka average salary. So which is basic plus DA in terms plus turnover commission. Fraction in completed years of service should be ignored. Whatever fraction you have, that should be completely ignored. Then VRS compensation or voluntary retirement scheme compensation. Exemption is available under section 1010C. What is the amount of exemption available, sir? Salary per month into 3 months into completed years of service. Salary per month into remaining months in service. Actual amount received or 5 lakh rupees. So this is for VRS compensation exempt under section 1010C. Salary per month 3 months into completed years of service, or salary per month into remaining, how many months are remaining. Please note, I should take it in months. How many months are remaining in service, or actual amount received, or statutory limit. For example, Mr. Datta received a retirement compensation of 7 lakh rupees, voluntary retirement compensation of 7 lakh rupees after completing 30 years, 4 months in service. He still has 6 years of service left over. At the time of voluntary retirement, he was drawing a basic salary of 20,000 rupees and dearness allowance of 5,000 rupees. Compute his taxable salary. What is the taxable salary? So I have received 7 lakh rupees. My exemption will be 5 lakh rupees. Taxable will be 2 lakh rupees. Sir, how did you get this 5 lakh rupees, sir? The computation is going over here. Salary per month into 3 months into completed years of service. Salary per month into remaining months in service. Actual amount received and limit. If you compare this, this is the least point. Whichever is less will be exempt. Next comes what, sir? Allowances. Allowances are divided into. Next which we have is what? Next we have is allowances. Allowances. What is allowances, sir? See, what happens is many times the company may either give you a house to stay. If the company is giving a house to stay, that is called as perquisites. But if the company is giving you money, so that you can buy house of your own, that is called as perquisites. If the company is giving you money so that you can buy the house of your own, then it is called as what, sir? Perquisites. So allowances are monetary benefit given by the company to meet a particular type of expenses. So it can be to meet any expenses, say for paying your uniform. Say for example, they have given the company has given this t-shirt to us, perquisites, or the company would have given us the money telling Dilip, you go purchase the t-shirt which you want. That is allowances. Okay. Now so allowances, taxability of allowances. Now please note, there is something called as commutation allowance, also called as transport allowance. Transport allowance is a fully taxable allowance, but exemption will be given only to handicapped employees, blind, deaf, handicapped employees. They will get exemption of how much, sir? 3,200 per month. Children hostel allowance. Children hostel allowance is exempt. How much is exempt, sir? 3,000 rupees per month per child is exempt. Similarly, children education allowance, the 100 rupees per month per child is exempt. And you can claim hostel allowance and education allowance maximum for how many children? 2 children. Now please note, sometimes it may happen is the limit over here is 100. The company has given me only 70. How much will be exempt? Whichever is less. 70 rupees will be exempt. The limit over here is 100. The company has given me 250 rupees. How much will be exempt? Whichever is less, which is 100 rupees. So the exemption will be the amount which is given over here, which is listed down over here, or what, sir? The amount which is listed over here, or the amount which is listed over here, or whatever is given, whichever is less. And this hostel allowance and education allowance you can take for maximum how many children? 2 children. And please note, even though you don't have a children, you can take the benefit of this exemption. If the company is giving you children hostel allowance, or the company is giving you children education allowance, you can always take the benefit of that even if you don't have children. Tribal area allowance maximum 200 rupees per month is exempt. Allowances for transport employee, or also called as truck driver allowance. Truck driver allowance, actual amount into 70% or 10,000 rupees per month, whichever is less, is exempt. Underground allowance 800 rupees per month is exempt. Underground allowance. Now there are some exempts. There are some allowances like daily allowance, uniform allowance, conveyance allowance, helper allowance, academy allowance, travel allowance. These allowances are exempt based on the amount which you are spending. They are exempt based on what is actually spent by you. Daily allowance, uniform allowance, daily allowance, uniform allowance, conveyance allowance, helper allowance. What is daily allowances? For your day-to-day expenses, tea, coffee expenses. Uniform allowances for the uniform. Conveyance allowances is for local transportation within the state. And helper allowances, sir, for you need a helper for your office work, etc. For that, they'll give money. Academic allowance means you want to study something in your life, you take the money. Traveling allowances means you are going to some other states for business purpose, then it is traveling allowances. These are all exempt only if you are spending the money. For example, company has given me 10,000 rupees, you have spent 8,000 rupees. How much will be exempt? 8,000 rupees will be exempt. House rent allowance. Next is what, sir? House rent allowance. House rent allowance, important allowance. This house rent allowance, please note, we saw two types of allowance. One is cheat you, another one is duck hat. Duck hat is exempt based on how much you are spending, and cheat you is exempt based on the limit. That is 300, 100, etc. based on the limit. Next, apart from that, we have what, sir? House rent allowance, HRA. HRA is exempt under section 10. 13A. HR is exempt under which section? 10, 13A. How much is exempt? 40% or 50% of your salary. Actual amount of HRA received or rent paid minus 10% of your salary. So repeat. HRA is exempt. How much is exempt? 40% of your salary or 50% of your salary, or actual amount of HRA received by you, or rent paid minus 10% of salary. Sir, what should I take? 40% of salary or 50% of salary? You should take 40% of salary normally, but 50% of salary will be taken by you if the employment is in metro cities. If you are staying in which location, sir? If you are staying in metro cities, your residence is in metro cities. What are metro cities? Delhi, Mumbai, Chennai and Kolkata. But sir, I stay in a city where I have a metro, sir. My city is not covered over here. Yeah. So it is only for 4 cities, which is Delhi, Mumbai, Chennai, Kolkata. If you are staying in these locations, for you it will be 50% of salary, or else it will be 40% of salary. Salary for HRA is what, sir? Salary for HRA is basic plus DA in terms plus turnover commission. Meaning that 40% of salary, 10% of salary when you are taking, what is salary over here? Basic plus DA in terms plus turnover commission. Sir, I understood this point, sir. What if I receive any other allowances other than you cheat, duck hat, HRA? If I receive any other thing, that type of allowances is fully taxable. Those allowances are what, sir? Fully taxable. Hey, shall we go? This first question is to, okay, let us see this question. Mr. Srikanth has 2 sons. He is in receipt of children education allowance, 150 rupees for elder son, 70 rupees for younger son. So for elder son, how much will be exempt? 100 rupees. For younger son, how much will be exempt? 70 rupees. Whatever you are receiving, or limit whichever is less. Both the sons are going to school. He receives transport allowances and tribal area allowance. Tribal area allowance 200 rupees will be exempt. So children education allowance, child 1, child 2, 150 minus 100 into 12 is taxable. 70 minus 70 into 12 is taxable, transport allowance fully taxable, tribal area allowance 200 rupees exemption you will get. Okay, just like this we have different questions. We'll jump into which question, sir? We'll jump into HRA. We'll jump into questions of HRA. Say for example, this question says Mr. X is a resident of Ajmer. He receives 48,000 as basic salary during the previous year. In addition, he gets 4,800 as dearness allowances forming part of basic pay, 7% turnover commission, turnover is 86,000 and 6,000 is for house rent allowance. And how much house rent he is actually paying? 5,800 rupees. HRA exempt under section 1013A is what, sir? 40% of salary. Why? Because he is staying in Ajmer, not a metro city. Meaning it is not Mumbai, Chennai, Kolkata or Delhi. Therefore, it is 40% of salary. Actual HRA received or rent paid minus 10% of salary. Now, what is salary for this purpose? Basic plus DA in terms plus turnover commission. What is the total of this? This is the amount. So, this into 40% or 6,000 rupees which you are receiving or 5,800 is the rent which you are paying minus 10% of this. Sir, the last amount comes negative. No, sir. So, how much is exempt? Whichever is less, which is negative amount. Sir, negative cannot be exempt. Therefore, whenever there is a negative amount, you should take it as 0. Sir, can you discuss one more question because negative amount came in this? Yes. Say this: Mr. Rajkumar has a has the following receipts for from his employer: basic salary, dearness allowance, commission they have given, motor car for personal use, house rent allowance. Find out the HRA exempt in the hands of Rajkumar. He has paid a rent of 16,000 and is staying in Kanpur. So Kanpur again is a non-metro city. And DA which they have given is forming part of retirement. So 40% of salary or HRA or actual HRA received or rent paid minus 10% of salary. So that is what is going over here. That is the formula which we have to use. What is salary for HRA? Basic plus DA in terms plus turnover commission. Basic they have given, DA in terms I will take only, DA in terms I will take, and turnover commission because it is not there. But sir, they have given commission of 50,000 per annum. No sir, but we don't know whether it is turnover commission or not. So you are not going to make an assumption, wrong assumption, correct? So HRA exempt is 11,400. HRA exempt per annum is 11,400 into 12. So this is the amount of answer. Now, next comes what's the provident fund. I'll take a break for 2 minutes. Provident fund. What is provident fund telling, sir? Provident fund can be of two types: employee provident fund, also called as EPF, or public provident fund. Public provident fund is not covered in this chapter. We are going to cover what's an employee provident fund. Employee provident fund in this topic is divided into 3 categories. One is called as statutory provident fund, then recognized provident fund, and unrecognized provident fund. SPF statutory provident fund, RPF recognized provident fund, and URPF unrecognized provident fund. Statutory provident fund. What is the statutory provident fund, sir? Normally about SPF they will not ask a question in examination. Sir, what is the reason, sir? Why are you saying it like this? Because let us say there is a fund. Let us name this fund as what, sir? SPF. Now, employee is contributing money in this fund. You should ignore employee's contribution because he is going to contribute money from his own salary. Or he has already paid the tax on salary. Whatever contribution is made by the employer in the fund is exempt. Now they are going to receive interest on their contribution. Correct? Now please note, this fund is for the benefit of whom? Whatever money is there, who will get that money? Employee will get that money. Correct? Employee will get that money. So whatever employee is contributing, whatever employer is contributing on that amount, this fund is going to give them interest on employer's contribution also and employee's contribution also. That is also exempt. And if you withdraw this at the time of your retirement, then whatever lump sum amount you get, that is also exempt. Array, SPF, your contribution is exempt, interest earned by you is exempt, lump sum withdrawn by you is exempt. So why will they ask this question in examination? Everything is exempt only. No, they'll ask something where you have to use your brain. Correct, not correct? In examination, what will they ask? Array, they will ask you to use your brain. That is your recognized provident fund. RPF, recognized provident fund. What is this point telling, sir? Recognized provident fund says employee's contribution you ignore, because whatever contribution employee is making is from the salary which is earning, he'll contribute. I am already taking tax from the employee on his salary. Therefore, I will not take tax on this contribution which is making to recognized provident fund. So whatever contribution is made in recognized provident fund by the employee should be ignored. And for his contribution, he can claim a deduction under section 80C. Chapter 6 deduction 80C, he can claim the deduction. Whatever contribution is made by the employer, whatever contribution is made by whom, sir? Employer, his contribution is exempt if his contribution is up to 12% of salary. Meaning you take basic plus DA in terms plus turnover commission. If employer ka contribution is up to 12% of these three combined together, if employer's contribution is up to 12% of these three combined together, then it will be exempt. Sir, if it is more than 12%, sir, then whatever extra amount is there, that will be taxable. So if employer is contributing 15%, then how much exemption will be there, sir? 12%, 3% will be taxable. Please note, when you are taking the percentage, it should be on salary. What is salary for this purpose? Basic plus DA in terms plus turnover commission. Now, you are going to earn some interest. You are going to earn some interest on what, sir? You are going to earn some interest on your own contribution. So interest on employees' contribution will be exempt. How much will be exempt, sir? Up to 9.5% per annum. Whatever contribution employee has made, no, on that this fund is going to give him interest. How much of the interest is exempt? Up to 9.5% per annum is exempt. Similarly, whatever contribution is made by the employer, this fund is going to give interest for that also. This interest is also exempt up to how much, sir? 9.5% per annum. That is exempt. Now, please note, you have contributed money, ignore that. Employer contribution, exempt up to 12% of salary. Interest on your contribution and interest on your employer's contribution, exempt up to 9.5% per annum. Now comes, sir, the money is there in this dabba. In this fund, what are the different money? Your money, employer's money, interest on your money, interest on employer's money. Now this entire thing you are going to withdraw. This entire thing, lump sum amount, if you are withdrawing, no, it will be exempt. It will be exempt. When it will be exempt, sir? If you complete minimum 5 years in service. If you complete minimum how many years? 5 years in service, it will be exempt. Okay, sir. Now please note, this 5 years condition will not be applicable in 3 cases. Which are these 3 cases, sir? Say employee is leaving the job because of his ill health. Because of his ill health, if he is leaving the job, lawmaker says no problem. Or employer is leaving the job because the employer only discontinued the business. Are the company where I am working? No, that company is only getting closed. So when the company is only getting closed, what can I do in my life? Can I work in that company? No. Or you're transferring, you're shifting your company, you are joining a new company and you're transferring whatever amount was there in this old employee ka provident fund to the new employer ka recognized provident fund. In that case also lawmaker says no problem. So in 3 cases, 5 years condition is not applicable. If you're leaving the job because of your ill health, or if employer himself has discontinued the business, or you're transferring the balance which is there in this in the new employer recognized provident fund balance or 80 CCD pension fund. Now, on top of all of this, in recognized provident fund, are you understanding? SPF is very easy, but in recognized provident fund there are limits. On top of that, there is one more limit, very important point with respect to interest. Please note, whatever interest you are earning, if the interest on employer's contribution, if the interest is in excess of 9.5%, can I say that interest will be taxable in the hands of employee as salary? Yes, sir. Any interest more than 9.5% will be taxable as salary. Similarly, whatever contribution is made by employee, on that whatever interest is earning in excess of 9.5% will be taxable in the hands of employee as salary. So employee contribution interest accrued in excess of 9.5% per annum is taxable in his hand as salary. Now please see over here. Now we understood, sir, interest more than 9.5% will be taxable in the hands of employee as salary. Now there is one extra point given over here. What is that extra point? Lawmaker says if the employee has contributed in the recognized provident fund in excess of 2,50,000 rupees in a year, then interest on that excess amount shall be fully taxable. What are they telling? They are telling that whatever contribution employee is making, no, it should not be more than 2,50,000. Sir, what if it is more than 2,50,000? If it is more than 2,50,000, then the contribution to anyways you should ignore. But on that extra money which you have contributed, let us say employee contributes 3 lakh rupees. Now, can I say it is more than 2.5 lakhs? Yes. How much more, sir? 50,000 rupees is more. So whatever interest you are earning on this 50,000 rupees, that interest is fully taxable. Meaning on that extra contribution which you have made, this 9.5% criteria also will not work. Sir. Repeat once again. Please note. I have contributed how much? 3 lakh rupees. Now divide this 3 lakhs into 2 arrow marks. 2.5 lakhs and extra amount. How much is extra? 50,000 rupees. On this, let us say this fund is giving me interest of 10%. Okay. So on this 50,000, entire 10% interest will be taxable. And on this 2.5 lakhs, which is there, how much interest will be taxable? 10% minus 9.5, which is 0.5% interest only will be taxable. Meaning the interest in excess of 9.5%. Okay, not okay? So the contribution by the employee should not be more than, by the employee should not be more than 2,50,000. For example, I have taken example over here. Employee has contributed to recognized provident fund how much, sir? 3,50,000 rupees. PF interest is 6% per annum. So taxable interest will be what, sir? 3.5 lakhs minus 2.5 lakhs into 6%, which is 6,000 rupees. Now, employee contribution to recognized provident fund 4 lakh rupees. Interest paid by the fund is what, sir? 12%. Now, please note, in the previous case, interest was less than 9.5%. So, only the excess amount, whatever is there, no, on that you'll have to pay interest. Now, in the present case, what is happening? Interest amount is 12%. So, can I say it is more than 9.5%? So, whatever contribution you are making on that up to 9.5, more than 9.5% interest is there, no, which is almost how much, sir? 2.5%. This will be taxable for the entire contribution which you have made. And for the contribution which is made in excess of 2.5 lakhs, whatever extra contribution is made, say for example 4 lakh is there, minus 2.5 lakhs, how much, sir? 1.5 lakhs. On this entire 12% is taxable. Sir, this is confusing, sir. This is confusing in life. Therefore, they will ask this in examination. Are you understanding? Are you understanding? Something which is easy, they are not going to ask, because examiner knows what is that point where student will get confused and how to play around with them. So I'll repeat once again. See, in RPF, if you are contributing any money, on that money you will get something called as interest. Now this interest, if it is up to 9.5%, then it is fully exempt. Sir, what if the interest is 12%? So can I say the interest, if it is 12%, if the fund is giving you interest of 12%, can I say it is giving more than 9.5%? Yes, sir. So how much more it is giving? Sir, 2.5% more it is giving. So whatever amount you have put into 2.5% is fully taxable. It is fully taxable. Sir, I have understood this point, sir. This is very clear. Now tell me, sir, what is the 2,50,000 point? What is that extra point which you added? Now, what lawmaker says is, in this fund, employee, when he is putting the money, he should not put more than 2,50,000. If he is putting more than 2.5 lakhs, then whatever, see, can he put more than 2.5 lakhs? Yes. But if he is putting, say around, he is putting 5 lakh, he is putting 6 lakh rupees. So can I say he was supposed to put 2,50,000, he is putting 6 lakhs. So 3,50,000 extra he has put. On this 3,50,000, now I will not see what is the rate of interest, whether it is more than 9.5%, less than 9.5%, whatever interest the company is giving you. In our case, it was 12%, that entire amount will be taxable. On that extra money, entire interest will be taxable. Sir, yes, sir. Now something is clear, sir. I will refer the example again. It will be clear, sir. Okay, please refer this example again. Now, unrecognized provident fund. Next is what, sir? If I am putting money in unrecognized provident fund, again, they may ask question on this also, and they have asked question in the previous examination for 4 marks. Unrecognized provident fund. Now, this fund which is there, that is what type of fund, sir? It is unrecognized provident fund. Now, what is this unrecognized provident fund point telling? Whatever contribution employee is making, ignore. Whatever contribution employer is making, that is exempt. Or interest on employee ka contribution, exempt. Or interest on employer ka contribution is also exempt. Yes, sir. Repeat. Whatever contribution employee is making, ignore. Whatever contribution employer is making, exempt. Whatever interest is received on employee's contribution, exempt. Whatever interest is received on employer ka contribution is also exempt. Meaning your contribution and interest on your contribution is exempt. Now in case of unrecognized provident fund, taxability will come when you withdraw. When the lump sum is withdrawn from this fund, no, at that time taxability will come. How will it be taxable? Now when you withdraw, no, can I say now this fund, this dabba has 4 money. What are those 4 monies? Your contribution, employer ka contribution, interest on your contribution, interest on employer's contribution. So 4 amounts are there, 4 different categories of amounts are there in this fund. Now when you are withdrawing the lump sum amount from the fund, you should divide whatever money you have got in 4 different categories. Correct? So whatever contribution was made by you, it will not be treated as income and therefore it will not be taxable. Sir, repeat. Lump sum which I withdraw, whatever contribution was made by me will not be treated as income, therefore it is not taxable. Whatever interest I am getting on employee ka contribution, that will be taxable in the hands of employee under income from other sources. Now employer ka contribution and interest on employer ka contribution at the time of withdrawal is taxable under the head salary. This is all about your unrecognized provident fund. Next is what, sir? Superannuation fund. Superannuation fund, approved superannuation fund, unapproved superannuation fund. Approved superannuation fund is like your statutory provident fund. Unapproved superannuation fund is like your unrecognized provident fund. Exactly same it is. Now, employee ka contribution in this fund, ignore. Employer ka contribution, exempt. Interest on employee ka contribution, exempt. Interest on employer ka contribution, exempt. Lump sum withdrawn is also exempt. Here there is one extra point which is giving employer should not contribute more than 7.5 lakh rupees. Employer contribution should not be more than 7.5 lakh rupees in this fund. Sir, what about unapproved superannuation fund? Exactly same as unrecognized provident fund. Your contribution is exempt. Interest on your contribution is exempt. Whatever lump sum you withdraw at the time of your retirement, that amount will be divided into 4 categories and your own contribution is exempt. Ignore because it is not an income. Interest on your contribution taxable under other sources. Employee ka contribution and interest on employer ka contribution. Employer ka contribution and interest on employer ka contribution is taxable in the hands of employee as salary. You okay? Not okay? So I mean this is a question which is there in your institute material. 6 lakh rupees you received, which has employee ka contribution, interest on employee ka contribution, employer contribution, interest on etc. So accordingly, whatever we saw, that is how it is taxable. Next comes is deduction. Deduction, you should be little careful. When you are taking deduction, you should be little careful. Now you have what different types of deduction, sir? You have 3 types of deduction. One is your standard deduction, one is your entertainment allowance, and third one is your professional tax. So these 3 different types of deductions are there. First is what's your standard deduction. This is flat. If once you compute your salary, gross salary, from this 3 deductions should be subtracted. This standard deduction is required to be subtracted by you compulsorily. Compulsorily you should subtract standard deduction. It is available to all types of employees. Standard deduction is available to whom, sir? All types of employees. And how much deduction is available? It depends on what regime you are following. Are you following old tax regime or are you following new tax regime? If you are following old tax regime, that means optional regime or normal provision, then whatever salary you have or 50,000 rupees, whichever is less, is allowed as deduction. Standard deduction is how much, sir? Your salary amount or 50,000, whichever is less. Sir, what if I am not following optional tax regime? What if I am following default tax regime? Then your salary or 75,000 rupees per annum, whichever is less, is exempt. So for default tax regime, the limit is how much? 75,000 rupees. Then employee has received salary from more than one employer. Sir, what will happen then? What if I have received salary from more than one employer? If the employee has received salary from more than one employer, then also you will get deduction only once. Standard deduction is per employee, per person. So it will be given only once. Next is your entertainment allowance. Entertainment allowance is required to be first added in your salary computation. It should first be added in your gross salary computation, and then deduction will be given only if you are a government employee. A deduction will be given only if you are a government employee. How much deduction will be given? The amount of deduction which will be given to you will be 20% of your basic pay, 20% of salary, basic pay or actual amount received, or 5,000 per annum, whichever is less. Note, no education allowance, no entertainment allowance deduction will be given if the employee pays tax under default tax regime. So if you are a government employee, then only you will get the deduction. And if that government employee is opting for default tax regime, then he will not get this benefit. Then we have professional tax. Professional tax is a tax which is collected by the state government on the employment. It is collected by state government. It is allowed as deduction in the year when it is paid, and it should be paid by the employee himself. Sir, what if the employer is paying the professional tax? If the professional tax is paid by the employer, then first add it to your salary, then you complete the deduction. So because the employer is paying, first add it to the salary, then you allow it as deduction. How much deduction can I take, sir? 2,500 rupees per annum. Sir, what if I have paid more than 2,500 rupees? Last 5 years I did not pay. Now I am paying. Then you can claim whatever amount is paid by you. Deduction is allowed on payment basis. Further, if outstanding professional tax of earlier years is paid in the current year, then also deduction will be allowed in current year itself. Note, no professional tax deduction if employee pays tax under default tax regime. So if you are paying tax under default tax regime, then you will not get any such kind of benefits. So there is one question which we have solved over here. Very simple question. You can just go through this question. Next comes the last point for our discussion, which is perquisites. Perquisites. Now perquisites is what, sir? Perquisites is extra benefit which is given by the company. It is a non-monetary benefit. Perquisites is what, sir? Extra benefit given by the company. It is a non-monetary benefit which is given by the company. However, sometimes it can be in monetary terms also. Okay. Reimbursement of expenses. You are incurring some expenses, company is giving, say for example, company is giving a house to you. That is what? Perquisites. Company is giving a car for your transportation purpose. That is perquisites. Now apart from that, sometimes what may happen is company may reimburse the expenses incurred by you. Meaning you have already incurred some expenses. Now company is repaying that money. Expenses is incurred by the company on behalf of employee are also covered under perquisites. They are also covered over here. Now we'll see different types of perquisites now. First type of perquisites is what's up? Leave travel concession. Leave travel concession is exempt under section 10(5). Leave travel concession is exempt under which section? 10(5). Now leave travel concession benefit you can take only for travel which you are making anywhere in India. You can take leave travel concession exemption only for your travel anywhere in India. Travel benefit given by company for travel anywhere in India. Exempt under section 10(5). What is exempt under section 10(5)? Leave travel concession. So if you're traveling by air, if you're going to some location by air, then whatever actual expenses you have incurred or your economy class ka fare, economic class ka airfare, whichever is less will be exempt. Sir, what if I am not traveling by air? I am traveling by any other mode. It can be bike, car, train, etc. Whatever mode. If you are not traveling by air, then I will check the place where you are going, whether railway facility is available. If yes, then I'll take your actual expenses or first class ka AC ticket, AC rail ticket ka fare, whichever is less. Sir, what if the place where I'm going, the train facility is also not available? Then if the railway facility is not available, then I will check whether any recognized public transport facility is available, bus facility is available. Yes, sir. Then I'll take your actual expenses or deluxe class ka bus fare, whichever is less. Okay, not okay. Now, sir, what if that is also not there? Which location are you going in your life? Are you going to somewhere under the water where no bus is going, no train is going, nothing is going? Yes, sir. Yes, sir. Yes, sir. Then, if recognized public transport facility is also not there, then lawmaker says actual expenses or first class AC rail fare for similar distance, because the place where you are going, nothing is there. So similar distance. If the same amount of distance, if you travel in first class AC ticket, what is the amount? Whichever is less should be taken by you. Now please note. Leave travel concession. Sir, should I travel alone, sir? Can I travel with my wife, sir? Yes. You can, employee can, this benefit is available for employee, spouse of employee, children's and dependent relative. Dependent relative means mother, father, brother, sister. Sir, I cannot take my girlfriend. No. Don't do goobism in life. Okay. Now please note. For how many children is it allowed, sir? For all the children who are born after 1st of October 1998, maximum 2 children's benefit you can take. Now the journey, the exemption is available. You can take exemption for 2 journey in a block. One block consists of 4 years, and year means over here calendar year. So in a block of 4 years, you can take the exemption how many times? Only 2 times. So in 4 years, you can travel 2 times to claim this exemption. Then medical facilities is given by company. Medical facility, whether the treatment is happening in India or outside India, that is important. Sir, what do you mean by treatment, sir? Treatment means some medical issues are there with the employee. Now the company is telling, don't worry, you take care, you go to the hospital, I will pay the money for that. So medical treatment. If the treatment is happening in India, I will check which hospital it is happening. Is it happening in government hospital, or is it happening in government approved hospital, or is it happening in government employer ka own hospital? If yes, in all these categories it is happening, then whatever amount you are spending for the treatment is fully exempt. Sir, no sir, it is not happening in government hospital, nothing like this is there, then it will be fully taxable. In all other cases it is fully taxable. Sir, what if treatment is happening outside India? Your treatment and stay is exempt. Your treatment and stay is exempt. But if the for travel purpose, no, it is normally taxable. Treatment and stay will be exempt, and whatever travel expenses you are incurring, no, that will not normally be taxable. Now please note, treatment and stay for whom, sir? Treatment and stay of one person, patient, and one attendant can go with the patient. Yeah, see, just because it is happening outside India, you take your entire family outside India. No, one patient and attendant ka travel expenses. Now how it is exempt as per what limit, sir? Limit given by Reserve Bank of India. So in your question they'll give that limit. Now, sir, treatment can be of only employee. Yeah, no, employee himself or spouse, children, dependent relative. And here please note, medical insurance is exempt, but life insurance, if they give in the question, no, it is always taxable. Now sir, what if my company is giving gifts? If it is a cash gift, fully taxable. Sir, Diwali, no, Diwali, my company gave me a sofa, sir. My company gave me a washing machine, sir. No, so it is a gift in kind. So if the value of the gift, market value of the gift is more than or equal to 5,000 rupees, it is taxable. Less than 5,000 rupees, it will be exempt. Sir, what about loan? Loan given by the company. Loan given by the employer without interest or at concessional rate of interest. If any loan is given by the company without interest or at concessional rate of interest, then I will see whether the loan is given for medical treatment purpose or any other purpose. If the loan is given for medical treatment purpose, then, and if it is for a specified disease, it is fully exempt. But if the loan is given for any other purpose, say marriage purpose loan is given, or any other purpose, say education purpose loan is given, then if the loan amount is up to 20,000 rupees, it will be exempt. Or if the loan amount is more than 20,000, it will be taxable. Sir, how much, what is taxable over here? The interest. Please note, company is not charging interest. No, see, loan amount I will have to repay to the company back. So company is not charging interest to you, or company is charging less interest to you. So only that interest amount will be exempt. How will I calculate that? You see what is the outstanding amount of loan at the end of every month. At the end of every month, what is the amount of loan outstanding? Multiply that with, you take, see what is the rate given by State Bank of India as on first day of previous year. As on 1st of April 2024, what is the rate given by State Bank of India? Subtract from that what is the rate charged by the company, employer. So that is the benefit which you are getting, correct? No? Multiplied by whatever loan is outstanding at the end of every month. That will be the amount of exemption which you are going to get. Then we have something called as ECHAP. Then we have something called as what, sir? ESOP. ESOP means what, sir? ESOP means shares of the company are given to you at a concessional rate. ESOP means shares of the company are offered to the employees at a concessional rate. Now, what is the perquisites over here? What is the perquisites? What is the market value of the shares minus what is the price at which they have given to you? That is the benefit which you have got. Now, what is perquisites? Extra benefit you are getting. So, perquisites will be fair market value as on the date of exercising the option, or minus issue price. Minus what's the issue price? Now, please note. With respect to ESOP, you should also see what is capital gain topic telling. Note, if the cost of acquisition of shares acquired through ESOP for under capital gain, please note, salary topic, this discussion is over. Now I am talking from capital gain point of view. From capital gain point of view, the cost of acquisition of shares which you got through ESOP, what will be cost of acquisition of those shares? The fair market value of shares as on the date of exercising the option. What is the market value of the shares as on the date when I am taking this option, exercising this option? That will be taken as what, sir? My cost of acquisition of these shares. Now please note, normally if you gift anything, then it is exempt, meaning it is not interest transfer. However, gifting of shares which are acquired through ESOP is treated as transfer. Now, the period of holding of these shares should be taken from the date of allotment of these shares. So, from which date will I take the period of holding, sir? The date when these shares were allotted to you. Next, education facility is given by the company. Now, the education facility is given to employee. The company is giving the education facility to me only. I am the employee of the company. Then lawmaker said it is exempt. What if it is given to employees' children? Employees का children, if they are getting, check where the education is happening. Is it happening in the employee का own institute, employer का company का own institute, or the tie-up institute? If it is happening in own institute or a tie-up institute, I will see what is the value. If the value is less than 1000 rupees per month, it is exempt. If the value is more than 1000 rupees per month, it is fully taxable. And other institute, it is fully taxable. Sir, what if any other person is getting the benefit, sir? For example, I am working in Infosys and Infosys is funding my wife's education, fully taxable. Sir, what if company is giving me movable asset? Company is giving me, sir, in my house, no, company has given me a sofa. Company has given me a laptop. Company has given me a beautiful TV, AC, etc. in my house. So, except car. If the company is giving you movable asset except car, check whether the asset which is given by the company, whether it is owned by the company or the company has taken it on rent. If it is owned by the company, the value of perquisites will be 10% of cost of asset. What if it is taken on rent by them? Then the value of perquisites will be the rent which is paid by the company. Note, amount recovered from the employee. Say for example, now the company is giving me an AC which they have taken on rent and they are paying a rent of 500 rupees per month. And company is telling Dilip, see, I am giving this AC to you, you please pay me 100 rupees. So this 100 rupees you will have to subtract. Whatever amount is recovered by the from the employee by the employer should be reduced. So taxable amount will be only 400. And if the company is giving laptop or computer, no problem, it is fully exempt. Sir, what if they sell me those movable assets, sir? If they sell you those movable assets, then the perquisites will be whatever is the WDV of this asset minus the amount which is paid by you. For example, that AC was installed at my home. No, I told the company, you do one thing, you sell this AC to me. Now, I will see what is the WDV of that AC which is given to me. A WDV of that asset given to me minus what is the amount which I paid for that AC. That is perquisites. So, in case of laptop and computer, WDV minus consideration. Now, when you see WDV for laptop, you should compute the WDV by taking depreciation at what rate? 50%. Similarly, for car also it is WDV minus consideration. Please note, here I am talking about car for transfer, selling of car by the company to me. I am not talking about giving of car by company to me. Perquisites will be what's a WDV minus consideration. Now, here when you are computing WDV of the car, you should take 20% per annum. And any other assets. For any other assets, what will I do, sir? For any other type of asset, I will calculate WDV by giving depreciation at 10% SLM and subtract the consideration paid by me. Now, please note, when you are calculating depreciation, you should calculate the depreciation for a completed years. What do you mean by completed years? If there is any part of the year, say I have used it for 1 year, 3 months, ignore 3 months, you take depreciation only for 1 year. Sir, what if company is giving you lunch facility? If the value of the meal is less than 50 rupees, exempt. If it is more than 50 rupees, only that extra amount is taxable. If it is refreshment, non-alcoholic beverages, snacks, etc., exempt. And if anything is given to you at remote location, it is fully exempt when you are going outside for some work, etc. Next is what's a rent-free accommodation. Company is giving you rent-free accommodation. Rent-free accommodation means what, sir? Company is giving a house to you for stay. Now, if you are a government employee, they have already decided, government has already decided that this will be the limit based on which I am going to tax. So, if you are a government employee, the taxable amount will be the license fee as decided by the government. So, what if I am not a government employee? Company is giving me a house to stay. I am not a government employee. Then check whether the house which is given by the company is owned by the employer or they have taken it on rent. If it is owned, then it is 5% of salary, 7.5% of salary or 10% of salary. Depending upon where you are staying, depending upon the place where you are staying, it will be 5%, 7.5% or 10%. Sir, what if it is taken on rent by the company? Then how much ever 10% of salary or the rent which is paid by the company, whichever is less. Now, sometimes it may happen with this house, they may give you furniture also. So for furniture, you should add extra amount. If the furniture is owned by the company, 10% should be added of cost. If the company's furniture which is given by the company is taken on rent by them, then you should add whatever rent they are paying. So for house, what is the value which you are going to take? 7.5%, 5% or 10% of salary. If it is taken on rent, 10% or rent paid, whichever is less. Apart from that, extra thing you are going to add is this for furniture. Sir, how will I come to know? How will I come to know whether it is 5%, 7.5% or 10%? Depending upon the population. If the population is up to 15 lakhs, 5%. If the population where the house is given is up to more than 15 lakhs up to 40 lakhs, 7.5%. If it is more than 40 lakhs, it is 10% of salary. Amount recovered from employee by the employer shall be reduced. Salary means what, sir? For this purpose, what is salary? Salary is BD Bumsy. What is BD Bumsy, sir? Basic pay, dearness allowance, bonus, allowances, which are taxable amount only you should take, monetary benefits and commissions which is given by the company. Any type of commission. Now, please note, while calculating BD Bumsy, you should take salary on due basis only. And you should not include the following when you are calculating that salary for the purpose of rent-free accommodation. What should not be included? Your retirement benefits, perquisites, contribution to any welfare fund, etc., advance salary, arrears of salary. Questions will be very, very easy on these points. I have given good amount of question you can go through. Now, sometimes what may happen, I am getting shifted from one place to another place. At that time, no, lawmaker says if you are shifting from one place to another place, then if you have, if the company has given you the house to you at old place also and new place also, then for 90 days, one of the house will be exempt. You decide which house you want to exempt. One of the house will be exempt and only the other house, the second house, whichever house is there, that will be taxable. Only one of the house will be taxable. Sir, what if a hotel benefit is given? For example, I have traveled to some place, and before giving the house to me, the company told, wait, we are looking for the house. You stay in hotel for 10 days, 15 days, 20 days, etc. Lawmaker says here the perquisites will be 24% of salary or rent charge, whichever is less. Now, please note, if you are going somewhere else for a period up to 15 days and because of that reason hotel is given, it is exempt. Last point, which is important point. I mean, apart from that, all is theory. Car facility is given by the company. What facility? Car. Now, if you're using the car only for office purpose, then are you getting any benefit? Hey, company is giving the car to you and you're using the car only for your office purpose. What benefit are you getting? Only company is getting benefited, no? Therefore, no benefit. Therefore, no perquisites. But if you're using the car only for your personal purpose, company has given the car to you. That car is used by you only for your personal purpose. Hey, can I tell that you are getting full benefit now? Now, lawmaker says, if you are using the car only for personal purpose, if the car is owned by the company, 10% of cost will be taken as perquisites. If the car is taken on rent by the company, rent paid will be taken as perquisites. Now, car is given by the company. Now, sir, is running and maintenance charges also paid by the company? Petrol, maintenance, service cost? Yes, add the value of that also. And if driver is also given, then add the value of driver's salary also. If it is what, sir? Only for personal purpose. Sir, what if company is giving a car to me? I am using it for my personal purpose also and office purpose also. This is where maximum questions should be asked. So if there is any car which is given by the company which you are using it for personal purpose and office purpose, then check whether the car which is given is owned by employee or is it owned by employer. If the car given by the company is owned by employee, then check who is paying the running and maintenance charges. If the running and maintenance charges are paid by the employee, car is mine, I am only paying running and maintenance charges. What benefit am I getting, sir? No benefit. Therefore, no perquisites. Now, the car belongs to me. Running and maintenance charges is paid by the company. Now, the lawmaker says, whatever running and maintenance charge is paid by the company, from that, subtract the value of car. What is the value of car? If the car is up to 1600 cc, subtract 1800 per month. If the car is more than 1600 cc, cubic capacity, etc., then subtract 2400 per month. That will be the value of perquisites. Meaning, whatever company is giving, subtract the value of car, you will get value of perquisites. Sir, what if the car is owned by the company? If the car is owned by the company, check who is incurring running and maintenance charges. Sir, car is by company, sir. Running and maintenance charges I am incurring, sir. Employee is incurring. Then perquisites will be 700 per month if the car capacity is up to 1600, and if it is more than 1600, 900 per month. Sir, what if it is car owned by the company, running and maintenance charges also by the company? Then 1800 or 2400, meaning 1800 up to 1600 cc, 2400 for less than more than 1600 cc. Now please note, if company also gives a driver, 900 per month should be added for driver. Please note this notes which you are seeing over here is applicable to point number C. Sir, what if more than one car is given? Then you can take the benefit of partly for one car, and other car will be treated as only for personal purpose. Sir, month means what, sir? Completed month. So if you are using for part of the month, ignore it. Now other type of perquisites which are there in this chapter, which is the last point for our discussion. If the company is giving you gas facility, electricity facility, water facility, fully taxable. Sir, gas facility, electricity facility, water facility, fully taxable. Yes. If the company is giving you free servant or a gardener or a watchman or a personal assistant, fully taxable. Or you are getting personal assistant, what else you want in life? Fully taxable. So now lawmaker says, if the company, if the above 2 points, no, if the company is providing it to the employee, then it will be taxable only for specified employee who is a specified employee whose salary is more than 50,000. But if the cost is reimbursed by company, then it will taxable for all the employees. Meaning, wait, sir. If the company is giving a personal assistant to you, okay, when will it be taxable in your hands? If you are a specified employee. But you have taken a personal assistant and I am reimbursing the cost of that, then it will be taxable for all the employees. So anyone who is taking personal assistant for whom I'm paying the money, it will be taxable for them. Say employee ka obligation is incurred by the employer, fully taxable. Meaning there is some expenses which you were supposed to incur, I am incurring on your behalf. It is fully taxable. Credit card facility is given by the company and you are using the credit card for your office purpose, no benefit you are getting. You are using the credit card for your personal purpose, it is fully taxable. Club facility is given by the company, it is normally fully taxable, but if it is a corporate club, sports club or health club, then it will be exempt. Employer contribution. Employer ka contribution to RPF, approved superannuation fund, 80CCD pension fund in excess of 7,50,000 rupees. Employer ka contribution will be taxable as perquisites. Meaning, if the company is contributing in these three funds combined together 10 lakh rupees, then exemption I'll give up to 7.5 lakhs, 2.5 lakhs will be taxable in the hands of employee. Transport facility is given by the company. What facility? Transport facility. Now, are you an employee of transport company? Yes, I am an employee of railway company, airline company, then it is exempt. If you are employee of bus, any other transport company, it will be taxable. Transport facility given by company. Other employees, it is always taxable. I am an IT employee, company is giving me transport facility. Now please note, if the transport facility is from office to home, home to office, then it will be of course exempt because you are going to the company only. But apart from that, say wherever you want to go, the company is giving you transport facility, it will be taxable. Following perquisites are always exempt. Which perquisites are? If you are getting a laptop, computer, mobile phone, telephones, tea, coffee, snacks, etc., goods which are given by the company to you at a concessional rate, health insurance, mediclaim, etc., given by the company, they are also always exempt. Okay, yeah. Next starts our PGBP. We'll discuss this PGBP after a short break. Let me meet you after a chota sa break. Till then, enjoy, Panna students. Yes, so welcome back, students. Let us discuss the next topic. What is the next topic, sir? Next topic is profits and gains from business and profession. The last head of income we have discussed already. The income from house property, then capital gain, other sources, then salary. Now the last head of income which we are going to see is what, sir? Income from business or profession. Fantastic head. Now basically what is this topic going to talk about? How to compute your business income. So if you're doing any business, and if you want to compute the business income, then how do I compute the business income, sir? This chapter is going to tell you. So profits and gains from business or profession. So normally what do you do in accounts? You will prepare something called as profit and loss accounts. You will have income on the credit side and expenses on the debit side. So from your income you subtract your expenses, whatever is whatever you get is your net profit. That net profit is nothing but your business income. Now, for computing this net profit, no, you should follow income tax law if you want to find the net profit as per income tax law. So, if you want to find your business income as per income tax law, you will have to do what, sir? You will have to do this, whatever this chapter is going to tell you. Now, here there are two things, please note. Profits and gains from business or profession. So, there is something called as business and there is something called as profession. What do you mean by business? The business and profession, both definitions are inclusive definitions. They both are inclusive definition. Meaning what, sir? Whatever you generally understand by this word called as business is a business. Whatever you generally understand by the word called as profession is a profession. Apart from that, business will include trade, commerce, manufacture. Business will include what? Trade, commerce and manufacture. Similarly, profession will include vocation. Profession will include vocation. For example, Priya Sarees is a business. Then you have A to B is a business. Correct? Then you have Priya Electronics business, Priya Sweets business, Priya Airlines. They are all doing business. Correct? Business. Profession means what, sir? Chartered accountant, doctor, lawyer, actor, engineer, etc. They are all professionals. So profession is basically a degree of qualification. What is vocation then? Vocation is you are doing something because of your skill and talent. That is also profession. Now, while computing two incomes under our taxation, income tax, we can adopt any of the following methods of accounting. There are two methods of accounting: cash system of accounting and accrual system of accounting. This cash system of accounting and accrual system of accounting is required to be adopted by you while computing the income. It is required to be adopted by you when, sir? While computing the income. Income under which head? Lawmaker says if you are computing income under the head other sources, or if you are computing the income under the head business or profession, for computation of those income, you should use any of these following methods for computing the income. Then there is something called as income computation and disclosure standards. This is something which is there, which is required to be used for computing the income. But however, it is not applicable at intermediate level. You will learn it in your final level. Section 28 is the charging section. Section 28 says charging section. It says what, sir? Any profit or gain. So it is because of this section you are paying tax on your business income. What is this section telling? If you are making any profit or gain from any business or profession in the previous year, then that profit or gain will be taxable under PGBP chapter. Any profit or gain you are making from your business or profession in the previous year, then that profit and gain will be taxable under this particular head called as income from business or profession. Then if you receive any amount because of termination of your business or office or modification of terms of your business, then whatever amount you are receiving, that will be taxable under PGBP. What do you mean by this, sir? Say for example, McDonald's. I have taken the franchisee of McDonald's. Now the McDonald's is telling I'm ending my franchisee. McDonald's is telling, please don't give our technical know-how. Please don't give our recipe to anyone. So for that purpose, we are terminating the contract. We are ending the contract. For that purpose, they are giving me 1 crore rupees. So in this case, what will happen, sir? This income which I am going to get will be taxable under business. Income from services rendered by an association to its members. So this resident welfare association, etc., they are rendering services to their members. Whatever money, this maintenance charges these members are paying, that is their business income. Export, if you are into exposed business, you receive something called as duty entitled passbook. You receive something called as duty drawback. You receive something called as cash compensatory support. They will all be taxable under which head, sir? They will all be taxable under business or profession. Any benefit or perquisites arising from business or profession. If you are getting any benefit, say for example, I am a dealer of Puma shoes. I sold Puma shoes worth more than 10 crores. Because I sold more than 10 crores worth Puma shoes, the Puma company is giving me a car. I am receiving a perquisite because of my business. It is taxable under business or profession. Interest salary. This is important. The interest, and I expect an question in the examination because there is an amendment also in this section. Okay, what is this point? Interest, salary, bonus, remuneration or commission which is paid by partnership firm to the partners. Whatever interest, remuneration, salary, bonus the partnership firm is paying to the partners is taxable under PGBP. Please note, I am a partner at a partnership firm. Partnership firm is paying me a salary. It is a salary. Partnership firm is paying me salary, but still lawmaker says it is taxable under PGP. It is taxable under what, sir? Business income. However, there is a limit applicable which is given in section 40B, which you will see later. Amount received for not carrying on any business or not sharing technical know-how or patent. You are receiving any amount. Why are you receiving the amount? For not carrying on any business, or you are receiving any amount for not sharing the technical know-how or patent. Then that will be taxable under this head called as PGBP. Then some received under key man insurance policy. You are receiving any money in our previous class, topic we saw in our income from other sources. If you receive any key man insurance policy amount, if it is received by the employer, it is taxable under business. If it is received by the employee, it is taxable under salary. And if any other person is receiving, it is taxable under other sources. So if the company is receiving key man insurance policy money, then it is taxable over here. Then if you are converting your stock in trade into capital asset, then the market value of that stock in trade will be deemed as the market value as on the date of conversion of that stock in trade into capital asset will be deemed as your business income. Now, normally business are divided into two categories for your set off and carry forward purpose. One is your normal business, meaning any business other than speculation business. What is speculation business, sir? Buying and selling of securities without taking actual delivery. That is called as your speculation business. Now, section 29 time pass section. Section 29 says how to compute your business income. If you want to know that, you please come to me. So, if you want to, section 29 says while computing the income under the head PGP, please take reference to all the sections from section 30 to 43D. When you are computing the income under the head PGBP, when you are computing the income under the head PGBP, please take into consideration all the sections from section 30 to section 43D. Then section 30. Now the first section. Now please note section 30. Okay, when you are computing your business income, the income is given under section 28, which we just now saw, and income is also given under section 41. We will see as and when we are discussing different topics. All the expenses which you can claim as deduction while computing business income, all the expenses which you can claim as deduction is given from section 30 to 37. So now we are going to start our discussion with what, sir? The expenses which are allowed as deduction. Section 30 is the first expenses which is there. Section 30 talks about what, sir? Section 30 talks about rent, rate, taxes, repairs and insurance of building. So if you have a building, now please note, I am doing business. What is my business name, sir? Priya Sarees. I am doing Priya Sarees from a place. Now this place where I am doing business, this place can either be owned by me or this place can be taken by me on rent. Correct, not correct? So place where I am doing my business, this place where I am doing my business, it can either be taken by me on rent or it can be owned by me. Lawmaker says, when this place from where you are doing business, if it is owned by you, of course you will not be paying any rent. So you cannot claim deduction of rent for the place which is owned by you from where you are doing business. Then you will pay rates and taxes, some municipal taxes you will have to pay for this place. For that, can I claim as deduction, sir? Yes, you can claim it as deduction while computing your business income. Please note, what do you mean by I can claim as deduction, sir? When I am computing my profit and loss account and the place from where I am doing my business, if it is a owned place, meaning this place where I have my Priya Sarees, this place, is it owned or rented? You should see. If it is owned, lawmaker says, I will not give you the deduction of rent. You cannot claim a rent deduction. Sir, what about the taxes which I pay for this property, rates and taxes? Yes, you can claim as deduction. Sir, what about insurance which I am paying for this property? Yes, you can claim as deduction. Sir, what about repairs which I am making for this property? Lawmaker says, if it is a revenue repair, recurring repair, then you can claim it as deduction. But if it is a capital repair, then please add it to the cost of asset and claim depreciation on that. Repairs are of two types. What are those two types of repairs? Are revenue repairs and capital repairs. If it is a revenue repairs, it is treated as expenses and accordingly allowed as deduction in the year when it is incurred. But if it is a capital repair, then that capital repair will be added to the cost of asset and depreciation will be given on that. Now, sir, what if the place where I am doing business is a rented place? If it is a rented place, that means you will also have to pay rent. No. See, if it is a place which is owned by you, you will not have to pay rent. Therefore, I am not giving deduction of the rent. But if it is a place which you have taken on rent, that means lawmakers are telling, now I will give you the deduction of rent. Sir, what if I am paying taxes for that building which I have taken on rent? Lawmaker says, no problem, I'll give you the deduction. Sir, what if I am paying I have taken insurance on that building where I have where I am doing my business which I have taken on rent? Lawmaker says, I will give you deduction for that also. Sir, what about repairs? What about repairs? Lawmaker says, if it is a revenue repairs, I will allow. If it is a capital repair, add it to assets, meaning you treat it as deemed building. Whatever capital expenditure you are incurring, you treat it as deemed building, and you can claim depreciation on that amount. You can claim depreciation. Sir, section 31. Next is what, sir? Section 31. Section 31 is insurance and repairs for plant, machinery and furniture. Now, there are different types of plant, machinery and furniture which you may be using for your business. For that, if you are taking any insurance, is it allowed as deduction? Lawmaker says yes. For that, if you are incurring any repair cost, lawmaker says, I will allow if it is a revenue repairs. If it is a capital repair, add it to the cost of asset and claim depreciation. If it is a capital repairs, add it to the cost and claim at depreciation. What do you mean by deduction allowed, sir? Deduction allowed means when you are preparing your profit and loss account, you can claim that expenditure. Next is one of the most important deduction. What is that, sir? Depreciation. What is the next point which is most important you are telling, sir? Depreciation. So if you are a person who is doing business, then you will have assets. Correct, not correct? For that asset, can you claim depreciation? Lawmaker says yes. And if I am claiming depreciation, can I take deduction of the depreciation? Lawmaker says yes. Depreciation will be allowed as deduction. What is section 32 telling? Section 32 says depreciation will be allowed as deduction if two conditions are satisfied. If you satisfy these two conditions, depreciation will be allowed as deduction. Sir, which are the two conditions which I should satisfy for claiming depreciation as deduction, sir? Assessee should be owner of such asset, and that asset should be used for business or profession. Please note, depreciation will be allowed as deduction if you satisfy two conditions. What are these two conditions? The assessee who wants to claim depreciation, he should be owner of that asset, and that asset should be used for business or profession. Assessee should be owner of such assets, and asset should be used for business or profession. Okay, sir. Sir, so tell me, sir, if there is a plant and machinery which I have taken on rent, can I claim depreciation on that? Answer is no. Why? Because you are not the owner. Sir, what if I have taken that plant and machinery? I am owning that plant and machinery, sir. Can I claim depreciation on that? Lawmaker says yes. Now, let us say I have a laptop. I have purchased this laptop in the name of Priya Sarees, but I am using it for my personal purpose. Can I claim it as deduction? No. Assessee should be owner, and you should use that asset for business or profession. If you are using it for personal purpose, no depreciation. If I am using it for my business purpose, yes, depreciation. There is a car which I purchased on 14th of February, but registration was done in my name on 10th of May. From which date can I take the depreciation, sir? From 14th of February. From the date of purchase, meaning from the date when you put to use this asset, you can claim depreciation. That point will come in ways later. Under hire purchase system, sir, who can take the depreciation? What happens in hire purchase system? Possession is given on first day and ownership is transferred to me on last day when I pay the final installment. Lawmaker says no problem. Depreciation will be allowed from the date. Depreciation will be allowed from the date when you got the profession, meaning from the date when I got the profession of that possession of that asset which I purchased under hire purchase system. I can claim depreciation. And what about lease transactions, sir? Lease, there will be lessor and lessee. Lessor is going to give the asset to lessee for his use. In this case, who can claim depreciation? Who is the owner of the asset? Lessor is the owner. Correct, not correct? So lessor can claim depreciation. Sir, what if there are joint owners for an asset, sir? Then both the owners can claim it proportionately. Proportionately, you can claim depreciation. Now, please note, whether the asset is actually used or not, it does not matter. Actually used or not, it does not matter. Even if it has been put to use, you can claim depreciation. So there is one AC which I am not using at all in my office, which I have never used at all. So whether active use is necessary for claiming depreciation, answer is no. Active use or passive use, any person who has put to use any asset, whether he is using or not, it does not matter. He can claim depreciation. Then depreciation under income tax law is allowed from the date when the asset is put to use. Very important. Under income tax law, if I want to take depreciation, from which date can I take depreciation, sir? From the date when asset is put to use. If you want to claim any depreciation under income tax law, from which date can you claim that depreciation? You can claim that depreciation from the date of put to use. From the date of put to use, not from the date of purchase. Please note, I have purchased the asset on 10th of December 2024, but I have put to use that asset on 1st of March 2025. From which date can I claim depreciation? From 1st of March. Though I have purchased it on 10th of April, 10th of December 2024, I can claim the depreciation from 1st of March. So depreciation is allowed from the date when the asset is put to use. Classification of asset. For computation of depreciation, assets are classified into two categories. One is called as tangible assets, another one is called as intangible assets. Under tangible assets, there are further three categories: building, furniture, and plant and machinery. Okay, so whatever type of intangible assets you have, intangible assets. So whenever you are computing depreciation, you are required to divide the different assets which you have under these four categories. Which four categories are? One is your building, furniture, plant and machinery, and intangible assets. So based, you divide all the assets under these categories. For example, if I have office building, it will come under building. If I have furniture, it will come under furniture. If I have laptop, AC, printer, all this will come under plant and machinery. And if I have any intangible assets such as patent, copyright, trademark, they will all come under intangible assets. So accordingly, I will have to divide these items under respective categories for class. I will have to classify them into respective category for claiming depreciation. Now, under income tax law, the methods of depreciation are basically of two types. One is called as WDV method, another one is called as SLM method. So there are two methods of depreciation. One is straight line method of depreciation, another one is WDV method of depreciation. So what is the difference between straight line and WDV? A straight line method of depreciation gives the depreciation on individual assets separately. Under straight line method, what it says is, say if you have 10 laptops, for each laptop, give the depreciation separately. This is followed under straight line method. Under straight line method, they follow a system called as individual asset systems, wherein for each and every asset, they give the depreciation, they compute the depreciation separately. So what if the rate of all the assets are same? Lawmaker says, I don't care. Even if the rate of all the assets are same, I will compute the depreciation for all those assets separately. And please note, this method can be followed only by two companies. One is your power generation company and power generation and distribution company. Please note, SLM method of depreciation follows individual asset system. What happens in individual asset system? Here, depreciation is given to each and every asset separately. Who follows this, sir? Only power people. Only power people means what, sir? A person who is involved in the generation of business of generation of power, or a person who is involved in the business of generation and distribution of power. Okay, only these two people can opt for SLM method. Sir, can they follow WDV method? Yes, they can also follow WDV method. Now please note, normally under income tax law, if nothing is given, depreciation is required to be computed under which method, sir? WDV method. Normally under income tax law, if nothing is given, under which method you are supposed to compute the depreciation? You are supposed to compute the depreciation under which method, sir? WDV method. WDV method follows a system called as block of asset system. WDV method follows a system called as what, sir? Block of asset system. Here what happens? This is required to be followed by all types of assessing. If nothing is given in the question, WDV method. If you are a power generation and power distribution unit, can I follow WDV method of depreciation, sir? Answer is yes. But if they want to follow SLM, they can always follow SLM. So SLM is just an option to these two people, but WDV is compulsory for all the people. All the people should compulsory follow which method, sir? WDV method for computing depreciation. Now, under WDV method, see, under SLM method, what system they follow, sir? Individual asset system, meaning each and every asset, they'll give depreciation separately. But however, under WDV method, no, they follow a system called as block of asset system. Under WDV method, for computation of depreciation, they follow a system called as what, sir? Block of asset system. Sir, what do you mean by this system called as block of asset system? Under block of asset system, no, all the assets having the same rate of tax and falling under same class. All the assets having the same rate of tax and falling under same class are grouped into one. And for that entire group or for that entire block, depreciation is given. Sir, no, I didn't understand. A block of asset system means what, sir? You are grouping the asset into a block. You are grouping all the different assets into a block, which are having same rate of depreciation and which are falling under same class. Block of asset system means what? You are grouping the assets which has same rate of depreciation and which fall under the same class, and you give depreciation for them. That is called as block of asset system. For example, if you see over here, there are different items which are given over here: car, books, plant and machinery, etc. Now I will create separate blocks. How are this block created? Like for example, building is a separate category, furniture is a separate category, car, books, plant and machinery, laptop, this thing and all, they're all separate categories. Now I'm going to create different blocks. How will I create blocks, sir? All those things which are classified as building will be falling under the block of building. All those things which are classified as furniture will be falling under the class of furniture. All those things which are classified as intangible assets will be classified under intangible asset. Now all those things which are classified as plant and machinery will be classified as plant and machinery first, and I'll see the rate of plant and machinery. There are some plant and machinery which are taxable at 15%. There are some plant and machinery which are taxable at 40%. So what am I going to do, sir? I am going to put them into that block. Sir. Once again, can you repeat, sir? Block of asset system means you are grouping the asset. You are grouping the asset which has same rate of tax and which fall under same class, which falls under same class into one. That is called as block of asset. Now, sir, what is the different rates of depreciation, sir? Sir, do I have to study the rates of depreciation? Answer is yes. Sir, will they not give the depreciation rate? Once again. Sir, will they not give the rate of depreciation? In my question, sir, will they, when I am solving the questions in the examination, will they give the depreciation rate, sir? Answer is no. They are not going to give you depreciation rate. So you will have to see what are the different assets and what are the rate of depreciation. Normally, for building, if it is a residential building, 5%. If it is a temporary structure, 40%. But for all other types of building, it is 10%. So normally, what is the tax rate for building, sir? It is 10%. What is the depreciation? Not tax rate. Depreciation rate for building, it is 10%. Now, if it is a furniture, including electrical fittings, if it is a furniture including electrical fittings, then the depreciation rate will be 10%. Similarly, if it is an intangible assets, if it is what? Intangible assets except goodwill. If it is an intangible assets except goodwill, rate of depreciation is 25%. Meaning, lawmaker says, I will give depreciation for all the types of intangible assets except goodwill. A. Goodwill means what's? Reputation. Reputation. Correct, not correct? What will you like? What do you like in your life? Will you like it if your reputation decreases, or will you like it if your reputation increases? Lawmaker says reputation is something which no person will like to decrease. So lawmakers under income tax law, they say for goodwill I will never give any depreciation. For other type of intangible assets, yes, depreciation is allowed at 25%, but for goodwill depreciation will never be given. Then we have plant and machinery. If nothing is given, plant and machinery, the rate of depreciation is 15%. What is the rate of depreciation, sir? For normally plant and machinery, 15%. But there are separate categories of plant and machinery. If it is a motor vehicle, depreciation rate is 15%. But if you are a person who is in the business of renting, hiring of motor vehicle, then it is 30%. Similarly, if you are, if it is a ship, vessel or boat, they fall under the if it is a ship, vessel or vessel, vehicle or, okay. If it is a ship or a vessel or a boat, the rate of depreciation is 20%. It is an aircraft, 40%. If it is a pollution control equipment, 40%. Computer, including computer software and computer peripherals, 40%. Windmills, 40%. Oil wells, 15%. Books, including annual publication, 40%. And all other plant and machinery is 15%. So this is the rate of depreciation for different plant and machinery. Okay. So this is something which you have to remember. Normally, you just remember this. For building, it is 10%. Furniture, it is 10%. Intangible assets, 25%. And for plant and machinery, normally it is 15%. If it is books, computer, including computer software, etc., it is 40%. Okay, okay, sir. Now comes the most important part. How do I compute the depreciation, sir? How do I compute the depreciation, sir? You should take, please note, fantastic method. It is very important. Please follow this carefully. Depreciation, normally one adjustment question will be there. The depreciation calculation under income tax law and under accounts is completely different. So please be careful. Computation of depreciation. First, you should take opening WDV of the asset. Whichever asset you are claiming depreciation, you take opening WDV or opening value of that asset. To that, add whatever assets are acquired during the previous year. Add what? All the assets which are acquired by you, purchased by you during the previous year. You will add what assets are. When you are adding the asset, no, you divide this asset into 3 categories. Please note, take opening value of assets. If there is any opening value, you take that opening value. Then add to it all the assets which are purchased by you during previous year. When you are adding the asset which is purchased by you during previous year, divide those assets into 3 categories. Which are these 3 categories? What are the assets which are purchased by you during the previous year and put to use for 180 days or more? Those assets which you have purchased during this year and you have used for 180 days or more. Then second category is all the assets which are purchased by you or acquired by you during the previous year and put to use for less than 180 days. What are the different assets which you have purchased during the previous year and used for less than 180 days? Then third category will be assets acquired by you during the previous year and not put to use at all. Wait. Normally, whatever assets I am purchasing during the previous year will be divided into 3 categories. That is, asset purchased and put to use for 180 days or more, asset purchased during the previous year and put to use for less than 180 days, and asset which are not put to use at all. So you do this, you will get some amount. From this, you are required to subtract whatever money you have received from assets sold by you during the previous year. Please note, you should not subtract the book value of assets sold. No. Whatever sale proceeds you have received, meaning whatever money you have received from assets sold during the previous year. Please note, I will repeat again. You should not subtract the book value of that asset. Under your accounts, you subtract book value. No. Here they are telling you should subtract whatever money you have received from the asset which are sold by you during the previous year. Repeat. First, I'll take opening WDV, add asset purchased during the previous year, divided into 2 categories. Used for 180 days or more, used for less than 180 days, used for not used at all. You will get some amount. From that, subtract whatever assets you have sold during the previous year. What should I subtract, sir? The sale value, whatever amount you have received. Now, you will get something that is called as WDV for depreciation. This something which you have got now is called as what, sir? WDV for depreciation. It is on this amount I will give depreciation. Now what happens is this amount is required to be divided. So on WDV for depreciation is given under section 32. WDV for depreciation, you are supposed to divide this WDV for depreciation under 3 categories. Which are these 3 categories? I should divide them, sir. Please note, can I say this WDV for depreciation will have items which I have not used at all? It will have items which I have used for less than 180 days. It will have items which I have used for more than 180 days. Correct, not correct? So opening and more than 180 days items will be there. Items used for less than 180 days, this will be there. And items which is purchased by me but not used at all. So lawmakers are telling, so divide this WDV for depreciation into 3 categories. Asset which is not put to use, asset put to use for less than 180 days, asset put to use for 180 days or more. If you have any asset which is not put to use by you, you have purchased it during this year, but you have not used it at all. Lawmaker says, if you have any asset which you have purchased but not put to use at all, then don't give any depreciation. If you have any asset which you have purchased during the previous year but not at all used, and because you have not used, why should I give depreciation to you? Lawmakers are telling, because you have not used, I will not give depreciation to you. Similarly, if you have purchased any asset and used for less than 180 days, then give 50% depreciation. Meaning whatever it is there, 50% of that will be given. Sir, you are confusing, sir. What is confusing? Sir, under our accounts, no, sir. We gave depreciation based on how many days the asset was used. Here, are we not following that? No. Here, they say directly see whether it is used for more than 180 days or less than 180 days. If it is used only for 1 day also, you will get 50% of depreciation. Meaning what, sir? If the asset is purchased by you during the previous year and put to use for less than 180 days, you will get 50% depreciation. For example, if there is an item taxable at 15%, if you have purchased a plant and machinery which are taxable at what, sir? 15%, and if that is used for less than 180 days, then you will get depreciation of 15% ka 50%. 15% into 50%. We will see a question. You will understand this. And if you have any asset which you have used for more than 180 days, you will get 100% of depreciation. Whatever depreciation is there, whatever rate is there. For example, if the rate is 15%, into 100% will be given to you. Now please note, when you are dividing this WDV for depreciation, when the breakup is given for this WDV for depreciation, you are going to first allocate to asset which is not put to use. Then you are going to allocate the items to asset which is put to use for less than 180 days. And then finally for 180 days or more. And accordingly depreciation is given. Sir, can you please give a question, sir? Can you please explain with an example? Yes, let us say this question. Compute the depreciation of Priya sarees using the following information. Opening WDV asset acquired and put to use by 25th of December 24 and 15th of September 24. So this is used for less than 180 days. This is used for more than 180 days. And this opening asset is also used for more than 180 days because it is used from the beginning. Now sale value of asset sold is 3 lakh rupees, rate of depreciation is 15%. So I'll take opening, add purchases, I'll get my total item, total value. From that, I'll subtract the sale proceeds, whatever assets is sold by me, I'll subtract that. Now I got WDV for depreciation. This WDV for depreciation which I have to divide between 3 people. Who are these 3 people? Asset not put to use. Do you have any asset which is not put to use? No, sir. Then how much is WDV for depreciation, by the way? 12 lakh rupees. Then I will give it to whom, sir? Asset put to use for less than 180 days. How much is the asset which is put to use for less than 180 days? 4 lakh. Okay, first I will give it to whom? Not put to use. Then I will give it to asset which are put to use for less than 180 days. Now whatever is left over, how much is left over? 8 lakh rupees are the asset which are put to use for 180 days or more. Now on 4 lakh rupees, I will give 15% into 50% as depreciation. On 8 lakh rupees, I will give 15% into 100% as depreciation. Okay, because these are put to use for less than 180 days, I will give depreciation of half depreciation, meaning whatever rate is there into half. Because the other assets are used for more than 180 days, I will give it full depreciation. So whatever assets are not put to use at all, no depreciation for them. So if you see over here, this 12 lakh rupees which we have not put to use is 0, therefore depreciation is not there. Put to use for less than 180 days is 4 lakh. So 4 lakh into 15% into 50%, 30,000 is the depreciation. Put to use for 180 days or more is the balancing figure, which is 8 lakh into 15% into 100% is the depreciation. So total depreciation which you are going to get in this category is how much, sir? 1,50,000. Sir, how, sir? 1,50,000? You should do total of these 3. 0 plus 30,000 plus 20,000 is 1,50,000. So subtract depreciation amount. Whatever is left over is your closing WDV of this asset. It is what, sir? Closing WDV of the assets. Now please note. We understood one part. What did we understand? If I am purchasing any asset and putting use for less than 1 days, I'll get only 50% of depreciation. Now there is one important point with respect to this. Note, if any asset is purchased during the previous year and is put to use for less than 180 days in that previous year. Oh, sir, repeat. If you are purchasing any asset during the previous year and if you are putting it to use for less than 180 days in that previous year, then only 50% depreciation will be allowed for that previous year. In simple words, what is this point telling? If you are purchasing any asset during a year and the same year if you are using for less than 180 days, then for that same year you will get 50% depreciation. But however, if you are purchasing an asset this year and putting it to use in the next year, then irrespective of how many days you have used it in the next year, you will get full depreciation. So 50% restriction is only in the first year. So in the year when you are purchasing, if you are putting it to use in the same year for less than 180 days, I'll get 50%. But if you are purchasing this year and using it in next year, it does not matter whether you used for less than 1 days or more than 1 days, next year you will get full depreciation. So there are other questions also which you can go through. One more beautiful important concept is there, concept called as additional depreciation. Hey, what is this concept called as? This concept is called as additional depreciation. Sir, what is additional depreciation, sir? Extra depreciation. Section 32(1) 2A says extra depreciation. I will give you additional depreciation or extra depreciation. Who will get this? If you are a person who is involved in power generation business, if you are a person who is involved in power distribution business, if you are a person who is involved in power transmission business. Hey, who gets additional? Hey, who gets this Additional depreciation, a person who is involved in power generation business, distribution business, or transmission business. Basically, if you are involved in power business, or if you are a person who is involved in manufacturing business. Who gets additional depreciation? A person who is involved in manufacturing business will get additional depreciation. Sir, how much is this additional depreciation, sir? 20%. Please note, what is additional depreciation? Say normally you are getting a depreciation of 40%. Extra you will get what, sir? 20%. Normally you are getting a depreciation of 15%. Extra how much you will get? 20%. This is additional depreciation. Extra depreciation will be given to you. So additional depreciation is how much? 20%. Additional depreciation will be available only if an assessee has opted for WDV method of depreciation. Who will get this additional depreciation, sir? An assessee who is opted for WDV method of depreciation. Who will get this additional depreciation? That person who has opted for WDV method of depreciation. Sir, if I follow SLM method, I will not get additional depreciation. No. Only if you have followed WDV method of depreciation, you will get additional depreciation. What is the rate of additional depreciation? 20%. Then, additional depreciation is available only on plant and machinery. Sir, what do you mean by this? Normally assets are of 4 types. Which are these 4 types of assets, sir? One is your building, furniture, intangible assets, and plant and machinery. Now, on building, furniture, intangible assets, additional depreciation will not be allowed. Additional depreciation will be allowed only on plant and machineries. Then, additional depreciation is not available in following cases. Meaning, in the following cases, additional depreciation will not be given. Normally, additional depreciation is given only for plant and machinery, but still, in these cases, I will not give you additional depreciation. Which case? In case of used plant and machinery or second-hand plant and machinery. If you have second-hand plant and machinery or if you have used plant and machinery, you will not get additional depreciation. Then, if you have any vessel, vehicle, aircraft. If you have what? Vessel, vehicle, aircraft, you will not get additional depreciation. So if you have a car, bike, etc., on that additional depreciation will it be given to you? No. If you have a second-hand plant and machinery, will you get additional depreciation? No. If you are having any plant and machinery which you are using it under in residential accommodation, so there is say employee quarters in factory. So over there I have purchased an AC and putting it to use over there. Will I get additional depreciation? Answer is no. Then, if you are using any plant and machinery in office premises, if you are using any plant and machinery in normally additional depreciation is given only on plant and machinery. If that plant and machinery is used in office premises, please note, office premises is a place where normally your books or your all your white collar employees are going and sitting. So that is your office premises. In that place, if you are using any plant and machinery, you have bought any plant and machinery and it is used over there, you will not get. But what if it is used in factories, sir? Then you will get. So used plant and machinery, vessel, vehicle, aircraft, residential accommodation, you are using any plant and machinery, office premises, you are using any plant and machinery, you will not get additional depreciation for these items. Sir, and also you will not get additional depreciation on those assets for which you have already claimed 100% deduction under any other provisions of PGBP. So there are few topics which you are going to learn under in future. Those topics says you will get 100% deduction. You will get what's 100% deduction. 100% deduction can be claimed for that expenditure which is incurred by you. If you are already claiming 100% deduction over there, why should you get additional depreciation? Lawmakers are telling no. I will not give you depreciation also, by the way. Now please, next point. Additional depreciation is allowed in the previous year in which plant and machinery is put to use. So when will I give additional depreciation, sir? I will give the additional depreciation to you in that year when the plant and machinery is put to use by you. I'll give additional depreciation to you in which year? In that year when the plant and machinery is put to use by you. Whenever you are putting that plant and machinery on use, that year I will give additional depreciation to you. Sir, what if the plant and machinery is used for less than 180 days? Additional depreciation is allowed in the previous year in which plant and machinery is put to use. However, if the plant and machinery is put to use for less than 180 days in a previous year, then 50% additional depreciation will be given for that year. Meaning, normally, if you are using some asset for less than 180 days, what will happen, sir? If you are using any asset for less than 180 days, you will get only 50% depreciation. Correct, not correct? You will get 50% depreciation. Now, in case of additional depreciation also, normally the rate is 20%. You will get only 10% depreciation, only 10% additional depreciation for an asset if that asset is put to use for less than 180 days. So only 50% additional depreciation will be given for that year, and balance 50% shall be allowed in next, and balance 50% will be allowed in what, sir? Next year. So if you have any asset which you are using it for less than 180 days, I will give 50% this year, balance 50% I will give in next year. For example, Priya Sarees, a manufacturer, has purchased a plant and machinery on 15th of August for 5 lakh rupees. Depreciation for previous year 24-25. If the plant and machinery is put to use on 15th of August, because it is used for full 180 days, it will get normal depreciation and it will also get additional depreciation. Normal depreciation is also 100%, additional depreciation is also 100%. What if it is used in 20th of December? 20th of October. So it is used for less than 180 days. In such case, 50% of normal depreciation and 50% of additional depreciation will be given. So basically, whatever depreciation you're getting, 50% of that you will get. Good questions are given over here. I mean, of course, you have solved all this question in the classroom. Next, section 50 talks about what, sir? Section 50 talks about capital gain in case of depreciable assets. Capital gain in case of depreciable assets. So if you have any asset on which you can claim depreciation, then how do I compute capital gain? Very simple logic. Very simple logic. 2 points you should remember. Now 3 points you should remember. WDV for asset can be nil but never negative. Under income tax law, an asset can have a WDV, closing WDV, which can be 0, but it should never be negative. It can never be negative. It can be 0, but it can never be negative. Then capital gain will always be short-term capital gain. Whenever you are getting a capital gain for depreciable assets, that capital gain will always be short-term, and cost of acquisition will be WDV before sales. Sir, how will I compute capital gain, sir? What will be the cost of acquisition? Cost of acquisition, when you are taking, you should take cost of acquisition as the WDV before subtracting sale proceeds. Before sale price, whatever amount you have got, that. Now please see. Please see over here. Case number 1. So I have an opening assets of 6 lakhs. Total 5 assets I have. Purchases I made for 2 lakhs. I purchased 2 assets. So total assets I have is worth 8 lakh rupees. And how many assets I have, sir? 7 assets I have. Now all the 7 assets were sold by me for 11 lakh 50,000 rupees. I sold it for what amount, sir? 11 lakh 50,000 rupees. Now can I say, if I subtract the sale proceeds as 11 lakh 50,000, I will get a negative figure over here. What did lawmaker tell? WDV of the assets can be 0 but never negative. So though I have sold the assets for 11 lakh 50,000, I will take only 8 lakh rupees over here. So my number of assets which I have now is 0, and value of those assets is also 0. So do I have any assets now? No, sir. Do I have any WDV now? No, sir. So depreciation can I claim, sir? No. So when you don't have assets and WDV, then you cannot claim depreciation. Who will come into picture now? Capital gain will come into picture. Who will come into picture? Capital gain will come into picture. So what will be the capital gain? You take sale price, subtract your cost of acquisition, which is nothing but your WDV before sales. Whatever difference is there, 11 lakh 50,000 minus 8 lakh is your capital gain. What type of capital gain? Short-term capital gain. Always it will be short-term capital gain. Similarly, let us say same, everything same. Now I sold all the 7 assets for 6 lakh 50,000. I sold it for 6 lakh 50,000. Now please understand this carefully. I sold all the assets for a lower price. The value of the assets were 8 lakh, but I sold it for 6 lakh 50,000. Now what will happen? Will I have any assets with me? No, because I have sold all these assets. All the 7 assets were sold by me. So I will not have any assets value. But however, if you see, WDV will be there. I don't have an asset, but I have a WDV. Why do I have a WDV? Because my book value was 8 lakh. I sold it for 6 lakh 50,000. Therefore, I have a WDV. Lawmaker says. Now here, do you have assets? I don't have assets. Do you have WDV? Yes, I have WDV. Now lawmaker says, if you don't have an asset, but if you have a positive WDV, I will not allow you to give depreciation. Or you should have an asset to give depreciation, right? So here you don't have assets. I will not give you depreciation. Who will come into picture? Capital gain will come into picture. So your sale price is 650. Cost is 8 lakh rupees. Difference is 1.5 lakhs. is your short-term capital loss. It is what, sir? Short-term capital loss. Similarly, next case, case number 3. Case number 3. Let us say I didn't sell all the assets. I sold only 5 assets for 9 lakh rupees. So what will happen over here? 8 lakh is my WDV, 7 assets I have. I sold how many assets? 5 assets. So can I say if I sell 5 assets, there will be still 2 assets remaining? So if I subtract my sale value, if I subtract 9 lakh rupees, can I say this amount will come negative? So I cannot subtract 9 lakh rupees. How much will I subtract? I'll subtract only 8 lakh rupees. Now in this question, what is happening? I have assets with me, but there is no value. WDV of that asset is not there. I have assets, but still there is no WDV for that asset. Lawmaker says, if you have assets but not WDV, you cannot claim depreciation. You have assets, I understand that, but you don't have WDV. On what amount will you give depreciation? Therefore, I will not give depreciation. Now, who will come into picture? Capital gain. Who will come into picture? Capital gain. So, your sale price minus cost is your capital gain, which is 1 lakh rupees. 9 lakh you sold it, 8 lakh is your cost of acquisition. Therefore, difference of 1 lakh rupees is your capital gain. Case number 4. I sold assets for 6 lakh rupees. 5 assets I sold for 6 lakh. Now what will happen? I will have a positive WDV also and assets also. Now can I say if I have assets as well as WDV, I have assets, I have WDV, can I give depreciation? Yes. The question of capital gain will not come. When will the question of capital gain come? Either I don't have assets as well as WDV, or I have only assets but no WDV, or I have only WDV but no assets. In these 3 cases only, capital gain will come into picture. If I have assets as well as positive WDV, no capital gain will come into picture. SLM method of depreciation. Which method, sir? Straight line method of depreciation. Whatever we just now learned was computation of capital gain under WDV method. Sir, what will happen in case of straight line method? Here the concept is little different. Under straight line method, the computation of what, sir? Under straight line method, the computation of capital gain is completely different. Lawmaker says under straight line method, you will get capital gain only when you sell a capital asset, only when you sell a depreciable asset at a price more than its cost. Under straight line method, if you want capital gain, then you should sell the asset for a price more than its cost. SLM method follows individual asset system. It follows what systems are? Individual asset systems. So cost of the asset is 100 lakhs. I purchased it on 15th of August 2022. At depreciation, I give a 10% straight line method and I sold the asset on 30th of December 2024. So as on the year 24-25, what is the WDV of that asset? So I purchased for 100 lakhs, gave depreciation for 2 years. Now the opening WDV or the WDV for 24-25 will be what, sir? 80 lakh rupees. I have sold asset worth rupees 80 lakhs for 72 lakhs. Can I say I sold at a price less than its WDV? I sold at a price less than its WDV. Lawmaker says whatever difference is there, that loss is there, no, whatever difference is there, sale price is 72, cost is 80, the difference of 8 lakh rupees, that 8 lakh rupees which is there, that will be treated as terminal depreciation. It will be called as what, sir? Terminal depreciation, and you can claim deduction of that. It will be treated as terminal depreciation and you can claim deduction of this. This is terminal depreciation, claim deduction of this. It is allowed as deduction in the previous year when asset is sold. It will be allowed as deduction in which year? It will be allowed as deduction in the year in which asset is sold. By the way, it is called as what? Terminal depreciation. It is called as terminal depreciation. It is allowed as deduction in the year when asset is sold. It is allowed as deduction means it is treated as business expenses in the year when asset is sold. Then case number 2, sale price, and what is this? Sale price is 90 lakh rupees. What is the WDV? 80 lakh rupees. Sale price is 90 lakhs. Can I say the asset is sold at a price more than its? Can I say the asset is sold at a price more than its WDV? Yes, sir. Yes, sir. Yes, sir. Therefore, your sale price minus WDV 10 lakh rupees, whatever is there, no, that is called as balancing charge. That is called as what, sir? Balancing charge. This is deemed as business income. This balancing charge is deemed as business income in the as per section 41(2), and it will be taxable in the year in which asset is sold. It will be deemed as business income. Then we have, what if the asset is sold at a price more than its cost? Now please note, when the asset is sold at 112 lakhs, can I say asset is sold for more than 80 lakh rupees? And can I also say asset is sold for a price more than 100 lakh rupees? So can I say the asset is sold at a price more than its WDV and cost? Yes, sir. Now lawmaker says the difference between the sale price and the cost is called as capital gain, and the difference between cost and WDV is called as balance in charge and is taxable under business income. Capital gain is taxable under capital gain. I'll repeat once again. Sale price is 112 lakhs, WDV is 80 lakhs. 32 lakhs is the gain which I have got. In this 32 lakhs, whatever gain I have got in excess of cost, full value of consideration minus cost, whatever gain in excess of cost I have got, what is the cost? 100 lakhs. That will be taxable as capital gain. It is always short-term capital gain. And whatever gain I have got for value more than its WDV, correct? So 80 to 100 lakhs, that is my business income, taxable as balance in charge under section 41(2). This is your capital gain in case of depreciable assets. Next, 43A. What are the consequences whenever there is a change in exchange rate? See, normally what happens is, if I purchase some assets from a foreign country, if I purchase some assets from outside India, then I may have to pay that person in foreign currency. Now, it may happen that I have purchased asset today, I am paying after 3 months, 4 months, 6 months. Say at the time when I purchased asset, I purchased an asset worth rupees $1 lakh. Okay, at the time when I purchased the asset, value of $1 was 65 rupees. Now tomorrow when I am making the payment to that person, the value of $1 is 67 rupees. So can I say I will have to pay 2 rupees extra? Correct, not correct? So if you see 2 rupees extra, that is almost equal to 2 lakh rupees extra I will have to pay in Indian currencies. I'll have to pay 2 lakh rupees extra. Because why am I paying, sir? Because there is a change in foreign, there is a fluctuation in foreign currency. So, sir, this 2 lakh rupees which I have paid extra, no, sir, what will happen to this 2 lakhs? Lawmakers are telling whatever increase or decrease in exchange rate is there, whatever extra money you are paying or whatever less money you are paying due to fluctuation in foreign currency, that will be added to the cost of asset. And you can claim depreciation on that. So if you are paying extra, for example, in our present case, I paid 2 lakh rupees extra, that will be added to the cost. I can claim depreciation on this. So what if I have paid 3 lakh rupees less? Then subtract it from your cost of asset. So what is this point telling? This question is there. Opening WDV is nothing. I purchased assets on the date of purchase, the value was 65 and there is no sales. At the time when I paid at 67 rupees. I paid at what price, sir? 67 rupees. So can I say I paid 2 rupees extra? Now because I paid 2 rupees extra, I'm making an extra payment because I made an extra payment of 2 lakh rupees. Okay, not 2 lakh rupees in this case. I made an extra payment of 1 lakh rupees. I will add it to the cost, and on this entire amount, I will give depreciation. Next year, when I was repaying, no, I paid 3 lakh rupees less. I paid how much, sir? 65 was the price at the time of purchase. Now the price is 62 rupees. So I paid 1.5 lakh rupees less. I'll subtract it back from my cost. Not 3 lakh rupees, 3 rupees less. So it will be subtracted from cost. So whatever fluctuation is there, it should be either added or subtracted from cost. Then we have a concept called as unabsorbed depreciation. Unabsorbed depreciation means what, sir? That portion of depreciation which is not able to be taken care by the profits of the business. Unabsorbed depreciation. What do you mean by this? If the current year business is not, if the current year business income is not able to fully adjust or absorb the current year depreciation, if the current year business income is not able to fully absorb, fully adjust the current year depreciation, then such unabsorbed depreciation or unadjusted depreciation is called as unabsorbed depreciation. Such unadjusted depreciation is called as what, sir? Unabsorbed depreciation. So if your business income of this year is not able to take care of the depreciation, then it is called as unabsorbed depreciation. Now, what is the impact of this unabsorbed depreciation? Unabsorbed depreciation can be carried forward to indefinite period, and it can be set off in future years against any income. Against any income. For example, if you see, what do you mean by See, for example, my income is 20 lakhs and my expenses is 24 lakhs. So can I say my income is more than expenses? So 4 lakh rupees is extra expenses. This 4 lakh rupees will give me my business loss. It will give a business loss. But if this loss which I am getting, if the business loss is due to depreciation, then it is called as unabsorbed depreciation. So I've given different example over here. If current year income not able to absorb current year expenses, you will get business loss. If current year income is not able to absorb current year depreciation, you will get unabsorbed depreciation. Now next is actual cost time passes. They have never asked this point in examination, but anyways, we'll see what is this. Actual cost of asset. What is actual cost of asset, sir? Your cost of acquisition and all the expenses incurred by you for bringing the asset up to the place of put to use, like installation charges, transportation charges, transit insurance, packing cost, testing charges, any duties and taxes, excluding those taxes where you have taken input tax credit, any interest on loan, etc. Add all those expenses, subtract from that any grant which is given by the government, any money which you have received by selling the trial run products. Whatever you get now is called as your actual cost. Now please note, when you are adding these expenses, any expenses which is paid more than 10,000 rupees in cash should not be added. Then if the stock in trade is converted into business asset, then the market value as on the date of transfer will be taken as market value as on the date of transfer will be taken as actual cost. For example, I'm an electronics dealer. I had an AC. This AC now I converted into my business asset. Can I say I was an electronics dealer, therefore this AC is my stock in trade? Now I converted into business asset, therefore it became what, sir? My business asset. So can I claim depreciation, sir, on this? Yes. What will be the value, sir? Market value as on the date of conversion. Fair market value. Asset acquired by way of gift or will. So if someone is gifting me an asset, for me the actual cost will be whatever is the actual cost to that person, subtract depreciation as if it was used by him for business purpose. Now the amount which is left over is called as your actual cost for your business purpose. Now if any person is purchasing an asset and selling it to you at a higher price, then lawmaker says officer will determine what is the actual cost for that. For example, someone purchased the asset for 10 lakh rupees. Now he is selling that asset to me for 50 lakh rupees. I am purchasing that asset from someone for a higher price. Lawmaker says, no, I'll not take whatever price you are telling me, but I will calculate the price myself. If you sell an asset and repurchase the asset, then the actual cost will be your sale price or repurchase price, whichever is less. If you sell any asset to a person and if you purchase any asset from a person and lease back the asset to the same person, then here your actual cost will be your purchase price or lease price, whichever is less. Actual cost in case of a building. If there is a building which you were using for your personal purpose, now you are putting it to your business use. If there is any building which you were using for your personal purpose, now you are going to use that building for your business purpose. Lawmaker says then actual cost of that building for business purpose will be actual cost of that building, subtract depreciation as if it was used for business purpose. This subtraction which you do is also called as notional depreciation. You subtract the depreciation as if it was used for business purpose. Whatever amount you get now is the actual cost for business purpose. Now please note, this point which I just now gave you, this point which I just now told is applicable only for building. Sir, can you repeat? If I have any building which I was using for my personal purpose, now I am going to use it for my business purpose. Lawmaker says whatever cost is there, subtract depreciation for how many years you used it for personal purpose. Now whatever is left over will be actual cost for your business. This provision is applicable only for building and not other items. For example, if I have a car which I was using for my personal purpose, now if I am using it for my business purpose, will this concept of notional depreciation work? Answer is no. Sir, what will happen if I am using any asset partly for business purpose, partly for personal purpose? You can claim depreciation proportionately. You can claim depreciation what, sir? Proportionately. Okay, not okay. Next is our scientific research. Before this, I'll take a chota sa break. So section 35 talks about scientific research. What is scientific research? Or if you're doing any research for your business purpose, there are two categories over here. Either you do in-house research or you give donation to any person who is doing research. So if you are doing in-house research, beautiful. So assessee is doing research for his own business purpose. So in that case, lawmaker says scientific research is allowed at deduction under section 35. Now, expenditure is incurred after commencement of business, or is it incurred before commencement of business? Whenever there is a case of scientific research, you should see when the expenditure is incurred. Is it incurred after commencement of business? Yes, sir. Then whatever capital expenditure you have incurred will be allowed as deduction except on land. If you have started business, for example, I am what, sir? I am into making chips, or I'm into making namkeens, etc. Okay, now I have started my business. I have started selling the chips. I have made one chips, say one aloo bhujia, or one namkeen I have made, or one chips I have made. Now I have started selling those chips. Now lawmakers are telling, have you incurred the expenditure after starting your business? Yes, I have started the business. Now I am incurring expenditure. What type of expenditure are you incurring? Capital expenditure, sir. So 100% is allowed as deduction. Whatever expenditure you are incurring, 100% of that expenses will be allowed as deduction except on land. But if you are incurring any expenditure, and if that expenditure is a revenue expenditure, lawmaker says, I don't care what type of expenditure it is, 100% allowed as deduction. Sir, in-house scientific research person, whether he is incurring capital expenditure or revenue expenditure, if it is incurred after commencement of deduction business, then 100% will be allowed as deduction except on value of land. Except the value of land, anything else is there, it will be 100% allowed as deduction. Sir, what if I am incurring an expenditure before commencement of business? Lawmaker says, if you are incurring expenditure before commencement of business, you can go maximum how many years before? 3 years before commencement of business. And now your expenditure can be capital or revenue. So whatever expenditure you have incurred 3 years before the start of business, capital expenditure will be allowed as deduction except on the value of land. Sir, what if I incur an expenditure after commencement of business? Lawmaker says, if you are incurring any expenditure after commencement of business, then if it is for material and salary excluding perquisites, it will be allowed as deduction. But if it is for any other expenses, it is not allowed as deduction. Repeat. I have started business. Please see. So let us say this is the date when I started business. Any expenditure incurred after commencement of business, whether it is capital or revenue, 100% allowed deduction. Any expenditure incurred before commencement of business, I can go maximum how many years before? Only 3 years before I can go. If it is capital expenditure, 100% is allowed as deduction. If it is a revenue expenditure, for material and salary only it is allowed, raw material and salary. But any other type of revenue expenditure incurred by you before starting the business will not be allowed as deduction. Sir, can I claim, sir, you said that for capital expenditure also deduction will be allowed. Can I claim depreciation on this item, sir? No. Where any deduction is claimed under section 35 for any asset, then depreciation under section 32 will not be allowed for that asset. Now, sir, what if I am purchasing land and building both together only? I am purchasing land along with building. Then lawmaker says whatever is the market value of land, that on that value no deduction will be allowed. If any building is purchased along with the land, then the cost of such asset, such land and building shall be divided on the basis of fair market value of such land and building, and deduction shall be allowed only for building and not for land. So if you are having any building which you have purchased along with land, then for land deduction will not be allowed. For building anyways deduction will be allowed. You should divide the land value of land and building based on the market value of that land and building. Okay, sir. Unabsorbed depreciation. Next point is what, sir? Unabsorbed depreciation. Sir, what do you mean by unabsorbed depreciation? Unabsorbed depreciation is something which we just now saw. Exactly same as unabsorbed depreciation, you have unabsorbed capital expenditure. If your business income is not able to take care of the capital expenditure incurred by you, then that is called as unabsorbed capital expenditure. This unabsorbed capital expenditure can be carried forward for unlimited years, and it can be set off in future years, just like your unabsorbed depreciation. Now, sale of assets. Sir, I have taken deduction for an asset under section 35. I have taken a deduction for an asset under section 35. Now I have sold that asset, sir. I have sold that asset. What will happen, sir? Under section 35 you have claimed deduction? No. Yes. Then in case where you sell that asset for which you have claimed deduction under section 35, you will get a business income under section 41(3). What is the business income? Whatever deduction you got earlier or sale price whichever is less. Whatever deduction you have already claimed earlier or sale price whichever is less will be your business income. Sir, what if the sale value is more than the cost of asset? If the sale value is more than the cost of asset, then the business income will be taken. Sir, please note, please note. Whatever deduction you have got earlier, all the sale price of asset, whichever is less, will be your business income. If the asset is sold at a price more than the deduction given to you earlier or more than the cost of that asset, then lawmaker says, then up to cost, meaning whatever deduction you had claimed earlier, that will be business income. That will be business income, and amount more than cost, sale price minus cost of asset, will be taken as capital gain, just like your depreciation concept in case of which SLA method. Now we have what, sir? Donation to research organization or research associations. So if you are giving any donation, to whom, sir? Any approved research association, any approved institution, any approved college, or any approved university. If you are giving donation to them, you are giving money to them for scientific research, social research, statistical research, then 100% is allowed as deduction. Whatever amount you have paid to them, 100% of that will be allowed as deduction. If you are giving money to approved research association, approved institution, approved college, university for scientific research, social research, statistical research, then 100% will be allowed as deduction. If you are giving donation to an approved Indian company whose business is only doing research and expenditure, please note, if I give money to someone, can I say it is my expenditure? So lawmakers are telling, if you are giving money to someone and that someone is an approved research institution, college, university who is doing these types of research, 100% of money can be claimed as deduction. Meaning when you are creating your profit and loss account, you can claim that as deduction. Sir, if it is an approved Indian company which is engaged in the business of research and development, and doing scientific research, then also 100% deduction will be allowed. If you are a national laboratory or IIT or university who is doing approved scientific research, then also 100% deduction will be allowed. Please note, in simple words, if I pay money to these three people, and if they are either approved institutions or approved research they are doing, then whatever money is paid by me, 100% of that will be allowed as deduction. What is important? Note, if the assessee opts for 115 BAC, then only in-house scientific research will be allowed as deduction. No deduction will be allowed for donation paid by the assessee. So deduction under section 35. Now please note, I have paid the money and later their approval was taken over by government. Please note, the institution should be approved, the company should be approved. Now I gave the money to them. At the time when I gave the money, they had the approval, but later their approval was withdrawn. Deduction under section 35 shall not be denied if approval of the institution is withdrawn after donation is given. Now this section is no more applicable. This section which is there is no more applicable. Please watch a video I have uploaded on the YouTube. You just watch that video in our channel. You can watch it in our channel. I have uploaded a video wherein there are few exclusions from your syllabus. There are few topics which are no more there in your syllabus. You just watch that. One of the section is section 35AB. This is not applicable from May 25 examination. This section is not applicable for CA Inter students. Okay. Now, section 35 AD. Section 35 AD talks about what's a scientific research. There are totally 14 businesses: cold chain business, honey business, sugar business, cross country pipeline business, 2-star hotel, affordable housing, slum redevelopment, fertilizer, new infrastructure, hospital with 100 beds, semiconductor vapor, inland container depot, etc., or iron ore business. If you're starting any of these 14 businesses, then you will get a deduction under section 35 AD. How much deduction will I get, sir? Now, any type of assessee can claim benefit of section 35 AD. Any assessee who is engaged in specified business, who is incurring capital expenditure. If you are any type of assessee who is engaged in above businesses are called as specified businesses, and if you incur any capital expenditure for above businesses except on land, goodwill, and financial instrument. Please note, if you are incurring any capital expenditure except on land, goodwill, and financial instruments, then 100% of that will be allowed as deduction. 100% of that amount will be allowed as deduction. If you are any type of assessee engaged in specified business and incurring capital expenditure, then 100% of that amount incurred by you will be allowed as deduction, except on land, goodwill and financial instrument. Now, what is very important over here? Section 35AD is applicable only to 14 people, and for them also it is optional. It is not compulsory that those 14 people will have to follow 35AD. Now, the business which they are starting should be a new business, and the plant and machinery for which they are going to get deduction should not be a used plant and machinery, it should be a new plant and machinery. However, they say 20% of the total plant and machinery can be used. And they also say if you are importing any plant and machinery from outside India, though it is an used plant and machinery which you are importing from outside India, I will treat it as new. Sir, how much deduction will be allowed? Now, if you have incurred any expenditure before commencement of business, then you will get it the deduction in the year in which business is commenced. In the year when business is commenced, you will get the deduction. However, if you are incurring any expenditure after commencement of business, then deduction will be given to you as and when you are incurring. Please note, if you are incurring any expenditure, capital expenditure under section 35AD before start of your business, then the deduction will be given to you in the year when business is commenced. But if you incur any expenditure after commencement of business, whenever you are incurring that expenditure, whichever year you are incurring that expenditure, it will be allowed as deduction. Now, please note, no double deduction will be given. If you have claimed deduction under section 35AD, you cannot claim deduction under any other section of income tax law. Then similarly, if you have claimed deduction under section 35AD for any asset, you cannot claim depreciation for that asset under income tax law. Now, very important is that lock-in period. If there is any asset for which you have claimed a deduction under section 35AD, if there is any asset for which you have claimed a deduction under section 35AD, then that asset should not be transferred for a period of 8 years. You should not sell that asset for a period of 8 years. If it is transferred for a period of 8 years, then what are the consequences? The consequences are that if you transfer it within a period of 8 years, then the amount which is received by you on the transfer will be deemed as business income. Whatever money you are receiving will be deemed as business income. Now, please note, you should not sell it within a period of 8 years. Lock-in period is there. If you have claimed deduction under 35AD for any asset under 35AD, and if you sell it within a lock-in period of 8 years, whatever amount you have got is business income. Sir, what if I don't sell it but I use it for my other business? Meaning, I had taken the asset for my specified business. Now I am going to use it for my non-specified business. I am transferring that asset from specified business to non-specified business. I am not selling it to anyone. I have two business. I have hotel business and I have, say, a sari business. So from hotel, the asset which was there, I am transferring to sari business. So from specified business, I am transferring the asset to non-specified business. Lawmaker says, in this case, whatever deduction was given under section 35AD, less depreciation, less how much depreciation, the difference amount will be deemed as business income for the specified business. Hey, please note, hotel is transferring it to sari, no. Hotel business is transferring it to sari. For hotel business, there will be a deemed business income. How much will be deemed as business income, sir? Whatever deduction was given earlier minus the depreciation. And for sari business, the actual cost of this asset will be whatever deduction it got the previous the hotel business got earlier minus depreciation. The difference is your cost for the new company. Sir, what if the asset is transferred after 8 years? The value shall be taken as the actual cost for the new non-specified business will be taken as 0. Now, please note, set off of losses of specified business. Specified business loss can be set off only against specified business profit. Specified business loss can be set off only with specified business profit, and this loss can be carried forward for an indefinite period. There is no limit. See, normally business loss can be carried forward for 8 years. But if it is specified business loss, it can be carried forward for indefinite period. Okay. Now, see this question. If you see this question, Mr. A commenced the operation of business of setting up of warehouse for food grains, sugar and edible oil. Food grains are agriculture produce. Sugar is sugar covered under 14 businesses. Edible oil is not covered under 14 businesses. So there are two specified business. This is non-specified business. He started the business on 1st April 24. He incurred a capital expenditure of 80 lakh rupees, 60 lakh rupees and 50 lakh rupees on purchase of land and building. Oh, land, LG freeze, land, goodwill and financial instrument, you cannot claim deduction. So though he has incurred expenditure for land and building, I will claim deduction only for building and not for land. When did he incur, sir? Before start of business, which is from January 24 to March 24, exclusively for above business. Please note, he started the business on 1st of April 2024. He incurred expenditure before start of business. If you are incurring any expenditure before start of business, that can be allowed as deduction if you capitalize them in your books of accounts. What is he telling? This expenditure is incurred during the period January 24 to March 24, and the same was capitalized in the books of accounts on 1st of April 2024. The cost of land is 50 lakhs, 40 lakhs and 30 lakhs. During the previous year 24-25, he incurred a capital expenditure of 20 lakhs, 15 lakhs and 10 lakh respectively for extension of building. So during the current year, after starting the business also, he incurred some expenditure for that building purpose. Will it be allowed as deduction? Yes. Compute the profits and gains, profit and gains of business and profession for the assessment year 25-26. If he is opting, he is shifting out of default tax regime, meaning he is not following default tax regime. They have given us the profit of these businesses, food grain business, sugar business and edible oil business, before claiming deduction under section 35 AD and before claiming depreciation is 16 lakhs, 14 lakhs and 31 lakhs. How will you compute the income? First, see Mr. A, previous year, assessment year, rupees in lakhs I have written. Particulars, food grain business is a 35 AD business, sugar business 35 AD business and oil business is not a 35 AD business. So because it is not a 35 AD business, for capital expenditure, I can claim depreciation, but no 35 AD section will be applicable. You cannot claim deduction, correct? Now profit before depreciation and 35 AD deduction 16 lakhs, 14 lakhs and 31 lakhs. Deduction under section 35 AD, who will get? Only these two people will get. So expenses incurred before commencement of business for food grain business 80 lakhs minus 50 lakhs. Why, sir? 8 lakhs is total expenditure, 50 lakhs is for land. Only 30 lakhs will be allowed. Sugar, it is 60 minus 40. 60 is total expenditure, 40 is for land. Only 20 will be allowed. Expenses after commencement of business, whatever expenditure they have incurred will be allowed as deduction. So what is their profit before depreciation, sir? It is negative for first two 35 AD business and positive for the edible oil business. Now for edible oil business alone, you will get depreciation. Depreciation will be given on building, land, no depreciation is allowed. So 50 lakhs minus 30 lakhs, that is the value of building, plus 10 lakhs extra building, which you have got 10%, you will get depreciation. So income after giving all the deductions and depreciation is negative 34 and 21 lakhs for 35 AD business and 28 lakhs for non-specified business. So there are 2-3 questions in our institute material. I have covered all the questions. Next is 35D. 35D is what, sir? Preliminary expenditure. Preliminary expenditure. Preliminary means what, sir? Expenditure incurred before commencement of business. Lawmaker says if you are a resident assessee, whatever expenditure you have incurred before commencement of business, resident assessee means what, sir? Either you are an Indian company or you are a resident assessee, individual HUF, OPBI, etc. Then whatever expenditure you have incurred before start of business or for starting a new business will be allowed as deduction in 5 equal installments from the year in which the business is started. So expenses incurred before commencement of new business or after commencement of business for setting up a new unit or for extension of existing undertaking is allowed as deduction in 5 equal installment. From which year, sir? From the year when business has been commenced. Deduction if you are an Indian company, actual expenses incurred by you or 5% of capital employed or 5% of cost of project, whichever is higher, should be compared with your actual expenditure. Take whichever is less, that will be the deduction which will be allowed to you. If you are other resident assessee, then whatever actual expenditure is there or 5% of cost of project, whichever is less, will be allowed as deduction to you. Now, sir, capital employed is what, sir? Share capital, debentures and long-term borrowings. Cost of project means what, sir? Amount invested in the fixed assets of that business. Now, preliminary expenses, when I say preliminary expenses will cover only these 6 items. Which 6 items? Preparation of feasibility study report, preparation of MOAO, legal expenses, engineering expenses, marketing expenses, expenses for public issue. Okay, only these items will be covered. Hey, please note, whatever expenses you are getting, no, that will be allowed as deduction in 5 equal installment. 35 DDA, VRS, voluntary retirement compensation. If the company is paying any VRS to any employee, then that expenditure can be claimed as deduction in 5 equal installment. Applicable to all the assessees. Expenditure incurred in connection with voluntary retirement of employees. Expenditure is allowed in 5 equal installment from the year in which business is commenced. Next is what, sir? Your Section 35. Section 35 talks about expenses which are specifically allowed as deduction. These expenses are admissible expenses. Which expenses can I claim as deduction, sir? You can claim as deduction for insurance paid on stocks in stores. You can claim, meaning if you have any stocks, Priya Sarees has sarees, I am taking insurance for stocks. Lawmaker says you can claim deduction. You can also claim deduction on insurance. Please note, when you are preparing your profit and loss account, you will have taken insurance on stocks, sarees, bonus given to employees, bad debts expense, etc. All these expenses, is it allowed as deduction? Section 36(1) is giving list of those expenses which is specifically allowed as deduction. You can always claim this deduction. You can claim deduction of health insurance of employee. If you are taking insurance on health of employees, then that is allowed as deduction, provided the health insurance premium you should not pay in cash. What is the condition? Health insurance premium should not be paid in cash. Allowed if it is not paid in cash. What should not be paid in cash, sir? That health insurance premium should not be paid in cash. Insurance premium paid on stock and stores health of employees is allowed as deduction. Health insurance should be not be paid in cash. Sir, what if I am paying bonus or commission to my employees? Whatever bonus or commission which is paid, only which is paid to the employees is allowed as deduction. Subject to 43B. What is 43B telling? A 43B is a section which says there are few expenses which will be allowed as deduction only if you pay it within the due date of filing income tax return. There is something called as 43B. Please note, for all these points, no, you can take a reference in the next page, meaning in the future pages, I have given explanation to that. You can always see that explanation. See, bonus and commission is allowed as deduction if it is subject to 43B, meaning what, sir? If it is paid within the due date of filing income tax return. So there is a section called as 43B which will give you the list of all the expenses which is allowed as deduction only if it is paid within the due date specified under section 139(1). 139(1) is that is giving you the due date for filing income tax return. See, normally the due date of filing income tax return is 31st July of assessment year, but in case of company and in case of audit, if your books of accounts are subject to audit, then you will have to file your income tax return by 31st of October. Now what lawmaker says, whatever bonus is there, I will be allowing it as deduction if you are paying that bonus within this date. Within which date? Within the due date of filing income tax return. So in the question, if they have given bonus payable, don't take that bonus. You cannot claim it as deduction while preparing your profit and loss account. If they gave bonus paid, then you check whether it is paid before this date. If yes, then claim it as deduction. For example, the question says that the bonus, total bonus by the company is 10 lakh rupees. Now this bonus, in normal cases, it should be paid before 31st of July. Now how much is paid till 31st of July? 5, 2 plus 1, which is 8 lakhs. Therefore, this is allowed as deduction. What is paid till 31st October is allowed as deduction for audit cases. Anything paid after these dates will not be allowed as deduction while computing your business income. Please note, though you have paid a bonus, though your bonus expenses on accrual basis, you told that employees, I'll pay 10 lakh rupees bonus to you. How much have you paid? 8 lakhs. Only 8 lakhs will be allowed as deduction. Okay. Similarly, interest on loan. If you have taken any loan for your business or profession purpose, if you have taken any type of loan for what purpose? For your business purpose or for your profession purpose, then that loan which you have taken will be allowed as deduction. Now the point is, from whom have you taken the loan? If you have taken loan from banks such as Scheduled Bank, Cooperative Bank, Public Financial Corporation, State Financial Corporation, Industrial Investment Corporation or NBFC, it will be allowed as deduction subject to 43B, meaning provided you pay the interest within the due date of filing income tax return. But if you have taken loan from any person other than banks, then that will be allowed as deduction whether you have paid or not. Please note, for loan, what will be allowed as deduction? Interest on loan will be allowed as deduction. If for loan, what will be allowed as deduction, sir? Interest on loan will be allowed as deduction. So whatever loan, whatever interest you are paying to bank, cooperative society, they will be allowed as deduction if it is paid within the due date of filing income tax return. If it is paid to any other person, it does not matter whether it is paid or not, it will be allowed as deduction. Only if you are paying interest to scheduled bank, cooperative society, public financial institution or state finance corporation, state industrial investment corporation and NBFC, it will be allowed as deduction only if the interest has been paid within the due date of filing income tax return. Then amortization of discount on zero coupon bonds. Now, whatever discount is there on zero coupon bonds, that is allowed as deduction only if you amortize it on pro rata basis. Employer's contribution to employee welfare fund. So if employer is contributing to the welfare fund of employees, if it is recognized fund, if it is paid within the due date of filing income tax return, that deduction can be taken. If it is a recognized fund, deduction can be taken. What if the fund is not recognized? What if it is not approved? Then no deduction will be allowed while computing your business income. Sir, what about bad debts, sir? If I am doing business and if I have a bad debts, if it is your business related bad debts, always allowed as deduction. If you're doing business, some people may not pay you, so you can claim deduction of that, yes. But if you have given money to someone and because of that reason that person has not paid you money, now that bad debts, is it allowed as deduction? Lawmaker says illa. Only business related bad debts will be allowed as deduction. Okay. Now conditions are there. What are the conditions? That debt which you are treating it as bad today, that should be treated as your income in any of the previous year, and that debt should be written off in your books of accounts. A provision for bad debts is not allowed as deduction. Please note, any provision for bad debts, is it allowed as deduction? Lawmaker says no. Sir, what will happen if I am recovering the bad debts? It is taxable. Recovery of bad debts is taxable. Section 41(4) is telling recovery of bad debts is taxable in the year when it is recovered. Then you are incurring any family planning expenditure. If it is only for companies, this point is applicable, which you are seeing. If you are incurring any family planning expenditure, if you have revenue expenditure, allowed as deduction. If you are incurring any capital expenditure for family planning, then 1/5 is allowed as deduction. It is allowed in 5 equal installment basically. So in case of animals which is dead or permanently becomes useless, whatever cost you incurred for that animal, purchase of that animal, minus the scrap value will be allowed as deduction. Then security transaction tax allowed if you are in trading business. Now please note, employer's contribution to welfare fund is allowed as deduction only if it is paid within the due date of filing income tax return. But however, employee's contribution to welfare fund is allowed as deduction only if it is paid within the due date of that respective act. Which act, sir? That respective act, whichever fund it is. Say if it is a PF, then within the due date of PF act. If it is superannuation, within due date of superannuation, etc. Now please note, one amendment is there over here. If employer is making contribution to 80CCD pension fund, employer contribution to 80CCD pension fund, it is allowed as deduction. Now what is the change, sir? The rate has been changed from 10% to 14%. Now how much deduction is allowed? Actual contribution which you are making, or 14% of salary. 14% of salary. Salary means basic plus DA in terms. Explanation is given in next page. You can take reference to this. Now comes the last section for deduction, meaning what are the different expenses. Last is your section 37, which talks about general deduction. What is 37 telling? Any type of business expenses which is not covered under 30 to 36. If there is any expenses which you are incurring for business purpose and which is not covered under section 30 to 36, and which is wholly and exclusively incurred by you for your business purpose. If there is any expenses which is not covered under section 30 to 36 and which is wholly and exclusively incurred for your business expenses, for your business purpose, which is not personal in nature, not capital nature, and it is not an offense prohibited by law, then you can claim that expense as deduction under section 37. Basically 37 talks about all the expenses related to your business. If you are incurring any expenses for your business purpose, and if it is not covered above, then you can claim it as deduction, provided it should not be capital expenditure and it should not be personal expenditure and it should not be an offense prohibited by law. Okay, so if it is a breach of law, you cannot claim as deduction, but if it is a breach of contract, yes. Now, salary can you claim as deduction? Yes. Partner salary also you can claim only when it is a working partner. Sleeping partner salary you cannot claim it as deduction. Director salary allowed as deduction. Leave salary is also allowed as deduction. Insurance premium. Life insurance premium is not allowed as deduction. Life insurance, anything with respect to life insurance is not allowed as deduction. If it is a key man insurance policy, health insurance policy, asset or stock insurance you are taking, always allowed as deduction. Advertisement I am doing, can I take it as deduction? Yes. But if you are doing advertisement in a newspaper, pamphlet of political party, not allowed as deduction. If you are incurring any spend for corporate social responsibility, CSR spend you are incurring, you cannot claim that as deduction. You are paying any type of taxes. If it is direct taxes, whether you are paying tax, interest, penalty under direct tax law, it is never allowed as deduction. While computing income under income tax law, you cannot take any kind of expenses related to your income tax. Meaning what, sir? You cannot take deduction of your taxes paid by you, interest paid by you, penalty paid by you. If it is an indirect tax, then whatever indirect taxes you are paying, GST you are paying or interest because you have filed the return late, that will be allowed as deduction provided you pay that money, and any other type of penalty is there, not allowed. All other expenses apart from whatever we have not seen over here is always allowed as deduction under section 37. So whatever expenses are related to your business, where will they go? 37 it will go. If it is not covered above 37 it will go. 43B. 43B talks about what, sir? 43B talks about expenses allowed on payment basis. Flirt bonus are the expenses which are allowed on payment basis. Now, following expenses are allowed as deduction only if you pay within the due date of filing income tax return as per section 139(1). Expenses allowed as deduction on payment basis. Any tax, duties, cess, fees under any law for the time in force. So what are the different expenses covered? Flirt bonus. F for what, sir? If you are paying, if your employer is contributing any money to statutory provident fund, recognized provident fund. So whatever contribution is made to fund, it will be allowed as deduction only if the employer contributes it within the due date of filing income tax return. Then IL for what, sir? Leave salary or leave credit encashment, allowed as deduction only when it is paid. Then I for interest on loan taken from scheduled bank, public financial institution, etc., allowed as deduction only if it is paid. Then R for any money which is payable to Indian Railway, allowed as deduction only when it is paid. T for any tax, duties, cess, fees is allowed as deduction at the time only when you paid within the due date of filing income tax return. Any bonus and commission paid to employees is allowed as deduction only when it is paid. Now, if the above payment is made after due date of filing return, sir. Sir, you said this will be allowed as deduction only if it is paid within the due date of filing income tax return. Sir, what if I pay after due date of filing income tax return? Possible, not possible? Yes, sir, possible. Sir, what if I am paying for these expenses after my income tax return is filed? Lawmaker says if these expenses are paid off after due date of filing income tax return, then it will be allowed in the year when payment is made. Now, please note, in case of loan, interest on loan, whatever interest amount is there will be allowed as deduction only when you pay. Some people, what they do is they will convert the interest also into loan. Now, lawmaker says whenever you pay this loan, that interest will be allowed as deduction. Now, very important, there is an amendment, a newly point added. What is this point telling, sir? If you are purchasing from MSME, if you are incurring any expenses, if you are taking any services from an MSME, or if you are purchasing any goods from an MSME, then you should make the payment to them within a specified time. What is that specified time? The number of days you agree with them, meaning I enter into an agreement with MSME that I want to purchase some goods from you, and now I should also enter into an agreement within how many days I will make the payment. Whatever agreed is there, that days should not exceed 45 days. If there is no agreement between us, I should pay them within 15 days. If both is not happening, then what will happen, sir? Then 43B will come into picture. As per section 43B, if amount payable for an expenses to micro small enterprises, any amount which is payable to micro small enterprises should be paid within the number of days which is agreed, or 15 days in case where there is no agreement. If the payment is not made within the above period, then that expenses will be allowed as deduction in the year when it is paid. Okay, for example, Micro and small. Micro means a company whose investment is less than 1 crores and turnover is less than 5 crores. Small means a company whose turnover is less than 10 crores and a company whose investment is less than 10 crores, turnover is less than 50 crores. So Priya Sarees purchased sarees worth rupees 1 lakh from Karina Sarees, who is an MSME. The date of purchase is 10th of March. They agreed to make the payment on 15th of April. Is it within 45 days, sir? Yeah. Is it within 45 days? Yes, it is within 45 days. Now, Priya Sarees paid on 1 lakh rupees on 10th of April. Will it be allowed as deduction? Yes. In which year? In the year when that expenditure is incurred. If I have paid after that due date, whatever agreed period is there, then it will be allowed in next year, whichever year I am paying that. Next, expenses which are specifically expenditure which are specifically allowed. Disallowed, sorry, expenditure which are specifically disallowed. Lawmaker says, I will give you a list of some expenses on which you can never claim deduction. I'll give you a list of some expenses for which you can never claim deduction. Which are those expenses? They are covered under section 40. Section 40A1 says, if you are paying any interest, fee for technical services or royalty outside India, or you are paying interest, fee for technical services or royalty to a non-resident or a foreign company in India, where TDS is not deducted by you in the previous year, or after deducting the TDS in the previous year, you have not paid that money to the government within the due date of filing income tax return. Please note. If you are paying any interest, I'll take one example. If you are paying any interest outside India, or if you are paying any interest to a foreign company or a non-resident person in India, for loan, you would have taken loan from them. Therefore, you are paying interest to them. So lawmakers are telling, if you have paid interest to them without deducting TDS, or you have deducted the TDS but not paid the TDS to the government within due date of filing income tax return, then whatever amount of expenses is there, 100% of that will be disallowed. How much, sir? 100% of that expenses will be disallowed. Similarly, if the same thing is happening with a resident, meaning what, sir? If there is any sum which is payable to a resident in India and which you have paid to that resident without deducting TDS, or you have deducted the TDS but not paid the TDS to the government within the due date of filing income tax return, then 30% of that expenditure will be disallowed. So if you are paying to a non-resident, 100% expenses is disallowed. However, that expenses will be allowed in the future whenever you are paying them. Next year, if you are paying, it will be allowed in next year. If you have not deducted the TDS in previous year, or if you have deducted the TDS in the previous year but not paid within the due date of filing income tax return, then it will be allowed in that year whenever it is paid. Okay, not okay. For resident people, it is only 30%. Please note. It will be allowed subsequently in the next year when the TDS is deducted. When the TDS is deducted, or it is deducted in the previous and paid in the next year. So it will be allowed in that year whenever that payment is made. Now, sometimes it may happen that I have not deducted the TDS, but the opposite person, he has filed his income tax return and he has considered this income and paid the taxes on that. So should I deduct TDS again? Lawmaker says no. You take a certificate from that person telling he has already paid the taxes on this income. You will not have to pay taxes again. 40A2, if you are paying any income tax surcharge cess under income tax law, it is not allowed as deduction. Wealth tax is not allowed as deduction. Any royalty fee, this is removed now. This point is now removed. This point is now removed. As I told you, exclusion, I have made a separate video. This point is now removed. Then any salary payable outside India or to a non-resident where TDS is not deducted and deposited within the due date of filing TDS return, within which due dates are within the due date of making the payment of taxes of TDS, 100% of that will be allowed as deduction. So if you are paying salary to any person outside India or to a non-resident, and if you have not deducted TDS on that, and even after deducting, if you have not paid to the government within TDS due date, 100% of expenditure will be disallowed. Now, any contribution to welfare fund of employees, if TDS arrangements are not made, then that will be disallowed. Then 40A5, any tax on non-monetary perquisites which is required to be paid by employees, paid by employer, that also deduction cannot be allowed. Okay. Then we have 40A2 and 40A3. 40A2 talks about unreasonable payment. I'll go over here. Please note, explanation for all the points is given in next page. 40A2 talks about what's an unreasonable payment. If you are making any excess or unreasonable payment to your related person, then that excess amount will be disallowed. Only such excess amount will be disallowed. Who is a relative? For individual, spouse, mother, father, brother, sister, linear resident is relative. For HUF, members are relatives. For LLP, partners are relative. Partnership firm, partners are relative. Company directors are relative. Holding company, subsidiary company is relative. And any person who has substantial interest in the company will be treated as relative. 40A3 talks about cash payment. If you are making any payment for a single expenditure to a single person in a single day in excess of rupees 10,000 rupees, in excess of how much, sir? 10,000 rupees, by any mode other than cash, it will be allowed as, it will be disallowed. It will be disallowed. If you are paying it by any mode, if you are paying it in cash, if you are paying it by any mode other than account pay check, account pay demand draft, or any electronic clearing system, it will be disallowed. Sir, repeat. A. If any assessee makes payment for a single expenditure to a single person in a single day in excess of rupees 10,000 by any mode other than account pay check, by any mode other than account pay demand draft, by any mode other than electronic clearing system, then such expenditure will be fully disallowed. Please note, if you are paying through cash, bearer check, cross check, then it is disallowed. If you are paying only to these three modes, it is allowed as reduction. The limit is 35,000 in case of a transporter. When you are making the payment to a transporter, the limit will be how much? 35,000. Now, second point where amendment is there in this chapter, PGP chapter. What is the second point, sir? 40B. Remuneration and interest paid to partners by a partnership firm. So if there is a partnership firm, and if that partnership firm is paying what, sir? Remuneration and interest. If there is a partnership firm, and if that partnership firm is paying remuneration and interest to the partners, is it allowed as reduction? What do you mean by remuneration? Remuneration means salary, bonus, commission, any other amount which is paid by the company, partnership firm to the partners. Partnership firm, whenever I say, LLP is also included. And interest means interest on loan or interest on capital. Now, what is the lottery? First point. Remuneration and interest will be allowed as deduction only if it is authorized by partnership deed. Meaning, you should have a partnership deed, and that partnership deed should talk about remuneration and interest. Only if you have a partnership deed, and if that partnership deed is talking about remuneration and interest, you can claim it as deduction. Sir, what if I don't have a partnership deed? You cannot give remuneration and interest to partners. What if I have a partnership deed but nothing is mentioned with respect to remuneration and interest? Then also you cannot give remuneration and interest. Now please note, remuneration and interest will be allowed prospectively and not retrospectively. Say for example, I had partnership deed, I did not mention anything about remuneration and interest. Now I came to know I am telling yes, I will be allowed remuneration and interest. So if you add that point today, you should give remuneration and interest from today only. Remuneration and interest. Now please note, remuneration and interest can be paid either to sleeping partner or working partner. Lawmaker says remuneration, which is nothing but salary basically, is allowed only for sleeping partner and not allowed only for working partner and not allowed for sleeping partner. Interest will be allowed for both sleeping and working partner because interest is on the money which they have contributed in the business. Now interest, how much is allowed, sir? As per section 40B, maximum 12% interest you can give. On what, sir? Interest on loan, on interest on capital. How much you can give? Maximum 12% per annum you can give to each partner. So if the deed does not mention anything about interest, can I give interest? No. If it mentions 15%, how much can you give? 12%. If it is mentioned 12%, 12%. If it is mentioning only 8%, I will give only 8%. So what maximum, how much interest can you give? 12%. If the deed is mentioning less amount, then I will give less amount. Now here comes the amendment point. Now the limit for interest under section 40B has been changed. Before it was up to 3 lakhs of book profit. It was 90% or 1.5 lakhs, whichever is higher. Now it is changed. Please note, very important. So remuneration allowed as per section 40B. How much is remuneration allowed? If your remuneration is based on your book profit, so up to 6 lakh rupees of your book profit, 90% of the book profit or rupees 3 lakhs, whichever is higher, is allowed as deduction. For any amount in excess of 6 lakh rupees in your book profit, then balance book profit which is there, meaning for 6 lakhs I have taken over here, whatever is left over, 60% of book profit will be allowed. So the total remuneration allowed is A plus B is the total remuneration which is allowed. Sir, I didn't understand this. For example, Let us say my book profit is 9 lakh rupees. So 9 lakh, I will divide into two categories, 6 lakhs and 3 lakhs. For 6 lakhs, 90% of 6 lakhs or 3 lakh rupees, whichever is higher. So 90% of 6 lakhs is 5 lakh 40,000 or 3 lakh rupees, whichever is higher is allowed as reduction. And for the balance amount, it is 3 lakhs into 60%, 1 lakh 80,000 is allowed as reduction. Similarly, book profit up is 5 lakh rupees. 5 lakh rupees can I divide? Not required to divide, because up to 6 lakh rupees, it is how much? Up to 6 lakh rupees, it is 90% of book profit. So can I say 5 lakh is within the limit of 6 lakhs? 5 lakhs into 90% or 3 lakh rupees, whichever is higher is allowed as deduction. Sir, what if I am making a loss? Then also you can claim a deduction, or you can give remuneration to the partners of 3 lakh rupees. Because book loss into 90% will be 0 and 3 lakh rupees, whichever is higher. Hey, how do I calculate book profit, sir? You take net profit of the business as per PGBP. As per PGBP, subtract interest as per 40B, then you will get your book profit. Now for computation of business income, you have two methods, direct method and indirect method. Mostly the questions will be on indirect method. What do we do under indirect method, sir? You take net profit which is given in the question. Okay, then subtract all those items which are not required to be included in the computing business, but they have included while computing that net profit. Add all those items which are not required, which are not added but are required to be added. For example, you take the net profit. If there is any income taxable under other head, but they have included in your profit and loss account, you subtract that income because your profit is more by that amount. If they have not subtracted any expenses but which is supposed to be subtracted, you subtract it now. Similarly, add the expenses which is debited to profit and loss account but it is disallowed. Add the losses which is debited to profit and loss account but are taxable under other heads. Add the business income which is not taken into profit and loss account. You will get your business income. Yeah, one last point with respect to this chapter, and this chapter will get over. Presumptive taxation, section 44 AD, 44 ADA and 44 AE. Important is 44 AD and 44 AE. Very important is 44 AE. 44 AD talks about what, sir? If you are a person who is in any business or if you are a non-specified profession, then this section 44 AD is applicable to you. What is 44 AD telling? If you are a resident individual HUF firm, if you are a resident individual or a resident HUF or a resident partnership firm excluding LLP, and if you are doing any business or profession except agency business, except commission business, except 44 AD or 44 AE business, then for you this section is applicable. Which section? 44 AD is applicable. What is 44 AD telling? If your total turnover, if you are a resident individual and doing any business and profession, and if your total turnover is up to 2 crore rupees, then 8% of all your total turnover will be treated as your business income, or 6% of your total turnover will be treated as business income. Please note, 8% of your turnover will be treated as business income, or 6% of your turnover will be treated as business income. Sir, when will I take 8%? When will I take 6%? Sir, when will I take 8%? When will I take 8%? When will I take 6%, sir? 8% you should take normally. 6% you should take if you have received the sale proceeds during of whatever sales you have made during the previous year. You have received the money of that through account pay check, account pay demand draft, or any other electronic clearing system, and it is received within the due date of filing income tax return under section 139(1). For example, 18 crores, 18 lakh, 1.8 crores is the sales which I have made. Now I have received in cash. I'll take what, sir? 8%. I have received through electronic clearing system, 6%. Account pay demand draft, 6%. NEFT, 6%. Now, for me, the due date of filing income tax return is 31st of July. Anything I receive after 31st of July, I should always take 8%. Sir, what if I have not received anything? 8%. You'll get your business income. Now, please note. No deduction under section 30 to 37. Meaning, this amount which you get over here, this amount is your business income directly. You cannot claim any extra expenses deduction from 30 to 37. Can I show higher income, sir? Yes, of course, you can always show higher income. You can show income more than 8%. If you want to show 10%, 12%, 18%, you can show that. Sir, what if I want to show lower income? That you cannot do. If you want to show less than 8% or less than 6%, then you will have to get your you will have to maintain the books of accounts and get it audited by a chartered accountant. Okay. Then can I claim deduction under this income, sir? Yes. Chapter 6A deductions. Can I claim Chapter 6A deduction? Not the deduction under PGP topic. No. Chapter 6A deduction, can I claim against this income? Answer is yes. Sir, can I set off my losses against this income? Answer is yes. Sir, is there any lock-in period? Yes. Once you follow this option, for the next 5 years, you should follow the same option. If you don't follow, say for example, year 1, I followed 44 AD. For the next 5 years till year 6, I should follow 44 AD. But if in any year I come out of 44 AD, for the next 5 years, I cannot follow 44 AD. For example, year number 3, I opted out of 44 AD. For the next 5 years now, even if I want to follow 44 AD, I will not be able to follow. 44 ADA is presumptive taxation for whom, sir? For specified profession. Who are specified profession? I lift come. I lift come means what, sir? Chartered accountant, cost accountant, or you are an advocate, or you are an architect, or you are what, sir? Interior designer, legal professions. I for IT professions. F for what, sir? Film artist. T for technical profession. CO for company secretary, medical profession, or engineering. So if you are professional, by the way, then and you should be a resident individual, or you should be a resident partnership firm excluding LLP. And if you are doing any of this specified profession, and if your gross receipts is up to rupees 50 lakhs, then gross receipts into 50% will be your business income. Your gross receipts into 50% will be your business income. Please note, gross receipts into 50% will be your business income. You will not get any deduction. You will not get any deduction from 30 to 37. Can you claim higher income? Yes. If you want to declare a lower income, can you do so? Can you do that? Answer is yes, but you will have to get your books of accounts audited. Deductions under Chapter 6A and brought forward business loss can also be adjusted with this income. Please note, this limit is how much? 50 lakhs, but this limit will be 75 lakhs if your total receipts and total payments are 95% in online modes. If your total receipts and total payments are 95% in what modes, sir? Online modes. Similarly, here normally the limit is how much, sir? 2 crores, but this limit will be 3 crores if the total receipts and the total payments you are receiving is in online modes through account pay check, account pay debit draft, or electronic clearing system. Meaning not even one, total receipts ka 5% can be in cash, total payments ka 5% can be in cash. If everything else is in what, sir? Online modes. If you are receiving it directly in bank account, then 75 lakhs will be the limit over here. 3 crores in case of business. Most important is 44 AE. 44 AE, presumptive taxation for goods carriage business or a transport. If you are a transporter, then this section is applicable to you. All the assessees to whom is this section applicable? All type of assessees who are in the business of paying, hiring, leasing, renting of goods carriage, up to 10 goods carriage at any time during the previous year. Up to how much, sir? 10 goods carriage at any time during the previous year. So if it is a heavy goods vehicle, then how much will be? Please note, they are directly talking about the business income over here. You don't have to do any percentage, etc. Now, if you have up to 10 goods carriage, if you are in the business, if you are a transporter, and if you have only up to 10 trucks, not more than 10 trucks at any time during the previous year, and I'll check whether it is heavy goods vehicle or other vehicles, normal goods vehicle. If it is heavy goods vehicle, then heavy goods means what, sir? Those vehicles who can carry, whose gross vehicle weight is more than 12,000 kgs or more than 12 tons. Then for them, rupees 1,000 per ton will be the value. It will be the income. How much will be income? Rupees 1,000 per ton per month or part thereof. Even if it is a part of month, I am going to treat it as full month. Similarly, if it is other vehicles, if it is a chota vehicle, less than 12,000 kgs vehicle, then for them 7,500 rupees is directly business income per month or part thereof. Now please note, month when I am taking, it should be considered from the date when the asset is purchased. I have given one example over here. Dilip is a goods carriage, is in the goods carriage business. He has two heavy goods vehicle of 15 tons each and 4 other vehicles. 4 other vehicles I have. Now compute his business income. This 2 heavy goods vehicle were purchased by me on 20th April and other vehicles were purchased by me on 28th July. For heavy goods vehicle, So there are two heavy goods vehicle, which one I purchased in 20th July, another one I purchased in 20th April, one I purchased, and 28th July I purchased second one. So the one which I purchased in 28th July for entire 12 months, I'm going to show the income. For 28th July, I'll calculate from July month. So heavy goods vehicle 1, 1000 rupees per vehicle, 15 tons, 15 because 15 tons into 12 months is this amount. Heavy goods vehicle number 2, 1000 into 15 into 9 months is for 2. Other vehicles 7500, 4 months into 11 months is 3,30,000. So total amount of income is how much, sir, under 44A? 6,45,000 rupees. So there is one more question. Mostly asked question in the examination is this question. Okay. So this is all about your which chapter, sir? This is all about your business income chapter. Okay. I'll take a break and we will discuss the remaining topics in our next after break video. Let me meet you in my next, of course, in this video only. Let me meet you after 1-2 seconds break. Till then, tada, bye bye, take care, enjoy. Welcome back, students. Let us continue our discussion. And we are in the last part of our discussion wherein we'll be discussing all the other topics of your income tax law. So we'll be starting with what, sir? What is left over now? Clubbing, that is income of other person included in assessee's total income, then set off and carry forward deductions. Then we have total income topic and TDS, TCS, advance tax and return of income. So these are the topics which are left over now. These topics we'll discuss in the remaining part of this video. Now, clubbing of income. Clubbing of income, directly I'm in this summary material you can see over here. You will study it from here only. Now please note, so here we have this material. Explanation if you need, that is there in the next page. Okay, so these points we'll be studying in this manner. Now, section 60 says if you're transferring income without transfer of an asset. If you're just transferring income, I have an FD of 10 lakh rupees. I'm not giving the FD to anyone, but the interest which I'm earning from this FD, I'm transferring it to, say, my brother's son. Lawmaker says, though he is the person who is going to receive this, it will be taxable in my hands. Okay, transfer of income without transfer of asset. If an individual is transferring the right to receive income from an asset without transferring the ownership of such asset. So without transferring the ownership of an asset, if I'm transferring that asset itself, if I'm transferring what, sir? If I'm transferring the asset without transferring the ownership, then lawmaker says the income which is there, I will be taxable in my hands. So if you are transferring any income without transferring the asset, then such income shall be clubbed in the hands of the transferor. Now, what are the conditions? The owner should be with the transferor only the income should be transferred, and this point is not applicable if both income and ownership is transferred. Now, then we have something called as revocable transfer. Revocable transfer means what? It is a type of transfer wherein I am transferring something to someone, and when I am transferring something, okay, I am transferring an asset to someone, and upon transfer of that asset, I am putting a condition that in future, if I want to take back this asset from you, I will take it back. So revocable transfer means what, sir? If an assessee transfers an asset with a power to revoke or cancel the transfer, then the income of such asset shall be taxable in the hands of transfer only. So I gave you a house property with a condition telling that I will take back this house from you in a future date if I want to take it back. So this is called as revocable transfer. So what are the conditions? The transfer should be revocable and the power to reclaim the asset should be there. Now, when will this point not be applicable? If it is a irrevocable transfer. If the transfer is what, sir? Irrevocable, or if the transfer becomes revocable upon death of the transferee, or it becomes revocable upon death of the transferee. So whomever I have transferred, I tell him that, see, sir, this asset, I will not take it back. Or I transfer it to someone telling that, see, I will not take it back unless until you are alive. If once you die, I will take it back from you. Okay. So this is irrevocable transfer, and the transfer becoming revocable upon death of the transferee. Then irrevocable transfer, it is section 62 talks about irrevocable transfer. It is an exception to section 61. So transfer, if the transfer is revocable, then the during the lifetime of the transferee, then clubbing provision shall not apply. If the transfer is irrevocable during the lifetime of the transferee, it is not, the clubbing provision shall not apply. Then clubbing of spousal salary. Spousal salary means what, sir? Whatever salary, my say in my case it will be my wife is receiving from where, from a concern where I have substantial interest. So there is a company where I have substantial interest in this company. Now this company is paying money to my wife. Okay, this company is paying money to my wife, and my wife does not have any professional or technical qualification to receive that money. Lawmaker says, I'm going to club this money which is received by your wife in your hands, Mr. Dilip. So if an individual has a substantial interest, that is 20% or more voting rights or profit sharing ratio, and the spouse of such individual receives any salary, commission, remuneration. So if an individual is having substantial interest and the spouse of that individual is receiving any salary, commission, remuneration, then such income shall be clubbed in the hands of individual. Whatever income is received by whom, sir? The spouse will be clubbed in the hands of individual. Transfer of asset to spouse. So if I am transferring any asset to spouse, if an individual is transferring any asset to his or her spouse without adequate consideration, without what, sir? Without adequate consideration, then whatever income is received by the spouse on that asset will be taxable in the hands of the individual who is transferring that. So transfer must be without consideration, and the spouse must not be living apart, meaning there should be no divorce case, and they should also not live separately. So if the transfer is due to divorce, then no clubbing will happen. And if the spouse is reinvesting that money, I have given some money to spouse reinvest that money, and now by reinvesting that money somewhere she is earning money, that will not be clubbed. Transfer of asset to son's wife. Just like our spouse, if I am transferring it to my daughter-in-law, son's wife, if an individual transfers any asset to his or her son's wife without adequate consideration, then the income arising from transfer of such asset will be clubbed in the hands of the transferor. The transfer must be without adequate consideration. The asset must be transferred directly to the son's wife. Then transfer to a trust. Now if I am transferring any asset to a trust for the benefit of my wife, then also clubbing will happen. If an asset is transferred to a trust or any other person for direct or indirect benefit of my spouse, then the income of such asset will be clubbed in the hands of transferor. The asset is not directly given to spouse, but it is meant for the benefit of spouse. See, previous cases, what did we see? That I am directly giving it for my to my spouse. Now here they are telling you are not directly giving it to the spouse. You are giving it to a trust, or you are giving it to any other person and telling that please use it for the benefit of my spouse. So in that case also clubbing will happen. Same provision is applicable if you are transferring any asset to a trust for the benefit of son's wife. Same to same provisions are there. Next, section 64(1) capital A talks about clubbing of minor's income. So whatever income a minor child is earning, if you have a minor child, a child whose age is less than 18 years, if you have a minor child, then whatever income is earned by that minor child will be clubbed in the hands of the parents. Which parents are? That parent who has a higher income. That parent who has a higher income. Sir, what if both the parents have same amount of income? Then it will be please note, while calculating higher income, we should take before considering this income. Sir, what if both the parents have the same amount of income? Then you can club it with anyone. But what is important is once you club it with one of the parent, for all future years, it should be clubbed in the hands of same parents. So parent will get an exemption of 1,500. So under section 1034, section 1034A, they'll get an exemption of what, sir? They'll get an exemption of 1,500 per month, in whosever hands it is getting clubbed. However, in three cases, clubbing will not happen. Which are the three cases, sir? In case of what, sir? In case the minor child is earning the money because of his own skill and talent, or if he is earning the money because of his manual work, or he is a ATU disabled minor child. Then, sir, HUF case also it is applicable, yes. So conversion of self-acquired property into HUF property. So I have a property which I purchased. Now I am giving it to my HUF. Now whatever income HUF is earning from that property, that income will be clubbed in my hands. So this provision will be applicable only till partition. Once the partition is over, clubbing will happen in my hands. Clubbing will happen only with respect to my wife's income and my minor child's income. So if you see over here, explanation is there. Stories are there over here. So I'm transferring I have an FD. I'm transferring the interest income of that FD to a person without transferring the asset. So that interest income will be clubbed in my hands. Revocable transfer, I transfer my house to someone, telling that I will take it back from you whenever I want in future date. Now this is revocable transfer. Transfer of asset to spouse or son's wife, for both of them this is applicable. I'm transferring an asset to my wife. My wife is giving that asset on rent and she's earning some rent. This money is taxable in my hands. I'm transferring shares of Reliance Industry. My wife got dividend, that is clubbed in my hands. My wife got capital gain, that is clubbed in my hands, meaning whatever income she's generating from the transferred asset. Now please note, I gave an FD, my wife sold that FD, closed that FD. By closing that FD, she purchased a house. Now whatever rental income she is getting on that house, that is also going to be clubbed in my hands. Please note, I gave an FD to her, but she has converted that FD into house. Lawmaker says no problem. Whatever asset you have transferred, irrespective of what form it is converted, whatever income is generated from the asset transferred by you, or the money value of the asset transferred by you will always be clubbed in your hands. Now say one more case, I gave an FD to my wife of 100 lakh rupees. She closed the FD and got 100 lakhs. She invested her own 50 lakhs and purchased a house or a car. Now from this she is earning a income of 6 lakh rupees. Now lawmaker says, see over here what is happening. Dilip's money is only 100 lakhs. So though she is getting 6 lakh rupees, entire 6 lakhs will not be clubbed in the hands of Mr. Dilip. 6 lakhs into 100 divided by 150. Sir, why sir? 6 lakhs is the total income received. 100 is the amount invested divided by 150. What is 150, sir? 150 is the total money invested by her. Dilip's money by total money. That proportionately it will be taxable. Now, very important point is, if the money which is given by me to my spouse, if it is invested in any business by the spouse, if the money which is given by me to my spouse is invested by the spouse in any business, then clubbing will happen only when the amount which is given by me is there in the capital of that business as on the first day of the previous year. If it is there in the capital of the business as on the first day of the previous year. So yeah, say there is a company wherein I have substantial interest. Substantial interest means what's a 20% or more. This 20% or more can be of assessee and his relative combined together. So a relative includes spouse, brother, sister, lenient resident, lenient dissident. Now if the spouse does not have any professional or technical qualification, then whatever money the concern is paying, that will be taxable in the hands of spouse. Sir, if both of them have substantial interest, then clubbing will apply, sir. Yes, clubbing will apply in sir, if both of them have substantial interest and both of them have no technical qualification, then it will be clubbed in the hands of that that person who has higher income before clubbing this income. Sir, what if they both have same amount of income? Meaning what, sir? If both of the spouse have substantial interest and if both of them are receiving money from the concern, and if they don't have any other income, then clubbing shall not be applied. When they are not having any other income at all, clubbing provision shall not apply. An income of minor child will be clubbed in the hands of the parent who has a higher total income. It will be not clubbed in following cases: skill and talent, manual work, and ATO disability. Section 1034 I told. Section 1032 is exempt. The minor child in whosever parents hands the minor child's income is exempt. Income is clubbed. That parent will get an exemption of 1,500 per child as exemption. Now minor includes minor married daughter, minor married son over here. Minor includes own child, stepchild, legally adopted child, and divorce case, it will be clubbed in the hands of that parent who is maintaining the minor child. Next is what, sir? Our set off and carry forward chapter. Next chapter is what, sir? Set off and carry forward. Set off, aggregation, set off and carry forward of losses. Now see, set off means what, sir? You are adjusting loss against income. Set off means adjustment of loss against income. There are two types of set off. One is called as intra-head set off. Another one is called as inter-head set off. Intra-head means what, sir? You are setting off the losses of one head with the income of the same head. Inter-head means you're setting off losses of one head with income of another head. Intra-head means what, sir? Loss of a particular head is adjusted with the income of same head. For example, house property 1, I'm getting a loss. House property 2, I'm getting an income. I will do the adjustment and take the net income from house property. This is called as intra-head set off. So one house property is giving me loss, another house property is giving me income. I'm adjusting those and getting the final amount. Inter-head set off is what, sir? Loss under one head is adjusted with income under other head. So salary income is adjusted with house property loss. No, sir, I didn't understand. Inter head means I am now setting off with two different heads. I am doing adjustment with two different heads. So I have a loss under the head house property. Okay, and I have an income under the head salary. So house property loss I am adjusting with salary income. That is called as interhead set off. Carry forward means what, sir? If the current year loss is not able to be set off completely, if you are not able to adjust the current year loss completely, then that current year loss you can take it to future years. That current year loss you can take it to future years and you can adjust in that future years. That is called as carry forward. Loss that cannot be adjusted in the current year will be carry forwarded for future and will be adjusted in future years. Now, we will see what are the different cases when I can make intra-head set off. Now, please note, there are different heads of income and accordingly, what are the rules for set off? Salary can I say no set off? Concept will come because I'm never going to get any loss under salary head. Am I going to get loss under salary head? No. Therefore, the question of setting off one salary income with another salary income will not come. Correct. House property loss. Sir, one house property can have a loss, another house property can have income. Can I do the adjustment, sir? Lawmaker says yes. So loss of one house property can be adjusted with profit of another house property. Then what about business, sir? Now business are divided into three categories. For the purpose of set off and carry forward, business are divided into three categories. Which are those business, sir? Normal business, speculation business and 35 AD business or specified business. What lawmaker says? Normal business loss can be set off with any type of business income. Whatever normal business you are doing. Normal business means all types of business except speculation business and specified business. Normal business loss can be set off with any type of business income. Then speculation business loss can be set off only with speculation business income. 35 AD business loss, specified business loss can be set off only with specified business income. So business income, business or profession, normal business loss can be set off with any business income. Speculation business loss can be adjusted only with speculation business income, and 35 AD or specified business loss can be adjusted only with specified business income. Sir, what about capital gain, sir? Capital gain, long-term capital gain can set off short-term as well as long-term capital loss, and short-term capital gain can set off only short-term capital loss. So under capital gain, if you want to adjust, long-term can eat everyone, but short-term can eat only short-term. Income from other sources. See, normally income from other sources, losses will not be there because all the incomes which you are getting, that only will be taken over here. But however, if you are getting any loss because of owning and maintaining racehorse, that loss can be set off only with the income of owning and maintaining racehorse. So if you're owning and maintaining racehorses and if you're getting loss from owning and maintaining racehorse business, then that loss can be adjusted only with owning and maintaining racehorse income. Next is intra-head. What is more important than inter-head? What is more important is inter-head. Adjusting loss of one with profit of another. What is more important is adjusting loss of one with profit of another. Now, for salary, possibility is not there. So we have completely ignored salary only. Salary loss of one salary you are adjusting with other incomes. No, not possible. Salary will not have a loss. Now, I may have loss of house property. So, house property loss, can I adjust with other income, sir? Answer is 100% yes. You can adjust house property loss with other income. However, there is a restriction. What is the restriction? You can adjust maximum 2 lakh rupees per annum. How much you can adjust, sir? Maximum house property loss which can be adjusted with the incomes of other heads is how much, sir? 2 lakh rupees. Now, whatever excess loss is there, that you can carry forward. And how many years can I carry forward the house property loss, sir? For 8 years. Sir, what about business loss? Business loss, lawmaker says business loss you can set off with any income. Business loss you can set off with any income except salary. Sir, that means business loss I can set off with house property. Yes. Business loss I can set off with other sources. Yes. Sir, business loss I can set off with other business incomes. Yes. Business loss can I set off with capital gain? Yes. Except salary, all the other types of income you can adjust. What's a business loss? Now the unadjusted business loss which is there, that will be carried forwarded by you for a total number of 8 years. Sir, what about speculation business loss? Speculation business loss cannot be set off with other business income and it cannot be set off with other incomes also. Speculation business loss will have to be set off only with speculation business income, and if you want to carry forward it, you can carry forward it for how many years? 4 years. Similarly, specified business also same point. It can be set off only with specified business income, and if you want to carry forward, you can carry forward it for maximum how many years? Indefinite period. Specified business, 3580 business, no limit is there. Capital gain loss. Sir, what if I have a long-term capital loss? If you have long-term capital loss, you can adjust only with long-term capital gain. Sir, can I not adjust with other incomes? No. Sir, this loss can be carried forwarded. If it is not adjusted, you can carry forward for total 8 years. Similarly, short-term capital loss. If you have a short-term capital loss, it can be adjusted with long-term capital gain or short-term capital gain. If it is unadjusted, then the unadjusted loss can be carried forward for a total period of 8 years. Income from other sources. Whatever income from normally you cannot have loss under other sources. However, owning and maintaining loss, if you have, you can adjust with same people. Income from other sources, loss can be set off with other incomes, other taxable income from other sources. See, loss of owning and maintaining racehorse can be set off only with owning and maintaining racehorse. Then if it is not fully set off, you can carry forward for a maximum period of 4 years. Casual income and exempt income cannot set off any type of losses. So casual income is, that is lottery betting, gambling income. Your exempt income, agriculture income from a land in India, etc. Against those incomes, no, you cannot set off any type of losses. It's okay. Okay. Now, sir, what about carry forward, sir? Once the loss is what, sir? Once the loss is fully adjusted in the current year, whatever remains unadjusted in the current year will be taken to the future years. Whatever losses is not adjusted in the current year will be taken to the future year, and that loss which is taken to the future year is called as carry forward of losses. One thumb rule you should know. What is that thumb rule, sir? Once a loss has been carry forwarded, in the future years, it can be adjusted with same head of income only. Sir, repeat. Once a loss is carry forwarded, in the future years, it can be set off only with the same head of income. Please note, current year intra and inter provision is there. Current year loss can be adjusted with other current year income, but once a loss is carry forwarded to future years, it can be adjusted only with the same head of income. Okay, not okay? Now, losses. Let us say it is a house property loss. If it is a house property loss, and if you are not able to adjust completely for current year, then you can take it to future years, and in future years you can adjust it with whom, sir? House property income. And you can adjust only with house property income. And if I want to carry forward, for how many years can I carry forward, sir? You can carry forward for 8 years. Please note, when you are earning an income, you file something called as income tax return. When you are earning an income, you file something called as income tax return. And therefore, when I am making loss, I have not made any incomes, I have made a loss. When I have made a loss, should I file a return of loss also? Should I file a return of loss also? Lawmaker says yes. Lawmaker says yes, you will have to file a loss return also. What is this point telling, sir? Last point says filing of loss return. Is it mandatory? Filing of loss return for carry forwarding house property loss is not mandatory. Meaning house property loss can be carried forward even if you don't file income tax return or loss return. Sir, business loss. Normal business loss can be adjusted with any type of business income. Normal business loss can be adjusted with any type of business income. Then this can be carried forwarded for how many years, sir? For totally 8 years. And should I file my loss return to carry forward this loss? Answer is yes. You'll have to file your loss return. Then speculation business loss. This, if it is not adjusted completely in this year, you can carry forward to the future years. And in future years, you can adjust only with speculation business income. And you can take it in future for how many years, sir? You can take it for 4 years. And in future, if you want to take this loss in the future, should I file loss return? Answer is yes. You will have to file your loss return. Similarly, specified business loss. Specified business loss can be taken in future year and it will be adjusted only with specified business income. And there is no limit for how many years you can take it forward. It is for indefinite period you can take it forward. And filing loss return is mandatory. Meaning if you have a speculation business loss and if you want to carry forward those losses, then you will have to compulsorily file the return. Then long-term capital loss can be adjusted, can be carried forward to the future and adjusted only with long-term capital gain, and it can be carried forward for how many years, sir? For a total period of 8 years. And for carry forwarding these losses, you will have to file a loss return. Short-term capital loss can be adjusted in future years against short-term or long-term capital gain. It can be carried forward for a total period of 8 years, and if you want to carry forward these losses, you will have to file something called as your loss return. Then if you have a loss from owning and maintaining racehorse business, then the loss from owning and maintaining racehorse business can be carried forward and adjusted only with income from owning and maintaining racehorse. And for carry forwarding these losses is filing of loss return mandatory, sir? Answer is yes. If you have any unabsorbed depreciation, then that unabsorbed depreciation can be taken in to future years, and there is no limit for how many years you can take. And once you take it in future years, you can adjust it with any income. You can adjust it with any income except salary. And filing of loss return is not mandatory for carrying forward of unabsorbed depreciation. Now, additional points which you have to keep in mind when you are making sure that there is a question on this topic or when you are studying this topic. What are those additional points, sir? Order of set off. First, you should always do intra-head set off, meaning first you solve your own house problem. First, you should solve your own house problem. After solving your house problem, you should solve the problems of your neighbors. Okay, meaning first house property loss should be adjusted with house property income. Even after adjusting that, if there is any loss left over, that loss can be adjusted with income under other heads. Okay, not okay. So first intra-head set off should be done, then inter-head set off should be done. Once you do inter and intra-head of the current year, then you can then you can adjust the loss of the previous period. Then you can do the adjustment of last year losses. Similarly, business loss and speculation business. Business loss can be set off with any head except salary, while speculation loss can be set off with only speculation profits. Unabsorbed depreciation can be carried forward for indefinite period, and it can be set off with anyone except salary. Set off of house property loss. Maximum house property loss which you can set off is how much, sir? 2 lakh rupees. Only 2 lakh rupees. Balance will be carried forward. Long-term capital loss can be adjusted only with long-term capital gain, and short-term capital loss can be adjusted with short-term or long-term. Deemed business. Deemed business means what, sir? Deemed income, undisclosed income. Those deemed incomes, no loss can be set off against unexplained income under section 68 to 69D. Casual income or exempt income losses can never be set off with anyone. Income from other sources cannot. Losses under income from other sources can never be set off against except what, sir? Owing and maintaining racehorse losses. Except owning and maintaining racehorse losses. So yeah, there is this full story over here. You can just go through over here. I mean, classroom explanation I have given. What is important is the flow of setting of the losses. Next is what's our deductions. The next topic for our deductions under chapter 6A. So there are total 80 C to 80 U deductions are there. Now please note, deduction. Why is deductions under chapter 6A important, sir? See, all the heads of income combined together, you will get something called as gross total income. From that gross total income, if you subtract deductions under chapter 6A, you will get something called as your total income. And this is the total income on which you are going to pay taxes. So you know how to compute your gross total income because we have discussed all the heads of income. Now you want to subtract deductions. Please note, how do I compute? Let me just draw this for you. How do I compute the total income, sir? See, first I will take income from salary. This is the specific format. First head is income from salary only. Then I'll take income from house property. Then I'll take income from business or profession. Then I'll take income from capital gain. Then I'll take income from other sources. Okay, income from other sources. So this is all the 5 heads of income I am going to take. Now, after that, what did we study? Which is the next topic we studied? Set off and carry, clubbing of income. Now, all the clubbing which you are doing, that clubbing will be done under which head? Under income from other sources only. All the clubbing which you are doing, that clubbing will happen under which head, sir? All the clubbing which you are doing, that clubbing will happen under income from other sources only. Okay, all the clubbing which you are doing in your life, that will happen under income from other sources. Then you will do set off and carry forward. So it can be set off within the same head or between 2 different heads. Set off and carry forward you will do. Now whatever is left over, that is called as your gross total income. From this gross total income, you are required to subtract deductions under chapter 6A. Once you subtract these deductions, whatever is left over now is called as your total income. We'll have to subtract deductions, and whatever is left over now will be called as what, sir? Total income. This will be called as your total income. Now, what is important, sir? What is important? Can I say your total income, your gross total income will have all the heads of income? Yes, sir. Therefore, lawmaker says when you are giving deductions under chapter 6A, the deductions under chapter 6A is not available against these incomes. These deductions under chapter 6A, please note, these incomes will form part of your total income. When you are computing your total income, this will be included. But chapter 6A deductions will be not available against this income. Which incomes are? Long-term capital gain under section 112, long-term capital gain under section 112A, short-term capital gain under section 111A, and casual incomes such as winning, lottery, etc., etc. Of course, needless to say, undisclosed incomes are also covered over here. Okay, deductions will not be allowed against these incomes. Against these incomes, deductions will never be allowed. So, whenever you are taking your gross total income, subtract these incomes. Now, whatever is left over, that is the maximum amount of deduction which can be taken by you. Now, please note, we are going to learn deductions chapter, correct? We are going to learn deductions chapter. One thing you should be knowing, that under default tax regime, you will not get any deduction under chapter 6A except these deductions. Under default tax regime, you will not get any deductions except these deductions. Which are the deductions? Except 80CCD 2 deductions, which is employer contribution. 80CCH 2 deductions, which is Agnipath scheme, employer's contribution in Agnipath scheme. Then 80JJAA, new employee deductions. These deductions are only available if you follow 115 BSc. If you follow 115 BSc, all the other types of deductions are not available to you. Next is what, sir? Let us start one by one all the different types of deductions. Section 80C. 80C is available to an individual or an HUF. 80C says if you make investment in life insurance premium or employee provident fund, public provident fund, national savings certificate, 5 years FD you are taking, Sukanya Samriddhi account you are putting money, home loan you are taking, tuition fees you are paying up to a maximum. Tuition fees means school fees. In school fees, one of the part of the school fees will be tuition fees. Up to maximum 2 children you can take the advantage, or you are putting money in equity linked savings certificate. In all these cases, if you are putting money in all these cases, and if you are an individual and HUF, you can claim the benefit. You can claim the benefit of how much, sir? Maximum 1.15 lakh rupees. Under 80C, how much deduction can you claim, sir? Maximum 1,50,000 rupees. Now please note, there is a section called as 80CCE, which says the total deduction of 80C, 80CCC, 80CCD 1 shall be restricted to 1.5 lakhs. Now please note, life insurance premium, very important. Life insurance premium, there is an important point. Now, if you have, when the premium has been taken by you, have you taken the premium before 1st of April 2012, or have you taken the policy? When have you taken the policy? Have you taken the policy on or after 1/4/2012? If you have taken the policy before 1/4/2012, then the premium amount should be maximum 20% of sum assured. If the premium amount is more than 20% of sum assured, then only 20% of sum assured is the deduction which you are going to get while computing deduction under section 80C. However, if the policy is taken on or after 1st of April 2024, the premium should not be more than 10%. If the premium is more than 10%, you will get how much ever premium you are actually paying, or 10% of sum assured, whichever is less, as deduction under section 80C. Very important point. Okay. So life insurance premium should be less than 10% of sum assured if the policy is after 1st of April 2024. Now the public provident fund, whatever account is there, it has a lock-in period of 15 years. So whatever money you put in this account, you cannot withdraw it for a period of 15 years. National savings certificate, whatever amount you have reinvested, whatever interest you get, that interest will be taxable from national savings certificate only. That interest will be taxable under other sources, and if you reinvest it, you can claim it as deduction. Tuition fees is available only for education within India and for maximum 2 children. 80CCC, not that important. 80CCC is what, sir? Contribution to life insurance company's pension fund. Pension fund of any insurance company. Any insurance company is giving their pension fund, then you can claim deduction over here. How much deduction can I claim, sir? Deduction is available only for individual. up to 1.5 lakh rupees deduction is allowed. And whatever amount you receive upon maturity will be taxable in your hands. 80CCD1. What is 80CCD, sir? 80CCD is pension scheme of central government, or also called as national pension scheme. So this is benefit is available to individual and salaried employees. Now, how much benefit individual can take? Sir, 10%. Salaried employee can take 10% of salary, and other people can take a benefit up to deduction up to 20% of gross total income. This is the maximum amount. Actual contribution or 10% of salary, whichever is less, will be allowed for salaried employed. Actual contribution or 20% of salary will be allowed for other people. Okay, here also maximum deduction is what's 1.5 lakhs, and there is a lock-in period of 60 years, meaning up to 60 years you will not get pension. Only after that you are going to get the pension. Now, if you are contributing in central government pension scheme, lawmaker says I'll give you extra deduction of 50,000 rupees. This extra amount is over and above 1.5 lakhs, which you are getting over here. 80CCD2. 80CCD2, see please note, 80CCD1 is your own contribution. 80CCD2 is your employer contribution. So 80CCD2 is applicable only for salaried employees for their employer's contribution. How much, sir? 10% of salary is allowed as deduction. Now there is an amendment over here. This amendment says now it is 14% of salary. Okay. Now please note there is an amendment in this point. Very important. Make sure that you remember this amendment because they may test you. This will be just 1 or 2 marks question in your total income question. It will be there. But because of this one mistake, your entire answer will be wrong. Okay. 14% of sum assured. Same to same we studied under PGBP chapter also, business income chapter also, that 14% from 10% they have increased it to 14% now. So irrespective of who you are, central government employee or state government employee, or whether you are a normal employee, 14% of sum assured deduction will be given for employer ka contribution. Now 80CCC is father of 80C, 80CCC, 80CCD1. It says the maximum limit deduction allowed for all these people combined together is 1.5 lakhs. 80D. 80D is what, sir? Sir, what is 80D? 80D talks about health insurance premium. D for medical. So 80D says if you are taking health, if you are taken any health insurance, and if you are paying health insurance premium for yourself, your family members, or your parents, you can claim benefit over here. This provision is applicable for individuals and HF. If you are taking the policy for yourself and your children's, you can take benefit of 25,000. If you guys are senior citizen, yourself or your spouse or your children, any one among them are senior citizen, then the limit will be increased from 25,000 to 50,000. Similarly, for parents, you can take the separate benefit of 25,000. And if parents are senior citizen, they will get a benefit of 50,000 instead of 25,000. So again, here there is you can also take the advantage of preventive health checkup, which is covered in this limit only of 25,000. Payment should be, if you are making the payment for health insurance premium, medical insurance premium, that should be compulsory a non-cash payment. It will be allowed as deduction only if it is by any mode other than cash. And for additional 50,000 if the parents are more than 60 years. Then 80DD, if you are maintaining a dependent person, who is disabled, then you will get a deduction of 75,000 for normal disability and 1,25,000 for severe disability. Severe disability means disability is 80%, more than 80%. Okay. 80DDB. If dependent person is having some specified disease such as cancer, AIDS, etc., then you will get a deduction of 40% of whatever maintenance charges or 1.1 lakh rupees, whatever amount you are incurring. Please note, this is dependent is disabled and you are maintaining that person. Here you are treating that person. You are treating a person who is dependent on you and having some specified disease. They both are not same. Disabled means what, sir? A blind person is a disabled person. Handicapped person is a disabled person. Now he may not, you may not be doing any treatment for that person. He's just a blind person. He's sitting at home. No problem. 80DD is applicable. If there is a person who has cancer and you're treating that cancer, in that case 80DDB will be applicable. 80E is applicable for interest on educational loan. If you are taking any educational loan for your higher education, then up to 1,50,000 deduction will be allowed. Now the loan can be taken by you for yourself or for your children's or for your spouse or for your dependent relative. Loan should be between 1st of April 29. Sorry, where is this? Yeah. Full interest is allowed as deduction. Loan can be for self, spouse, children, or legal guardian child. And whatever interest you are paying for a period of 8 years will be allowed as deduction. Then 80EEB, interest for electric vehicle loan. If you have taken electric vehicle loan up to 1.5 lakhs, interest is allowed as deduction. The loan should be between this period. Donation, 80G talks about donation. If you are making any donation, then that donation will be allowed as deduction depending upon whether it is falling under 50% category or 100% category. I will discuss this donation later. Okay. When you are making the donation in cash, maximum you can make the donation in cash is only 2000 rupees. 80 GGA, GGB. 80 GGA and GGB talks about you are donating money for scientific research or for rural development. In that case, if you are an individual who is not having any businesses, you can take 100% deduction over here. If you are donating money to political party, even in such case, you can take deduction, 100% deduction. It should be a non-cash expenditure. And if an individual has taken any house on rent, then he can claim deduction under section 80GG. How much is the limit? We will see. 80JJAA is for new employee. That also we will see. QQB, RRB, royalty. Royalty, if you are receiving any royalty because you are an author or because you are receiving royalty because of patent, then you will get maximum deduction of 3 lakh rupees or the actual amount of royalty received, whichever is less. 80 TTA, if you have deposited your money, if you have deposited money in your saving bank account, the saving bank account will give you some interest. That interest is allowed as deduction under section 80 TTA. How much, sir? 10,000 rupees is the maximum interest allowed as deduction. If it is FD interest or recurring deposit interest not covered, only saving interest is covered. Then 80 TTA, interest on bank deposit. For senior citizen, it is applicable. If a senior citizen has any bank deposit, then up to 50,000 rupees is allowed as deduction. 80U, if you yourself are a disabled person, then you can claim deduction under 80U. If it is a severe disability, 1,25,000, and if it is a normal disability, 75,000 deduction can be claimed by you. 80DD is dependent is disabled. 80U is you yourself are disabled. Now, yeah, deductions are not available against these incomes, etc. What are the most important deductions? Are ATC, ATCCD, DEG, JJAA, TTA, and ATU. LIC premium, we saw what is LIC premium. Here I have given normal cases more than 10%, etc. Then contribution to PF, or these are all covered under employee provident fund, repayment of housing loan, national savings certificate, tuition fees. All these are covered under ATC. ATCCC covers only pension scheme of any insurance company. ATCCD covers pension scheme of central government, that is central government pension scheme, national pension scheme, Atal Pension Yojana. Then 80D covers medical insurance, central government health scheme, preventive health checkup, and medical treatment. Then 80DD is covering if you are maintaining a dependent person who is disabled. 80U covers those cases where you yourself are disabled. 80DDB, irrespective of the medical treatment, with respect to medical treatment of specified disease, you get how much, sir? 1 lakh rupees for senior citizen, 40,000 rupees for normal individuals. 80E is for interest on education loan. 8 years continuously it is allowed from the date when you are started paying interest. 80E and 80EE and 80EEA not applicable, I mean not required for examination. 80EEB for electric vehicle loan, maximum 1,50,000 you can claim deductions. Now 80G for donation. Sir, I am giving donation, sir. I want to be a nice person in my life. I want to give donation, sir. Lawmaker says if you give donation, I'll give you deduction under section 80G. How much deduction? To whom the deduction is allowed? Deduction can be allowed to any person who is making donation, and any person who is giving donation will get the deduction. Deduction is what, sir? No limit cases or limit based cases. Meaning, if you contribute money in PM drought fund and any of the central government fund, prime minister fund, or CM fund, national fund, etc., then there is no limit on how much deduction will be given to you. Lawmaker says if you are contributing money to PM drought fund, there is no limit on how much you can contribute. You can contribute anything. How much ever you are contributing, 50% of that will be allowed as deduction. But if you're contributing in any central government fund, any state government fund, or any prime minister fund, or any chief minister fund, or any national fund, or Swachh Bharat, Clean Ganga, or army funds, then whatever amount you're contributing, 100% of that fully allowed as deduction, okay, without any limit. But there are few things which are limit based, meaning contribution there is no restriction, but amount of deduction which I am going to give you will be restricted. Now here also in limit based also we have 50% and 100%, meaning whatever you are contributing or limit, multiply by 50%, whatever contributing or limit whichever is less, multiply by 100%. Now 50% will be given in case of minority, if you are contributing money for any benefit of minority people, or in case of any trust or temple, mosque, church, or housing accommodation. And 100% deduction will be given for family planning and Indian companies who are in Olympics. Please note, deductions, how much deduction will I get? How much ever you have contributed, or 10% of adjusted total income, whichever is less. What is adjusted total income over here? What is adjusted total income? Take your gross total income, subtract all the incomes against which your deduction is not available, and subtract all the deductions except ATG deduction. You will get your adjusted total income. Please note, donation can be in cash. Donation in kind is not covered over here. Only the donation which you are making in monetary form is covered. And if you are making any donation more than 2000 rupees, it should be by any mode other than cash. It can be account pay check, account pay demand draft, any other electronic clearing system. ATGG is with respect to rent paid. Very important. There is an MCQ question in your RTP. If you see your current year's RTP, there is an MCQ question, very good question. First question of MCQ talks about this. If you see, nowhere in the MCQ when you are reading, you will understand that even this point is there in the question. Meaning, while reading the question, you will never understand that whether these types of deductions are there or not. So for you, understanding, knowing some deductions are very important. ATGG, rent paid for house property. Of course, RTP I am going to upload very soon. You will get RTP also. Rent paid for house property. If you are an individual who is not getting HRA and who is not having any house at a place of your employment and who is not covered under self-occupied, who has not claimed any self-occupied property benefit, then you will get a deduction of 5,000 per month, or 25% of adjusted total income, or rent paid minus 10% of adjusted total income. Adjusted total income means your gross total income, subtract all the incomes taxable at special rates except casual income, and subtract all the deductions except ATGG, you will get your adjusted total income. Uska 25% or uska 10% for calculation of last point. Now deduction will be, now please note, when I say you should not have a house, you should not have, your spouse should not have, minor child should not have house at the place where you are doing employment, and a declaration is required to be submitted in form 10BA telling I have paid this amount of rent, etc. ATGGA, if a person who is not doing business is giving money for scientific research or rural development, whatever amount he is giving will be allowed as deduction. He should give it by any mode other than cash. And if you are contributing to political party, ATGGB for Indian companies. If all other type of associates are contributing, ATGGC. ATJJAA. What is ATJJAA, sir? ATJJAA is the deduction which is given for new people whom you have employed in your company. If you are employing new people in your company, lawmaker says it is a good thing. You are giving job opportunities. So this deduction ATJJAA can be taken by any person who is engaged in business and whose books of accounts are audited, meaning whose turnover is more than 1 crore or 10 crores. Now, how much is the deduction? 30% of additional employee cost which you are incurring will be allowed as deduction for a period of 3 years continuously. Sir, additional employee cost means what, sir? If it is a new business, then all the employees which you added during the current year is previous year is your additional employee cost. If it is a existing business, then whatever increment is there in the number of employees when comparing from last year to current year. Additional employee shall not include employee whose salary is more than 25,000, employees who work for less than 240 days, and employee who does not have any who is participating in recognized provident fund. ATTTA, interest on saving account, maximum 10,000 is allowed as deduction. ATTTB for senior citizen, maximum 50,000 for deposits is allowed as deduction. Royalty income, ATQQB, if the royalty amount is less than 15% of book value, then whatever royalty you have received, or 3 lakh, whichever is less. If royalty is more than 15% of book value, royalty at 15% of book value or 3 lakh, whichever is less, is allowed as deduction. Okay, so this is all about your deductions chapter. Now let us go to our one more topic is there under deductions. What is that, sir? Section 10AA. Section 10AA is what, sir? Tax holidays for SEZ. If you are an SEZ unit, unit located at the SEZ area, then for a period of 10 years, your income tax, for a period of 15 years, you will get some, for a period of any assessee, for a period of how many years, sir? 15 years, the deduction will be allowed. See, any assessee who is engaged in manufacturing or production business or provision of services at an SEZ area will be allowed as deduction under section 10AA. Will be allowed as deduction under section 10AA. If you are a person who is doing manufacturing activity or who is providing any type of services, from which location, sir? From SEZ location. You are doing manufacturing at SEZ area or giving services from SEZ area, your profits will be exempt. How much profit will be exempt, sir? For first 5 years of your business, 100% of your export profit will be exempt. For the next 5 years of your business, from 6th year to 10 years, 50% of your export profit will be exempt. And for last 5 years, because up to 15 years it is allowed, 50% of export profit or amount credited by you to reinvestment reserve, whichever is less, will be exempt. Export profit is what, sir? Export profit is your business income into export turnover divided by total turnover. Of course, whatever your business income is there, complete total business income into export turnover divided by total turnover. Okay. Now all the other things are, not that important. Mr. Rudra, you see this question. Mr. Rudra has 1 unit at SEZ because this is one question which they normally ask in the examination. Mr. Rudra has 1 unit in SEZ and another unit is domestic tariff area. One is in SEZ area, another one is domestic tariff area. He provides you the following information. Mr. Rudra's total turnover they have given and the turnover of domestic tariff area they have given. Therefore, can I say this minus this will give me the turnover of SEZ unit? Yes. So 6 lakhs minus 2 lakhs, 4 lakh rupees. Export is 5.6 minus 1.6, 4. Net profit is 80 minus 20, which is 60. So we need only for SEZ unit. So total sales is 4 crore rupees and export sales is 4 crore rupees, meaning all the sales which is made by them is export sales only. Proceeds from sales in SEZ received in convertible foreign currency. Now, what do you mean by export turnover, sir? Export turnover means the amount received in convertible foreign currency within the time limit given by RBI. Correct? So, what is export turnover? The total turnover of total export sales is 4 crore rupees. But will I take this total? No. They say proceeds of export sales in SEZ received in convertible foreign currency by 30th September 24 is 3 crore rupees. He has exercised the option of shifting out of default tax regime. Calculate the eligible deduction under section 10AA if he has started the business in 2015 and if he has started the business in 2019. Now please see. 60 lakhs is my total turnover of SEZ unit, total profit of SEZ unit into my export turnover divided by my total turnover. So this is the amount of profit which is called as export profit. What is export profit? Export profit is total profit of the business into export turnover divided by total turnover will give me export profit. Now, if you have started in 2015, then it will be more than 5 years. Therefore, you will get 50% of your export profit as your deduction. If you have started in 2019, that means you have recently started, you will get deduction of 45% of your export turnover. Meaning you should see which year it is. If it is up to 5 years, then 100%. Then if it is more than 5 years, then 50% of export profit will be allowed as deduction. Next point. Just a second before we discuss this next point. Now we'll start the discussion on total income topic. Total income topic. So there are two topics which we have to see in total income. One is your AMT and one is 115 BAC. What is AMT, sir? Alternate minimum tax. Now what is this alternate minimum tax provision telling? It says section 115 JC alternate minimum tax. It is applicable to all types of assessors except company. because for company something else is applicable which you learn in your final level. So it is applicable to whom, sir? All type of SSCs except company. That means it is applicable to individual HUF firm, LLP, AOP, BOI, artificial judicial person. Section 115 JC talks about what, sir, how much tax you have to pay. So this is the minimum, alternate minimum tax. This is the minimum amount of tax which you have to pay. So normally, how much tax will a person have to pay, sir? It will be the tax calculated as per normal provisions of income tax law, meaning whatever you have studied till now, or alternate minimum tax as per 115 GST, whichever is higher. This is the minimum amount of tax which you have to pay. Sir, what is this alternate minimum tax amount, sir? It is your adjusted total income amount. You take your adjusted total income multiplied by 18.5%. You take your adjusted total income and multiply it by 18.5%. That is the amount of tax which you have to pay. Sir, what is my adjusted total income? Your adjusted total income, what is this adjusted total income, sir? You take your actual total income, whatever you have computed till now. So add all the incomes, subtract the deductions, etc. You will get your total income. From the total income, subtract section 35 AD deduction. If while computing total income, if you have taken 35 AD deduction, now please subtract the deductions. Then subtract 10 AA deduction. Just now we saw what is 10 AA deduction. So if you have taken deduction under section 10 AA, please subtract that. And also subtract the deduction under section 80 JJAA QQB RRB. You subtract from your total income which you have got, subtract these deductions, you will get your adjusted total income. From this adjusted total income, subtract section 35 AD. What's that? Section 35 AD asset, whatever. See, 35 AD deductions you are adding back. Please note. Wait. I told subtract, I think, correct? Now, what they are telling is take your total income. While taking total income, you would have taken some deductions. You would have subtracted few things. Now, I just want you to add it back. What are those few things, sir? To this total income, add back deductions under section 35 AD, deductions under section 10 AA and 80 JJAA QQB RRB. Add back these items. You will get some amount. From this amount, subtract the depreciation for 35 AD asset. See, 35 AD says 100% of capital expenditure is allowed as deduction. Now, if I would have not taken deduction under 35 AD for that capital expenditure, I would have got at least depreciation. No? So, lawmakers are telling take the depreciation. So, you will get some amount now that is called as adjusted total income. This adjusted total income ka 18.5% is the deduction which is going to be allowed to you under 115 JC. Now, this provision shall not apply to an individual HUF, AOP, BOI whose adjusted total income is less than 20 lakhs, and it is also not applicable to an assessee who has opted for 115 BSC. Now, please note. You will get alternate minimum tax credit. You will get AMT credit. What is AMT credit? Please note. Actually, if you see, this is the tax which I have to pay as per normal provision. Whatever tax is there, that is what the tax I have to pay. Correct? No. But I am paying alternate minimum tax if the alternate minimum tax is higher. So lawmaker says if the alternate minimum tax is higher, then the difference between alternate minimum tax and normal provision tax, that difference will be treated as AMT credit. AMT credit is your alternate minimum tax which you have paying and normal tax which is supposed to be paid by you. That is AMT credit. This credit will be available for next 15 years. So in next 15 years, whenever your normal tax is more than your alternate minimum tax, then difference of this can be paid through using this AMT credit. AMT credit can be utilized in the year when normal tax is more than alternate minimum tax. It can be utilized to the extent of alternate minimum tax available or shortfall from alternate minimum tax and AMT. Next is your optional tax regime or default tax regime. Optional tax regime versus default tax regime. So there is a face-off between two people, optional tax regime and default tax regime. Now, what is better? Which is not better? What will happen if I follow default tax regime? All those provisions are discussed completely over here. Okay. Now, comparative analysis of normal provisions of and section 115 GST. That is comparative analysis of optional tax regime and default tax regime. So tax rate under optional tax regime is what? Up to 2.5 lakhs 0, 2.5 to 5%, 5 to 10 20%, more than 10 30%. Limit will be 3 lakh for senior citizen, 5 lakh rupees for super senior citizen. Then under 115 BSC, what is the tax rate? Up to 3 lakhs no tax, 3 to 7 5%, 7 to 10 10%, 10 to 12 15%, 12 to 15 20%, and more than 15 30%. Now, surcharge is applicable in both the cases when the total income is more than 50 lakhs. How much is the surcharge? If the total income is more than 50 lakhs up to 1 crore, it is 1 crore. It is 10% of tax amount. It is how much, sir? 10% of tax amount. If the total income is more than 1 crore up to 15 crores, it is 15% of tax amount. If the total income is more than 2 crores up to 5 crores, please note, 50 lakhs to 1%, sorry, 50 lakhs to 1 crore, it is 10%. 1 crore to 2 crores, 15%. If your total income is from 2 crores to 5 crores, it is 25%. And if the total income is more than 5 crores, it will be 37%. However, the limit of 37% is not available in case of default tax regime. For default tax regime, if the total income is more than 50 lakhs up to 1 crore, they will have to pay a surcharge of 10%. Hey, we have done all the questions in our first chapter only, tax rate chapters. If it is 1 crore to 2 crores, 15%. More than 2 crores, 25%. Dividend. Now, please note, we all know this. For dividend income, not 25%. Problem is there. Mistake I have written. For dividend income, for which income, sir? For dividend income and for income taxable under section 111A, long-term capital gain under section 112 and 112A, the maximum amount of surcharge which you can levy is how much? 15%. Then, sir, will I get rebate? Yes. Rebate will be given for normal provision. How much? When the total income is up to 5 lakh rupees. Rebate is tax amount or 12,500, whichever is less. Now, rebate also will be given under default tax regime under section 87A. If the total income is up to 7 lakh rupees, rebate will be given. How much, sir? Tax amount or 25,000, whichever is less. Now, what if the total income is slightly more than 7 lakhs? Then the extra tax which you are paying, first I'll calculate the extra income which is there and calculate the tax amount on the entire total income. If the extra income is more than extra tax, then the difference will be given to you as rebate. Health and education says, needless to say, will be applicable 4% of tax. Now, sir, what will happen if I select default tax regime? Sir, if I select default tax regime, if I select which regime, sir? Default tax regime. If I select 115 BAC, what are the things which I am going to forgo, sir? What are the different things which will be taken from me? Chapter wise, we will see. Income from salary following will not be available to you, meaning you cannot claim leave travel concession benefit under section 10.5. Under section 10.5, if you're traveling by air, economic class fare, if you're traveling by any other mode, first class AC ticket, etc., that benefit will not be given to you. Leave travel concession benefit will not be given to you. HRA exemption under section 1013A will not be given to you if you follow 115 BAC. Then allowances exempt under section 1014, you cheat, duck, hat, that allowances will not be given to you. That benefit of that allowances, for example, hostel allowance 300 rupees, that will not be given to you if you follow 115 BAC. However, transport allowance, traveling allowance, daily allowance and conveyance allowance, these are the 4 allowances for which you will get the deduction. Transport allowance only for handicapped employees. Now, sir, will I get a deduction under section 16? No, you will not get any deduction under section 16 except standard deduction. Only standard deduction will be given. How much, sir? For optional tax regime people, it is 50,000, and those who are opting for 115 BAC, the standard deduction is increased by 25,000 more. Income from house property. Under income from house property, if it is a self-occupied property, you cannot claim the deduction of interest under section 24B, self-occupied property. For let out property, no change is there. You can follow whatever we have studied. If you are a person having business income, then for business income, you cannot claim additional depreciation. The concept of additional depreciation will not be applicable to you if you are following 115 BAC. If you have given any donation to for scientific research, that donation benefit you cannot take. Hey, please note, I am talking about donation to scientific research, not in-house scientific research. In-house scientific research will be allowed. No deduction will be given under section 35 AD. Then for capital gain, there is no change. There is no change. Same thing, whatever you have studied is applicable. Then for family no, here there is a change. Family planning deduction which is there, the family planning deduction which is there, the family pension deduction will be, family planning pension deduction will be 1/3 of pension or rupees 25,000. So whatever family planning family pension you are receiving, for that family pension you will get a deduction of 1/3 of total pension or rupees 25,000, whichever is less. And when you are clubbing your minus income, you cannot claim the benefit of 1032 exemption 1,500 will not be given. For MLA MP daily allowance, constituency allowance, normally it is exempt, but here it will be fully taxable. Under set off and carry forward, house property loss cannot be set off under incomes of other heads. and no set off of brought forward losses if those losses are because of above reasons, meaning if those losses are because of depreciation or any type of gross forward losses. Deductions under Chapter 6A, you will not get any deductions under Chapter 6A except 80CCD2 and 80JJAA. Sir, what about 10AA? 10AA benefit also will not be given to you. Okay, important point. Income which are taxable at special rates will continue to be taxed at special rates, and 115 JC will not be applicable, meaning alternate minimum tax provision will not be applicable if you are a person who's opting for default tax regime. Okay, so this I think is all about your default tax regime provision. This is all about your total income topic. One last chapter is left over: TDS, TCS, advance tax, and return of income. Last chapter, 4 marks question will come from this topic. Advance tax. What is advance tax, sir? Advance tax means what, sir? Paying the tax in advance. Normally, whatever income you earn in the previous year, normally what we have studied in our life, whatever income you are earning in previous year, on that income which you are earning in previous year, you will have to pay tax in assessment year. So income is earned in previous year, tax is paid in assessment year. But however, advance tax says you earn income in previous year only and pay also the tax in previous year, meaning advance tax says pay as you earn. Advance tax says what, sir? Pay as you earn, meaning you estimate your total income. On that estimated total income, you first estimate your total income. On that estimated total income, you just compute your advance tax liability. Advance tax liability you compute, and whatever amount is there that is required to be paid by you in 4 installments. 4 installment. When are these installments, sir? 15th of June, 15th of September, 15th December, 15th March. Please note. What is advance tax topic telling? See, normally income you earn in previous year and the tax is paid by you on that income in which year, sir? Assessment year. Correct. Now, advance tax provision says whatever income you are earning in previous year, no, on that income also you pay tax in the previous year itself. So here they follow a concept called as pay as you earn. As and when you are earning the income, pay the tax also to me. And why to wait till assessment year? If you wait till assessment year, problem is there. If you wait till assessment year, what is the problem, sir? If you wait till assessment year, then you will have to worry, okay, how much is my tax computation? I will have to do all those things, and the amount will become so huge, you will feel like not paying only. So they are telling, as and when you are earning, you please pay the tax to me. So here, sir, how will I know what is the tax, sir? Because the income is going to, I will know my income only as on the last date of the previous year. No, sir. Yes, lawmaker says no problem. You estimate your total income. Sir, how will I estimate? Are just see how much you earned last year? Are current year you will always try to earn more than what you have earned in last year? No. Yes, sir. Yes, sir. Yes, sir. So estimate your total income. On that estimated total income, you compute the tax. So tax liability, how will I compute, sir? Let us say my estimated total income is 15 lakh rupees. So under old regime, if I follow this, my tax amount will come to 2,73,000 rupees. Along with cess, my tax amount will come to 2,73,000. Now this tax which I have calculated, no, this is my advance tax liability. This is the tax which I have to pay to the government in advance. Now how should I pay, sir? I should pay this tax in 4 installments. When should I pay? 15th of June, 15th of September, 15th of December, 15th of March, 15 June, 15 September, 15 December, 15 March, 15%, 45%, 75%, 100%. So this 15th of June, you pay 15% of your advance tax liability. Total, how much you should pay? 49,500. By 15th of September, pay 45%. If you have already paid 15%, then subtract that, the remaining amount you pay now. By 15th of December, you pay 75%. If you have already paid 45% before, you subtract that and pay the balance amount. So by 15th of March, you should pay 100% of your advance tax. Please note, one point you should note, whatever you paid till 31st of March of previous year, that is called as what, sir? Advance tax only. Advance tax means the tax which is paid in the previous year. Advance tax is tax payable on advance tax is payable. When should I pay advance tax, sir? You should pay advance tax only when your advance tax liability is 10,000 rupees or more. In case of senior citizen who does not have a business income, he does not have to pay any advance tax. If you are a senior citizen who is not having a business income, then for you the provisions of advance tax will not be applicable. See, normally you will have to estimate your total income and pay the taxes. Some incomes cannot be estimated. Which incomes, sir? Casual income, capital gain income, and business income which you are earning for the first time. So for these incomes, you pay the advance tax from the date when you started earning this. Then Section 44 AD and 44 ADA people, meaning those who have opted for presumptive taxation, they can pay their full advance tax in one installment only, which is 15th of March, last installment. How do I compute my advance tax liability? Very important. First, you estimate your gross total income. Subtract from that deductions under Chapter 6A if it is applicable. Meaning, depending on which system you are following. If you are following default tax regime, then mostly this will not be there. You compute your estimated total income. On that estimated total income, compute the tax. Please note the tax computation should depend on whether you are following default tax regime under 115 BAC, or if you are following normal provisions, compute the tax as per normal provisions. So first you should compute what's the tax on your estimated total income, add surcharge if it is applicable, then add health and education cess if it is applicable. That is the total tax on your estimated total income. From this, if there is any TDS which is deducted and paid to the government, subtract that. TCS which is collected and paid to the government, subtract that. And any tax which is paid by you during the previous year because of any other reason, subtract that. You will get the advance tax liability. You will get what's the advance tax liability. This advance tax liability is required to be paid by you in 4 installments: 15 June, 15 September, 15 December, 15 March. 15%, 45%, 75%, and 100% is what you are supposed to pay. Now please note, my total tax liability is 3 lakh rupees. TDS deducted but deductible but not deducted, meaning they had to deduct TDS of 1 lakh rupees but they have not deducted. Will I subtract it from my total tax liability? No. TDS deducted but not remitted, meaning they have deducted the TDS but not paid to the government. Then how will government come to know whether this TDS I am supposed to receive or not? So will I deduct this? Lawmaker says no. So whatever TDS is deducted and paid to the government, only that you can subtract from your total tax liability. That will give you your advance tax. Now this is required to be paid by you to the government in 4 equal installments. So there is one beautiful question which I have taken over here, and I have asked you to compute advance tax under new tax regime and old tax regime. Very nice question I have taken. So first, what will I do, sir? I'll compute the gross total income under both the regimes, and then I will take the total income under both the regimes. I'll first compute what's my total income under both the regimes. Then I'll compute the tax liability under both the regimes. So my tax liability under old regime is 86,010 rupees, rounded off to the nearest multiple of 10, and under old regime it is 47,940 rupees. Now this tax, I had a TDS credit of 15,000, TDS credit of 15,000. I'll subtract. So balance amount is my advance tax liability, which I have to pay in 4 installments: 15%, 45%, 75%, and 100%. Now comes your return of income chapter. Before return of TDS, advance tax, TDS, TCS, and return of income. Return of income chapter. Who is required to file income tax return, sir? Who is required to file income tax return? Section 139 says company and partnership firms should always compulsorily file income tax return even if they are not earning any income. And every person whose total income is more than basic exemption limit should file his income tax return. Every person who is holding as a beneficial owner or who is having any signing authority or who is a beneficiary of an asset which is located outside India. Located where, sir? Outside India, he should also file his income tax return. And every person whose total income before giving the deductions under Chapter 6A and before giving exemptions under capital gain is more than basic exemption limit, he also should file his income tax return. And every person who has deposited more than 1 crore rupees in his bank account, current account, who has incurred more than 2 lakh rupees expenditure for foreign travel, who has incurred more than 1 lakh rupees expenditure for his electricity, they also required to file income tax return compulsorily. Sir, what is the due date of filing income tax return? For companies, it is 31st October of assessment year. Assessment year ka 31st October. And for any person other than company whose books of companies whose books of accounts are subject to audit under income tax law, then for them also it is 31st October. They should file their income tax return by 31st October. Sir, what if I am a case of transfer pricing? They will not ask you this, but for them it is 30th November. So normally the due date of filing income tax return is what's the 31st of July. For everyone it is what? 31st of July. If you are an audit case or if you are a company, then it is 31st of October. Sir, what will happen if I don't file my income tax return? If you don't file your income tax return, then you will have to consequences for delay in filing of income tax return. If you file your income tax return late, then there are 2 consequences which are there. One, you will have to pay interest under section 234A and you will have to pay late fees under 234F. Interest is how much, sir? Interest is calculated at 1%. From which date? From the date succeeding, so commencing from the date immediately after the due date till the date of filing income tax return, meaning you should calculate this on monthly basis. So you should take per month or part thereof. For example, 31st July is the due date of filing return. I filed my return on 15th of September. So will I calculate the interest for 45 days? Answer is no. You will calculate interest for 2 months. Now 1 month of August and 1 month of September. Though it is only 15 days of September, even if it is 2 days of September, you will take it as full September month. Late fees will be 5,000 rupees for delay in filing of income tax return. But however, if your income is less than 5 lakh rupees, then for you the late fee is 1,000 rupees. Government may specify few people to file their income tax return. Now, sir, filing of loss return, is it mandatory? Yes. Even if you're earning any, if you're not earning income, if you have any losses during the year, then filing of loss return is important if you want to carry forward those losses. So, business loss, 35AD business loss, capital loss, short-term or long-term loss from owning and maintaining resource business, these losses cannot be carried forward unless until you file the loss return. Loss of house property and unabsorbed depreciation can always be carried forward. It does not matter whether you have filed the return or not. Section 139(3) does not prohibit for set off of losses. They only say that you cannot carry forward the losses if you file the return late. Sir, whatever previous year losses are there, can I carry forward them even if I don't file my current year return? Yes, you can always carry forward them. Belated return. Sir, I have not filed the return within the due date, that is 31st of July and 31st of October. Then what will happen, sir? You can file it later. What is the last date to file the belated return? If the return is not filed within the due date, then he can file a belated return before 3 months before the end of assessment year or before completion of assessment, whichever is earlier. So 3 months before end of assessment year. For example, for previous year 24-25, the assessment year is 25-26. When is the assessment year going to end? 31st of March 26. 3 months before this is 31st December 25. You should file your belated return by this date, or if assessment is completed before this date, then that date of assessment. Sir, what is the consequences of belated return? This is a theory question which they normally ask in the examination. You will have to pay a interest, you will have to pay late fees, and losses cannot be carried forwarded by you. Revised return. Sir, I have filed my return. Now I want to do some revision. I want to make some changes. Lawmaker says you can file something called as revised return. This revised return is required to be filed by you 3 months before the end of the assessment year or before completion of assessment, whichever is earlier. Then defective return or incomplete return. Normally what happens is, whatever income tax return is filed by you, the system is going to verify whether there are some mistakes in this return, whether there are some defects. That mistakes will be intimated to you, and they will give you an opportunity to rectify those defects within a period of 15 days. Okay, if the defect is not rectified by you within a period of 15 days, then it will be assumed that you have not filed your income tax return. Updated return. Updated return means what, sir? If you have not filed return for last 2 years or last 1 year, etc., if you have not filed return, I will give you an opportunity to file the return by you. Or if you have already filed the return for last 2 years or last 1 year, and now you want to increase your income, then I will give an option to you. Any person may furnish updated returns at any time within 24 months from the end of relevant assessment year. Now, the provisions of the updated return will not be applicable if the updated return, the new return which you are filing, is a loss return, meaning you cannot reduce your income. If you want to show profits, then only updated return provision will come. Then the updated return is decreasing your tax liability, or it is making sure that you get refund, etc., meaning updated return can be filed by you only if you want to pay more taxes, in simple words. How much is the tax which I have to pay under updated return, sir? Whatever tax is calculated by you, if you file updated return within 12 months from the end of the assessment year, then you will have to pay a penalty of 25% of tax. If you file updated return after 12 months, it is 50% of tax. Now, normally under income tax law, they follow a process called as self-assessment. Self-assessment is what, sir? You will have to assess your own income tax liability and pay it to the government. So whatever income tax you are paying is the income tax calculated by you yourself, and you are paying the income tax to the government. Now, whenever you are calculating income tax, you should always make sure that you also pay interest under 234A, interest under 234B. Interest under 234A for delay in filing of return, interest under 234B for not paying the advance tax properly. Now, the last point for the discussion is what, sir? TDS, TCS and advance tax. Advance tax is already discussed by us. TDS, TCS will see and conclude our marathon. Okay. Deduction of tax and advance tax, etc. Now, basic point before we start this discussion. Now, TDS is there. No, TDS is required to be deducted at the time of making the payment of that money or at the time of crediting the account of that pay, whichever is earlier. Now, normally it is at the time of paying the money or at the timing of crediting, whichever is earlier. But in these cases, TDS is required to be deducted only when you are paying this money. In case of salary, payout from employee provident fund, dividend, winning from lottery, betting, gambling, or amount from life insurance maturity amount which you are receiving, compensation for compulsory acquisition, and cash withdrawal more than 1 crore rupees in a year. Now, normally TDS will be deducted at the rate which is given, but however, whenever you are making a payment to a non-resident or foreign company, along with whatever rate is mentioned, you should also add surcharge and cess if it is applicable to the normal TDS rate. If the PAN is not given, no, normally PAN is required to be given if TDS is required to be deducted. If PAN is not given, then TDS will be deducted at a higher rate, whatever rate is specified, or 20%, whichever is higher. Now, if the amount is inclusive GST, TDS should be deducted on amount exclusive GST. Section 192. Section 192 talks about what, sir? TDS. Section 192 talks about TDS on salary. So, whatever salary an employer is receiving, on that salary, TDS is required to be deducted by the employer. The employee can be resident or non-resident. The TDS is required to be deducted, meaning that employer will have to compute the tax of that employee for the entire year and divide it by 12. That is the amount of TDS which is required to be deducted every month. Section 193, TDS on interest. So if you are receiving any interest, on that TDS will be deducted at the rate of 10%, at the rate of 10%, and TDS will not be deducted if the interest amount is less than 5,000 rupees. Then section 194A, TDS on interest other than interest on securities. If you are receiving any interest other than the interest on securities, meaning if you have given money to someone, loan to someone, then TDS is required to be deducted by any person other than individual and HUF, and individual and HUF will have to deduct TDS if their books of accounts are subject to audit. So how much is the TDS? The tax rate is 10%. Please note, for TDS rates, no, there is change in 4-5 rates. They have reduced from 5% to 2%, etc. Please go through my amendment video once, okay, for that rates change. So tax should be deducted at 10%. No TDS is required to be deducted if the TDS is if the interest amount is less than 5,000 rupees, and no TDS is required to be deducted if the payment is made if you are paying the interest to a bank account, or if you are paying the interest to partners. Partnership firm is paying the interest to partners. 194C, TDS on contract and subcontracts. So if you enter into contract with someone, then whatever payment you are making to that contractor or a subcontractor, for that TDS is required to be deducted. By whom, sir? Any person other than individual and HUF, and individual and HUF if their books of accounts are subject to audit. Sir, how much TDS is required to be deducted? Once again, I'll just take this call. Section 194C talks about what, sir? Section 194C talks about it talks about what, sir? Payment to contractors, subcontractors. So TDS is required to be deducted by a person, by any person other than individual and HUF, and individual and HUF will deduct the TDS if their books of accounts are subject to audit. Now, what is the rate of TDS, sir? 1% in case you are paying to an individual or HUF. If the contractor is an individual or HUF, if the contractor is any other person, then 2% is the rate of TDS. Now, when will TDS not be deducted? If you have entered into a single contract and the price of that contract is less than 30,000 rupees, and if you have entered into multiple contracts, then in a year, then the amount which you have paid, total amount is less than 1 lakh rupees. No TDS by an individual or an HUF if the contract is for personal purpose. If you're taking any work for personal purpose, no TDS is required to be deducted. And if you're taking services from a transporter who is having less than 10 trucks, then you don't have to deduct TDS. Then 194H, in case of commission, here the rate is changed. Okay, but you please rewatch that video. Commission 194H, for commission, the TDS is required to be deducted by any person other than individual and HUF, and individual and HUF has to deduct TDS if their books of accounts are subject to audit. The TDS is required to be deducted whenever they are paying commission to any person. The rate of TDS is 5%. Actually, now it is now in the sense, please note, in the middle of the year there is a change. So for half of the year it is 5%. After that it is 2%. So I am telling you, please watch that amendment video. So no TDS is required to be deducted if the commission is less than 15. Or if you're not watching amendment video, no problem, just watch, just see the amended notes which is there. So commission and brokerage is less than 15,000, TDS is not required to be deducted. 194 I is for rent. So if you have taken any land, building, plant, machinery on rent, TDS is required to be deducted by you. Who should deduct? Any person other than individual and HUF, and individual HUF has to deduct TDS if their books of accounts are subject to audit. The rate of TDS will be 2% in case of plant and machinery and 10% in case of land, building and furniture. No TDS is required to be deducted if the amount is less than 2,40,000 rupees. Now, rent means, okay, this stories they have given. No TDS is required to be deducted if the rent is what, sir? Less than 2,40,000 rupees in a year. 194 IB, if an individual and HUF are taking rent for house and rent or for their personal purpose, then they will have to deduct TDS at the rate what, sir? At the rate of 5%. Now it is changed to 2%. They'll have to deduct TDS at the rate of 2%. If the rent is less than 50,000 rupees, if the rent is more than 50,000 rupees. So TDS is required to be deducted at this rate. Please note which individual and HUF, if I am taking any house on rent for my personal purpose and the rent is more than 50,000 rupees, you should deduct TDS. When should you deduct? At the time when you are paying last month rent for the previous year, or when you are paying the rent for the last month of your tenancy, you should deduct the TDS. Please note this limit is 50,000 per month. Monthly rent is less than 50,000, no TDS. 194J professional charges. TDS on profession or technical. TDS on professional, TDS for professional technical services. So if you are taking any professional services, technical services, paying any remuneration or commission to the director, or any royalty or non-competing fees to any person, then TDS is required to be deducted by any person other than individual and HUF. Individual and HUF will have to deduct TDS if their books of accounts are subject to audit. The rate of TDS is what, sir? 10%. The rate of TDS will be 2% for technical services if you are paying the money to a BPO, call centers, etc., or if you are paying royalty for distribution of cinematographic films. Now please note the limit is 30,000 rupees for each item except director fees. For each item it is separate 30,000 rupees, and it is applicable. TDS is required to be deducted by individual and HUF also in first two cases. Other cases not required to be deducted. 194M, if I am taking any services from a contractor, if I am giving commission to some person, and if I am taking any professional services for my personal purpose by an individual and HUF who are not covered under 194C, H and J, then I will have to deduct TDS at 5% if the total value of the service is more than 50 lakh rupees in a year. 194N, if you withdraw cash from the bank more than 1 crore rupees in a year or more than 20 lakh rupees in a year, then TDS is required to be deducted at the rate of 2%. 5% will be the rate of TDS if it is a defaulter. So cash withdrawal is less than 1 crore in a year, TDS will not come. Only in case of defaulter, the limit of 20 lakhs and 1 crore is there. Now the concept of grossing up, meaning whenever the income is given, the net income is given to you, please add back the TDS amount and take the gross income for your computation. If you want to deduct the TDS at a lower rate, then please obtain a lower deduction certificate from the assessing officer. Then self-declaration you can give under 15G and 15H if no TDS is required to be deducted under these sections. Then TDS, whenever a TDS is deducted, that means you have received that income. TDS credit will always be available for you at the time when you are filing your income tax return. Now, what is the due date for depositing the TDS? For April to February, it is 7th of next month, and for TCS, it is 7th of next month. For the March month, for TDS, it is 30th April of next financial year, and 7th of April, it is for TCS, it is 7th of April of next financial year. Due date of TDS and TCS. Now, please note, this is the date when you are required to deposit or pay the taxes to the government, TDS, TCS. When should I file the TDS, TCS return? So for quarter ended April to June, 31st July. For quarter end, so meaning whenever the quarter is ending, last date of next quarter. So April to June, it is 31st July. July to September, it is 31st October. October to December, 31st January. And January to March, last month, it is 31st of May. Very important, 31st of May. However, July, TCS return which is there, no, TCS return is required to be done by 15th July, 15th October, 15th January and 15th May. So there are some returns which you have to file. TCS returns. For salary it is 194Q, and for 194, sorry, for salary it is 24Q, the TDS return name, and for any other cases it is 26Q, 24Q for salary, 26Q for other cases. All other things are not required for you. Consequences for failure to deduct tax. What will happen, sir? If you don't deduct the TCS, if a payee does not deduct the TCS, or after deducting does not pay to the government, then he will be called as assessee in default. He will be called as assessee in default, and he then the payer shall not be regarded as, okay, he will be called as assessee in default, and he will have to pay a penalty of 100% of tax amount. Now, when will you not be called as assessee in default? If the opposite person has filed his income tax return, and he has considered this income and also paid the tax on this amount. Interest liability, if you don't pay the TDS within the due date to the government, you will have to pay interest at 1% per month if you have deducted late. If you have paid late to the government, the interest is 1.5% per month or part thereof. Once you have deducted TDS, you will have to give something called as TDS certificate. For specified TDS, for specified people, the TDS rate will be, now who are the specified TDS, not relevant for this level. If the TDS rate will be what, sir? 5% or twice of the TDS amount, whichever is higher. Now, what is tax collected at source? Sir, tax collected at source, for liquor it is 1%, for 10 due leaves it is 5%. Meaning tax collected at source, what, sir? I am giving you services, I am giving you goods. At the time when I am supplying goods and services to you, I will collect extra money from you, which is called as TCS, tax collected at source. Alcohol, if you are purchasing 1%, 10 due leaves it is 5%, timber it is 2.5%, and then any other cases, one second. Okay, for alcoholic liquor for human consumption 1%, 10 due leaves it is 5%, timber 2.5%, forest produce except timber 2.5%, scrap and mineral oil it is 1%. Now, who should collect TCS on above items? Any person other than individual HUF, and individual HUF if their books of accounts are subject to audit. TCS will be collected for the TCS will be collected by any person other than a buyer who is using it for personal purpose. So if you are purchasing alcohol for your personal purpose, you will not have to pay TCS. Then if you have taken any place on lease or rent, parking lot or toll plaza or mine or quarry on lease or rent, then 2% TCS will be collected. Then if you are purchasing any car whose value is more than 10 lakh rupees, 1% TDS will be collected. Then if you are remitting more than 7 lakh rupees outside India, or you are going outside India for tour purpose, then TCS will be collected. If the amount is up to 7 lakhs, then it is 5%, more than 7 lakh 20%. So if you are going outside India and spending up to 7 lakh rupees, 5% TCS will be collected, and more than 7 lakhs 20% TCS will be collected. Now the rates have been reduced. Now if you sell goods, then 0.1% of consideration will be collected as TCS if it is more than 50 lakh rupees. Now this will be applicable only if the person who is involved over here has turnover more than 10 crores in the last year. Time limit for collection of TCS is what, sir? We have discussed anyways above. Interest is what, sir? Interest will be applicable if you have not collected and deposited to the government, 1% per month or part thereof. And if no PAN is given, then twice the rate or 20%, whichever is higher, will be the TCS rate. This is all about this fantastic topic. Which topics are called as income tax. I think I have tried to cover this almost in 8 hours time. Okay, I hope you enjoyed learning this with me, and this is complete exhaustive revision. Okay, this can be used for you for daily revision purpose, correct? Daily basis, if you want to revise while you are traveling, if you want to revise, definitely you can use this. All the very best for your examination. I hope you get great marks in your examination. Please stay tuned for the marathon of GST, and also the other topics such as I'll be doing RTPs, etc. You please stay tuned with the channel. The videos are going to come very soon. All the very best for your examination. Let me meet you in my next video. Until then, tada, bye bye, take care, enjoy, students. So we'll start our marathon on goods and services tax. Okay, so this point is of course same. 6 months before your examination, what is tax? The tax is an important source of revenue to the government. So this is same for direct tax and indirect taxes. There are two types of taxes. One is
Direct taxes, another one is indirect taxes. Direct taxes incident impact is on same person, whereas indirect taxes incident impact is on two separate or different person. Direct taxes are progressive in nature, indirect taxes are regressive in nature. So incident impact on same person means what, sir? The person who is earning the income and the person who is going to pay the taxes. So government is same person in case of direct taxes, whereas in case of indirect taxes, the person who is earning the income and the person who is going to pay the taxes will be two different. Sorry, in case of indirect taxes, incident impact is on two different person. For example, I sold some goods to you. What will happen when I made the sale? The incidence of the tax was created. However, the final impact of payment of the tax is on who? It is on you. You will have to pay it. That to me, I will pay it to government. Progressive in nature, regressive in nature means what? Progressive in nature means as and when your income is increasing, the amount of tax which you have to pay will also increase. Whereas regressive in nature means what, sir? Lawmaker says, I don't care how much you are earning. Irrespective of whatever you earn, the amount of tax which you have to pay will be same. For example, if a Parle-G biscuit is bought by you or a rich person, you will have to pay the same amount of tax on that particular biscuit. Example of direct tax is income tax, and example of indirect taxes is GST. Then features of indirect taxes. What are the features of indirect taxes, sir? Or what are the features of GST? Who's going to win the IPL this year? RCB will win, sir. R for important source of revenue to the government. C for taxes on commodities and services. B for shifting of burden. W for wider tax base. I for inflationary in nature, and for no perception of direct pinch. S for promotes social welfare, and R for it is regressive in nature. So there are how many features, sir? There are totally 8 features of indirect taxes. In one of the attempts, they had asked a question called as what are the features of GST? So what are the features of GST? It is an important source of revenue to the government. It is a tax on commodities and services. In GST, there is shifting of burden. In GST, there is a wider tax base. Here, it is inflationary in nature. Meaning what, sir? As and when because of GST, the cost of a product is also increasing, and there is no perception of direct pinch. When you purchase something, because you are getting a product, you will not feel like paying GST. I mean, you will feel that, okay, anyways, product cost is only 10 rupees, 15 rupees, etc. It promotes social welfare, and it is regressive in nature. So these are the different features of indirect tax laws. Then there are some constitutional provisions with respect to taxation. What are these constitutional provisions with respect to taxation, sir? Constitutional provision with respect to taxation says, Article 265 says you cannot levy any tax, you cannot collect any tax until you have given an authority, until there is an authority of law. And Article 245 says the power to make law for whole of India is with whom? Central government. And the power to make law for whole of the state or a part of the state is with whom, sir? State government. Now, there is an article called as Article 246. Article 246 has a schedule called as Schedule number 7. Schedule number 7 has 3 lists: union list, state list, concurrent list. Now, whatever is there in union list with respect to those items, only central government can make the law. Whatever is there in the state list with respect to those items, only state government can make the law. And whatever items or activities are listed in concurrent list with respect to the both central government and state government can jointly come together and make the law. Now see, your central list talks about income tax, excise duty, customs tax, etc. State list talks about tax on alcoholic liquor, sales tax, value added tax, tax on lottery betting, gambling, entertainment tax, etc. Concurrent list does not talk about any tax law. They just talk about the general law which are there in the country. Therefore, see, GST is a tax which is levied by both central government and state government. Both central government and state government are jointly come together and levying this called as GST. Now, there was not even a single point in our entire constitution which gave the power to both central government and state government to jointly come together and collect a tax. Because there was not even a single point. Hey, please stop. If I want to make any law in India, first I should take permission. If you want to go out of your house, you have to take permission. Yeah, correct, not correct. If you want to go out of your house, you have to take permission. Just like that, if you want to make any law in India, you have to take permission. Who will give the permission? That permission will be given by the Constitution of India. So in the Constitution, they have different articles, they have different provisions which is made, which is giving the power to government to make such kind of provision. But in our entire constitution, entire constitution, there was not even a single point which was telling that, hey, central government, hey, state government, you both come together and collect taxes. There were taxes which was collected only by central government. There were taxes collected only by state government. But the power was not given to both of them. The both of them did not have any power to collect tax simultaneously on a single activity. Therefore, an amendment had to be made in our constitution. An amendment was made in our constitution. In the Constitution of India only was amended, and they introduced an amendment act, Constitution's 101st Amendment Act. They introduced which act, sir? They introduced Constitution's 101st Amendment Act. Through this, they introduced they made various different changes in our constitutions. They introduced various different articles. Three such articles which are important from our GST point of view is Article 246A, Article 269A, Article 279A. I hope you know that normally if I want to get any act, what is the procedure? There will be a draft law. The draft law is nothing but a bill. A bill will be presented in the parliament, upper house, lower house of parliament. Once it is passed over there, then it will go to once it is upper house and lower house, then it will go to President of India. Once the President puts a signature on that bill, that becomes an act. So, for this Constitution's 101st Amendment Act 2016 to come into existence, they had presented a bill called as Constitution 122nd Amendment Bill. Please note these points are important from your MCQ point of view. So, Constitution 122nd Amendment Bill they presented, which was received, which was signed by the President of India, and it became what's it? Constitution's 101st Amendment Act. And in this, there were various different articles. Three such articles which are very important from our GST perspective is what, sir? Article 246A, Article 269A, and Article 279A. Most important is Article 279A. Now, what is Article 246A telling? Article 246A gave the power to both central government and state government to come together jointly. Article 246A gave the power to both central government and state government to jointly come together and make law in respect of goods and services. You please both come together and make a law with respect to goods and service tax. And this article also told that central government will have the exclusive power to make law in respect of interstate supply. When you make supply from one state to another state, etc., whenever it is an interstate supply, who has the exclusive power to make law? Only central government will have the exclusive power to make the law. Please note, what power did Article 246A give? Central government, state government, you both jointly come together and make law with respect to goods and service tax. And it also told that, hey, central government, you have the exclusive power to make law in respect of interstate supply. Now, what is GST, by the way? What do you mean by GST? Or what is the concept of GST? GST is a tax on value addition. Now, please note, there is a supply. Let us talk about the supply chain wherein there is a manufacturer, wholesaler, retailer, and final consumer. Manufacturer will sell the product to wholesaler, wholesaler will sell it to retailer, retailer will sell it to final consumer. Now, what happens in this scenario, sir? What happens in this scenario? In this scenario, what happens is, manufacturer, when he sells the product to whom, sir? Wholesaler, he will collect GST. He will collect GST. Similarly, wholesaler, when he sells the product to retailer, he will collect GST. Similarly, retailer, when he sells the product to final consumer, he will collect GST. At each and every stage, GST is collected. So, is anyone paying the GST from his own pocket? No. So, under GST, can I say the entire burden is on the final consumer? Why, sir? Because the final consumer is the person who is going to pay the final amount of GST. And is he collecting GST from someone else? No. So, at each and every stage, stage of supply chain, GST will be collected, and it will be collected from the next person. Now, if you see over here carefully, see, manufacturer, because he has manufactured the product, his value addition is from 0 to 100. It's his complete value addition because he has made the entire product. So, let us say the GST rate is 10%. So, on value addition, what is the first point telling? GST is a tax on value addition. Only if you add any extra value to the product, you will have to pay GST. If there is no extra value added, then you don't have to pay any taxes. So manufacturer, because he has manufactured the product, see, this mouse was not there at all. I got all the different ingredients in the sense all the different raw materials and made this mouse. So can I say from the base I started and made this mouse? So for a manufacturer, whatever cost is incurred by him is value addition only. On that, hey, tell me, what is 10% of 100? 10 rupees. Next, the product was sold to wholesaler. For wholesaler, the cost of the product will be 100 rupees. Now he made a value addition of 20. Wholesaler made a value addition of 20. Say this mouse, he put it a proper packing, he gives some good design, etc. Then he also added his own profit margin. Then he sold the product. And he what is his cost of goods sold now? 120 rupees. And he will collect GST of 12 rupees. So total sale price is 132 rupees. Now what lawmaker says under GST is, see wholesaler, you are liable to pay to the government how much? 12 rupees. You are liable to pay to the government 12 rupees, but at the time when you are paying 12 rupees to government, don't pay completely 12 rupees. Do you remember that you purchased the product from the manufacturer? At the time when you purchase the product from the manufacturer, you paid a GST of 10 rupees. You take the benefit of the GST. What is this point telling? You take the benefit of the GST which is paid by you on your purchases. This concept is called as input tax credit. Basically, under GST law, your sales are called as outward supply. Your purchases are called as inward supply. So whatever tax you pay on your sales is called as output tax. Similarly, whatever taxes you are paying on your purchase is called as input tax. Now, what are the lawmakers telling? Hey, wholesaler, at the time when you are liable to pay the tax on your outward supply, please take the benefit of the taxes which is paid by you on your inward. So when you are paying the tax on your sales, you please take the benefit of the taxes which is paid on your purchases and pay only the tax on differential amount. What is the differential amount? 2 rupees is a tax which he has to pay in cash. Now first point says GST is a tax on value addition. Can I say wholesaler has done a value addition of 20 rupees? Now 20 rupees ka 10% is how much? What is the GST rate? 10%. So what is 10% of 20 rupees? 2 rupees. So what is the value? What is the tax which is paying to the government? 2 rupees. So can I say he's paying tax on value addition only? Similarly, next case also, the retailer is making a value addition of 20 rupees. Now see how much tax is paying to the government in cash? 2 rupees. Why, sir? Because he's making a value addition of only 20 rupees. 10% of that is 2 rupees. Now GST eliminates cascading effect. Now under GST law, we don't have different types of tax. We have only one single type of tax called as GST. Now because of this reason, what will happen? There is no tax on tax. Before GST law, there were so many different types of taxes collected. On a single product, they used to collect VAT also, service tax also, luxury tax also, entertainment tax also. These are example of few taxes. There were so many different types of tax. On a single product, multiple types of taxes was collected before GST law. But however, this they have removed under GST law. Under GST law, there is no cascading effect. Under GST law, there is continuous tax credit available at each and every stage of supply chain. Hey, correct? No. See, whatever tax is paid by wholesaler, he is taking the benefit of that. Whatever tax is paid by the retailer, he is taking the benefit of that. So what is happening at each and every stage of supply chain? What is happening, sir? Continuous tax credit are given, and the burden is on final consumer. We saw that entire 14 rupees. See how much tax government is receiving. Can I say government is receiving 10 rupees from manufacturer, 2 rupees from wholesaler, and 2 rupees from retailer? So how much it is receiving, sir? 14 rupees. And entire 14 rupees is collected from whom? Final consumer. So the GST burden is on whom, sir? The final consumer. You guys are paying the taxes. GST is a consumption-based tax. So what is GST, sir? GST is a consumption-based tax. What do you mean by consumption-based tax? GST is required to be paid by that person who is consuming the product. It is required to be paid by that person where the goods or services are consumed. India follows dual GST model. There are different models of GST, Canadian model, Australian model, etc. But which model are we following, sir? We are following dual GST model. Sir, what do you mean by dual GST model? Dual GST model is a model wherein both central government and state government will jointly come together on a single transaction. Who will come? Central government also will come, state government also will come and collect the tax. Sir, how, sir? That we'll see in 2 minutes. Now, in question or in examination, they'll ask a question: GST is a consumption-based tax or GST? What principle we follow? Not consumption. GST. In what principle do we follow under GST law? We follow destination-based principle. Okay. The question which they ask is, what principle we do? We follow destination-based principle or origin-based principle or consumption-based principle or entry-based principle. So we follow which based principle, sir? Destination-based principle. Now, one more important point which we have to know. We'll just see the base of this. Actual discussion we will do under place of supply topic. One more point which we have to know is with respect to what, sir? Nature of supply. What is the supply's nature? The supply can have two nature. One is intrastate supply, another one is interstate supply. Supply can have two natures. One is called as interstate supply, intrastate supply. Interstate supply, intrastate supply. Sir, what is intrastate supply? If you are supplying any goods or services in the same state, same unit rate, it is called as intrastate supply. If you are supplying goods or services to two different states or two different union territory or one state and one union territory, then it is called as interstate supply. You cannot. There is something called as intrastate supply and interstate supply. Now, whenever you make an intrastate supply, if it is within the same state, you will have to pay a tax called as CGST and SGST. Whenever it is an inter-union territory supply, whenever it is an inter-union territory supply, you will have to pay a tax called as CGST and UTGST. Okay, not okay? If it is intrastate, CGST and SGST. If it is intra-union territory supply, CGST and UTGST. If I make supply between two different states, if I make supply between two different union territory, if I make supply from one state and one union territory, it will be called as interstate supply. I will have to pay a tax called as IGST. Now, whenever a supply is made, for example, you are going and purchasing something in McDonald's. You are going and purchasing something in some restaurant. You are going and purchasing something in some sari shop. You are going and purchasing something in Studio. You will go and purchase it over there. So they are going to sell the product. Now, supplier is in that place only. You have bought the product also at that place only. So what tax he will collect, sir? For him it is an intrastate supply. He will collect CGST and SGST. Okay, not okay. And if it is an interstate supply, if I supply a product from Chennai to Bangalore, Chennai to Mumbai, Bangalore to Coimbatore, then it will be interstate supply and I will collect IGST. Now, sir, you said if I make the supply within same union territory, it is CGST and UTGST. No, sir. Sir, what are union territories under? Hey, by the way, you should know full form of this. CGST is Central Goods and Services Tax. SGST is State Goods and Services Tax. UTGST is Union Territory Goods and Services Tax. IGST is Integrated Goods and Services Tax. Here they normally do go with them in life. It is not Inter Goods and Services Tax. Integrated Goods and Services Tax. If you write Inter Goods and Services, you will remain in Inter only. Now, union territory which is there, union territory. Sir, what do you mean by union territory? Basically in India, if you see as per our constitution, there are totally 8 union territories. How many union territories are there? 8 union territories. Which are these? Puducherry, Delhi, Jammu and Kashmir, Chandigarh, Lakshadweep, Andaman Nicobar, Diu Daman, Ladakh. So these are the different union territories which we have in India. However, there is a definition of state given. Which definition, sir? State definition is given, which says state includes union territory with legislature. If what is included in state, sir? If there is a union territory which has a separate legislature, that will also be called as state. So there are 3 union territories. A separate legislature means what, sir? If there is any union territory which can make their own government, then it will be called as state for the purpose of GST law. Normally, union territories cannot make the government. Normally, union territories don't have the power to make their own government, but there are 3 union territories where they can make their own government. Which are these 3 union territories? Puducherry, Delhi, Jammu and Kashmir. So in these 3 union territories, what will happen, sir? For the purpose of GST law, I will call them as state. So whenever a supply is made within Puducherry, within Jammu and Kashmir, within Delhi, I will have to pay a tax called as CGST and FGST. Puri not Puri. Now, what are the deficiencies of GST law, sir? Oh, sir. What are the deficiencies of GST law? Deficiencies of GST law are, meaning, why was there a, now 3 types of questions can be asked. What are the not deficiencies of GST law, sorry. What are the deficiencies of existing indirect tax law? Existing indirect tax law means the indirect tax law before GST law. Or why was there a need of GST in India? GST is a cure, third question. GST is a cure for all ills of existing indirect tax law. GST is a cure. Cure means cure. For all, a cure means what, sir? You are not feeling well, you will get cured. So GST is a cure for all the ills of existing indirect tax law, meaning pre-GST law. The deficiencies of existing indirect tax law, that is pre-GST law. So what are the deficiencies, sir? The deficiencies of existing indirect tax laws are certain transactions are taxed as both goods and services. Multiple taxes were collected by same state government. CENVAT. CENVAT means Central Value Added Tax. Central government was collecting VAT. CENVAT was not integrated with state level VAT. Tax on services was not integrated with tax on goods, and GST was not CGST was not VAT. So these are what? Deficiencies in pre-GST law. What was happening? Same transaction, they were only confused. They were only looking like Google. What they were confused, sir? They did not know whether I want to tax a product as goods or services. No discrimination was there. What is goods, what is services? They were taxing as both. Multiple taxes was collected by same state government. One single state government was collecting luxury tax, entertainment tax, sales tax, VAT. One single state government, at least in one state we should have one tax. But one state government only was collecting multiple types of tax. CENVAT, central government was also collecting VAT. A state government was collecting VAT. Central government told, why should I be behind? I will also collect VAT. So that VAT which central government was collecting, that was not integrated with state level VAT. And the tax on services was not integrated with tax on goods. Service tax was collected by central government. Tax on goods was collected by all the state government. They were not integrated at all. And CST is Central Sales Tax. That was not VAT. Meaning you could not take the benefit of CST. You could not take the benefit of CST at the time when you are selling the products in your own state. Sir, what are the advantages of GST law, sir? What are the advantages of GST law? GST removes cascading effect. Here there is very easy compliance provisions are there, and it creates uniform tax structure throughout India. It improves competitiveness, beneficial to exporters, etc. It is simple in administration. It better controls on leakage of tax, higher efficiency, boost Make in India initiative of government. It reduces the overall transparency and transparent. It is a transparent tax structure. Now, one more question which is asked from your basic concept. A basic concept from exam point of view, they will come for 3 marks. Basic concept is your first chapter. First chapter, one more question which they are asking is, what's are taxes which are subsumed with GST? Meaning, if I want to make something in my life, what I want to make? Say I want to make paneer butter masala. How will I make paneer butter masala? I take paneer, I'll take butter, I'll take masala, and I'll have to take onions, I'll have to take tomato, I'll have to make that puree first, then I'll have to put some masala, then some butter, etc. and I'll make that paneer. So what is happening? The final product which you are seeing has lot of different things in it. Yeah, correct? No, sambar rice, you know sambar rice, bisi bade baat sambar rice. What is there? That will have sambar also, that will have rice also, that will have dal also, ghee also, vegetables also. So all those products together, one single product is coming as sambar rice. Just like that, There were so many different types of taxes before GST law. VAT was there, service tax was there, entertainment tax, a luxury tax, excise duty, etc. All those taxes was eaten by a big, eaten by a big. And the final product which they got was what, sir? GST. Now, central government taxes which got merged, with GST are what? Kiki, taxes which got merged with GST are central excise duty. There are some central government taxes which got merged with GST. There are some state government taxes which got merged with GST. Which are those taxes? Central goods and service tax. Please note first. I see whatever questions I am telling you. Those are the only questions which will come in theory. In theory, because GST almost 12 marks theory question will come. Theory question means what, sir? They'll ask you what are the state taxes which got subsumed with GST. 2 marks question. You just have to write this. Nothing else, nothing extra you have to write. Just write these points which are there. Okay, theory questions, whatever I am telling, normally they will only come because they are only the theory questions which are there. So in first chapter, though, I only send the question paper to institution. Central taxes which got subsumed with GST. What are the central taxes which got subsumed with GST? Central excise duty, central sales tax, service tax, then CVD and special CVD, meaning countervailing duty and special countervailing duty, excise duty on medical and toilet preparations, all other surcharge and cess which was collected by central government on goods and services. Then there are state taxes which got merged with GST. Sir, which are the state taxes which got merged with GST, sir? VAT or sales tax, entertainment tax except those collected by local bodies, tax on lottery, betting, gambling is now merged with GST, purchase tax is merged with GST, luxury tax is merged with GST, and all other surcharge and cess collected by state government on supply of goods and services is also now merged with GST. Okay, not okay. Now, what are the taxes which did not get merged with GST, sir? Are there some taxes which did not get merged with GST? Yes. Excise duty on alcoholic liquor for human consumption. So, excise duty on whatever alcoholic liquor you are consuming, on that who is collecting tax? State government is also only collecting tax. Basic custom duty. Whenever you are importing, exporting something, they will collect custom duty. Basic custom duty is still with central government. Property tax and stamp duty. You have a property, you have to pay property tax, that is still collected. Electricity duty is still getting collected. Entertainment tax collected by local bodies is also still collected. Now there are some products on GST as well as pre-GST taxes are levied, on which GST as well as pre-GST taxes, on which GST can never be levied. What are those products? On tobacco and tobacco products, cigarette, pan masala, etc. GST is also collected and pre-GST taxes are also collected. Tobacco and tobacco products, GST as well as pre-GST taxes, central excise duties are collected. Indian high narcotic drugs, GST as well as pre-GST taxes, which is pre-GST state excise duties are collected. Alcoholic liquor for human consumption, on that GST will never be collected. On HP man, GST will be collected on a future date. A HP man GST, presently GST is not collected on HP man. Can it be collected on HP man, sir? Yes, on a future date as may be notified by government on recommendation of council. Sir, what is HP man? High speed diesel, petroleum fuel, motor spirit, aviation turbine fuel, and natural gas. On these 5 products, as on today, GST is not collected. But can it be collected? Yes, it will be collected in the future day as may be notified by government. Now, another theory question which is asked from the first topic is what's a GST Common Portal. What is GST Common Portal? What are the functions which you can perform in GST Common Portal? GST Common Portal is a website which is designed, developed and managed by a company called as GSTN. GSTN is a Section 8 company. It is a Section 8 company. What do you mean by GSTN? Goods and Services Tax Network. Goods and Service Tax Network. Now, how do I access it? What is this GST Common Portal? GST Common Portal is your gst.gov.in. So, this is this GST Common Portal. This is managed, designed and developed by whom, sir? It is designed and developed by a company called as GSTN. Now, if I want to access this using internet, if a taxpayer has to access it, he will access through internet. And if tax official, meaning department, government people, etc., they want to access, how will they access it? Intranet. Now, what are the different functions which I can perform in GST portal? What can I do under GST portal, sir? I can file my returns. I can apply for registration if I want to apply for registration. I can generate payment challans. It acts as a clearing house for settlement of IGST, and it also generates business intelligence. Now there is one more article called as Article 269A. Article 269A gave the power to central government to collect tax on interstate supply. Whenever there is an interstate supply, what tax will be collected? IGST will be collected. Who gave the power to? Who has the power to collect IGST? Central government gave the power to levy and collect. So who has the power, sir? Central government has the power to levy and collect taxes on IGST. Who gave this power to central government? Article 269A, and IGST will be collected. Now, whatever IGST is there, IGST will be divided between central government and consumer state. Please note, consumer state means what, sir? For example, I made supply from Tamil Nadu to Bangalore. Okay. Now, can I say IGST will be levied? Now, IGST will be divided between central government and state government. Which state government? Karnataka government or Tamil Nadu government? Which government will take IGST part? Wherever the goods are going. Wherever goods are going. See, central government will take the tax from you first. Then it will divide between 50% will be given to central government and 50% will go to consumer state. Consumer state means the place where the goods are going and getting consumed. Which state? Karnataka. Now comes the most important article. If there is a question on this chapter, normally 80% of the time question will be on Article 279A. Article 279A, GST Council. Article 279A talks about what, sir? GST Council. When the Constitution's 101st Amendment Act came into existence, it introduced an article called as Article 279A, which told that within 1 month of this act coming into existence, GST Council should be formed. President of India told that President of India has the power to form GST Council, and within 1 month of this act coming into existence, it should form. Now the act came into existence on 12th of September 2019, and the GST Council was constituted within 3 days, which is on 15th of September 2019. Now, GST Council consists of whom, sir? Who are there in GST Council? GST Council consists of a chairperson. Who is the chairperson of GST Council? The Finance Minister of India. GST Council will consist of other members. Members, who are the members, sir? The Central Union Minister means Central Minister who are in charge of Revenue and Finance. Then the Ministers of Finance or Taxation or any other person who is nominated by state government. Now, these members should elect one among them, should select or elect one among them to be called as vice chairperson. So if the chairperson is not there, if auntie is not there, someone else should represent them. So that will be vice chairperson. Now, this is one question which they ask: what are the recommendations given by GST Council? It will give the recommendations about what are the different types of taxes, surcharge, cess, which are required to be subsumed with GST. Then what are the different types of taxes, surcharge and cess which are not required to be subsumed with GST? GST rates for goods and services tax. What should be the GST rate for different types of? What are the goods and services on which I should not collect GST at all? Who will recommend all these things? Council will recommend. You remember this now, last year, December month, some tourism happened. If it is normal popcorn, 5% GST, caramel popcorn, 18% GST, something like this is happening in life. No. Who is doing what is tourism in life? GST Council. And who is head of GST Council? Finance Minister of India. Who is Finance Minister of India? Auntie. They will also tell us what are the different principles you should follow for determining the nature of supply. How will I come to know whether it is interstate supply or intrastate supply? How will I come to know, sir? They will tell you. Then, classification of goods and services. How will I classify different goods and services? We follow a system called as HSN. We'll study somewhere. Now, what is the threshold limit for taking registration? When should I take registration under GST law? That is also given by GST Council. Now, what is the date from which GST will be levied on HP ban? That also will be told by whom, sir? GST Council. There are 11 special category states. Now, what are the different special provisions which are required to be made for these states? That also will be recommended by GST Council. How many special category states are there? 11 special category states are there. In India, how many special category states are there? 11 special category states are there. Which are these 11 special category states? Yes, Nagaland, ma'am. Who Michael Jackson? Yes, Nagaland, ma'am. Who Michael Jackson? Okay, please note. S for Sikkim, N for Nagaland, M for Manipur, A for Assam, A for Arunachal Pradesh, M for Meghalaya, T for Tripura, H for Himachal Pradesh, U for Uttarakhand, M for Mizoram, J for Jammu and Kashmir. For these 11 states, later you will come to know in your life that there are some special provisions made, not for everyone, but for few states. Now, sir, how is a decision made? You told all this decision will be done by GST Council. How will they make the decision? By conducting meeting. So in the meeting, no, there should be minimum number of students who should be present. Then only that meeting will happen. That is called as quorum of the meeting. What is the quorum of GST Council meeting, sir? Half of total number of members. So whatever total members are there in GST Council, 50% of them should come in GST Council meeting. Then how is the decision passed? Very important MCQ question. How is the decision passed in GST Council, sir? They take majority. Majority means what, sir? Can I say it is more than 50%? It is majority. But they take, I will take majority. How will I calculate majority, sir? Not less than 3/4 of weighted votes of members present at voting. I'll take majority. How will I take majority? Of not less than 3/4 of weighted votes of members present at voting. Hey, they are telling I'll take at least 75%. 75% of what? Weighted votes. Of whom? Of those members who are present in the meeting and those members who are voting. For example, there are some students present in the classroom. Will I now, say if I want to ask something, will I go to the next class and ask that one? I will ask my students only who are present. Now in that also there are some students who are using phone. There are some students who are talking. They correct, not correct. So they will feel, hey, why should I answer such question? Correct. So just like this, here when I am taking, I should take the votes of those members who are present and replying me, and they are voting. And I should take what type of votes, sir? Weighted votes. Meaning, whoever is present and voting, I will assign weight to them, depending upon which category is falling. If he is a central government member, the weight will be 1/3, and state government member weight will be 2/3. This is all about your first chapter, introduction, GST introduction. Next is what, sir? Your supply under GST, most important chapter. 100% question will come for 5 marks. This is chapter which they will not test in final level. Therefore, 100% question will come under intermediate level. 100%. Pakka question will come. Theory question will come, or case study based question will come. Supply under GST. Under GST law, there are different, how many different types of taxes are there? CGST, SGST, IGST, UTGST, GST, compensation cess. Because we have so many different types of taxes, we also have so many different types of act. CGST Act, SGST Act, UTGST Act, IGST Act, GST Compensation to State Cess Act. Should I study all these tax in my life, sir? In your life too, you have to study, but at intermediate level, you have to study only CGST Act. 90% of your syllabus is what, sir? CGST Act. 10% of syllabus, which is one chapter called as 10% of syllabus, which is one chapter called as place of supply. There you will study IGST Act. Okay, not okay. IGST Act will be studied only in one chapter called as place of supply. Please note, whichever topic I am telling that they are going to ask in examination, they will pakka ask in examination. That is because that is how institute is designed. We know. Not teaching from yesterday. From GST started. No, I started teaching GST, so I know what institute does in life. Section 7. Section 7 is what, sir? Supply under GST. Section 7 of CGST Act 2017 says. Section 7 talks about supply under GST. Now CGST Act. What is most important act, sir? The most important act for us is CGST Act. Now, sir, you are starting directly from section 7, Yes. Sir, why, sir, 2 by you are doing? Who will teach us section 1, 2, 3? No one will teach. Section 1 talks about title extended commencement. What do you mean by title extended commencement? What is the title of this act? What is the title of this act? Central Goods, Central Goods and Services Tax Act. Then section 2 talks about normally any act. If you have seen section 2 will talk about what, sir? Definitions. What is the definition? Definition we'll see whenever we want to see. Then section 3 to 6 talks about who are the officers under GST law, what is their hierarchy, what are their roles and responsibilities, what are their powers. This is not there in your syllabus. You okay, not okay? So we are starting with whom, sir? Section 7. Hey, if I want to levy any tax, don't you think there should be some reason for levying the tax? You are walking on the road, I see Kiki, hey Kiki, you are looking very beautiful, please pay me beauty tax. Can I collect beauty tax from her? I cannot collect. Hey, this is Goobism. No, yeah, correct, not correct. I cannot do Goobism. I can do. We cannot collect taxes like this. Yeah, are you understand? Meaning what, sir? For every tax which is collected, there is a reason for collecting the tax. That reason is called as taxable event. Okay, what is taxable event? Taxable event is the reason because of which they are collecting the taxes. Meaning, if you are earning income, you will have to pay income tax. If you are importing anything from outside India, you will have to pay. You will have to pay feelings. If you are importing anything from Jiva, if you are he likes auntie Anta, she is telling about. Now, what are we discussing by the way? If I am importing any goods or services, importing any goods, I will have to pay custom duty, etc. So just like that, is there any reason because of which GST is collecting? Yes. What is that reason, sir? Supply of goods or services. Very important. What is the taxable event under GST law? Supply of goods or services or both. And where is the meaning of that supply given? Hey, if I want to know when GST is required to be paid, don't you think I will have to know the meaning of that particular thing? Hey, when is GST required to be paid? Whenever you make a supply of goods or services or more. So if I want to know what is supply, I will have to go to whom? Section 7. Section 7 has so many different things in its life. We'll see one by one everything. Section 7, subsection 1, clause A. Section 7, subsection 1, clause A says, if you want to call something as a supply as per section 7, subsection 1, clause A, then that supply should be of goods and services. It says what, sir? Supply includes all the different forms of supply of goods or services or both, such as sale, transfer, barter, exchange, lease, license, rental, disposal, made or agreed to be made by a person for a consideration in the course or furtherance of business. A supply should be of goods and services. What is this point telling? If you want to call something as a supply as per section 7, subsection 1, clause A, 5 things should be there in life. What are these 5 things? That supply should be of goods and services. That supply should be made or agreed to be made. That supply should be for a consideration. That supply should be by a person, and it should be in the course or furtherance of business. Only if these all the 5 elements are getting satisfied, I will call a particular thing as supply as per section 7, subsection 1, clause A. So that supply should be of what, sir? Goods and services. That supply should be made or agreed to be made. It should be by a person for a consideration in the course or furtherance of business. Sir, what do you mean by goods, sir? What do you mean by services? Goods means what? Goods means every kind of movable property other than money and securities. Hey, goods means what? Every kind of movable, whatever is movable in your life is called as goods other than money and securities, but includes actionable claims, growing crops, things attached to or forming part of land, which can be further subscribed. Hey, whatever is movable, hey, am I movable? Movable, phone movable, a mouse movable, everything. Whatever is movable on this earth is goods. Hey, are you goods? Hey, are we movable? Hey, normally no one is buying and selling us, but are we movable? The definition says what? Every kind of movable property is. Hey, every kind of movable property is goods other than money and securities. Money is there, no money. I don't have right now. Money is there. Money is there, no, that money and securities which is there, that is not treated as goods. But goods will include actionable claims. Goods will include growing crops, things attached to or forming part of land which can be further supplied. Hey, tell me, can I say growing crops are goods? Can I say this tree, mango tree? Yeah, mango tree which is there, this is goods. So these mangoes, are they goods? What about mango leaves? Are they goods? Outside house you put mango leaves, are they goods? What about this mango tree which is attached to land? Is it goods? Lawmakers are telling in Hyderabad they are cutting entire forest. Full forest demolition they are doing. What will they do with the tree? They'll do some good in life. Correct? No. So the tree is also treated as goods. Hey, what is goods, sir? Goods includes accidental claims, growing crops, things attached to or forming part of land, which can be further supplied. Hey, then services meaning what, sir? Services means anything other than goods, money, and services. What do you mean by the services, sir? Anything which is not goods is service. Anything which is not goods is service. And similarly, money and securities are also not service. Money and securities, they are neither goods nor service. Services means anything other than goods. For example, whatever I am doing right now, what is it? Service. I go to a hotel, I stay over there. What are they doing? Are they supplying any goods to me? No, they are supplying services. I go outside, I do like this, auto comes and stands. What is that? Service. Hey, correct? No, he is dropping from one place to another place. Hey, go away. Now, supply should be of what, sir? Goods and services. Condition number 1. Supply should be made or agreed to be made. Meaning what, sir? Now, say Dharani is coming to Priya Sari. She is purchasing a sari. I made the supply to her. Supply can be made. Sir, your name, sir? Ruby. Rubin. Rubin came to Priya Sarees. He told, sir, oh sir, I am going to get married after 3 months. Right after my exam, my engagement is there, and after 1 month, I am going to do Maja in life. I mean, I am going to get married, sir. Now, what will happen? He told me, sir, I want you to supply. What will happen? Now, he told me, sir, I want you to please come and supply sarees in my marriage, sir. I said, okay. I agreed to make a supply on a future date. That is also treated as supply can be made or agreed to be made. Supply should be by a person. Person means what, sir? Individual, HUF, program, AOP, BOI, etc. And supply should be for a consideration. Mouse is there. This mouse I am giving for free. Is it a supply? Don't touch anything. It will get disconnected. Keep trying. Is it a supply? Yeah, I gave the mouse to him. Is it a supply? Hey, tell me, is it a supply? Yes, sir, it is a supply. Supply should be, hey, is it a supply? No, it is not a supply. I gave it for free. Though there was a goods involved, though there is a supply which is made by me, though I gave it to him, though it is by a person, was it for a consideration? Ille. So is it a supply? No, sir. It should be for a consideration. Sir, what do you mean by consideration? Consideration includes payment in money or otherwise by the recipient or any other person, but it shall not include subsidy given by central government or state government. Okay, what do you mean by consideration? Consideration includes, meaning whatever you generally understand by the word consideration is a consideration. Hey, what do you understand by consideration? Something in return, could prove you something like this, you understand? Correct. No, that is consideration. Apart from that, consideration will include payment in money or otherwise by the recipient or any other person, but it shall not include the subsidy given by central government or state government. Similarly, consideration will include monetary value of any act or forbearance by the recipient or any other person, but it shall not include the subsidy given by central government or state government. Please note. Consideration can be paid by the recipient or any other person. For example, you guys are coming and attending the classes. Okay, let us say this is actual class where you have paid fees. Now, what is the recipient definition telling? We'll see. Recipient definition says what, sir? Recipient, if there is a consideration for some transaction, some transaction, then for both goods and services, the person who is paying such consideration is treated as recipient. A puri lesson. For example, you guys have come to the class, you have paid some fees of say 5,000 rupees and come to the class. Now, have you paid fees, sir? So can I say there is a transaction where there is a consideration involved? In case of a transaction where consideration is involved, the recipient will be the person who has paid the consideration. Now let us say Dharani has paid her own fees. Who is a recipient over here? Dharani. In case of Vigneshwaraya Vasudevaya, fees is paid by Vignesh. Who is recipient, sir? Though she is attending the class, who is the recipient? Vignesh is the recipient. Hey, I hope you are understanding. If there is a consideration involved, who is the recipient, sir? The person who is paying such consideration. Sir, what if consideration is not there? Right now, the classes which are happening, they are completely for free. So, consideration is not there. If consideration is not there, then what will happen, sir? Recipient will be the person. In case of goods, the recipient will be the person to whom the goods are delivered. Tell me to whom the goods was given by me. Aditya. So Aditya is the recipient. Whom am I giving the services to? You all guys. So you are all the recipient. So recipient means what, sir? If consideration is there, the person who is paying the consideration. If consideration is not there, for goods, the person to whom the goods are delivered, and for services, the person to whom the services are rendered will be treated as recipient. Now we'll come back to consideration. Now consideration can be paid by recipient or any other person. Now please note, recipient means the person who is actually paying the money if money is there, or the person who is getting the benefit if no money is there. For example, I sold goods to Karina. Okay, I sold goods to Karina worth rupees 10 lakhs. Karina sold goods to Nayantara worth rupees 8 lakhs. Now, Karina paid me 2 lakhs and she told Nayantara will pay balance 8 lakhs. Hey, do I know who is Nayantara? No, she is Karina's customer. Now tell me, recipient paid me only. For me, who is the recipient? The person to whom I have supplied the goods, Karina. Karina paid me how much? 2 lakh rupees. But some other person paid me how much? 8 lakh rupees. So what is the total consideration for this supply? 10 lakh rupees. Consideration can be paid by recipient or any other person. The consideration can be in money or otherwise also. I purchased a new phone by giving cash of 20,000 and old phone. So consideration can be payment in money or otherwise by the recipient or another person, but it shall not include the subsidy. Whatever type of subsidy central government or state government is giving, that shall not be taken as consideration. It has a proviso, very important proviso. If there is any refundable deposits, if there is what, sir? If there is any refundable deposits, that refundable deposit will not be regarded as consideration unless they are adjusted as consideration. Sir, what do you mean by this? If there is any refundable deposits, that refundable deposits will not be treated as consideration unless they are adjusted as consideration. Sir, puri lesson. You take PG, hostel, etc. on rent. If you take any house on rent, what will happen if you take a house on rent? You will have to pay some rental advance or deposits, which they will give it back to you once you vacate the property. So that is called as what, sir? Refundable deposits. Refundable deposits will not be treated as consideration. Now, I took a house on rent. I paid an advance rental deposits of 5 lakh rupees. Can I say this 5 lakh rupees they will give it back to me? But what happened was, at the time of vacating the property, I did not pay 2 months rent. So they reduced 1 lakh rupees and paid only 4 lakh rupees. Now, whatever 1 lakh rupees they kept it for themselves, can I call it as consideration? Yes, that will be consideration. See, refundable deposits will not be treated as consideration unless they are adjusted as consideration. If they are adjusted as consideration, it will be treated as consideration. A, have we understood the meaning of all the different points? And that supply should be in the course or furtherance of business. So, if I am a sari businessman, if I sell sari only, then it will be a supply. If I sell mobile phone, it is not a supply for me because it is not in the course or furtherance of business. Then section 7, subsection 1, clause B. Very important clause. Section 7, subsection 1, clause B. Importation of service is an important topic. Section 7, subsection 1, clause B says supply includes importation of services for a consideration. Whether you have imported the services for business purpose. If you import any services for a consideration. If you import any services, Kiki, for a consideration. Now I don't care for what purpose you are importing. Whether you are importing for business purpose or personal purpose, I will call it as supply. Sir, what do you mean by importation of services, sir? I will call a particular transaction as an importation of services if the person who is supplying the services is outside India, the person who is receiving the services is in India, and the place where the services are supplied is also in India. If these three conditions are satisfied, only then I will call a transaction as importation of services. Supplier should be outside India, recipient should be in India, and the place of supply should be in India. Okay, not okay. Now, what are they telling? If I import any services for a consideration, whether you are importing for your business purpose or for your personal purpose, it does not matter. It will be called as Supply. If it is supply, then what will happen, sir? If it is a supply, then what will happen? I'll have to pay GST. For example, I want to start sari business in London. So I take services from an advocate in London, asking him, sir, tell me what are the different types of laws which will be applicable to me if I start a sari business in London. So he gives a list of different laws and he charges $1,000. Can I say I have taken the services from outside India? Now, where is the supplier? Supplier is located outside India. Recipient is located in India, and the place where he has supplied the services is also in India. All the three conditions are satisfying. So, can I call this as importation of services? Now, I should see whether it was for consideration. Is it for consideration? Yes. Therefore, it will be treated as supply. I don't care whether it is imported for my business purpose or personal purpose. It will be called as supply. For my daughter's education, I am taking services from outside India. Daughter's education, is it supply? Daughter's education, is it supply, sir? Though it is daughter's education, personal purpose, I am getting services from outside India, it will be treated as supply. Section 7, subsection 1, class C. Very important. Activities listed in schedule 1. Again, I told you theory questions, all these are theory points. Activities listed or specified in schedule 1 will be treated as supply even if there is no. There are some activities which are listed in schedule 1. These activities which are listed in schedule 1 will be treated as supply even if there is no consideration. What are those activities? Permanent transfer or disposal of business asset provided input tax has been availed on such businesses. So if there is any business asset which you are permanently transferring to someone, permanently disposing of, and if that is permanently transferred and disposed of without any consideration, and if you have taken input tax credit on such business asset, then I will call it as supply. Please note, I'll repeat once again. I am permanently disposing of, permanently transferring my business asset. On this business asset I had, now I should have availed input tax credit. Even though I am not receiving any consideration for this, it will be treated as supply. For example, I had purchased some computer items. On these computer items, I had taken input tax credit. Can I say computer is my business asset? Okay. On this computer, I had taken input tax credit. Now, I gave these computers to a government school for free without any consideration. Lawmaker says, Dilip, though you gave it for free, I will call it as supply and you will have to pay GST. Government will treat it as supply and I will have to pay GST on that. What is this point telling? Permanent transfer or disposal of business asset on which input tax credit has been availed. Supply of goods or services or both. Supply of goods or services or both between related person or between distinct person under section 25.4 or 25.5 if it is made in the course or furtherance of business. If I am supplying anything to my related person, if I am supplying anything to my related person, and if I am supplying anything to my distinct person, referred in section 25.4 or 25.5, it will be treated as supply even if I don't receive any consideration if it is made in the course or furtherance of business. What business I am into? Sari business. I am into sari business. I give saris to whom, sir? I give sari to my wife. Can I charge any money from her? No. So I have given sari to my wife without any consideration. I made a supply to my related person without any consideration. It is treated as supply. I will have to pay GST. Now, though she received it for free, I will have to pay GST. Supply of goods by between related person or between distinct person referred to in 25.4 or 25.5. So, what do you mean by distinct person? If I have a branch which is registered, Priya Saris has 5 branches in Tamil Nadu. All the 5 branches are registered under GST law. All these 5 branches will be called as different person. Though the owner is same, branches will be called as different person in the eyes of GST. I have a branch in Chennai. I have a branch in Bangalore. They will be called as distinct person. A first example, I took branches in the same state but registered separately. Branches I have all over India, they are all registered separately. They are all called as different person in the eyes of law. Similarly, if I have an establishment, where is this meaning given? 25.4 and 25.5. What is 25.4 telling? A person who has obtained more than one registration in a state or union territory, or in more than one state or more than one union territory, each of those registrations will be called as different person. 25(5) says, if you have a establishment which is registered in a state and also have another establishment in another state, even though that other establishment is not registered, you both will be called as. So for example, I have an establishment, I have Priya Sarees in Chennai, which is registered. I have Priya Sarees in Bangalore also, but it is not registered. I make supply of 100 sarees free of cost to from Bangalore to Chennai. Ulta, from Chennai to Bangalore. Lawmakers are telling it is a supply. Okay. Who is telling 25(5)? Though I don't charge anything, it will be called as supply. We are studying about activities specified in Schedule 1. List of activities which are specified in Schedule 1 are supply even if there is no consideration. Now there is a proviso. What is a proviso telling, sir? Provided that, very important proviso, if you are giving any gift by, if any gift is given by employer to employee, and if the value of that gift is not exceeding 50,000 per employee per financial year in a year, then it will not be called as supply. Can I say if I give gift to someone, that means it is given for free? If I am giving a gift to you and if the value of the gift is not more than 50,000 rupees, if you are my employee and if the value of the gift is not more than 50,000 per employee per annum, not a supply. I gave a gift to you worth rupees 55,000. Adi is my employee. I gave a gift to Adi worth rupees 55,000. Supply, not a supply. Full value is taken as supply is 55,000. Now please note, very important is related person. Who is a related person? In related person, there are many different categories. One of the person is my relative. Who is my relative? Normally, who is my relative? Income tax was something we studied, but here it is not the same. Who is my relative, sir? My relative. My relative. Can I say my wife is my relative? My children are my relative. So similarly, who are my relative? Lawmaker says your spouse and children are your relative. Your father, mother, brother, sister are your relative only if they are dependent on you. If they are not dependent on you, they are not relative. Mistake will happen. In examination, 2 times I have asked questions, but every time mistake is done by students. My spouse and my children, whether they are dependent or not, they are my relative. Other people will be my relative only if they are dependent. Next, para 3 says, if any goods, this point is applicable only for goods. If there is any goods supplied by the principal to his agent, or agent is supplying any goods to the principal free of cost. If there is any goods supplied by principal to his agent or vice versa, wherein the agent is undertaking to further supply those goods on behalf of principal in his own name, then whatever is supplied free of cost by principal to agent will be called as supply. Sir, Purile. Now please note, Priya Sarees has Karina Sarees as its agent. Priya Sarees is in Chennai, Karina Sarees is in Mumbai. And Priya Sarees is acting as what, sir? Principal. Karina Sarees is acting as agent of Priya Sarees. Now I told Karina to supply sarees in Mumbai. Karina told, sir, yes sir, I will supply sarees in Mumbai, but give me some sarees. So I gave 1,000 sarees to Karina free of cost. I did not charge any money. Now lawmakers are telling, Dilip, whatever you have supplied to Karina for free, this will be called as supply. When will this be called as supply? If Karina, at the time when she is selling the sarees to different customers, gives the invoices to these customers in the name of Karina, then it will be called as supply. What will be called as supply? Whatever I supply to her for free. Sir, what if you are directly giving? Sir, what if you are directly giving the invoices to customers? Lawmakers are telling whatever you gave to Karina is not a supply because you are directly giving the invoice to customers. Then one more important one, importation of services. Please note, first chapter, supply topic, examination, 5 marks question will come. Important topic. Don't miss this chapter. And I will tell you, GST is very easy to score. Okay. When you are reading the question paper, start reading from GST. You will get confidence. You will come to know. Okay. What is this, sir? Importation of services by a person from his related person outside India or from his another establishment outside India if it is made in the course or furtherance of. If I am importing any services from, if I am a person, if I am importing any services from outside India, from whom, sir? My related person or from my another establishment located outside India. I have a branch outside India. From them, I am taking some services. Why am I taking the services? For my business purpose. Then lawmakers are telling, though you have taken the services for free, I will call it as a supply and you will have to pay GST. Importation of services by a person from his related person located outside India, from his another establishment located outside India, if it is made in the course of furtherance of business, it will be treated as supply. Section 7.1 AA, use the section. Section 7.1 AA says, if there is any activity or transaction undertaken by an association, by a person other than individual, and they are giving services to their own members for a consideration, it will be treated as supply. 7.2, important section. 7.2 gives the list of services. 7.2 says, there are some transactions, there are some activities which will neither be treated as goods nor be treated as services. If you supply few activities listed in schedule number 3 or few activities supplied by government, they will neither be treated as supply of goods nor be treated as supply of services. Which are those activities, sir? Activities performed by panchayat and municipality. The municipality over here does lot of different activities, lays roads, etc. If there is any problem near your house, they will come and repair that problem. So whatever activities are performed by municipality or panchayat, that will neither be treated as supply of goods nor be treated as supply of services. Meaning I am not going to call it as supply. If there is not a supply, no GST will come. Similarly, grant of liquor license by state government. If I want to start a liquor business in any state, I will have to take permission from state government. So if any state government is giving me liquor license, it is not a supply. Most important is what, sir? Activities listed in schedule number 3. Schedule number 3 gives a list of different activities which are not supply at all. Please note, here all the conditions, there will be consideration, there will be service involved, there will be goods involved, but still I will not call them as supply. Services by employee to employer in the course of, if any services are given by employees to employer, I am giving some consideration, no salary I am giving, but still it is not a supply. Services by employee to employer in the course of employment. If it is not in the course of employment, say for example, Aditya, apart from being an employee of Priya Studies, he is also a chartered accountant. I am asking him to file my income tax return. I have so many different types of employees, but one employee who is a chartered accountant, I am asking him to do what? File my income tax return. Now tell me, whatever services he is giving of filing income tax return, is it a supply? Yes, it is a supply because it is not in the course of employment. In the course of employment, what will you do? Whenever a customer is coming, welcome the customer. Hello, madam. Hello, sir. Please come inside. What type of saree you want? Silk saree, cotton saree, self-wash saree. He gives so different sarees to the customer. Correct. This services which he gave is not in the course of employment. If he is selling saree, it is in the course of employment. Okay, not okay? So services given by employee to the employee in the course of employment is not a supply. If it is not in the course of employment, supply. Services by court or tribunal. You have Supreme Court, High Court, District Court, etc. They are listening to your cases. They are giving judgment. So they will collect something from you called as hearing fees. Okay, because they are hearing your case. So for that, should I pay GST? No. Services given by court or tribunal, National Company Law Tribunal, Income Tax Appellate Tribunal, etc. These people, they give us services of listening to our case. Should I pay GST for that services which is taken by them? No. Services by MLA, MP, President, Prime Minister, Chairperson of GST Council, etc. Please note, Prime Minister of India is not government employee. The President of India is not government employee. These people are giving services to us. Local MLA is not a government employee, but still they are getting some money for the services which they are giving it to us. It is not a supply. No GST is applicable. Services by way of funeral, burial, cremation, mortuary, including transportation of deceased. Services by way of funeral, burial, cremation, mortuary, including transportation of deceased. Meaning what, sir? Dead body related services. It can be funeral or burial services, cremation or cold storage for dead body, mortuary services, etc., including the transportation of deceased person, dead bodies, etc. It is not a supply. Sale of land, and sale of building subject to para 5 of schedule 2. If you are selling any land, GST is never applicable. If you are selling any land, GST is never applicable. And if you are selling any building, that time also GST will not apply. But you should satisfy the condition given in schedule 2. What is the condition given in schedule 2? They say if the consideration for the sale of building is received before completion certificate or before first occupancy, then I will call it as a supply. Meaning, if you have purchased the building under constructed building, see, normally once the construction is over, they are required to get something called as completion certificate. If you pay the money for that building before completion certificate or before first occupancy, then I will not call it as supply. But if I pay the money for that building after completion certificate or after first occupancy, then it is not a supply. If it is before, it is a supply. After, it is not a supply. Then actionable claims except specified actionable claims. If I am buying and selling actionable claims, what are actionable claims? I am transferring my debt to someone, or lottery betting is an actionable claims, etc. So if I am doing any transaction in actionable claims, normally it is not a supply. However, there are some specified actionable claims. If you deal in these specified actionable claims, I will call it as supply. Which are these specified actionable claims, sir? Lottery, betting, gambling, online money games, casino, and horse racing. So if you're dealing in any of these actionable claims, I will call it as supply, and GST will be applicable. If there is any actionable claims other than that, this, then not a supply at all, no GST. Hey, which are the actionable claims in which if I do transaction, it is a supply? Lottery, betting, gambling, online money games, casino, and horse race. Now there is a section called as 7(1) capital A. Basically what this section does is, it by itself does not have that big importance, but this section will tell you whether a particular transaction is called as supply of goods or supply of services. Now what is this section telling? There is a schedule called as schedule number 2. Whatever is there in schedule number 2, they are all supply. They are all supply. But I will tell you, for your clarification purpose, I will tell you whether it is supply of goods or supply of services. Very simple. If you know the definition of goods and services, you will be able to know. If you are transferring title in goods, meaning if the ownership of goods is transferred, it is supply of goods. If you are transferring title of goods under hire purchase system, install and purchase system, where the ownership is getting transferred on a future date, then also the transaction of hire purchase system is called as supply of goods. If you are transferring only right in goods, I am giving my mobile phone to you for 1 day to use. Ownership is not transferred, only possession is transferred for 1 day. It is supply of services. If I am giving any land on lease license, supply of services. If I am doing any treatment or process on goods belonging to another person, supply of services. A tailor, goods belongs to you, he is doing treatment, bike, car modification, etc. Then if goods belonging to business is disposed of under the direction of the owner of the business. Say for example, there are some sarees which are available, I am giving it to my employees. It is a supply of goods. Goods which are business, say I have a car, Rolls Royce car in my business. One of my employees told, sir, can I use it for 1 day for my marriage? I said, okay. Supply of services. Because he is using only for 1 day. Then, now, goods forming part of, this is important. Now, what happens is when I am closing my business, I will have some stock of goods available. Is there a possibility that all the goods will be sold? There will always remain some goods available with me. At the time when I am closing the business, these goods which are available with me will by default be deemed as supply. Though you have actually not sold it to anyone, they will by default be deemed as supply, and it will be deemed as what? The supply of goods. Unless until, in 2 cases, it will not be deemed as supply. When, sir? if you are transferring your business to someone else as a going concern, or if you are not doing the business anymore, but your legal representative are doing the business, or your representative are doing the business. If you rent any property, construct any property, or temporary transfer of intellectual property right, development of information technology, software, etc., or if you are agreeing to tolerate an act, etc., all this transaction will be treated as supply of services. Agreeing to tolerate an act is important. What is this agreeing to tolerate an act, sir? Now you are not liking my class, but still you are coming and sitting in my class. You are tolerating me. You are giving services to me. You are giving services to me. Now there is a school right next to us. There is a school right next to us. Because of that school, they have put some speakers. Okay. Now I am teaching. Normally 7:30 we start the classes over here. This school is starting at 9 o'clock. As soon as, we are teaching, we are in middle of our discussion, and suddenly they play Jana Gana Mana. We have to stand up, everyone. They are disturbing us. No, correct, not correct. We are standing. They are disturbing us. I went and gave a complaint. For that. They told, sir, it is a school. We will have to play this music and all, whatever we have to play. I said, but we are getting disturbed. Now they told, okay, sir, you do one thing. Every month I'll pay you 50,000 for tolerating this. I said, okay. I am tolerating something for which I am getting money. That is what, sir? Supply of services. Works contract services, supply of services, and also if you go to a restaurant, you are having food, etc. That is also treated as supply of services by restaurant. This is all about your section 7. Next is what's the section 8? Section 8 talks about taxability of composite and mixed supply. It talks about what, sir? Taxability of composite and mixed supply. Now there are two types of supply called as composite supply and mixed supply. Composite supply means what, sir? Composite supply. Mixed supply means mixed supply. Composite supply means if you are supplying 2 or more taxable goods and services which are naturally bundled in ordinary course of business. If you are supplying 2 or more taxable goods and services which are naturally bundled in ordinary course of business, they are supplied in conjunction with another. And one among them is principal supply or main supply. Then that particular supply I will call as composite supply. And if it is a composite supply, you will have to pay tax on that composite supply at what rate, sir? Rate of principal supply. For example, I purchased a mobile phone. When I purchase a mobile phone, don't you think they will also give charger? Can I purchase charger separately also? Yes. But did I purchase this mobile phone because I like the charger? But when I purchase the mobile phone, they also give the charger. No? So this is a type of composite supply, wherein the principal supply is mobile phone, charger is just a ancillary supply to the principal supply. Okay, not okay. Now, when I am purchasing a mobile phone, what is the GST rate will I apply? Phone GST rate or charger GST rate? Because they are coming as a single product to me. Correct? In one box only they are giving everything. What will the GST I will apply, sir? Because it is a composite supply, mobile here is the main supply. I will apply the GST rate of principal supply. Okay. So what is mixed supply? Mixed supply is supply of 2 or more individual goods and services. There are 2 or more separate products which are supplied to me together. Supply of 2 or more individual goods and services which are not naturally bundled in ordinary course of business, but they are supplied in conjunction with another, and they are supplied for a single price, and it is not a composite supply. Then I will call it as mixed supply. If it is a mixed supply, we will tax it at what rate, sir? Highest rate. In that mixture, whichever product has the highest rate, I will tax it at that rate. A composite suppliers are taxed at rate of principal supply. Mixed supply are taxed at highest rate. For example, I am purchasing toothpaste. I got a brush free. Mixed or composite? Mixed, because toothpaste with brush normally no one sells, but there are only some companies who are selling like that. So it is mixed supply. I will apply highest rate. Which is the product which is highest rate, sir? Toothpaste. I am purchasing specs. I am getting specs box free. Composite supply. I will apply the rate of specs or box. What is this? I purchased Maggie. I got spoon free.
Composite supply, mixed supply. Mixed supply, do I need Maggie to eat? Sorry, do I need spoon to eat Maggie? I need spoon, but is it like there are some companies only they supply the spoons, etc. I purchased washing powder, I got bucket free. Mixed supply. Section 780, yes. Any question? Now see, what type of questions will be asked? Whatever you have seen, two topics we have seen. Basics chapter and we have seen supply topic. Do you think even one single practical questions will be asked related to some? No. What type of questions will be asked? First two chapters, either theory question or case study based question. Now, what are the case study? Like we discussed now, this composite supply, mixed supply, or whatever. I mean, of course, we have not taken all this example. I discussed one case wherein he, as a chartered accountant, is filing my income tax return. It's a case study. They will give a case study, some story like this they will give, and based on that story, you should give your answer. Next is what, sir? Charge under GST. By itself, charge is not important. By itself, this chapter is not important because this is just telling that you have to pay GST. In this, there are two sections. Section 9 subsection 5, most important section. Section 9 subsection 3. In this topic, section charge under GST, there are two sections. 9.5 most important and 9.3, the section number is not important, but there is a notification attached to that, and that notification is important. Charge under GST. Charging section of CGST Act is what, sir? Section 9. Charging section of SGST Act is Section 9 of SGST Act. Charging section of UTGST Act is Section 7 of UTGST Act. Charging section of IGST Act is Section 5 of IGST Act. Now, we are going to study Section 9 of CGST Act. Same provisions are there under different acts. Anyways, these two acts are not in our syllabus also. Under GST law, sales are called as Kiki. Outward supply, purchases are called as inward supply. The tax which you pay on your sales is called as outward supply. Tax which you pay on your purchase is called as inward supply. Now, under GST law, tax payment can happen in two ways. One is called as forward charge. Another is called as reverse charge. Sir, what is forward charge? What is reverse charge? Forward charge means the supplier of goods and services has to pay the taxes to the government. Reverse charge means the recipient of goods and services has to pay the taxes to government. For example, you come to Priya Sarees, I sell the sari to you. I sold the sari worth rupees 10,000 to you. On that GST is 1,000 rupees. Now, when I sold the sari to you, I will also collect from you what, sir? GST. I am also going to collect GST, and that GST will pay to government. So, what is happening over here? The supplier of goods and services, is paying the tax to the government. This is called as forward charge. What is reverse charge? I supplied some legal services to you. On the legal services which I supplied to you, you have to compute what is the tax and you have to pay the taxes to the government. And normally, who pays the tax to the government? Supplier. Whatever different types of transaction you see in your life, who pays the taxes to the government? Supplier has to pay the taxes to the government. But there are only some cases where the receiver will have to pay the taxes to the government. Okay, so the tax is recorded to be paid under two ways: forward charge or reverse charge. Normally, it is under forward charge, but in some cases it will be reverse charge. Section 9 subsection 1, by itself it is not important. MCQ 1 or 2 point they can ask over here. Section 9 subsection 1. Subject to the provision of subsection 2, there shall be levied a tax called as Central Goods and Services Tax on all intrastate supply of goods or services or both, except on alcoholic liquor for human consumption on a value determined under section 15 at such rates as may be notified by government not exceeding 20%, should be collected in such manner as may be prescribed and paid by taxable person. Who has to pay the taxes, sir? Taxable person. Now, what is this 9.1 telling? You will have to pay CGST. Because we are studying CGST Act, it will talk only about CGST. Same section under SGST Act will talk about SGST. There shall be levied a tax called as Central Goods and Service Tax. When will I levy CGST? Whenever you are making intrastate supply of goods or services or sir, on all the goods and services you levy? Yes, except on alcoholic liquor for human consumption. Meaning on alcoholic liquor for human consumption, GST will never be levied. And sir, on what value will you levy GST, sir? I will levy GST on a value determined under section 15. Sir, at what rate will you levy GST? I will tell you what is the rate. In the question, I will tell you what is the rate. But the maximum rate which government can levy is how much? 20%. Hey, please note, maximum CGST rate is 20%. Tell me what will be the maximum IGST rate? 40%. 20 plus 20. Now it shall be collected in such manner as may be prescribed, and it should be paid by whom, sir? Taxable person. Hey, who should pay the GST, sir? Taxable person. What is taxable person? Taxable person means a person who is registered under GST law or who is liable for registration. Hey, please note, person normally can be of two types: unregistered person or registered person. Unregistered person means unregistered person. Registered person means a unregistered person means what, sir? A person who has not taken any registration under GST law, and registered person means a person who has taken registration under GST law. If you have taken registered under GST law, you are a registered person. If you are not registered, unregistered person. But here they say who has to pay tax? Taxable person has to pay tax. They are not telling registered person or unregistered person. They are telling taxable person has to pay the tax under GST law. Who is a taxable person? A person who is registered or liable for registration. Can I say all the registered person will have to pay the taxes? And can I say unregistered person may have to pay the taxes if they are liable for registration? Puri not Puri students. 9.2 says CGST on intrastate supply of HP man shall be levied from the date notified by the government on the recommendation of council. So there are totally 5 products called as HP man: high speed diesel, petroleum crude, motor spirit, aviation turbine fuel, and natural gas. On these 5 products, as of today, GST is not levied. But GST can it be levied for a future date? Yes, that will be told by government. 9.3 and 9.4 talks about supply attracting reverse charge. 9.3 and 9.4 says, 9.3 says CGST on intrastate supply of notified goods and services. I will give you a list of some goods and services. In case of these goods and services, the recipient of the goods and services will have to pay the tax under reverse charge. 9.3 says what, sir? CGST on intrastate supply of notified goods and services shall be paid by recipient of that goods and services under reverse charge. Most important is 9.3. 9.4 also talks about reverse charge. But what 9.4 says, I will give you a list of some goods and services. If these goods and services you are going to purchase from an unregistered person, then that notified registered person will have to pay the taxes under reverse charge. CGST on intrastate supply of notified goods and services received by a registered person from an unregistered person shall be paid by registered person under reverse charge. So this is not applicable at intermediate level. Final level, it is applicable. Now 9.3 gives a list of some goods on which tax is required to be paid under reverse charge, and also gives some services on which tax is required to be paid on reverse charge. The services on which tax is required to be paid under reverse charge are important for your examination. Now it is important because there are amendments also. Under section 9, the section which you have to remember is section 9.5. Most important section. Section 9 subsection 5 says what, sir? Section 9 section 5 says if notified services are supplied through an e-commerce operator, the tax on that supply is required to be paid by an e-commerce operator. They are telling, I will give the list of some services. If these services you supply through an e-commerce operator, if these supplies you are supplying through an e-commerce operator, the tax on this supply is required to be paid by e-commerce operator. A supplier does not have to pay the taxes. Who has to pay the taxes? E-commerce. Normally who pays the taxes? Normally who pays the taxes? Supplier. But this 9.5 is telling, I am going to give you list of some. Let's read. CS executive class.
CS executive this is. Section 9 subsection 5. Yes, she will go openly. You call her. Section 9 subsection 5. 9 is yours. What is the name, Sudhi? Na Dina. Naveen. Section 9 subsection 5. Supply through e-commerce operator. Supply through, you have come with your parents. Friend. You call her also, no problem. Section 9 subsection 5. If notified services are supplied through e-commerce operator, the tax on the supply is required to be paid by e-commerce operator. 9.5 telling, I will give you list of some services. On these services, who has to pay the taxes? Supplier illa. Recipient illa. E-commerce operator has to pay the taxes. Yes, sir. Oh, sir. Who is an e-commerce operator, sir? E-commerce operator means a person who is owning, operating, maintaining, managing an electronic platform for electronic commerce. Who is an e-commerce operator? A person who is owning, operating, maintaining, managing an electronic platform for electronic commerce. He is an e-commerce operator. Okay, not okay. Ola is an e-commerce operator. What is Ola doing? It is owning, maintaining, managing electronic platform for what purpose? Electronic commerce. What is electronic commerce? Doing business online. Flipkart is an e-commerce operator. Amazon is an e-commerce operator. Swiggy is an e-commerce operator. Zomato is an e-commerce operator. Okay. Now, are all the e-commerce operator covered under this 9.5, sir? Are all the e-commerce operator covered? No. No. All the e-commerce operator are not covered. They are if notified services are supplied through e-commerce. So what are those list of services if I supply? Those e-commerce are covered, sir. There are totally 4 services. Which are these 4 services, sir? Passenger transport services, accommodation in hotel and guest house services, housekeeping services, and restaurant services. If you supply these 4 services through e-commerce operator, if you supply these 4 services through e-commerce operator, who has to pay the taxes? E-commerce operator will have to pay the taxes. For example, transportation of passenger services means what, sir? Transportation of passenger services. Ola is there. Example, Uber is there. Rapido is there. They are all into the business of transportation of passengers. Accommodation in hotel in guest house. Oyo is there. They give the services of accommodation in hotel in guest house. Goibibo, Make My Trip, Trivago. They are all giving what services, sir? Accommodation in hotel in guest house. Housekeeping services means what? Urban company is there. Urban company, they'll come and clean your bathroom and all. No? So yeah. Restaurant service means what, sir? Swiggy, Zomato, they are all covered under restaurant services. Now they are telling if these services you are supplying through an e-commerce operator. Please note. I go outside, I show hand like this, auto is coming. Is the services supplied through an e-commerce operator? Services are supplied through? What hand? The services are supplied to that auto driver. Correct, not correct. Service provider is auto driver and I am the service recipient. Now, I take out my mobile phone, I click my present location, I call Rubin, I call an auto to drop me to some location. Now, that auto driver came to me because of e-commerce operator. Services are supplied through e-commerce operator. Only if services are supplied through e-commerce operator, it is covered under 9.5. Okay, not okay? Now, what is this point telling? If notified services are supplied through e-commerce operator, the tax on that supply is required to be paid by e-commerce operator. How many services are notified? 4. What are these 4 services? Transportation of passengers, accommodation in hotel and guest house, housekeeping services, and restaurant services. Who has to pay the taxes in these 4 cases? E-commerce operator will have to pay the taxes. Sir, what if the e-commerce operator does not have physical presence in taxable territory, that is India? What, like Uber, when it started, no, they did not have any office in India. Now, how will Uber pay tax in India when they don't have office in India? Lawmakers are telling no problem. Is there any person who is representing Uber in India? Yes, sir, yes, sir, yes, sir. He has to pay the taxes. Normally, who has to pay the taxes, sir? Tax is recorded paid by e-commerce operator. However, if the e-commerce operator does not have physical presence in taxable territory, then any person representing such e-commerce operator shall pay the taxes. Sir, what if the e-commerce operator does not have physical presence and it also not have any representative? It does not have physical presence as well as representative is also not there. Lawmaker says you should compulsory appoint a person in India to pay the taxes. That e-commerce operator will have to appoint a person in India to pay the taxes. I'll repeat once again. There are totally 4 services which are listed under 9.5. If these 4 services are supplied by you through an e-commerce operator, the tax is recorded paid by the e-commerce operator. What if I directly supply the services? Not covered. Only if they are supplied through an e-commerce operator, it is covered under section 9.5. Now, tax is recorded paid by whom, sir? In case of these 4 services, e-commerce operator. Sir, what if the e-commerce operator does not have physical presence in taxable territory? Then any person representing such e-commerce operator will have to pay the taxes. Sir, what if they don't have physical presence and also don't have representative? Then any person who is appointed, the e-commerce operator will have to compulsory appoint a person in India to pay the taxes. Okay. Now please see. Normally for these 4 services, who has to pay the taxes? E-commerce. But lawmaker says, in case of these 3 services, which 3 services? Accommodation in hotel in guest house, housekeeping services and restaurant services. In case of these 3 services, if the service provider is registered under GST law, then the service provider will have to pay the taxes and not. Sir, purile. There are totally 4 services there, but in case of 3 services, which are these 3 services? Accommodation in hotel in guest house, housekeeping services and restaurant services. If the person who is giving the services, if he is registered under GST law, then who has to provide pay the taxes, sir? That service provider, the person who is giving the services has to pay the taxes. Sir, purile, sir. Once again, you repeat. For example, let us say, which hotel shall we take? McDonald's. McDonald's, is it listed in Swiggy Zomato? Is McDonald's listed in Swiggy Zomato? Yes, sir. McDonald's is listed in Swiggy Zomato. Now I order food from McDonald's using Swiggy. Can I say services are provided by McDonald's to me through e-commerce operator? Correct, not correct? Who has to pay on this? Normally, tax is recorded to be paid by Swiggy, e-commerce operator. Now, the McDonald's, no, that is also registered under GST law. Lawmaker says, now, Swiggy, you don't pay. Because that person is registered, let him only directly pay the taxes to the government. Okay, not. Now, this is applicable only for 3 cases. Which cases? Accommodation in hotel in guest house, housekeeping services and restaurant services. Now, this attempt is a beautiful amendment which they have made. Amendment in the sense clarification they have made. See, normally, before that, I will discuss these 3 points and then I'll come to that amendment, or else the mixture will happen. For example, I am going to Mumbai. In Mumbai, I go to Taj Hotel. Okay, there are totally 4 options available for me to book a hotel room in Taj Hotel. Okay, there is Taj Hotel in Mumbai. Option number 1. I went to Mumbai. I'm standing outside Gateway of India. I'm taking selfie. I saw Taj Hotel. I thought, okay, today I will stay in Taj Hotel only. So I directly walked into the hotel. Now, I directly went over there and did my booking. Who is the service provider? Taj Hotel. Who is the service receiver? Me. Is there any e-commerce operator in between us? Is there any e-commerce operator? No, sir, there is no e-commerce operator. So can I say the service is directly provided by Taj Hotel to me? Who will have to pay the taxes? Service provider, Taj Hotel will have to pay the taxes. Is 9.5 applicable over here? First case, no, sir. I booked room in Taj Hotel through Taj Hotel mobile app. It's just like Go and Bibu Make My Trip. Taj Hotel also they have their own mobile app. I booked a hotel room in Taj Hotel through, not directly, but through the mobile app of Taj Hotel. Now, is there an e-commerce operator available? Yes. Yes. Who is the e-commerce operator? Taj only. The e-commerce operator means what, sir? A person who is owning, operating, maintaining, managing an electronic platform. Hey, that mobile app is electronic platform only. So can I say there is a service provider? Who is that? Taj. And e-commerce operator is also Taj only. Why, sir? Because it is on their own website or their own mobile app. And who is the service receiver? Now, who should pay the taxes over here? Are the services are supplied through e-commerce operator? Are the services supplied through e-commerce operator? Yes, but here e-commerce operator as well as service provider is same. So there is no different person. So 9.5 will not be applicable. So tax is recorded prepared by Taj. Now, case number 3. I booked hotel room in Taj Hotel using Make My Trip. Who is the service provider? Taj Hotel. Who is the service recipient? Dilip. Now, how did I book the hotel room, sir? Through an e-commerce operator. So, can I say there are 3 different people in one? Who should pay the taxes in this case, sir? E-commerce operator should pay the taxes. 9.5 is applicable. I booked hotel room in Mumbai through what, sir? Wait. The example which I took, let us say Taj Hotel is not registered person because we told e-commerce operator has to pay the tax. Now, last case, I booked a hotel room in Mumbai using what, sir? Make My Trip. Using Make My Trip app. Now, Taj Hotel Mumbai is also registered under GST. Can I say there is service provider, service recipient as well as e-commerce operator? Correct, not correct. Now, who has to pay the taxes to the government? Taj Hotel will have to pay the taxes because they are registered. Please note, very simple. If the service provider is registered under GST law, service provider will pay the taxes. If service provider is not registered under GST law, e-commerce operator will have to pay the tax. This is applicable only for these 3 items. There are 4 items. Out of 4, only 3 items. This is applicable. But however, now recently they made a small, not an amendment, a small clarification they gave. Now, there are a lot of Ola, Uber are the e-commerce operator, but there are other taxi service provider also. Meaning you can, I don't know who are those people in your state, but self-drive cars and all is there. You can take bike and car on rent. They don't have their only, they don't have any website of their own, but they are very big companies. Zoom car is there, that is there. That is registered. They have their app, etc. But in your state also there will be a lot of chota people who are making good money, but they are not e-commerce operator. They are supplying services through Ola, Uber, etc. But they themselves are not e-commerce operator. So what is the clarification which is given, sir? Under 9.5 for transportation of passenger. Please note. For transportation of passenger, even if the service provider is registered person. For transportation of passenger, even if service provider is a registered person, who has to pay the taxes? E-commerce operator only has to pay the taxes. However, if the service provider is a company, the service provider is a body corporate means private company, public company, etc. However, if the service provider is a body corporate and the services which they are supplying is through omnibus, which bus? Omnibus. If omnibus services are supplied through whom, sir? E-commerce operator by a body corporate, then this section is not applicable. If omnibus services are supplied by any person other than body corporate, then can I say this section is applicable if it is supplied through e-commerce operator? Omnibus services supplied by a body corporate. Who has to pay the taxes? Always body corporate has to pay the taxes. Now, section 9 subsection 3. Section 9 subsection 3 gives the list of different services on which tax is required to be paid by recipient under reverse charge. Very important. There are some changes also. Okay. Now, section 9 subsection 3 gives a list of different services on which who has to pay the taxes? Reverse charge. We'll ignore the rest. Directly we'll go to explanation.
Now, what is the first point, sir? Services given by GTA. If a GTA is giving services to these 7 people, these 7 people will have to pay tax under reverse charge. If a GTA is giving services to whom, sir? 7 notified persons. If the GTA is giving services to whom, sir? 7 notified persons, then these 7 notified persons will have to pay tax under reverse charge. Sir, who are these 7 notified persons? Factory, society, cooperative society, body corporate, registered person, partnership firm including LLP, and casual taxable person. If a goods transport agency is giving services to whom, sir? 7 notified persons. Who are the 7 notified persons? Factory, society, cooperative society, body corporate, a person registered under GST law, partnership firm including LLP, and a casual taxable person. Who has to pay the taxes? These 7 people have to pay the taxes under reverse charge, provided they also be located in taxable territory. What do you mean by a GTA, sir? GTA means a person who is in the business of, a person who is involved in the business of transportation of goods by road and who issues a consignment note. Okay, not okay. Now, please note, very important example. A GTA is giving services to Priya Sarees, who is a registered person. Is RCM applicable? Is RCM applicable? Yes, because services are given to a registered. Hey, now whatever we are seeing, no, on these cases, who has to pay the taxes? Receiver has to pay the taxes. And who is giving this list, sir? Notification number 13 bar 2017. Very important notification for your examination. There are totally 4 notifications which are very important. Which are these 4 notifications? Notification number 13 bar 2017 gives a list of supplies taxable under reverse charge. Notification number 12 bar 2017 gives a list of different services which are exempt under GST law. Notification number 10 bar 2019 gives additional limit of 40 lakhs for registration. There is some limit of 40 lakh rupees for registration for supply of goods. And notification number 66 bar 2017 tells that date of payment is not time of supply for supply of goods. These 4 notifications are important notification. Now, whenever a question on RCM is asked, okay, reverse charge of services, you should give reference to whom, sir? These are notifications which you should remember. In examination, if you write, that extra marks you will get. Now, please. If a GTA is giving services to whom? 7 notified person. Who has to pay the taxes? 7 notified person has to pay the taxes. Now, GTA gives services to Priya Sarees, who is registered under GST law. Who will pay the taxes? You should first see who is the service provider, who is the service recipient. Priya Sarees is the service recipient. Priya Sarees will have to pay the taxes under reverse charge. Sir, what if Priya Sarees is not a registered person? Sir, what if Priya Sarees is a factory? So, if it is a factory, if it is a partnership firm, anything, meaning if it is a factory, society, cooperative society, body corporate firm, then whether these people are registered or not, they will only have to pay the taxes. You cannot do it. What if I give services to a partnership firm in London? Not applicable because they should be located in taxable territory. You cannot do it. GTA gives services to 7 notified persons. 7 notified persons will have to pay tax under reverse charge. Legal service, another services which is important. Legal services. What is this legal services, sir? Advocate is giving legal services to business entity. What do you mean by business entity? Any person who is carrying on business is called as business entity. Who is a business entity, sir? Any person who is carrying on any business is called as business entity. If legal services are given by advocate to a business entity, that business entity will have to pay the taxes under reverse charge. Very important point to be noted over here is this business entity can be registered or it can be unregistered. It does not matter. Now,
I believe that you have studied all the provisions. So shall I link one provision with this? This is what RCM is telling. Now there is also a chapter called as exemption, which will give the list of different services which are not liable to be on which GST is not applicable. In that exemption, no, there is one point. What is that point, sir? In that exemption topic, there is a point. What is that point, sir? Which says, if legal services are provided by an advocate whose turnover, aggregate turnover is not more than 10 lakhs, 20 lakhs or 40 lakhs, then they don't have to pay the taxes. No, sir. Purile. If legal services are provided by an advocate to whom? A business entity. And if that business entity's turnover is not more than 10 lakhs, 20 lakhs, 40 lakhs. They are different cases where you don't have to take registration under GST law. For some states, the limit is 10 lakh. Make my trip to Nagaland. For some states, the limit is 20 lakhs. Normally, the limit is 20 lakhs. And if you are only supplying goods, for you, the limit for taking registration is 40 lakhs. So, if you are a person is falling under any of this category whose turnover is less than 40 lakhs, less than 20 lakhs, less than 10 lakhs. And if the legal services are provided by advocate to you, then should I pay tax and reverse charge? No. I'll repeat. I'll give an example. Advocate is giving legal services to Priya Sadis. Priya Sadis turnover is 500 crores. RCM applicable, not applicable. Priya Sadis, is it a business entity? Is the turnover more than 10 lakhs, 20 lakhs, 40 lakhs? So is RCM applicable? Is RCM applicable? Yes. Advocate is giving legal services to Aditya Sadis having a turnover of 8 lakhs. No RCM. Aditya, though he is a business entity, will he have to pay tax and reverse charge? Now, that is only for registered person category. Now, but if Aditya is a factory, Aditya is a partnership firm, Aditya is a cooperative society, Aditya is a normal society, if I give services to him, then RCM is applicable. Please note. RCM will be applicable in which case, sir? If legal services are given to, that is not for advocates, that is for GTA. Okay, for GTA, factory, society, etc. Whether they are registered or not, it will be applicable. But in this case, in legal services, what is the criteria, sir? Your turnover 10 lakh, 20 lakhs, 40 lakhs. If it is less than that, no RCM. Arbitral tribunal giving services to a business entity has to pay the taxes and reverse charge. And same 10 lakh, 20 lakh, 30 lakh exemption limit is applicable to them. Sponsorship services, advertisement services, basically sponsorship services given by any person to a body corporate or a partnership firm. You would have seen some award functions. These award functions are sponsored by many people. They will tell, no, this award function is sponsored by Geo Health or something and all they'll tell, correct? Some TV shows, they are sponsored by Vivo IPL, now it is Tata IPL, correct? So they are giving sponsorship services. Any person giving what's the sponsorship services to a body corporate or a partnership firm, that person who is taking services, partnership firm or a body corporate, they will have to pay tax and reverse charge. Any services, very important, any services given by government. Government means 4 people. Who are 4 people called as government, sir? Central government, state government, union territory and local authority. Any services given by central government, state government, union territory, local authority to a business entity, that business entity will have to pay tax under reverse charge. Except these services. Meaning for these services, RCM is not applicable. See, normally government is giving services to you. What is applicable? Reverse charge is applicable. But there are these services. On these services, if government is giving it to you, who will have to pay the taxes? Themselves only will have to pay the taxes. RCM will not apply. Which are the services? Renting of immobile property services. So if I take a place on rent from government is the service provider and the service recipient, they will only have to pay the taxes. Services given by Department of Post. Post office is there. I take speed post services, express parcel post services. On that GST is applicable. So they will collect GST from me. Sir, you are telling government will only pay tax to government. Huh? Yes. Government, they are all departments of governments. Okay, they are all departments of governments. Then services by an Indian Railway. Services by whom, sir? Indian Railway. If Indian Railway is giving services, railway, they are giving services of renting of the premises. They are giving that cars, cab services, something and all started down. So they are giving services. GST will be collected by them only. Services in respect of aircraft and vessel inside or outside port or airport. Who has to pay the taxes? Service provider only. Aircraft is there. We take a lot of services. Aeroplanes are taking landing services, takeoff services, parking services. Who will pay the taxes, sir? They themselves will have to pay the taxes. Services of transportation of goods. I am transporting goods in government vehicles. I am transporting passenger in government vehicles. Who will collect taxes? They will only collect taxes. So any services given by government, normally any services given by government to a business entity will have to pay the tax under reverse charge, excluding these services. On these services, tax is paid by the government under forward charge. Okay, not okay. Now here also that exemption point is applicable. What is the exemption point? If this business entity's turnover is less than 10 lakhs, 20 lakhs or 40 lakhs, then RCM shall not apply. Now now next, additional services related to government. Now normally renting of immovable property services given by government, who has to pay the taxes? Normally renting of immovable property given by government to a business entity, who has to pay the taxes? Business entity has to pay the taxes. Renting of immovable property services, who has to pay the taxes? Government only has to pay the taxes. That forward charge. However, what they say, if government is giving renting of immovable property services to a registered person, then RCM will apply. A normally renting of immovable property services given by government, what is applicable? What is applicable? Forward charge is applicable. But if that services are given to a registered person, then what will be applicable? Reverse charge will be applicable. Now there is a new addition in this reverse charge list. What is the new addition, sir? Renting of residential dwelling to a registered person. Renting of what, sir? Residential dwelling to whom, sir? Registered person. Normally we have exemption. One of the exemption is renting of residential dwelling for residential use is exempt. If I am renting a residential dwelling for residential use, what do you mean by residential dwelling, sir? A residential house, building, etc. If I am renting a residential dwelling for what purpose? Residential use, it is exempt, except where it is rented to a registered person. Meaning, if you rent a residential dwelling to a registered person, is it taxable? Yes, it is taxable, and it is taxable under reverse charge. Renting of residential dwelling to a registered person. So, if a residential house is rented to a registered person, sir, why will a registered person take residential dwelling for their employees to stay? Some companies may take houses for their employees to stay. For example, our institute is a registered person. Our institute has a flat apartment they have taken so that we can stay over there. So can I say residential dwelling is rented to a registered person? RCM will be applicable. Renting of residential dwelling to a registered person, RCM is applicable. Sir, what if residential dwelling is rented to me? I am not a registered person. No RCM. Now please see, very important. This is a residential dwelling. Okay. This residential dwelling is rented to Dilip. For what purpose? For residential purpose. Dilip is not a registered person. No GST. It is given for residential purpose and Dilip is registered under GST. It is taxable under reverse charge. If it is given for commercial purpose, I don't care whether Dilip is registered or not. It is always taxable. And who has to pay the taxes? It is taxable under forward charge. Reverse charge will come only when I am taking a residential dwelling for residential use by whom, sir? Registered. Next, one more important service is what, sir? Director. They have not asked any question on this point after amendment. There is an amendment on this. They have not asked any question. Services given by director of a company to the said company. If the director of a company is giving services to the company, then reverse charge is applicable. Now here, directors are of two types. What types of director? One is employee director. Another one is non-employee director. If you are employee director, then whatever services are supplied by employee to the employer in the course of employment is not a supply at all. Correct, not correct. So it is not a supply, no GST is applicable. But however, if you are a non-employee director, example, independent director, is he a full-time director? Is he working for the company? Only when meeting is there, he is going to come. He is going to get something called as sitting fees. So if the services are given to a non-employee director, if the services are given to non-employee director, then it will be treated as supply and GST will be applicable. Now, what is the amendment which they have made? Very important. Now see what lawmakers are telling. Director can be of two types, employee director and non-employee director. If the services, I'll talk about non-employee director first because it is easy. If the services are given by non-employee director to the company, whether he gives that services as a director or he gives the services to the company in personal capacity, it does not matter. It will be taxable. If he gives services to the company as a director, it will be taxable under reverse charge. If he is giving services to the company in his personal capacity, it will be taxable under forward charge. Please note, I am acting as director of Reliance Industry. I am an independent director of Reliance Industry. I am giving services to them as a director. I am going and attending meeting. They are going to give me sitting fees. Who has to pay the taxes? Company has to pay the taxes under reverse charge. Case number 2. I have a commercial complex which I have given on rent to Reliance Industries. I am giving services to them as a director. In second case, I am giving services to them in my personal capacity. On that, is RCM applicable? No. On that, what is applicable? Forward charge is applicable. In simple words, if any type of director is giving services to the company in his personal capacity, RCM will not apply, will be forward charge. Similarly, employee director is giving services to the company in his personal capacity. Is RCM applicable? No, RCM is not applicable. What is applicable? But however, employee director gives services as a director. I should see whether TDS is deducted under 192 or TDS is deducted under 194J. Because if you are an employee, TDS will come. If you are an employee, you will get salary. For salary, the TDS section is what, sir? 192. So if the director is an employee director and for whatever payment is made by the company to him, for that if TDS is deducted under section 192, that means it is a salary, therefore not a supply, no GST. But if you are an employee director and the company is giving you some money for which they have deducted TDS under 194J, that means it is not a salary. Because it is not a salary, yes, it is a supply. If it is a supply, GST will come. Whenever GST comes, who has to pay GST, sir? Company will have to pay GST under reverse charge. Please note, I'll repeat once again. Normally, if director of the company is giving services to the company, can I say RCM is applicable? However, if director is giving services to the company in his personal capacity, no RCM, forward charge. Okay, not okay. Now we'll take a break before we start. Now there are other services also taxable under reverse charge, but they are not that important. But this is important. Security services. Security services means what, sir? Supply of security guards. Security services given by any person other than body corporate to a registered person, that registered person will have to pay the taxes. Similarly, renting of motor vehicle services given by any person other than a body corporate to a body corporate, that body corporate will have to pay the taxes under reverse charge. Okay. Next topic will start after a short break. What time will be? 10:40. Welcome back, students. Welcome back. Online students, I hope I am audible and also the screen is visible. Oh, online students. Yes, sir. Next is what, sir? A beautiful section called as section number 10. Composition Sanjana Levy. Composition Levy. Online students. Composition Levy. Now, 12 marks. Composition levy, section 10. There is some small section called as section number 10. What is the section 10 talking about, sir? Composition levy. Now, under GST law, there can be two types of person. One person who is registered under GST, one person who is not registered under GST. If you are not registered under GST, that means you are not registered under GST. But if you are registered under GST, you will be registered under GST as either a composition dealer or a regular dealer. Meaning the GST is giving you an option for normal people to get registered either as a composition dealer or a regular dealer. Sir, what is the difference? Basic difference I'll tell you. If you are getting registered as a composition dealer, you have to follow only one provision, which is section 10. There are other provision. If any other provision is talking something against you, you don't follow that. You ignore that provision. But if you are a regular dealer, then you will have to follow all the sections which are there under GST law except section 10. Now, a composition dealer, one more advantage is that he has to file only one return in one full year. One return only he has to file in full year. But if you are a regular dealer, you have to file two returns every month. And composition dealer will have to pay the taxes to the government on quarterly basis, 3 months once. Whereas regular dealer will have to pay the taxes on every month. And for composition dealer, no, the rate is also very less, 1% or 5% or 6%. But a regular dealer has to pay 5%. That is the starting rate. 5%, 18%, 12% is there, 28% is there, depending upon what product he is selling. Now, we'll understand what is composition scheme completely. Section 10 talks about what, sir? Composition levy. Section 10 subsection 1 says, who is eligible to become a composition dealer? A registered person is eligible to become composition dealer if his aggregate turnover in the preceding financial year did not exceed 1.5 crore rupees. If you are a registered person whose aggregate turnover, if you are a person whose aggregate turnover in the preceding financial year did not exceed 1.5 crore rupees, then you have an option to opt for composition scheme. You may opt for composition scheme. A registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crores or 75 lakh rupees is the limit for 8 special category states. How many special category states are there? 11 special category states are there. We studied yes, Nagaland, ma'am, 2 Michael Jackson. Out of that, for how many special category states the limit is 75 lakhs? Only 8. Once again. If I want to become a composition dealer, then I can become a composition dealer if my aggregate turnover is not crossing 1.5 crore rupees. My aggregate turnover is not crossing 1.5 crore. Hey, is it compulsory that I should compulsory become a composition dealer if my aggregate turnover is not crossing 1.5 crores? It is just an option. So a registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crores, he may, if it is not happening in May, September. If a registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crores, he may opt to pay tax at composite rates instead of paying the tax at normal rates. In normal rates is 5%, 18%, 12%, etc. Instead of paying tax at normal rates, you may pay tax at composite rate. Sir, the limit is how much, sir? 1.5 crores. To check the limit, what should I see? I should see aggregate turnover. Aggregate turnover of which year? Preceding financial year. Okay or not okay, students? Now, normally, if I want to become a composition dealer, my turnover should not be more than 1.5 crores. But however, this limit is 75 lakhs for 8 special category states. This limit is how much? 75 lakhs for 8 special category states. Which are these 8 special category states? Num must. Num must are 8 special categories. Sir, num must means what, sir? N for Nagaland, U for Uttarakhand, M for Manipur, Meghalaya, Mizoram, Arunachal Pradesh, Sikkim and Tripura. For these, how many? 8 states. The turnover which I should see is what, sir? 75 lakhs. I should not see the turnover of 1.5 crores. If I am doing business at these places, If I have any branch office at these places, then for me the limit is 75 lakhs. Normally, what is the limit for taking registration as a composition dealer? 1.5 crores. But if I am doing business in these places, for me the limit will be 75 lakhs. Okay, not okay? Which are these places? Nagaland, Num must, N Num must, N for Nagaland, U for Uttarakhand, M for Manipur, M for Meghalaya, M for Mizoram, A for Arunachal Pradesh, S for Sikkim, T for Tripura. So can I say out of 11 only for 8 it is 75 lakhs? So remaining 3, how much is the limit? Hey, which are these 3? Hajj is Himachal Pradesh, Assam and Jammu and Kashmir. Now I'll again come back to the section. Section 10 subsection 1 says a registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crores, he may opt to pay tax at composite rates instead of paying the tax at normal rates. Now, what is the composite rate applicable to me? If you are a manufacturer, it is 0.5% of turnover in the state. If you are a restaurant or outdoor catering service provider, it is 2.5% of turnover in the state. If you are falling under any other category, meaning if you are not a manufacturer, if you are not a restaurant, then, and if you are dealing in goods, you can be any other type of dealer of goods, then for you it is 0.5% of taxable turnover in the state. Hey, you will do mistake over here. I will do mistake over here. Sir, what mistake, sir? For manufacturer and restaurant, it is 0.5% of turnover in the state or 2.5% of turnover in the state. But for others, it is 0.5% of taxable, 0.5% of taxable turnover in the state. Now, normally, as of now, what is the limit, sir? 2 crores. Can this limit be increased by government? Yes, this provided that government may increase this limit up to 2 crores. Normally, right now, limit is how much? 1.5 crores. Government has the power to increase this limit up to 2 crores. Have they increased it? No, but they have the power to increase. Now, okay, not okay. Have you understood till here? Sir, what do you mean by aggregate turnover, sir? Because you said I should say aggregate turnover. What do you mean by aggregate turnover? Very important definition. You should know this definition along with section number also. Section 2.6 talks about what, sir? Aggregate turnover. Aggregate turnover means what, sir? Total. Turnover means what, sir? Turnover. Total turnover. Aggregate turnover means aggregate value of all taxable supplies. The aggregate turnover is aggregate value of all taxable supplies, aggregate value of all exempt supplies, aggregate value of all export of goods or services, aggregate value of all interstate supply to a person having same PAN. Whenever I am computing aggregate turnover, I should take all the types of taxable supplies which is made by me, whether it is made within the states or outside states, it does not matter. When I am taking aggregate turnover, I should take all the exempt supplies which is made by me. Sir, what do you mean by exempt supplies? Exempt supplies means the supplies which are nil rate, the supplies which are only exempt, and it includes non-taxable supplies. Exempt supplies means what, sir? Those supplies for which the rate of tax is 0%, nil, nothing is written in rate, tax column, etc. Nil rated supply. And those supplies which are completely exempt under section 11, and it includes non-taxable supply. Aggregate turnover will include what, sir? Non-taxable supply. What is non-taxable supply? Alcohol, liquor for human consumption, high-speed diesel, petroleum crude, etc. On the GST is not levied. So they are all non-taxable supplies. Now, aggregate turnover includes all the types of taxable supplies, all the types of exempt supplies, and it includes export of goods or services. Whatever supply you are making outside India, that is also included in aggregate turnover. Aggregate turnover includes interstate supply to a person having same PAN. If I am transferring something to my own branch in other states, interstate supply to a person having same PAN. If I am supplying anything to my own branch in other states, interstate supply to a person having same PAN, that also should be included. If I supply something to my own branch in the same state, if I am supplying something to my own branch in a different state, interstate supply to made to a person having same PAN, that also will be included while calculating aggregate turnover. Please note, export of goods or services are also called as zero rated supply. Okay, export of goods or services are there, no, they are also called as zero rated supply. Now, when you are calculating aggregate turnover shall not include two things. What are these two things? Taxes under GST and inward supply liable for reverse charge. Meaning, whatever different types of taxes are there, CGST, SGST, IGST, UT, GST compensation says they should not be included. So sometimes the question will give you that my total turnover is 1,18,000, which includes GST at 18%. So I should remove the GST and take only the amount excluding GST. Now, very important. How do I calculate, sir, whenever they give amount including GST? For example, Priya Sari's turnover is 1.6 crores and they say that it is including GST at 12%. So what will I do? 1 crore, 1.6 crore into 100 divided by 100 plus tax rate. 100 plus tax rate is 112. I will get 142857114.28. So can I say my turnover is less than 1.5 crores? Can I become a composition dealer? Now, if you see the turnover directly, it is 1.6. So people will say, no, you cannot become a composition dealer, but it is including tax. So I should take aggregate turnover before tax. Yeah, whenever I am computing aggregate turnover, I should not include taxes under GST and inward supply liable for reverse charge. Whenever I am computing aggregate turnover, I should also not take my purchases. Inward supply means purchases. A turnover means what? Sales. Turnover means sales. But if there are any purchases on which I have to pay tax under reverse charge, that should not be included in aggregate turnover. I'll repeat once again. Hey, what is aggregate turnover? Aggregate turnover means aggregate value of all taxable supplies, exempt supplies, export of goods or services, interstate supply to a person having same PAN. This is required to be calculated on all India basis, but it shall not include taxes under GST and inward supply liable for reverse charge. Sir, what do you mean by that this is required to be calculated on all India basis? In the entire India, how many ever branches you have, you should take the turnover of all the branches together to find your aggregate turnover. You okay, not okay? I'll just, for example, I have Priya Sarees in Bangalore, Coimbatore, Chennai, Hyderabad. So when I am calculating aggregate turnover, I'll take turnover of all the states and calculate. Okay, that is my aggregate turnover. Now, if they ask you what is the turnover of state, that means if they ask you what is the turnover of the state of Tamil Nadu, 25 lakhs. Now, when you are paying the taxes, you should pay tax on turnover of state. And in case of manufacturing restaurant, and for all other people, you have to pay tax on 0.5% of taxable turnover in the state. Hey, please note, we are studying CGST law. So when I say 0.5%, it is 0.5% CGST, 0.5% SGST. So effectively, how much you have to pay? 1%. Okay, here also effectively you have to pay 5%. Here effectively you have to pay 1% of taxable turnover in the state. Now some important points, very, very important points. If you are a person who is having a branch in special category states, which special category state? 8 special category states. If a dealer has a place of business in special category states, then the limit of special category states shall apply to whole of India. If I am having a place of business in special category states, the limit of special category states will apply to whole of India. See, normally for Chennai, what is the limit, sir? Can I say 1.5 crores? For Nagaland, what is the limit? 75 lakhs. Now, I have business in Chennai, Priya Sarees in Chennai, and I have Priya Sarees in Nagaland. The turnover of Chennai is 50 lakhs, turnover of Nagaland is 30 lakhs. So, what is my total aggregate turnover, sir? 80 lakhs. Sir, how, sir? Because I have to take all India basis. 80 lakhs is my aggregate turnover. Now, can I become a composition dealer? Can I become a composition dealer? Why no? Chennai limit is to 1.5 crores, no? But if I have a place of business in special category states for entire India, now the limit will become 75 lakhs. Next, very important, one more important thing. Interest income. Which income? Interest income is useless under GST law. Interest income is useless under GST law, meaning interest income should not be included or it should not be added while calculating aggregate turnover. You should not add it while calculating aggregate turnover. You should not add it while calculating the tax amount also. A turnover of the state you take, no. Hey, basically, interest income, no. Under GST law, interest income is a exempt income. Hey, what is interest income, sir? It is an exempt income. Now, this interest income you should not take into consideration while you are finding the value of supply as per second proviso. What is this? We have not yet seen. We'll see that. You should not take while finding the aggregate turnover to check the eligibility, and you should also not add it while calculating the turnover in the state to find the tax amount. Interest income is of no use in our GST law. But if they ask you what is interest income, it is an exempt income. Now, section 10.2 talks about conditions. If I want to become a composition dealer, I'll have to fulfill these conditions. That is, this condition will be applicable to whom, sir? Only if a person is opting for composition scheme, these conditions will be applicable to him. What are the conditions? A registered person shall be eligible to opt for composition scheme if he is not engaged in supply of services other than those mentioned in 10.1. Hey, I can become a composition dealer only when I'm not supplying services. Hey, I can become a composition dealer only when I'm not supplying services other than those mentioned in. Hey, can a service provider become a composition dealer? Dilip, as a chartered accountant, can I become a composition dealer as per 10.1? No, I cannot become a composition dealer. Hey, Dilip's main business is sari business. I have a house which I have given on rent. I am receiving rental income. Can I say I am also supplying services? Hey, though I am supplying goods as well as services, lawmaker says you cannot become composition dealer. If a person is engaged in supply of services, he cannot become a composition dealer under section 10 subsection 1. Hey, don't you think this is good ways? Hey, actually my business is sari business. Only 1 lakh rupees I am getting service income. They are asking me not to become a composition dealer. So what lawmakers did? No, lawmakers to section 10 subsection 1, they added a proviso. They said a registered person who is otherwise eligible to become a composition dealer under section 10.1 can supply services up to 10% of turnover in the state or union territory or rupees 5 lakhs, whichever is higher. Normally a service provider cannot become a composition dealer. But if I am supplying goods along with that little component of services, if I am supplying, I can become a composition dealer. That service component should be within this limit. What is the limit, sir? 10% of the turnover in the state. Turnover in the state, not 10% of aggregate turnover. 10% of turnover in the state or 5 lakhs, whichever is higher. Condition number 2. If I want to become a composition dealer, I should not be engaged in making non-taxable supplies. I should not supply alcoholic liquor for human consumption, HP man, etc. If I want to become an aggregate turnover, I should not make interstate outward supply. I should not supply to other states. If I want to become a composition dealer, I should not sell the goods to other states. Can I purchase the goods from other states? Yes, sir. A composition dealer cannot make interstate outward supply, but he can make interstate inward supply. If I want to become a composition dealer, I should not be making supplies through an e-commerce operator who is required to collect tax under section 52. There is a section called section 52 which talks about e-commerce operator, which is newly added for your intermediate this thing. What is that section telling, sir? If I am a person who is supplying through an e-commerce operator, for example Flipkart, if I am supplying through Flipkart and if the payment is also coming to me through Flipkart, then Flipkart at the time when they are paying money to me, they'll have to deduct TCS. They are to collect taxes. And now the rate is changed 0.5%. We have to collect a tax of 0.5%. Now, if I am supplying through Flipkart, then only this provision is applicable. What if I am not supplying through Flipkart? This provision is not applicable. So they are telling I should not make a supply through an e-commerce operator which is required to collect taxes under 52. Then I should not be engaged in manufacturing notified goods. Hey, please note. Can a manufacturer become composition dealer? Yes. But he should not manufacture notified goods. Which are these notified goods, sir? Pati bricks. Pati bricks means what, sir? Pan masala, aerated waters, tobacco and tobacco products, ice cream and bricks, roofing tiles, etc. Then a casual taxable person and a non-resident taxable person cannot become a composition dealer. Sir, what do you mean by a casual taxable person and non-resident taxable person? If I am going and doing business at a place which is not my usual place of business, I'm casual taxable. Normally, I do business in Chennai. Priya Sarees is there in Chennai. I am going to Mumbai for an exhibition for 10 days. And I am going to do business over there for 10 days. I will be called as casual taxable person in Chennai. What is casual taxable person, sir? A person who is occasionally undertaking the transaction of supply of goods or services or both at a place which is not his usual place of business. So if I am a casual taxable person or a non-resident taxable person, I cannot become a composition dealer. So who is a non-resident taxable person? A person who is coming from outside India to India and does business activity in India occasionally. Section 10.2 talks about condition. If I want to become a composition dealer, as per 10.1, I should fulfill all these conditions. Which are the conditions? I should not supply services other than that limit which is given. I should not make interstate outward supply. I should not make non-taxable supplies. I should not supply through an e-commerce operations required to collect the taxes. I should not be engaged in manufacturing notified goods. And I should not be a casual taxable person or non-resident taxable person. Now, one more important point. What is this point telling, sir? Section 10 subsection 2 has a proviso. What is the proviso telling? If provided that where there are more than one registered person under same PAN, where there are more than one registered person under same PAN, if one is opting for composition scheme, others also should opt for composition scheme. What does it mean, sir? If there are more than people registered under one single PAN, meaning Priya Sarees has 3 registrations, one in Bangalore, one in Coimbatore, one in Chennai. Now, if Bangalore is opting for composition scheme, other people also should opt for composition scheme. Meaning in Bangalore, I want to become a composition dealer, Chennai, I want to be a regular dealer, not possible. So if there are more than one registered person under a same PAN, if one is opting for composition scheme, others also should opt for composition scheme. Now, sir, you said that I cannot manufacture notified goods, correct? I cannot manufacture ice cream. Can Arun ice cream become a composition dealer? Arun ice cream, can they become a composition dealer? No. Quality walls, can they become a composition dealer? No. Sir, what if I am a bakery who is purchasing ice cream from Arun ice cream and selling? I am a provision store who is purchasing ice cream from Quality Walls and selling. Can I become a composition dealer? Can I become a composition? I can become or not become, sir. I can become. Manufacturer cannot become. If I am a dealer of these items, if I am dealer of Coca-Cola, Pepsi, Coca-Cola, Pepsi is aerated waters. Can I become a composition dealer? No. Hey, please note, if I am manufacturing pan masala, I cannot become. But if I am eating, if I am selling those pan masala, can I become composition dealer, sir? Yes. Now, section 10, 2A. Section 10, 2A. Now tell me, whatever we just now saw was composition scheme only for goods, dealer of goods. Now we'll see 10.2a, which talks about newly added section. 10.2a talks about composition scheme for service provider. Composition scheme for service provider. Eligibility. Who is eligible to become a composition dealer as per section 10.2a, sir? A registered person who is not eligible to become a composition dealer under section 10.1 and whose aggregate turnover in the preceding financial year is not exceeding 2 conditions. My turnover in the preceding financial year should, it looked that is some middle of the night I have come correct. A registered person who is not eligible to become a composition dealer under section 10 subsection 1. Hey, please note, for whom is 10.2 applicable? A person who cannot become a composition under 10.1. Who cannot become a composition dealer under 10.1? service provider and whose aggregate turnover in the preceding financial did not exceed 50 lakhs and who is supplying only, who is exclusively supplying other than those mentioned in, what is mentioned in 10(1)? Restaurant services. If I am supplying restaurant services, I will become a composition dealer under 10. But if I am not supplying restaurant services, I am chartered accountant. Can I become a composition dealer? Yes, under 10(2)(a). Section 10 subsection 2a is applicable to a beauty parlor. They are supplying services. Section 10 subsection 2 is applicable to a chartered accountant, company secretary, cost accountant, etc. Because doctor, they can all become composition dealer under section 10(2)(a). Eligibility is for, what is the criteria, sir? He should not be eligible as per 10(1), and his aggregate turnover should not be more than 50 lakhs, and he should supply only services. Okay, sir, what is the rate at which he has to pay the taxes? 3% of turnover in the state. 3% means 3% CGST, 3% SGST. Effectively, what is the rate, sir? What is the condition applicable to him? All the condition which I just now saw is applicable to him, except the first condition. Which is the first condition? Service condition. What conditions are applicable to this dealer, sir? All the conditions applicable to a normal composition dealer. Which are the conditions? These were the conditions, except the supply of service condition. Okay, meaning if you are a person who is opting for composition scheme as per 10(2)(a), can I make supply to other states? No. Can I? Supply to e-commerce under section 52? No. Meaning all these conditions are applicable to whatever condition you saw, except supply of service condition. And sir, is this point also applicable? Yes. If you have more than one registration under if you have more than one registration under a single PAN, if one is opting for composition scheme, others also should opt for composition scheme. Now, next is section 10(3)(a). Section 10(3)(a), composition scheme shall 3 only 8 goes ways. Section 10(3) says, Adi, composition scheme shall lapse. Your composition scheme shall lapse. Your composition scheme shall lapse. When shall it lapse? When will it lapse? It will lapse if your aggregate turnover crosses that limit. In the current composition scheme shall lapse in the current financial year if my aggregate turnover exceeds the specified limit. What is the limit? 1.5 crores or 75 lakhs or 50 lakhs. For example, I started my business on 1st of April 2024. At the time when I started my business, I took a registration and I took registration as a composition dealer. I was doing my business on 10th of December 2024. My turnover crossed 1.5 crores. My turnover crossed 1.5 crores. So can I say my turnover is more than the limit? So now my composition scheme shall expire. My composition scheme shall lapse. Now after this, I will be called as a regular dealer. If I am a regular dealer, I will have to pay tax at regular rate. Please note, I started business on one day. My turnover crossed that limit of, which limit, sir? 1.5 crores or 50 lakhs or 75 lakhs. On that day, my composition scheme shall lapse. Because my composition scheme has lapsed, now I am no more a composition dealer. I will become regular dealer. So whatever sales I am making from these days, on that I will have to pay tax at regular rates. Sir, what about the sales made by me before this date? Because you were a composition dealer, those sales will be taxable at composite rates itself. Now, when the composition scheme is lapsing, you have to file a form called as form GST CMP 04. Within 7 days of lapsing the scheme, you should file this form. That is how government will come. Date wise. Because composition dealer, you cannot be for 10 days, 3 months, 4 months. Quarterly has to file returns. So for almost 8 months, 10 days, he is a composition dealer. After that, he is a regular dealer. Anyways, he has to file return once in a year. So how does it matter? Calculation of what? Tax calculation. There is one question we have not solved that question. Class, so we have not solved any question. Hey, nothing. They know that we are doing time pass. Huh? This will come on YouTube. Direct tax marathon is already uploaded, so direct tax marathon will not come. Indirect tax marathon, this whatever we are recording only will come. Hi students, nalla irkingla? Hey, where is questions? Not this question. Hey, wait, that is a very good question. Hey, where is that question? Yeah. See this question. Chanchal started providing beauty and grooming services and inaugurated a beauty parlor called as Care and Care Beauty Center in Janakpuri, Delhi on 1st of April 2023. She opted for composition scheme under section 10(2)(a) as a service provider. The said financial year, the aggregate turnover of Care and Care Beauty for the quarter ended 30th June is how much? 20 lakhs. So first quarter, the turnover was 20 lakhs. Further, for the half year ended 30th September, the turnover was 50 lakhs. Who based on they are doing? First they told for a quarter the turnover is 20 lakhs. Now they are telling for half year the turnover is 50 lakhs. So tell me what is the turnover for second quarter? 30 lakhs. So 50 lakhs minus 20 lakhs of first quarter is the turnover of second quarter. What is my turnover of second quarter? Now can I say because her turnover has touched 50 lakhs, now her composition scheme shall lapse? Okay, correct? Not correct. So on which date composition scheme shall lapse? On 30th September her composition scheme shall lapse. So can I say from the next day, that is 1st of October or from 30th September only, she will now be called as a regular dealer. Now what is the point telling? Beauty care recorded rapid growth and reached the turnover of 70 lakhs by end of October. Now only for the month of October is it 70 lakhs? They reached the turnover of 70 lakhs. From the first day, they reached the turnover of 70 lakhs. Determine the total tax liability. Determine the total tax liability of Care and Care Beauty Care. Now, what is the tax liability, sir? Can I say for first quarter, since her turnover was 20 lakhs into 6%, because she is a composition dealer under 10(2)(a), which is 1,20,000. Then, wherein 60,000 will be CGST, 60,000 will be SGST. Then, for July to September, she was still a composition dealer only. So, the turnover GST rate will. From 1st October, she became regular dealer. What is the turnover for the month of October? 50 lakhs minus 70 lakhs minus whatever happened till September. So it is 20 lakhs is a turnover. On that she'll have to pay tax at what rate, sir? Regular rates, which is 18%. Even I don't know. Sir, how to present the answer? Date wise. So this is month wise you are telling. Yeah, so same thing you'll do, no, Kubey. For 10 days, I will pay tax at composite days, and for next whatever days after, I will pay tax at regular. Sir, how to present this answer? One question they are asking: how to present this answer? First, you should write this provision. Since Chanchal is a service provider, she can become a composition dealer as per section 10(2)(a), If she becomes a composition dealer as per section 10 to A, because they have asked you to compute tax, you don't have to write full story. Because she wants to become a composition dealer as per section 10, because she opted for composition scheme as per section 10 to A, the tax rate applicable will be 3% of turnover in the state. 3% CGST and 3% SGST. Therefore, for the supplies made till she was a composition dealer, she will have to pay tax at 6%. Now, one of the condition, you don't have to write all the condition, you should say one of the conditions says if the aggregate turnover crosses the specified limit of 50 lakhs, the composition scheme shall lapse. So from the date when the aggregate turnover is crossing 50 lakhs, she will become a regular dealer. Therefore, Chanchan is treated as a composition dealer till her turnover is 50 lakhs, that is for the period April to September. Thereafter, she will become a regular dealer. Pay 50 lakhs tax and 20 lakhs will pay 18% tax. Okay, please note, presentation is one of the easiest thing which you can do. How much to write is what this book is telling. You don't have to write the provisions as given in text. How you should write in normal simple English language, that is what is mentioned in this book. How to present, each person can present in a different way, but there should be a specific format. If it is a case study based question, first write the provision, then write your conclusion. Your law teacher would have to write facts of the case. Now, facts of the case, if you write, it will take some time. Why to waste time? Fact of the case is nothing but question again you are writing in the answer. Why should you write question again in the answer? Because we have income tax. Income tax will take too much time in our life, correct? So write the provision by seeing the question, what is the provision you understand, and give the conclusion for that answer. Yes, Sundari. Same limits. For service provider, there is no 50 lakhs everywhere, nothing like that. For service provider, anywhere in India, it is 50 lakhs. In section 10.3, we have discussed composition schemes shall lapse in the current financial year if the turnover exceeds the specified limit. 10.4a says, 10.4, sorry, no, why A is coming in. Section 10.4 is telling composition dealer cannot collect taxes on his supplies. A composition dealer, whatever supply is making, no, he cannot collect taxes. And a composition dealer cannot avail input tax credit. He cannot take input tax credit also. Okay, he cannot collect taxes on supplies and he cannot take input tax credit. Meaning what, sir? He cannot collect taxes on supplies means whatever sales he is making, you cannot collect taxes from your customer. Meaning whatever tax composition dealer has to pay, how much he has to pay? 1% or 3% or 5% in case of restaurant, etc. He has to pay it from his own pocket. He cannot collect from his customer. And he cannot take input tax credit. A composition dealer cannot take input tax credit also. Okay, not okay. Sir, if he cannot collect taxes, that means he cannot issue tax invoice. No, sir. Yes, he cannot issue tax invoice. What is the document which a composition dealer has to issue? Bill of supply. Please note, I'll tell you one thing. You just don't do anything. If possible, if you get some time, 1 hour time, if you are getting in a day, any day, you just take last 3 examination. You take it from maybe May, June, September, May, September and January 24 and 25. You take those question paper and just see the MCQs of GST. You will feel that those simple questions they are asking, only these points which we are writing over here, only those points they are asking, nothing else they are asking. Direct questions they are asking. Only 1 or 2 points will be there wherein you have to think. Every question will be direct question. Also see the, not income tax, descriptive based question. I'll show one of the question paper to you, or I'll only show 2 question papers to you. Let me waste some time in my life. No, I'm telling you because straight away if someone is asking you 12 marks theory question, don't you think it is good for your life? But the problem is they will not give us Yeah, I think in suggested answers they also upload. MCQ questions they upload. Say I go to January, I go to taxation. See, case study based questions. First question you ignore because it is income tax. Second, third. Case number 2 is also again income tax. Now this is a question on GST. Okay. Now see, what is the question asking? Where is the place of supply? We'll discuss place of supply now. When you see that provision, when you read this question, you'll feel like slapping that examiner. How can you ask such simple question? You'll feel. We are writing intermediate, some level should be there. You'll feel like that. Place of supply they are asking. What is the value on which what is the value of outward supply? If you read the question, you'll come to know. What is the total tax which you have to pay? I mean, these provisions we have not discussed, so I'm not taking up this point. Now, you should retain books of accounts till how many years? 6 years you should retain. Then, which books you study? Alright, don't do your lawism over here. For me, it is 6 years. Now, this provision also we have not discussed. Now see, when we read this provision, actually better we take up once we complete everything. I'll show the last point. Theory questions which I told you. Under GST question paper, if you see, you feel like laughing at that fellow. You don't have any. Question number 6 is not last question. Question number 7 and 8 is last question. Now see, question number 7. Inge past students, nothing I am doing in my life. What are they telling? Write short notes. On what? What is the time limit for rectifying error? All these are related to returns chapter. How to rectify? When cannot you rectify? What is the time limit of rectifying? How many marks question is it? 5 marks question. Theory question. By theory, only theory. Just 4-line answer it is. Now see over here. List any 6 state taxes which got subsumed with GST. Today only we discussed some time back. How many marks question? Now what is there in writing this? Only 6 items you should write. Correct. How much time will it take? When it is numbers, no, you will have to write the number, put comma in that number. You will have to draw a table. Here nothing you have to draw in your life. Correct. No. See theory question. You see. As per rule number, e-way document EWB01, they prohibit certain people not to upload e-way bill. Who are those people? There are 3 people which are listed over there. How many marks question? 2 marks question. Briefly explain about the exemptions of old age home. In exemption, no, they have given 2 cases where old age home will be exempt. Very one single 2-3 lines answer it is. Then what is this? Time of supply in case of national highway, etc. Again, this is a theory question, meaning your one question of 15 marks. Is this how many marks? No, it is 10 marks. No, it 10 marks. One question of 10 marks plus another question in question number 7 will be straight theory question. And normally what people will do, they'll leave this question because it is an optional question. I have to answer only 2 questions out of remaining 3 questions. So they will leave it as option, which is the biggest mistake. Okay. Under income tax law, only one theory question will be asked for 4 marks. Under GST law, 15 marks question will be theory question. Meaning, if you don't study any of the chapters, only last 4 chapters if you study, you will get 15 marks. Normally, these theory questions are from those chapters. Anyways, let us continue our discussion. A composition dealer cannot collect taxes on his supplies and he cannot claim input tax credit. Now, time pass section 10.5. What is 10.5 telling, sir? If I am opting for composition scheme, even if I am not eligible, officer will send a notice. If I am not following the rules given in composition scheme, officer will send a notice. I will have to reply to that notice. If my reply is satisfactory, no problem. If my reply is not satisfactory, I will have to pay the taxes at normal rates, and 73 and 74 provisions also shall apply to me, meaning penalty will be levied on me. Now, rule number 3 and rule number 4 are related to composition scheme. Rule number 3 and rule number 4 talks about what, sir? If I want to become a composition dealer, I will have to tell the government that I want to become a composition dealer. When can I tell the government? At the time of applying for registration, you can tell the government. At the time when you fill your registration application, there are two parts, part A and part B. When you fill the part B of your registration application, please intimate it to the government. Sir, what if I am not taking a new registration? I am already registered as a regular dealer, but now you want to become a composition dealer. Then lawmaker says you cannot do that in middle of the year. You can do only at the beginning of the next year. So before the beginning of next year, he can opt for composition scheme before the beginning of the next year, next financial year. So if I want to become a composition dealer from middle of the year, not enough. I can become only from 1st of April. So if I want to become composition dealer for this running year, I should have made an application before 1st of April. Anytime before 1st of April. Normally in the March month that window will open. So if I want to become a composition dealer today, can I become, sir? No. If I am already registered. But if I am taking new registration, yes. Now, sir, I am applying for a new registration. Now, which will be the effective date of composition scheme? If you are applying for new registration, the effective date for you will be the date when registration is granted. Sir, if I am already a registered person and now I am opting for composition scheme, what will be the date? Effective date of composition scheme, sir? First day of next financial year, that is 1st of April. Now, other conditions are given in section 10 subsection 5. Who shall, composition dealer, shall mention the words composition taxable person on the name board and sign board. Hey, by looking at someone, can you tell whether he is a composition dealer or not? No, therefore he will have to mention the words, I am a composition taxable person. And he has to mention the words, composition taxable person not eligible to collect taxes on supply or bill of supply. On the bill of supply, you have to mention this words called as composition taxable person not eligible to collect taxes on supply. He shall pay, please note, on whatever sales I am making as a composition dealer, what is the tax rate applicable to me? Composite rates. On my purchases, I will have to pay tax at normal rates only. What if I am purchasing few things on which I have to pay tax under reverse charge? I will have to pay tax under normal rates or composite rates. Normally, composite rates are applicable for what, sir? For all the sales which you are making. If there is any purchases on which you have to pay tax under reverse charge, at what rate will you pay? Will you pay that at composite rates? No, you will pay at regular rate. Let us say Priya Sarees opted for composition scheme. On all the sales, I will have to pay tax at what rate? Composite rates. If I am making purchases, I will pay tax at what rate? Normal, whatever GST rates are there. And if there is any inward supply on which I have to pay tax under reverse charge, for that also I will have to pay tax at normal rates. Now, returns with respect to composition dealer. Composition dealer has to file a return called as GSTR 4. This return is filed once in a year. What is the due date of filing this return? 30th April of next financial year. Meaning, for financial year 24-25, the due date is 30th April 2025. And composition dealer has to pay the taxes to the government on quarterly basis. What in 3 years he has to pay the taxes to the government by using a form called as form GST PMT 08. Form GST PMT 08 is the form which is used by a composition dealer to pay the taxes. Now, what is the due date of paying the taxes, sir? 18th of next month following the quarter. Now, normally under GST law, what is a quarter? It is a period of 3 months starting from first day of a calendar year. So, January, February, March is a quarter. April, May, June is a quarter. July, August, September is a quarter. October, November, December is a quarter. So, for example, if I started my business on 10th of May, is quarter counted from May, June, July? Is it a quarter? No. What is which quarter am I falling in? April, May and June. So for me, though I have started business on 10th of May, I will have to file my first return when, sir? 18th of July. I should pay the first tax on 18th of July. A composition dealer has to pay tax on quarterly basis by using a form called as form GST CMP 08, 18th of next month following the quarter. That is all about your composition scheme. I'll share. No, I'll share. Hey, this material, the income tax material in that whatever income tax marathon is there, no, in the description it is already added. This also will be added over there only. You can download it. Okay, wherever. YouTube, if you go, we have our institute. You go to institute. Don't see anybody's video, only see. You see what? And this is recording what they did. Now let us say you go over here. You see this is there. Income tax marathon is there. You click on more. You know how to click more? When you click on more over here, you click again on more. You see download notes for better revision. You click on that link. It will take you somewhere in your life. There you will get your income tax note. Whatever yesterday we were discussing, no, it was this notes. Just like that, I will upload GST notes also. Okay. Time of supply. Section. Naveen, section. 12, 13, 14. But for CA Inter students, what is applicable? Only section 12 and 13. Time of supply of goods and time of supply of services. Now, before we learn this time of supply, you should know, Kiki, when is invoice required to be issued under GST law? Section 31 talks about due date to issue invoice under GST law. What is the due date within which I should issue invoice under GST law, sir? Section 31 says the due date to issue invoice under GST law in case of goods, check which category it is falling. If it is a supply which involves movement in goods, if you are making supply of goods where movement is there, then invoice is required to be issued on or before removal of such goods. If it is a supply which involves movement is in goods, invoice is required to be issued on or before removal of such goods. Supply involves movement of goods, invoice is required to be issued on or before removal of such goods. Sir, what if the supply which I am making does not involve any movement in goods? What if the supply which I am making does not involve any movement in goods? Then invoice is required to be issued on or before delivery of such goods. And if it is a case of continuous supply of goods, continuous supply of goods means what, sir? Goods are supplied on continuous basis for a period more than 3 months. Then in such cases, invoice is required to be issued by you on successive statement dates or successive payment dates, whichever is earlier. And if it is a case of sale on approval basis, invoice is required to be issued on the date of approval or 6 months from the date of removal, whichever is earlier. Okay, once again. In case of goods, normally when should I issue an invoice? Because goods are movable, normally I'll issue an invoice before removal. For example, I am supplying sarees from Chennai to Mumbai. This goods left my factory on 2nd of March 2025. When will I give an invoice? On 2nd of March 2025 or any time before that. Can I give it afterwards? It will not be as per law. Law says you should give on or before removal of this goods, on or before removal. Similarly, there are other cases, but nothing is given. What is the due date of issuing invoice for goods? On or before removal. And for services, what is the due date of issuing invoice for services, sir? Normal cases, on or before completion or within 30 days from the date of completion. If for services, I will give an invoice when, sir? On the date when I have completed providing services to you, or anytime before that date. Can I issue it later also? Yes. In case of services, you can issue it later within 30 days from the date of completion. Please note, this 30 days will be 45 days in case of banking company, financial institution, and NBFC. So, if Dilip is filing income tax return of Infosys, I have filed income tax return on 15th of July. I can issue invoice on 15th July, anytime before 15th July or within 30 days from 15th of July. Now there is also something called as continuous supply of service. Continuous supply of service. Continuous supply of service. In that case, no, you should see the agreement which is there between the service provider and service recipient. Now, if the agreement, they have mentioned the due date of payment. If from the agreement between the service provider and service recipient, if the due date of payment is ascertainable, then the invoice is required to be issued on or before the due date of payment. If by seeing the agreement between the service provider and the service recipient, you are not able to determine or ascertain the due date of payment, then invoice is required to be issued on or before receipt of payment. If the payment is linked to completion, invoice is required to be issued on or before completion. Say for example, there is an agreement between the service provider and service recipient telling every month 10th you should pay me the money. So can I say due date of payment is ascertainable? So invoice is required to be issued on 10th or any time before 10th. There is an agreement between service provider and service recipient. They have told that every month you should pay 10 lakh rupees, but when not mentioned. So when should I issue an invoice? On or before receipt of payment. And if the payment is linked to completion, you complete ground floor, I'll give you some amount. First floor, I'll give you some amount. That means as and when the completion is done, I will give an invoice. Now let us discuss about time of supply of goods. Hey, normally what happens whenever there is a transaction of service or goods is there, no, there will be different activities which will be involved. First you will place an order, then the person will prepare the goods, then he will start packing it, then he will dispatch those goods or remove those goods from his factory, then he is going to issue an invoice, delivery will be made, then you will make a payment. So there are so many different dates. On which date did that supply happen is what time of supply is going to tell you. Okay, what is time of supply going to tell you, sir? Time of supply is going to tell you the date on which the supply was made. The time of supply is going to tell you what, sir? What is the point in time when the supply actually took place? Section 12 subsection 1 says the liability to pay tax in case of supply of goods shall be the time of supply as determined under section 12. Section 12 says if you want to know when you are liable to pay tax in case of supply of goods, if you want to know when you are liable to pay tax in case of supply of goods, then you should come to section 12. So there are different sections in section 12. Section 12 subsection 2 says time of supply of goods in case of forward charge. Hey, what is forward charge telling? I supply the goods or services, I only make the payment of taxes to the government. In case of forward charge, you should check. Section 12 subsection 2 says you should check whether the invoice has been issued within the due date or invoice is not issued within the due date. For whatever supply I am making, has the person who is supplying the goods, has he issued the invoice within the due date which we just now saw, or has he not issued the invoice within the due date? If he has issued the invoice within the due date, the time of supply will be date of invoice or date of payment, whichever is earlier. The time of supply will be what, sir? Date of invoice or date of payment, whichever is earlier. Sir, what if invoice is not issued within the due date? The time of supply will be last date to issue invoice. What is the last date to issue invoice? Just now we saw on or before invoice, etc. Last date to issue invoice as per 31 or date of payment, whichever is earlier. Sir, what do you mean by date of invoice? Date of invoice is the date which is mentioned in the invoice. Sir, what is date of payment, sir? Date of payment is the date on which entry has been made in the books of accounts that payment is received, or the date when the amount is getting credited to the bank account, whichever is earlier. Hey, what is date of payment? The date on which the entry has been made in the books of accounts that yes, I have received the payment from this person, or the date when the amount is coming to my bank account, whichever is earlier is date of payment. Now, very important is the notification. Which notification? Notification number 66/2017. What is this notification telling, sir? This notification says if any goods is received before making the supply. Hey, wait. Repeat, sir. If in case of supply of goods, if any, not goods, sorry, in case of supply of goods, if any money is received before the supply is made.
if you are receiving any money before the supply is made. In short, before me giving the goods to you, if you have paid the money to me, can I say date of payment will be before the date of supply? Lawmakers are telling date of payment will not be taken as time of supply. If in case of goods, if any money is received before making the supply, the date of receipt of such money shall not be taken as time of supply. The date of receipt of money, the date on which the money is received, that date should not be taken as time of supply. You okay, not okay? Meaning, in simple words, in case of time of supply of goods, if the date of payment is before date of invoice or before last date to issue invoice, the date of payment shall not be taken as time of supply. So in simple words, what, sir? In case of time of supply of goods, you should ignore this. What is the time of supply? Either date of invoice. If invoice is not issued, last date to issue invoice. That will only be time of supply. This is required to be ignored. Who is telling? This is applicable only for goods. This notification is applicable only for goods, not for services. And please see, this notification is applicable for goods except specified actionable claims. Actionable claims are treated as goods. There are some specified actionable claims which you supply, it will be taxable. Which are the specified actionable claims? Lottery, betting, gambling, casino, horse race, and online money games. In these cases, this notification is not applicable. Section 12, subsection 3. Section 12, subsection 3 talks about what, sir? Time of supply of goods in case of reverse charge. For this, what is the time of supply? In case of reverse charge, if the recipient has to pay the taxes under reverse charge, the time of supply will be date of receipt of goods or date of making the payment or 31 days from the date of supplier invoice, whichever is earlier. Okay, that will be taken as time of supply. Section 12, subsection 4. Section 12, subsection 4, time of supply of goods in case of vouchers. You know there is something called as gift voucher against which you can purchase goods. Correct? Vouchers you would have seen in your life. So in case of vouchers, what is the time of supply? Law says vouchers can be of two types. What type of vouchers can be, sir? It can be either supply identifiable voucher or supply not identifiable voucher. So what do you mean by supply identifiable voucher? What do you mean by supply not identifiable voucher? Let us say I give you a voucher of Puma store for rupees 5,000. I tell you that you can purchase anything from Puma store. So can I say you can purchase shoe, t-shirt, bag, shorts, football cap, whatever you want to purchase, you will purchase. So this is a type of voucher where the person who is giving the voucher to you does not know what you are going to purchase. So it is a supply not identifiable voucher, meaning I don't know what you are going to purchase. Supply identifiable voucher means what, sir? I gave you a voucher of Puma shoe of 5,000 rupees and I told you you can purchase Puma shoes. Now, can I say at the time when I am giving the voucher to you, I know what you are going to purchase? It's supply identifiable voucher. Time of supply of goods in case of voucher. Supply is identifiable at the time of issue of voucher. In such cases, time of supply will be the date of issue of vouchers. Whenever the voucher is given to you, on that day only the person who is giving voucher should pay the taxes. What if it is supply not identifiable voucher? The time of supply will be the date of redemption of voucher. Because when I give the voucher to you, I don't know what you are going to purchase. Only when you come back and redeem the voucher, I will know what you have purchased. So it will be what's that? Time of supply will be date of redemption of voucher. Now in residual cases means if 12.2 is not applicable, 12.3 is not applicable, 12.4 is not applicable, 12.5 will be applicable. In residual cases, the time of supply will be depending upon whether you are liable to file returns or you are not liable to file returns. If you are a person who is liable to file returns, the time of supply will be the due date of filing returns. Meaning in simple words, if you are not able to determine the time of supply as per section 12.2, meaning if it is not forward charge, if it is not 12.3, that is not reverse charge, and it is not 12.4, that is it is not vouchers, then if all the three sections are not applicable, you should come to whom, sir? Section 12 subsection 5. What is 12.5 telling? Are you a person who is registered under GST law? Yes, sir. That means you will be liable to file returns? Yes, sir.
Therefore, the due date of filing returns will be taken as time of supply. Sir, what if I am not liable to file returns? The date when you are making the payment will be taken as time of supply. Now, sometimes what happens is, I sold the goods to you. I sold the goods to Karina. I told Karina, hey Karina, please pay me in 30 days. If you don't pay to me in 30 days, I'll collect a penalty of 10,000 rupees. Tell me, on the date when I'm making the sale to Karina, do I know whether Karina is going to pay me within 30 days or not? I don't know. Only on the date of payment, I will come to know whether she has paid or not. So this is the amount which I'm going to receive later in my life. So for this, what is the time of supply? Section 12 subsection 6 says, if any interest, penalty, late fee, etc. is received for delay in payment of consideration, then the time of supply for that interest, penalty, late fee will be the date of receipt of such amount, the date on which you are receiving such amount. Okay, not? This is all about time of supply of goods. Time of supply of service. Section 13 subsection 1 says, if you want to know when you are liable to pay tax in case of supply of service, then you please go ask section 13. Section 13 subsection 1 says, in case of forward charge of goods, the time of supply will be, check whether invoice has been issued within the due date or not issued within the due date. In case of goods, you should check what, sir? Whether the invoice for goods is issued within the due date or invoice for goods is not issued within the due date. If the invoice is issued within the due date, the time of supply will be date of invoice or date of payment, whichever is earlier. Hey, can I say it is the same which we studied there? If the invoice is not issued within the due date, if the invoice is not issued within the due date, the time of supply will be date of completion or date of payment, whichever is the case. Here, what will I take, sir? There I took last day to issue invoice, but here I'll take date of completion. What do you mean by date of completion? On the date when I provided the services, it got completed. Time of supply in case of forward charge, invoice is issued within the due date, invoice is not issued within the due date. If it is issued within the due date, date of invoice or date of payment, whichever is earlier. If you have not issued within the due date, date of completion or date of payment, whichever is earlier, will be taken as time of supply. Date of completion is the date when you are provided the service. What is date of payment, sir? Book entry date or bank credit date, whichever is earlier. Sir, is that notification applicable for them also, sir? Meaning, if any advance is received, will they have to pay tax on that advance? Yes. Goods people, notification number 66/2017 is applicable. In case of reverse charge services, in case of reverse charge, time of supply will be what, sir? The date when you are making the payment or 61 days from the date of supplier invoice, whichever is earlier. In case of reverse charge, the time of supply will be the date when you are making the payment or 61st day from the date of invoice. Supply. For example, I am taking legal services from an advocate. Priya Sadis is taking legal services. Can I say RCM is applicable? Now, I have to pay RCM on 1 lakh rupees. Okay. The date when he provided the services was 15th of March and he also gave the invoice to me on 15th of March. Now the question is, when should I pay the taxes to the government? Time of supply will be the date when I am making the payment or 61 days from the supplier invoice. Let us say I made the payment on 30th of March. So from the date of invoice, first I will have to calculate 61 days. What is the date coming to? 15th of May. So I should pay, what is this? Time of supply either will be 15th of May or the date when I am paying, whichever is earlier. Who is early? 30th of March is early. A 15th of May I have made the payment to him. A 15th of March is the date of completion of 61 days. I have made the payment on 30th March. What is the time of supply? 30th March or 15th of May, whichever is earlier. Next, I paid the money on 20th of June. Can I say I have paid the money after 61 days? So what is the time of supply? 15th May. So either 61 days or date of making the payment, whichever is earlier. Similarly, whenever you are importing anything to India, is it a supply, sir? We studied importation of services for a consideration is a supply, and importation without consideration also will be a supply if I am importing for related person. Something like this we had seen. Now, if I am importing any services from outside India, who has to pay the taxes, sir? The receiver. Recipient will have to pay tax under reverse charge. What lawmaker says, Rubin? Lawmaker says, if you are importing any services from your associated enterprises, if you are importing any services from your associated enterprises, the time of supply will be date of making the payment or date of debit in books of accounts, whichever is earlier. And in case of vouchers, residual case and interest penalty and the provisions are same for goods and services. What is 13.4 telling? 13.4 telling, in case of services given through a voucher, check whether the supply was identifiable, supply was not identifiable. If the supply is identifiable at the time of issue of voucher, date of issue of voucher is time of supply. If the supply is not identifiable at the time of issue of voucher, date of issue of voucher. Sir, what if it is residual cases? Are you liable to file return? Yes, sir. Time of supply will be date of filing returns. In all other cases, it will be date of making the payment. Time of supply in case of interest penalty late fee is the date when you receive that interest penalty late fee. This is all about this beautiful chapter called as time of supply. Here I will attach this material. Okay, I have solved some question and written how to present, etc. How will I present this answer in examination? I have given one example so that you can know this much percentage is sufficient or not sufficient. Value of supply. Next chapter which we are discussing is what, sir? Value of supply. Hey, if you remember, in between we have missed section 11. After section 10, directly I went to section 12. Section 11 talks about exemptions. We'll see at last if time is there, we'll do that, or else I'll record and with this video I'll upload. Exemptions. Hey, sorry. Section Section 15. Hey, section what, sir? 15. Value of supply. Section 15. Value of supply. Section 15 talks about value of supply. Section 15 talks about value of supply. Whatever supply I am making, what is the value of that supply? Is the value which I am charging, or is there any other thing also which is required to be added? We will see that. Section 15 talks about what's the value of supply. Section 15 subsection 1 says value of supply is transaction value. 15.1 is telling what? Value of supply is transaction value. What is transaction value? Transaction value is the price which you are actually paid or which is payable for supply of goods or services or both, where the supplier and the recipient are not related, and the price which you are paying is the sole consideration. It is the only consideration. Hey, repeat. Supply is transaction value. What is transaction value? The transaction value means the price which you are actually paying or which is payable for supply of goods or supply of services or both, where the supplier and the recipient are not related, and the price which you are paying is the only consideration. It is the sole consideration. Now, say in simple words, say for example, I supplied the goods to Karina for 1 lakh rupees. So what is transaction value? 1 lakh rupees. Value of supply is transaction value. Now, section 15 subsection 2 talks about inclusions in value of supply. Section 15 subsection 2 talks about what, sir? Inclusions in value of supply. Sir, are there anything which is required to be included in while computing value of supply? Should I include few things when I compute value of supply? Lawmaker says yes, there are 5 things which I have to include while computing value of supply if it is not included. What are those things? All the types of taxes except the taxes under GST law. Meaning, if for a supply which you are making, if the government is also collecting, see, for example, transaction value is how much? 1 lakh rupees. I supplied something to Karina, transaction value is 1 lakh rupees. Now government is collecting municipal taxes, government is collecting local authority taxes, government is collecting pollution control tax, government is collecting excise duty and all those taxes, except which taxes? IGST, CGST, SGST, UTGST, except the taxes under GST. Inclusions in value of supply, all the taxes except the taxes under GST law if they are charged separately on the invoice. Here there is one clarification given. What clarification? Under income tax law, no, they collect something called as TCS. That TCS you should not include while calculating value of supply. TCS collected under income tax law should not be included while collecting value of supply. Normally you should include all the taxes except TCS, except GST, taxes under GST law. Now, next thing which I have to include is what, sir? Next thing which you have to include while computing value of supply is any payment made by the recipient which the supplier had to incur. So, I am making a supply to you. For that supply, I am collecting from you transport. I am collecting from you what, sir? Installation charges. I sold an AC to you. Now, AC, as a supplier, I should install the AC at your premises. But still I collected extra money from you. Lawmakers are telling you please add it in value of supply. Any payment made by the recipient which the supplier had to incur. Supplier had to incur some expenditure, but who has incurred? Recipient has to incur, add that money. Then incidental expenses for making the supply. For making the supply, if I have incurred any incidental expenses, any payment, incidental expenses for making the supply. For example, for making supply to Karina, I incurred transportation charges. Can I say it is incidental to the supply? I incurred insurance charges. Can I say it is incidental to supply? I incurred packing charges, incidental to supply. So these also should be added to value of supply. Hey, please note, this is transaction value. These are additional expenses. What is the value of supply? Now, what else should I add, sir? You should add interest penalty late fee for delayed payment of consideration. You should add what, sir? Interest penalty late fee for delayed payment of consideration. Meaning what, sir? I sold goods to Karina. Okay, Priya Sarees goods, sold goods for rupees 1 lakh to Karina Sarees. I told Karina, if you don't pay me within 30 days, I'll collect a penalty of 10,000 rupees. Now, if the Karina pays me within 30 days, can I say value of supply will be 1 lakh? But if she does not pay me within 30 days, this also will be added by me. How much will be value of supply? So if there is any interest penalty late fee for delay in payment of consideration, that also will be added in value of supply. Next, what else should I add in value of supply, sir? Subsidy directly linked to the price, excluding the subsidy given by central government or state government. If there are any subsidy which is directly linked to the price, if there is any subsidy which is directly linked to the price, if there is any subsidy which is directly linked to the price, what do you mean by directly linked to the price? Because of that subsidy, the price is increasing or decreasing. If I am receiving any subsidy because of which price is increasing or decreasing, that is called as subsidy directly linked to the price. Let us say this mobile phone is costing 20,000 rupees. Mobile phone is costing 20,000 rupees. Now you say that I will give you a subsidy of 5,000 rupees. You say that I will give you a subsidy of 5,000 rupees if you purchase this mobile phone. So can I say if that subsidy of 5,000 rupees is given, the price of this mobile phone will become only 15,000? Correct? So this is subsidy which is directly linked to the price. So if there is a subsidy which is directly linked to the price, it should be added in value of supply. However, if that subsidy is given by central government or state government, it should not be added. I'll repeat once again. Subsidy directly linked to the price means what, sir? That subsidy because of which the price of product is changing, increasing or decreasing, etc. That is called as subsidy directly linked to the price. That subsidy should be added in value of supply if it is not given by central government or state government. Section 15 subsection 3 talks about what, sir? Exclusions in value of supply. So is there anything which we should not add, not include while calculating value of supply? Yes, there is only one thing. What is that thing, sir? Discount. discount is something which you should exclude while computing value of supply. Now, discount can be given before making the supply or at the time of making the supply. So, if the discount is given before or the time of supply, you just exclude it from value of supply by showing that discount separately on the invoice. For example, whenever you go to any mall, they tell you that discount is 50%. Discount is how much, sir? Flat 50% discount is there. So can I say before purchasing the product only I know how much discount I will get? It is a discount. It is a discount before making the supply. At the time when the product is sold to me, they give me a discount of 20%. Discount is at the time of supply. Now, both of this discount, whether it is before supply or at the same time of supply, they will be excluded. That can be subtracted from value of supply only if they are shown separately. So, whenever you buy a product, you would have seen they charge 1000 rupees, and if there is a 30% discount, they will subtract this and they will give you a net amount of 700. So, they are going to show separately on the invoice, then you can exclude. If there is any discount which is given after the supply is made, you can exclude it if three conditions are satisfied. Which are the three conditions? That discount should be agreed between the supplier and the recipient. The discount should be linked to specific invoice, and the discount input tax rate on the discount should be reversed by the recipient. So, for example, I told Karina that Karina, you make me the payment within 30 days. I will give you a discount of 20%. Now, can I say this is a discount which is given after supply? Because I don't know whether she'll make payment within 30 days or not. This is a discount which is given after supply. This you can exclude from value of supply if three conditions are satisfied. Which are these three conditions? It should be agreed between supplier and the recipient. It should be linked to a specific invoice, and that input tax rate on the discount should be reversed by the recipient. Hey, tell me, whatever discount I gave to Karina, I told you Karina 20% discount I'll give. Can I say it was agreed between us before the supply was made? And is it linked to a specific invoice? And now, what do you mean by ITC should be reversed? See, when I would have given the original invoice, I would have given the invoice on full amount. Correct, not correct? So, she would have taken input tax rate on full amount. Now, if I'm giving a discount of 20%, on the 20% she is going to pay me less, no? So, on the 20%, whatever GST is there, that she should reverse. This is all about your fantastic chapter called as value of supply. Section 15.4, 15.5 not applicable at intermediate in the final level. Section 15.4 says if you cannot determine value of supply as per section 15.1, then you determine it as per rules. Rules you will study in final. And in some cases, government will tell you how to find value of supply. That also government will tell you in finals. Now please see in the question, no. In the question, whenever they are giving any question on value of supply, two things which you should always make sure that normally students do mistake in what, sir? One is what? They'll tell that the price which is given over here is excluding subsidy. Say they'll in the question, just see if that question is there. Now, they have given base price as this much, and one of the adjustment they are telling subsidy received from NGO, and in bracket they are telling the price of 76,000 is after considering subsidy. What do you mean by this line? Subsidy is added in this amount, so I should subtract. What do you mean by this line? Because normally student will make mistake in this line. I'll repeat. See, base price is 76,000. They are telling subsidy received from NGO. How much is the subsidy received from NGO? 5,000. The price of 76,000 is after considering subsidy. Now the question is, should I add it or I should not add it or I should subtract it? What should I do? Now this is one mistake. Now what happens is, whenever tell me, for example, you are buying something, I give you a subsidy. For you, the price of that product will reduce. So if I give a subsidy to you, that means the price of that product will reduce to you. So can I say, if they say that the price is after considering the subsidy or after giving the subsidy, that means they have subtracted the subsidy amount from this. So you should always add. Normally student will, like, one person told, or mostly they'll do mistake, they will subtract this. You should not subtract this, you should add it back. And some students will ignore this. You should add it back. Whenever they say subsidy is already considered, that means what, sir? They have reduced the subsidy. Now you should have not reduced the subsidy, so we will add it back. Okay, not okay. And sometimes they'll give this goobaism. This was done because he requested. They have done something. Now, one type of packing they'll charge, cost of durable and returnable packing. This is a packing which is durable. Durable means what, sir? The life of packing will be more and you are supposed to return this packing. Cost of durable and returnable packing should not be added while computing value of subsidy. Okay, these two things just keep in mind. And sometime they will give you three prices. MRP they will give you, meaning it happens under customs law, it does not happen under the GST. But in CA final, one question was asked. What did they do? They told a supply has been made by this person to this person, for which the MRP is 10,000 rupees. Okay, list price is 8,000 rupees. Agreed price is 7,500. Now when I take value of supply, what price should I take? I should take list price or MRP or agreed price. While calculating value of supply, which price will I take? What is transaction value? Transaction value is the price which is actually paid or payable, where the supplier and recipient are not recipient, and the price is the sole consideration. So what will be the agreed price? That will be the price on which we have agreed to make the supply. You remember the example which I give in the classroom? What is that example which you give, sir? We don't know who you are, first of all. How will we know your example? Hey, see, a sari of 1 lakh rupees I gave to Karina for 1 lakh rupees. Same sari I gave it to Nayantara for 90,000 rupees. So what is agreed between me and Nayantara? 90,000. So transaction value is 90,000. Okay, not okay. So I should take agreed price. They'll do goobe, but you don't be a goobe. Next, one more important chapter. Pakka question will come from. Yes, sir. Easy chapter. Place of supply means what? What do you mean by place of supply? Place of supply means what? Who is? Place of supply means the place where supply is made. Okay. This is the only chapter in your entire GST law which you are going to study from IGST Act. Normally, all the different sections which we have discussed till now, those sections are from your CGST Act. But this is the only section in your entire GST law which you are going to study from which IGST Act. Place of supply. Place of supply means what, sir? The place where supply is made. Actually, the place where supply is made. Now, why is this chapter important? If I want to know whether a particular supply is an intrastate supply or interstate supply, I will have to learn place of supply. Because I will have to know which location the supply has been made, To that government I will have to pay taxes to the. Now please note, normally Priya Sarees made a supplies to Nayantara Sarees in Coimbatore. Priya Sarees is in Chennai, Nayantara Sarees is in Coimbatore. I made a supply worth rupees 1 lakh. So can I say it is an intra-state supply because it is in same state of Tamil Nadu and apply CGST, SGST. Now in this state, can I say supplier is Priya Sarees, recipient is Nayantara Sarees. Location of supplier is Chennai. Location of recipient is Coimbatore. Now in this chapter, what are we going to study about? We are not going to study about location of recipient, location of supplier. We are going to study about place of supply. So there are sections. How many sections are there? Section 7, 8, 9, 10, 12. For you guys, 11 and 12 is not there. Section 7, 8, 9, 10, 12. Yeah, 11 and 13 is not there. That is not right. Arey, you should listen carefully, guys. Rubin, what did I say, Rubin? Which section is not there, I told you? So I was Section 7. Section 7 will study now. Section 7 gives the meaning of interstate supply. Section 7 of CGST Act says interstate supply. Interstate supply means what, sir? Interstate supply means a supply where the location of the supplier, we have studied something at the beginning of this topic, that interstate supply means supply is in between two different states. That is wrong actually. Actually, what is the true thing, sir? This is the true thing. What between two different states? What between two different union territory? What between one state, one union territory? The location of supplier and place of supply is in two different states. Location of supplier and place of supply is in two different union territory. Location of supplier and place of supply is in one state and one union territory. Then I will call it as interstate supply. Section 7 of IGST Act gives the meaning of interstate supply. Sir, section 7, so you told supply topic. No, sir. This is IGST Act. Interstate supply, location of supply. When will I call something as interstate supply? If the location of the supplier and the place of supply is two different states, two different union territory, one state and one union territory. Or it is a case of import of goods or services, or it is a case of export of goods or services, or it is a case of supply to an SEZ unit or SEZ developer. SEZ unit may be in your same state and SEZ unit may be in your same state, but still it will be called as interstate supply. And any other type of supply which is not an intrastate supply will be an interstate supply. Sir, what is intrastate supply? A type of supply where the location of supplier and place of supply is in same state or same union territory. You cannot. Section 9 is what? What if I go to Goa and I go to cruise? That Goa some boat with not boat. Cruise. Correct. So I go to cruise over there. When I am in the cruise, now where is water? Sorry, what? Not water. Where is that ship? The ship is somewhere on the Arabian Sea, Bay of Bengal, etc. Arabian Sea. It is in Arabian Sea. Now, I purchased, when I went over there, I purchased a purse worth rupees 5 lakhs. So, GST is applicable on this transaction because India is up to 200 nautical miles yesterday we saw. Now, is GST applicable? Yes, sir, GST is applicable. So my question is, what GST will they be? CGST, SGST or IGST? What is the nature of supply? Whether it is interstate supply or intrastate supply? Tell me what is the location of supplier? Which state is in? Liquid state. Go base. Solid state, liquid state. Which state is in? Which state is in? is in water, no? Which state is he? He is on the water. Where was the supply made to be? In the water. So in that case, sir, whenever the supply is made in territorial waters, where if the location of supplier is in territorial waters, if the place of supply is in territorial waters, the location of supplier and place of supply shall be nearest coastal area. Nearest coastal area is what, sir? Nearest coastal area. Okay, meaning whichever coastal region is nearest to this cruise ship, that location will be taken as location of supplier and place of supply. There are two types of transactions. What are these two types of transactions? B2B transaction, B2C transaction. B2B means B2B. Registered person to registered person. B2C means registered person to unregistered person. Okay, shall we start now? Place of supply, very beautiful topic, very important topic. Students, very important topic for your exam. GST will be completed in next 10 minutes. Why? You want to go somewhere? Someone is calling you. The GST will complete. Hey, GST will be over maybe by 3 o'clock. I told 12. Oh, already 12 is over, so you are asking to me. A very, very important chapter we have to discuss. ITC. Train, I will go live. I will now, let me first, please. Online students, place of supply of goods. Place of supply of goods. Where the supplier and the recipient both are in India. Section 10 is applicable when? When is it applicable, sir? In case of place of supply of goods, where the service provider and service recipient both are in India. Not service provider, only supplier and recipient both are in India. Section 10, subsection 1, clause A says, if the supply involves movement in goods, supply involves movement in goods. I am supplying a goods. You see over here, I am supplying sarees from Chennai to Mumbai. So there is a movement of goods happening from Chennai to Mumbai. So in this case, what is the place of supply, sir? Location where a movement is terminating. Where is the movement terminating? Terminating means what, sir? Where is the movement ending? Where is the movement ending, sir? Mumbai. So place of supply will be Mumbai. So if I am making a supply of goods where movement is there, wherever the movement is terminating, that place will be said as place of supply. Place of supply where the supplier and recipient both are in India. Supply involves movement in goods. The place of supply will be the place where movement is terminating, ending. Now over here, what is required to be seen for determining place of supply? Sorry, what is required to be seen for determining nature of supply? Location of supplier and place. Hey, just now we saw no location of supplier and place of supply is in two different states, two different unitary. Should I see the location of recipient? No, I should see location of supplier and place of supply. Now in this case, tell me what is the location of supplier? Chennai. What is the place of supply? Mumbai. Therefore, the nature of supply is interstate supply. Now, section 10(1)(b). What if the movement is caused by third person? What if the movement is caused by third person? Then in such cases, the place of supply will be the principal place of business of third person. If someone else is asking you to move the goods, then whoever asked you to move the goods, his location will be taken as place of supply. For example, what, sir? There is Priya Sarees. There is who, sir? Priya Sarees. There is Karina Sarees. And there is Nayantara Sarees. Now, please see. Karina told Priya to supply 100 Mysore silk saree to Nayantara. Karina told Priya to supply 100 Mysore silk saree to Nayantara. Hey, tell me who is my customer, Karina or Nayantara? Karina is my customer because she told me to supply 100 Mysore silk saree to Nayanthara. So tell me, can I say I will give invoice to Karina and it is Karina who is going to pay me the money? But where is the goods going? Nayanthara. Now, logically speaking, movement is terminating in Coimbatore. Place of supply should be Coimbatore. Correct, not correct? Lawmaker says no. In the present case, Dilip, you moved the goods to Coimbatore on the instruction of Karina. Place of supply will be principal place of business of Karina. Where the movement is caused by third person, place of supply will be principal place of business of third person. Section 10(1)(c). Supply does not involve movement in goods. What if the supply which I am making, it does not involve any movement in goods? What do you mean by this? What is this design? What if I have made a supply which does not involve movement in goods? For example, can I say these benches are all movable? The place where you are sitting, are they all movable? Now I sell someone this classroom as it is without moving this bench. Along with bench, everything. I send this entire classroom setup. TV also I am giving everything. And this is also movable. This is also movable. Correct, not correct? I am giving someone the entire setup as it is. I am making supply of benches. I am making supply of TV without moving them. What is the place of supply for this TV, benches, etc.? Location of the goods at the time of delivery. Location of the goods at the time of delivery. Hey, you are coming to Priya Sarees. You are purchasing a sari from me. Am I moving the sari somewhere else? I am just giving you at Priya Sarees only. You purchase the sari. I gave you the sari, putting in the cover. Now you are moving the sari. Now what is the place of supply for me? Priya Sarees, because there is no movement from my side. Correct, not correct? Next. Now, there was this new point added in last attempt. I have already asked a question on this, but there is a clarification given on this now. Section 10 CA. 10(1) CA. Supply of goods to an unregistered person. Can I say you are all unregistered person? So, if I supply goods to you, lawmaker says, is the unregistered person address recorded on the invoice? Have I mentioned the address of unregistered person on the invoice? Yes, sir. Place of supply will be address which is mentioned on the invoice. Sir, what if I have not mentioned the address of the unregistered person on the invoice? Location of the supplier. Hey, please note. You come to Priya Sarees. You don't take invoice at all. What is the place of supply? Priya Sarees, location of supplier. You come to Priya Sarees. You take an invoice. I just write your name and give. Location of Priya Sarees. You come to Priya Sarees. I give you an invoice and you tell, sir, I am from Andhra. What is place of supply? Andhra. Hey, are you understanding something here? Now this is the clarification. What is the clarification, sir? Clarification says, in case of e-commerce transaction, if they are making supply to unregistered person, for example, some goobes are there. Okay, some goobes are there. What do they do, sir? They are in Chennai, but their dot is in Kerala. Take Sundari, wapas you take. Google, I'll take good pose. I'll give. Now, Sanjana, you are from Hosu. And your dot is from? Your dot. Hey, don't do ways. Hey, look at her smile once. By looking at her smile only, we can say no, she has not. Now, Aditya is from Chennai. You cannot. Please note. Flipkart. Aditya is from Chennai. Aditya booked some dress for Aditya's daughter. She told, Adu, it is my birthday. Not dress, shoe he gifted. He gifted dress. Now she told, I want high heel sandal. So he ordered that sandal from Flipkart. He is in Chennai. She is in Kerala. Bringing Gogone to water. She is in Kerala. Okay, not okay. Please understand this carefully. That Gube, which Flipkart is going to give a bill to him, and the goods are shipped to her. Both are unregistered person. What is the place of supply? What is the place of supply? Hey, please note, a similar kind of transaction happened between me and Karina. Hey, correct, not correct? I am giving an invoice to Karina, shipping the goods to Nayantara. In this case, place of supply was location of Karina because he was a registered person. Now, what if he as well as she, they both are registered person? When an unregistered person is placing an order on Flipkart and his billing address and delivery address are two different locations, will be place of supply, sir. Billing address or delivery address. Lawmaker says place of supply will be the location where goods are delivered. Okay. Clarification. Please see. Normally, if you make a supply to an unregistered person, what will be the place of supply? The address mentioned in the invoice. What if no address is mentioned, sir? Location of supplier. If you purchase something online, what is the place of supply, sir? Location where the goods are delivered. Please note, can I say the address mentioned on the invoice will be his address, billing address, but still the delivery is happening in Kerala, therefore Kerala's address, Kerala will be taken as place of supply. Section 10(1)(d). 10(1)(d) talks about what, sir? Place of supply in case of installation and assembly. There are some products which are required to be installed at one location. There are some products which are required to be assembled at one location. So in case of installation and assembly, wherever the product is getting installed or assembled, place of supply will be that location. What will be the place of supply? The place where installation or assembly is happening. Section 10(1)(c). Supply on board a conveyance. I am supplying the goods to you when I am in train. Today I am going to leave at 5:30. Okay, at that time I will be in train. So some attendant will come, he'll come, oh sir, do you want these chips, etc. He'll come and sell some products to me. So some people will purchase, some people will not purchase. When I'm in flight, air hostess will come, hello sir, you want something from me, you want some products from me, etc. I'll say yes. So in that case, somewhere in the air I am okay. I am somewhere in the air, I am purchasing a purse from air hostess. What is the place of supply? She's not going to put her mouth outside, head outside and check which state we are in. What is the place of supply in that case? Where we are landing is the place of supply. Lawmaker says, in case of supply of goods on board a conveyance, place of supply will be location where the goods are taken on board. Which was the location when the goods were taken on board? Whichever location it is, that location will be taken as place of supply. Okay or not okay? This is all about place of supply of goods. Place of supply of goods 11, not there in your syllabus, but it talks about import and export. In case of import of goods, location of importer will be place of supply. In case of export of goods, place outside India will be place of supply. Okay, yeah. Section 12. Section 12. Very important section. Place of supply of services. 5 marks question comes from this chapter. 5 marks question. Which chapter? Place of supply. Good chapter it is. Very easy chapter. Very easy chapter. Have I not? How to present also I'll tell you. Place of supply of services. Section 12 subsection 1 says, if you want to determine the place of supply of services, where the supplier as well as recipient both are in India, then you ask section 12, it will tell you the answers. See, normally, general rule, normally for services, what is the place of supply? If the supply is made to a registered person, the principal place of business of that registered person, meaning wherever he has taken registration, that location will be taken as place of supply. If the services are supplied to a registered person, the principal place of business of registered person will be place of supply. So what if the services are given to unregistered person? Then check whether that unregistered person's address is available or unregistered person's address is not available. If you have that person's address, place of supply will be whatever address is available with you. So what if I don't have address? Place of supply will be location of supplier. Location of supplier. Now, for example, I filed income tax return of Infosys. Infosys, is it a registered person? Yes. So, if I am supplying it to registered person, what is the place of supply? Location of registered person. What if Infosys is not registered person? Check whether you have address of Infosys. Yes, address is Bangalore. So, place of supply will be Bangalore. Sir, what if I don't have address also and it is not registered also? Supplier's location will be taken as place of supply. Now, sir, how will I answer this question in the examination? Answer should be in 4 steps. First, you should tell location of supplier and location of recipient both are India. Therefore, I am applying section 12 to determine place of supply. Then, now you should determine place of supply by whichever section it is. Once you determine place of supply, then you should tell, since location of supplier and place of supply is in same state, it is intrastate supply. Since location of supply and place of supply is in 2 different states, it is interstate supply. Then once I determine that, therefore, the type of tax which they have to pay is IGST or CGST, SGST. And last conclusion will be, already we have told what type of tax is there. Now, for example, I made a supply to Infosys. What will I write, sir? In the present case, the supplier and the recipient are both located in India. Therefore, the provisions of section 12 are applicable for determination of place of supply. Now, this is optional. Even if you don't write this, no problem. But why we should write is, section 12 is for service and 10 is for goods. So you can just give reference to 10 and 12 if you don't want to write completely. So in the present case, place the time of supply will be determined by applying provisions of section 12. Now, as per section 12.2, if you know the section number, as per section 12.2 of IGST Act, or as per the provisions of place of supply mentioned in IGST Act, where any services are supplied by a registered person, where any services are supplied to a registered person, the place of supply of that services shall be the principal place of business of registered person. In the present case, the place of supply of services supplied by Dilip to Infosys is Bangalore, which is the registered principal place of business of registered person. Since, so I wrote about the place of supply. Now I'll give, since the location of the supplier and place of supply is in Karnataka, same state, the nature of supply is intrastate supply and CGST and SGST will be applicable. Now see, normally for services, section 12 is applicable. Section 12 subsection 2 is general rule, meaning I will apply the provisions of section 12 subsection 2 if you are not able to find the answers under section 12 subsection 3 to section 12 subsection 14. Under these sections, if you are not able to find the answer, then you will find the answer under section 12.2. That is a general rule. Section 12.3 to 12.14 are specific rules applicable only for those people. For example, I told all the 3 points. Supplier is unregistered person. Why will he pay GST? Correct. Now, why will he pay GST when he is unregistered person? The question of section Tarkuri. Yesterday I know Saturday, full Tanni is there. Lemon also you should have had. Section 12 subsection 3. Services directly related to immovable property. A section 12 subsection 3 talks about what, sir? Services which are directly related to an immovable property. What are the services related to immovable property? Renting of immovable property, giving immovable property on lease, construction of immovable property, interior designer services, architect services, hotel, renting of hotel rooms, etc. Those services, including boat house in Kerala. Now, in these cases, what will be the place of supply? In the above cases, what is the place of supply, sir? Place of supply will be the place where immovable property is located or intended to be located. The place where immobile property is located or intended to be located. However, there are two provisos. What are these provisos telling? See, normally, for example, I am giving a house on rent. I am from Bangalore. I have a house in Chennai. I have rented it to a person in Delhi. What is the place of supply? I am from Bangalore. I have a house in Chennai. I have rented it to a person in Delhi. What is the place of supply? Why sir Chennai? Because it is a services related to immobile property. Wherever immobile property is located, that location will be taken as place of supply. You okay, not okay? So someone is constructing the immobile property. Wherever the construction is happening, that will be located at treated as place of supply. Now, sometimes what may happen is by determining the above determining the place of supply using above provision, sometimes it may happen that place of supply is coming in two different states. Then what should I do, sir? Where the supplier and recipient are both, where the immobile property is located at more than one state or more than one union territory, place of supply shall be taken proportionately. For example, so I have a land on the border of Karnataka and Tamil Nadu. Okay, 60% is in Karnataka, 40% in Tamil Nadu. Now I have given this land on rent to someone. What will be the place of supply? 60% Karnataka, 40% will be. Similarly, where the supplier and the recipient are in India, where the supplier as well as the recipient both are in taxable territory, that is India, and the place of supply is coming as outside India. The place of supply will be location of recipient. Sir, Purile. For example, I have, Burj Khalifa in Dubai. Right next to Burj Khalifa in Dubai, I have constructed mini Burj Khalifa. Who constructed this? There is a builder from Bangalore, prestige builders from Bangalore. They constructed mini Burj Khalifa for me. Hey, can I say service provider? Service provider is in India. Service recipient is in India. But place of supply is coming to outside India. Lawmakers are telling in such cases, if service recipient and service provider both are in India, and if the place of supply is coming as outside India, place of supply will be location of recipient. Section 12 subsection 4, performance based services. There are some services which are required to be performed. There are some services which are required to be actually performed. In respect of these services, what is the place of service supply? Section 12 subsection 4, performance based services. In case of restaurant services, outdoor catering services, personal grooming, fitness, beauty treatment and healthcare services, the place of supply will be location where the services are performed. In case of which services, sir? In case of performance based services. What is performance based services? Housekeeping services or what? A personal restaurant services, outdoor catering service, personal grooming, fitness, healthcare and beauty services. In these services, the place of supply will always be with the place where services are performed. For example, I am doing haircut, personal grooming. I go to a salon and do haircut. What will happen? Place of supply is salon. What if that I call that salon fellow only at my house? Place of supply is my house. Mukesh Ambani's daughter wedding function happened in Udaipur Palace. Okay, it happened in Udaipur Palace. Now, he called Murugan Idli fellow from Chennai to supply idli over there. Okay. Murugan Idli fellow was supplying idli. Now, please note, this is an exam question. Of course, not Murugan Idli, but exam question. Mukesh Ambani conducted his daughter's marriage. Where did he conduct his daughter's marriage, sir? At Udaipur Palace, which is in Rajasthan. This palace belongs to a person who is staying in Delhi. He stays in Delhi. Now, Mukesh Ambani, can I say he took renting of immobile property services? Similarly, he asked Murugan Idli from Chennai to supply food at Udaipur. To supply idlis, dosas, etc. at Udaipur for that wedding function. What is the place of supply? There are two services involved. One is renting of immobile property and one is services of supplying food, outdoor catering services. What is the place of supply for renting of immobile property? See, all the people are at different location, but the property is located at Rajasthan because it is a service related to renting of immobile property. Wherever the immobile property is located or intended to be located, that location will be taken as place of supply. What about Murugan Idli services? Are also Rajasthan. Why Rajasthan? Because he will not prepare idlis here and give there. He will have to prepare idli live over there. Correct? So for that also performance is happening in Rajasthan. Section 12 subsection 5, training and performance appraisal services. Training and performance appraisal services. If these services are given to a registered person, the place of supply will be location of registered person. But if they are given to an unregistered person, place of supply will be location where the services are performed. For example, I am giving training to employees of Infosys. Infosys is a registered person. Place of supply will be wherever the registration has been taken. What if I am giving training to you guys? You are all not registered person. Place of supply will be location where I am performing. A location where the services are performed. Section 12 subsection 6, admission to an event or amusement park. Whenever I am going to an event or an amusement park, for that what is the place of supply? Admission to means what's that? Entry fees. They are talking about entry fees. Entry fees to event or amusement park. Place of supply will be location where the event is held or the place where the park is situated. Organization of an event. Organization of an event means conducting an event. Say some circus is happening. So if I go to that circus, can I say it will be admission to event? Hello. But there will be someone who will be organizing that circus. For that, what is the place of supply? Hey, can I say for IPL match which I am going and watching, it is admission to an event, ticket price, whatever you pay. But there will be someone who's organizing these matches. For that, what is the place of supply, sir? If that services are given to a registered person, place of supply will be principal place of business of registered person. But however, if I am giving services to an unregistered person, the location where the event is held. Provided that where the supplier and the recipient both are located in taxable territory, that is India, and the place of supply applying the above provision is coming as place outside India, then the place of supply will be location of recipient. It is the same as that immobile property. Both the points. If the immobile property I have written over here. If the event is held at more than one location, then sir, if the event is held at more than one location, the place of supply will be taken proportionately. There are good examples given. Just have a look into this example. Services related to transportation of goods. Services related to transportation of goods. If these services are given to a registered person, place of supply will be principal place of business of registered person. But if services related to transportation of goods is given to an unregistered person, the location where the goods are handed over for transportation will be taken as place of supply. Hey, please note, I am taking transportation of goods services. I am Priya Sadis taking transportation of goods services from VRL Travels. I am a registered person. Place of supply will be location of registered person. What if you are taking? You are all not registered person. So wherever you hand over the goods to them, you will go there and give your goods. Please dispatch these goods. That location will be taken as place of supply. Passenger transport services. Passenger transport services means what, sir? Passenger transport services. If that passenger transport services are given to a registered person, location of registered person will be taken as place of supply. But if passenger transport services are given to an unregistered person, place of supply will be the location where the passenger is embarking the conveyance for continuous journey. For example, next week we are going to have some JM program. JM program, those who have qualified their examination, etc., they can come and attend that program. Okay, so there will be faculties coming from Bangalore, and we are going to come in a bus. So our institute has taken WhatsApp, they have taken a bus on rent. Can I say that bus person is giving services to a registered person for transportation of people, passengers? What is the place of supply? Location of registered person, wherever an institute is registered. What if I came to Chennai yesterday in bus I came. Place of supply is, I booked the bus in a place like for example here where the buses go starts their journey from Kelambakam, the bus starts their journey over here, right? Now, but I could not catch the bus in Kelambakam, the control remote. So what I did, sir, I went running behind the bus, and 2 kilometers away near Nungambakam, I caught the bus. My bus came this side. What is your problem? So my question to you is, what is the place of supply? Services are provided to an unregistered person for transportation of passengers. What is the place of Kelambakam or Nungambakam? Kelambakam only, I am telling good. Don't do Tarpuri. Now please tell me. Yeah, tell me the answer. That is important. Now, if the examiner is making spelling mistake in exam, will you laugh? You will answer the answer. Yeah, tell me the answer. Are place of supply will be location where I am embarking the conveyance. Where did I embark the conveyance? Where did I? Kelambakam I wanted to go, but the bus went. I went running behind, and I got 2 kilometers away in Nungambakam. What is the place of supply? Hey, please note. If the services are given to a unregistered person, place of supply will be location where the passenger is embarking the journey for embarking the conveyance for continuous journey. But this is not applicable for right to passage. Some people will have bus pass, metro pass. For that, it is not applicable. Why, sir? Because bus pass, you have to go and take the pass once. Then you can use that anywhere you want in life. Correct? In your own limits, city limits, state limits. So in that case, right to passage means bus pass, metro pass. This provision is not applicable. What is applicable? Normal, general rule will be applicable. Section 12. Section 1210. Section 1210. Services on board a conveyance. Sir, what if I take services when I am in an aeroplane? What is the place of service? Hostess came to me. She told me, Dilip, do you want some services from me? I said, yes, baby. I thought, yes, sir. I want some services. Now, what is the place of supply for that? Aeroplane, they go away. What is the place of supply, sir? First scheduled point of departure of that conveyance. Exam question I'll ask you. I'll ask you an exam question. Okay, in services on board a conveyance, what is the place of supply? First scheduled point of departure of conveyance. I'll ask exam question. Please see. There is an aeroplane which is starting its journey in Chennai. I am a person who is an unregistered person who boarded the aeroplane in Bangalore, and in the flight they loaded some goods. Where, sir? In the Hyderabad they loaded some goods in the flight, and I wanted to go to Jaipur. Okay. Now, when the flight was somewhere between Mumbai and Delhi, I purchased some wallet, purse. I purchased wallet. She came, I purchased some wallet. Then when the flight was somewhere between Kolkata and Jaipur, I took some services from her. That, say, iPad I took for watching movies, etc., whatever services. Now, my question to you is, what is the place of supply for passenger transport service? What is the place of supply for goods which I have purchased? What is the place of supply for services which is given to me? You see the answers and tell everything. What is the place of supply? For passenger transportation, can I say because I am unregistered person, the location where the passenger is embarking the conveyance? For goods transport, though I have purchased the goods when the flight was between Mumbai and Delhi, what is the place of supply? Location where the goods are loaded on the location where the goods are loaded on the boat. And for services, though I took it in Kolkata and Jaipur, I will see what is the place where flight started its journey. First scheduled point of departure. Section 12.1, 12.11. Section 12.11. In case of telecommunication services means your internet services, your postpaid services, your prepaid services. You have chhatri in your house. Sanna meri Allah boobe channa. Hey, you have antenna no in antenna. Dish TV you have in your life. Yeah. Whatever it is. Fixed line services. Fixed line means landline is fixed line. It is fixed at one location. Landline. Dish TV. It is fixed at one location. So that is telecommunication related. What is the place of supply, sir? Location where it is fixed. What about postpaid? Mobile phone can be prepaid phone, postpaid phone. What is postpaid? Postpaid. You are paying once the bill is generated. What is the place of supply for that? Billing address. Prepaid means you should recharge, then you can use. Location where the recharge voucher are sold. Nowadays, everyone is doing online. So online it is your billing address. In case of banking related services given by a banking company, NBFC or a stock broker, the place of supply will depend on whether the location of recipient is available or not available. If the location of recipient is available, the place of supply will be location of recipient. If the location of recipient is not available, place of supply will be location of supply. In case of insurance related services, if the services are given to a registered person, place of supply will be principal place of business of registered person. If it is given to an unregistered person, address which is available with the supplier. Yeah, okay, not okay. That is all about this chapter called as place of supply. Now we'll take a break. Lunch break. Now we'll take or later. Well, no, because now the chapter which I start is a big chapter. And it is good chapter, big chapter. Chota time. We'll finish shorter chapters. That rhythm will not be there, flow will not be there. Anyways, we are not understanding. Hey, don't go well. No, registration is also a good big chapter. Accounts and records bill. Tax invoice, debit note, credit note. Small chapter, easy chapter. Half of this chapter is there. Whatever. Now, tax invoice, debit note, credit note. Half of this chapter we have already discussed. What is there in half of this chapter? What is the due date of issuing invoice? For goods, if movement is there, on or before removal. If movement is not there, on or before delivery. If the movement is caused by, if there is a continuous supply of goods, successive payment dates or successive statement date, whichever is earlier. And in case of sale on approval, the type, what is the date of issuing invoice? Date of approval or 6 months from the date of removal, whichever is earlier. And in case of services, normal cases, on or before removal or within 30 days from the date of removal. And in case of services continuous supply, 3 categories we saw. Now, tax invoice, debit note, credit note gives you the list of different documents which can be issued under GST law. What are those list of different documents? These documents are document number 1? Tax invoice. Tax invoice is document number 1. Who is required to issue tax invoice, sir? Tax invoice is required to be issued by a person who is making taxable supplies. If you are making any supply which is taxable, then you should issue a document called as tax invoice. Then how many copies of invoice I should issue? If you are a supplier of goods, 3 copies. One for the supplier, one for the recipient, one for the transporter who is going to transport the goods. And if you are a service provider, 2 copies. One is for the supplier, one is for the recipient. Now, what are the contents of tax invoice, sir? The contents of tax invoice is, meaning what are the different things which are required to be present in the tax invoice? Name of the name, address and GST number of the supplier, invoice number, document number, whatever it is, date of issue of the document, name, address and GST number of the recipient, HSN code, description of goods or services, quantity, unique quantity code, rate per unit, value of supply, tax amount, total invoice value, etc. So these are the contents which should compulsorily be present in a tax invoice. Now, with respect to invoice number, it is very important. Invoice number should be unique for every financial year. Invoice number should be consecutively serial number 1, 2, 3, 4, 5, 6. It should be properly serially numbered. Invoice number can have alphabets. It can be alphanumeric. Okay, and it should not have any special characteristics. Special characteristics should not be there, except forward slash and hyphen or dash. Now, one of the important item which is required to be present in the invoice is HSN code. What is HSN, sir? HSN is harmonized system of nomenclature. It is a method of identifying different goods and services. How do I classify the goods and services under GST law? Using HSN, I classify the goods and services. It is a 8-digit code which is used for classification of goods and services. This HSN code is required to be mentioned by you on the invoice which you are giving. Now, because it is a 8-digit code, how many digits should I mention in the document, sir? Lawmaker says, if your aggregate turnover is up to 5 crore rupees, for B2B supplies mention 4 digits compulsorily, and for B2C supply also mention 4 digits, but for B2C supplies it is optional. But if your aggregate turnover is more than 5 crores, for B2B as well as B2C supplies, you can mention how many digits, sir? 6 digits HSN compulsory. If the turnover is more than 5 crores, 6 digits for everyone. If it is less than 5 crores, B2B, B2C 4 digits, but B2C it is optional. Now, you don't have to give a tax invoice. When should I not give a tax invoice? If the supply is made to an unregistered person, value is less than 200 rupees, and that unregistered person does not require any invoice. Instead of giving individual tax invoice, you will have to give one single consolidated tax invoice for all the supplies made by you to an unregistered person. For example, a provision store near your house. You go purchase chocolate over there, biscuit over there, some everyday basis you will purchase many products whose value is less than 200 rupees. Now, will he, and you are an unregistered person, will he keep on giving invoices to everyone? That person will not be able to concentrate on the business. So what lawmakers are telling, for when you are making a supply whose value is less than 200, and if the supply is made to an unregistered person, and if that unregistered person is not requiring any invoice, you don't issue any separate tax invoice. Instead of that, you do the total of all that supply and issue a tax invoice, consolidated tax invoice. Issue what, sir? Consolidated tax invoice. To whom will I issue? No one. You just have to keep a copy telling supply made to unregistered person. Then invoice does not need any signature if it is a computer generated invoice. Now, there is also a concept called as e-invoicing. E-invoicing is not a concept wherein you generate the invoice online. What is e-invoicing, sir? E-invoicing is a mechanism where all the B2B invoices, whatever invoices you have issued, whether in manual form or in electronic form, etc., all the business to business invoices, registered person to registered person invoices are required to be authenticated electronically on a portal called as GSTN. This will be used by the common portal for its further use. Now, under invoicing, what will I do, sir? An unique invoice identification number, IRN, will be given. Invoice reference number will be given, which is issued for every invoice which is registered on invoice registration portal. Now, who has to Generate invoices, sir. Any registered person whose aggregate turnover in any preceding year starting from 2017-18 was more than 5 crore rupees, we should issue invoice. There are few people who are not liable to issue invoice. Who are these? Government CPICs, meaning these people don't have to issue invoice. Who are these, sir? Government CPICs. Government Department Local Authority. C for Cinema Halls and Multiplexes. PIG means what, sir? Passenger Transport Service Provider, Insurance Companies, Banking Companies, Goods Transport Service Provider, and SEZ units. SEZ units. SEZ developer has to issue invoice. SEZ unit does not have to issue invoice. Now this is how your invoice looks like. Now there is one more document called as revised tax invoice. What do you mean by revised tax invoice, sir? Whatever invoice I have issued, I am making a revision now? No. Revised tax invoice means for whatever supply is made by me, for whatever supplies which is made by me, for whatever supplies is made by me from the date I was liable for registration till the date of grant of registration, whatever supply I made for this period, I will have to give a document called as revised tax invoice. Revised tax invoice is a document which is given for all the supply made between effective date of that between the date when you are liable for registration till the date of grant of registration. Now this is required to be issued by you within 30 days. Revised tax invoice is a document which is required to be issued from effective date of registration till the date of grant of registration. It is required to be issued within 1 month. Next is what, sir? Bill of supply. What is bill of supply? If you are making any supply on which you are not supposed to collect any tax, then you should issue a document called as bill of supply. So bill of supply, it is required to be issued by a person who is making exempt supply or a person who is paying tax under section 10. That is composition dealer, because they both are not required to collect taxes from their customers. Where a registered person makes taxable as well as exempt supply, he will issue one single document called as invoice cum bill of supply. Receipt voucher. What is receipt voucher, sir? Receipt voucher, registered person who receives any advances for supply of goods or services or both will issue a document called as receipt voucher. Where at the time of receipt of advances, the GST rate is not known, take the GST rate to be 18%. If you don't know the nature of supply, take the nature of supply to be interstate supply. There is something called as refund voucher. So what is refund voucher? If you are refunding the money from whom you have taken advances. I have taken advances from someone, now I am giving it back to him. When I receive the advances, I will give something called as receipt voucher. When I refund the advances, I will have to give refund voucher. Where any advances is received for supply of goods or services or both, and subsequently no supply is made or no tax invoice has been issued, the registered person shall issue a refund voucher. Then we have payment voucher. Payment voucher, a registered person who receives supply taxable under reverse charge. If you are receiving any supply which is taxable under reverse charge under section 9.3 or 9.4, he shall, while making the payment to such supplier, issue a payment. Now next, one document is there, important document. This question is important for theory. Goods transported in semi-knockdown condition or completely knockdown condition. What is the procedure required to be followed? Delivery challan. Delivery challan is what, sir? Delivery challan is delivery challan. Delivery challan. What is delivery challan? What is this one telling? Delivery challan or document which is used. Now what is delivery challan, sir? For example, if I want to just transport the goods from one place to another place, I will have to give the document called as delivery challan. Delivery challan is required to be given for supplying LPG liquid gas where the quantity is not known at the time of removal, or you are transporting the goods for job worker, or you are transporting the goods for any reasons other than supply. Now delivery challan number which is there, it should be not more than 16 characteristics. It can be in one or multiple series. It should be issued at the time of removal, and it should be issued in triplicate copies. And after, once the goods are delivered, if they are purchased, then you should issue a tax invoice. Now most important is what is the procedure which is required to be followed if the goods are sent in lots? I am sending the goods in installment, or I am sending the goods in semi knocked down condition or completely knocked down condition. Now, what is the procedure which I have to follow? Whenever the goods are sent in semi knocked down condition, for example, if you see this windmill, no, this windmill which you see windmill here, right? That windmill, do you think that entire windmill from factory they will take and they will put it over there? No, they will take in different parts. So one part will go first, second, third, fourth, fifth, sixth, seventh, etc. Eighth, whatever, they will go in parts. Now, what is the procedure which I have to follow when I am sending the goods in? This is completely knocked down condition. It is completely built over there only. In such cases, lawmaker says before the first consignment is going, lawmaker says what, sir? The supplier should issue a complete invoice before dispatch of first consignment. Before the first lot is going, before the first installment is going, you should issue an invoice for windmill. For full windmill, you issue an invoice. You don't have to send the invoice to anyone, but just issue an invoice. The supplier should issue a complete invoice before dispatch of first consignment. The supplier shall issue delivery challan for each and every subsequent consignment giving reference to invoice. So as and when different parts are going, you should issue a delivery challan for each and every part, part 1, part 2, part 3, and you should attach a copy of original invoice which you have already generated. You should not send original invoice, just attach a copy. Copies of corresponding delivery challan should accompany with consignment, with each consignment duly certified copy of. So whenever each consignment is going, what should be there? Copies of delivery challan along with copies of original invoice, but not the original invoice. And when the last consignment is going, the last consignment original copy of invoice shall be sent along with the last consignment. Now there is something called as debit note and credit note. Credit note is required to be issued by you to reduce the value of supply which is already made by you. If you have already made the supply, if you want to now reduce the value of that supply, you will issue a document called as credit note. Debit note is required to be given by you to increase the value of supply. If you want to increase the value of supply which is already made by you, you issue a debit note. Now, one of the examination 3 marks question which was asked was, what are the reasons for issuing credit note? What are the reasons, sir? When can I issue credit note? If the taxable value declared in the invoice is more than the actual value, if the tax rates declared in the invoice is more than the actual tax rates. For example, in the invoice I have shown the value as 10 lakhs. Actually the value is only 8 lakhs. So can I say I should reduce the value? What will I give? Credit note. In the invoice I showed a tax rate of 18%, but actual tax rate is 12%. Can I say I want to reduce the value? I will give a credit note. So taxable value declared on the invoice is more than actual value. Tax rate declared is more than the actual tax rates. The quantity received is less than the actual quantity declared on the invoice, or if the quality of the goods is in deficient, or the goods are returned, sales return is happening. In this situation, what will I do, sir? I will issue credit note. Now, whenever you are issuing a credit note, you should also inform government that you have issued a credit note. So, what is the time limit of declaring the details of credit note, sir? Any registered person who issues a credit note shall declare the details of such credit note in the month in which such credit note is issued. Whichever month you are issuing credit note, at that month you should declare. But what is the last date for declaring, sir? Not later than 30th November of end of the next financial year, or the date of furnishing annual return, whichever is earlier. Meaning, I should declare it latest by 30th November of, for example, if the credit note relates to 24-25, 30th November 2025, or the date of filing annual return for 24-25, whichever is earlier. Similarly, debit note. When is debit note required to be issued by me? Debit note is required to be issued by you to increase the value of invoice which is already issued. So, for example, the taxable value which is declared by me on the invoice is less than the actual taxable value. Tax rate declared in the invoice is less than the actual tax rates. The quantity of the goods is
more than what is actually mentioned in the invoice. So this, when should I declare debit note in the to the government, sir? Any registered person who issues a debit note should declare the details of such debit note in the month in which such debit note is given. Can I declare it later? Not allowed. Okay, yeah. Now we'll take a break and discuss this other topics which are there after a break. We'll meet at what time? 2 o'clock? 2 o'clock we'll meet. $150. Okay. 145 is also fine for half an hour. Okay, 145 will be. Okay, we'll meet whatever time we want to meet. Come by 1 hour, 150. Okay, let us meet after some time. Online students, bye. Which paper you are more confident? You are writing both the groups? Both you are confident. Input tax credit. The next topic for our discussion is what, sir? Input tax credit. You don't like theory paper. Input tax credit, accounts you should have tried it. Accounts is scoring paper. Law, I mean, girls will like law. Input tax credit. Input tax, you like girls, huh? Input tax credit means what, sir? Input tax credit means very important chapter, one of the most important chapter of your entire GST law. Input tax credit means credit of input tax. So if you are taking the benefit of the taxes paid by you on purchases, that means you have taken input tax credit in simple language. Now, what is the definition of input tax credit says? Input tax credit definition says input tax credit means credit of input tax. If you are taking advantage, if you are taking credit of input tax, that means it is input tax credit. Now, input tax means taxes which is paid by you on your inward supplies. Whatever tax you pay on your purchases, whatever taxes you pay on your inward supply, that is your input tax. And it includes taxes paid under reverse charge. It includes taxes paid on import of goods under customs law. But input tax does not include the tax which is paid by you under section 10, composition dealer. Now please note, whether you pay reverse charge under 9394, 5354, 7374, it does not matter which section you are paying reverse charge. Whatever taxes you are paying under reverse charge, they are all called as your input tax. Now please note, a person can have inward supply from two places. One is from goods and then other one is services. Now goods are divided into two categories. Goods are divided into capital goods and normal goods or inputs. What is capital goods, sir? Any goods which are capitalized in the books of accounts are called as capital goods. What is normal goods, sir? Any goods which are not capitalized in your books of accounts are. So capital goods means all those goods which you are capitalizing in your books of accounts. If something is not capitalized in your books of accounts, it is normal goods. Now, section 16 is the first section. You can take input tax rate on inputs as well as capital goods, even services. Services which you are purchasing is called as input services. Now please see. Section 16, 17 and 18 are the three sections which are there for you at your syllabus at intermediate level. Section 16 talks about what? Conditions. Section 16 talks about what, sir? Conditions. What are the conditions which you are required to fulfill to take input tax rate? Section 16 subsection 1 says every registered person shall be eligible to avail input tax credit on goods or services or both which is used by him or intended to be used by him in the course or furtherance of business. So if there is any goods or services which you are purchasing and which you are using, or even if you have an intention to use it for your business purpose, then in the course of furtherance of your business, then it is said that you have taken input tax credit. Provided who can take input tax credit? Only registered person can take input tax credit. Please note, taxable person should pay the taxes. Registered person can take input tax credit. Only registered person can take input tax credit. So if you take registration in the middle of the year, any purchase made after registration, you are allowed to take input tax credit. Any purchase made before registration will not be allowed as
Now, if I want to take input tax credit, I have to be a registered person. Now, are there any conditions for taking input tax credit? There are some conditions for taking input tax credit. What are those conditions, sir? The registered person. He over here means registered person. The registered person should have possession of tax invoice, debit note, and or any other tax paying document. Okay, he should have the possession. He should have the document with him. He should have actually received the goods or services on book. If I want to take input tax rate, I should have actually. I should have what, sir? Actually received the goods or services or both. Then condition number 3. If I want to take input tax rate, I should have I should have actually received. After that, what did we study? If I want to take input tax rate, I should be in possession of tax invoice, debit note, any other tax paying document. I should have actually received the goods or services. Condition number 3, the supplier should have filed his return. Condition number 4, the person who is taking input tax rate, he should have filed his return. Supplier should have paid the taxes. I, who wants to take input tax rate, should have filed the returns. And please note, very important condition, very important condition. See, these 3-4 conditions which are there, they were in the law right from the beginning. Which are the conditions which were there in the law right from the beginning? He should be in possession of tax invoice, debit note, or any other tax paying document. He should have actually received the goods or services. Supplier should have filed his paid the taxes to the government, and I, who is taking input tax rate, should have filed the returns. Now, there are some additional conditions which were added. What are those additional conditions? Very important condition. The registered person can take input tax rate if the details of the supplies are furnished by the supplier in his GSTR1 and the same has been communicated to the registered person. Meaning, if I want to take any input tax rate, if I am making some purchases, if I want to take input tax rate on those purchases, the details of those purchases should be communicated to me. Okay, the seller, the supplier is going to file a return called as GSTR1. When he files his GSTR1, that information will come in my GSTR2A and GSTR2B. Only when that information is coming in my GSTR2B, I can take input tax rate. Sir, once again repeat. Okay, what happens is, normally, whoever is making a sale, he has to file a return called as GSTR1. Now, if he files his GSTR1 to the buyer, that information will come in GSTR2A and GSTR2B. Now, the new condition says you can take input tax rate only when the information is coming in your GSTR2. Now, GSTR2A will give the details of the purchases made by you in a month. But GSTR2B will give the details of only those purchases for which the supplier has filed the return within the due date. So, all the purchases made during a month will come in GSTR2A, but GSTR2B will give me the details of the purchases for which return is filed by the supplier within the due date. Now, please note. Let us say October 24 is the month. I filed the return for October 24. Now, the return for October 24 is filed within the due date. So, can I say the information of this will go in GSTR2A as well as GSTR2B? Because GSTR2A will definitely information will go. 2B it will go only when it is filed within the due date. Now, what if I file my GSTR1 after the due date? If I file my GSTR1 after the due date, then lawmaker says the information will go to the recipient in his GSTR2A of the same month. Same month means October month. Now, because I have filed after the due date, it will go in GSTR2B of the month in which I have filed the return. Yeah, you understand? I can take input tax rate only when the information is coming in 2B. For example, if I have made purchases of 10 lakh and that information, if I have made purchases of from 10 people or 10 lakh, what is it? Yeah, okay, I'll take this in. Say Priya Sadis purchased goods from 10 people and the total input tax rate of this one is what? 1 lakh. So each and every person is giving me a credit of 10,000. Now 8 people filed their GSTR1. 2 people did not file their GSTR1. The people who supplied me the goods, 2 of them did not file the GSTR1. Can I say this information will not come in GSTR 2A as well as 2B? Only when they file, I will get the information. So because the information is not coming, can I say I cannot take input tax rate on these 2 invoices? Correct, not correct. Now, out of 8 people who have filed their GSTR1, 6 people have filed the GSTR1 within the due date. 2 people have filed the GSTR1 after the due date. 6 people have filed the GSTR1 within the due date. Sir, what do you mean by this? Out of 8 people who filed the GSTR1, 6 have filed within the due date. So can I say that information about these 6 people will come in my GSTR 2A as well as 2B of same month? Out of these 8 people, 2 people filed after the due date. If you file it after the due date, it will come in GSTR 2A of same month, GSTR 2B of next month. So for these 2 suppliers, though they have filed their GST return, I will not be able to take the credit because it is not coming in GSTR 2B. When can I take input tax rate? Only when the details are communicated to me. Where should it be communicated? In GSTR 2B. Okay, this is important. And they also say that whatever details are communicated to me should not be restricted. One of the conditions says the goods or services should be actually received. If I want to take input tax rate, I should have actually received the goods or services or both. Sir, what if I don't receive? Instead of me, someone else is receiving. There is a concept called as bill to ship to. You remember this example, my girlfriend example, I gave some example, correct? Now, for example, Karina told, Priya Sari supplied the goods to Karina. Karina gave an order to Priya to supply 1000 Mysore silk sari to Anushka Sari in Udaipur. Now see what is happening. Karina is in Mumbai, Anushka is in Rajasthan, Udaipur, and Priya is in Jaipur, Rajasthan. Now please understand this carefully. Can I say I am the supplier, she is the registered person, but goods are delivered to whom, sir? Anushka. Now, because Karina is telling me to deliver the goods to Anushka, I will have to deliver the goods to Anushka. Correct, not correct? Now, can I say Karina has actually not received the goods? Who gave the order? Karina. Who is going to pay the money to me? Karina. But has she actually received the goods or services? So, can she take input tax rate? As per the conditions, she cannot take input tax rate. However, there is a exception. What is that exception telling? See, normally, if you want to take input tax rate, you should have actually received the goods or services or both. However, there is an exception. Exception is what, sir? Bill to ship to cases, where on the direction of registered person, if the goods or services are both are delivered to a recipient, then it will be assumed, it will be deemed that the registered person has received the goods and services once it is received by recipient. For example, Priya Sari is in Chennai, Karina is in Mumbai. Karina is telling me to supply the goods to Nayantara in Coimbatore. So Karina gave the order, I will give an invoice to Karina, but the goods are going to Nayantara. Now lawmaker says, as soon as Nayantara is receiving the goods, it will be deemed that Karina has received the goods. Therefore, Karina can take input tax rate. This comes. Which class, Sundari? Provided that if the goods are received in lots or installment, ITC can be taken upon receipt of last lot or last installment. If you are receiving any goods or services in lots or installment, when can you take input tax rate? Whenever you receive last lot or last installment. Provided further that if the recipient does not make the payment to the supplier within 180 days from the date of invoice, then ITC availed or taken by him shall be reversed along with interest at 18%. So if you don't take input tax rate, what will happen, sir? If you don't pay the supplier within 180 days, then you will have to reverse the input tax rate. See, for example, I made a purchase on 1st of April and I took the input tax rate on 15th of May for these purchases. Now I should pay the supplier within 180 days, which is 27th of September. 180 days will be calculated from which date? From the date of invoice. But I did not pay within 180 days. Therefore, I should reverse my input tax rate. Correct? I reverse my input tax rate. Now, lawmaker says you are required to reverse the input tax rate along with interest. Sir, interest will be calculated for which period? Interest will be calculated from the date of taking the input tax rate till the date of reversal of input tax rate. For this period, you have to calculate interest at 18% per annum. So let us say that tax amount was 12,000. So I have to pay interest at 18% for 159 days. And sir, in future I made the payment. No sir. Can I take the input tax because I made the payment? Now because you have reversed the input tax rate, since you have paid the supplier, you can take the input tax rate. Sir, I have a question, sir. What is your question? Sir, what if I make part payment? What do you mean by part payment? Sir, what if I make a part payment? What do you mean by part payment? Sir, I had to pay 1 lakh rupees, no, sir. 1,12,000 rupees, no, sir. I paid 60,000. Balance I did not pay. Lawmaker says, no problem. You reverse the ITC on unpaid money. How much is unpaid money? 40,000. On that, what is the tax amount? 4,800. On that, you pay interest for it is there. Now, please note, in examination, some words will be there. Availed, eligible, available, eligible, availed, not availed, not eligible. What does it mean? Available means available. Eligible means what, sir? Available means what? What, sir? Available means the input tax rate is available for me. That is the total input tax which is available. Eligible means, please note, I have purchased goods worth rupees 10 lakhs and on that GST is 1,80,000. So how much tax is available, sir? Input tax available is 1 lakh. In that eligible 1,80,000. In that eligible is only 1.5 lakhs. Meaning I can take ITC only on 1,50,000 rupees. Can I say 30,000 rupees is not eligible? Now, out of 1,50,000 which is eligible to be taken by me, I have taken only 1,10,000. So can I say 1,10,000 is the input tax rate availed by me? And how much is not availed? 40,000 rupees. Have you understood all these different points? Whatever tax you have is available with you. Out of that, whatever you take is availed by you. Whatever is eligible is eligible. Whatever you take is availed by you. Now, what is eligible and what is availed? The difference is unavailed. And what is available and what is eligible? The difference is not eligible. So I repeat the conditions. Conditions for taking input tax rate. I should be the person who is taking input tax rate. The registered person should be in possession of tax invoice, debit note, or any other tax paying document. And what the second condition says, he should have actually received the goods. The registered person should have actually received the goods and services, except in bill to ship to cases. The supplier should have paid the taxes to the government. The registered person should have filed the return for taking input tax rate, and the registered person should have if I want to take input tax rate, then my supplier should have furnished his GST-R1, and the details of that supply should be communicated to me. And whatever details are communicated to me should not be restricted. They should be eligible input tax rate. Now, provided that if I am receiving goods in lots or installment, I can take input tax rate on what, sir? I can take input tax rate when I receive my last lot or last installment. If provided further that if I don't make the payment within 180 days, I'll have to reverse ITC along with interest. Now, you remember that 180 days condition is there. I should make the payment within 180 days, or else the ITC which is there will be something like this condition is there. This condition is not applicable for those supplies on which you are required to pay the tax under surcharge. This condition is not applicable for deemed supplies. The supplies for without consideration is called as deemed supply, and those supplies for which expenses is incurred by the supplier, meaning I have paid the expenses which is incurred by the recipient which the supplier had to incur. Section 16 subsection 3. Can I take input tax rate on capital goods? Lawmaker says yes, definitely you can take input tax rate on capital goods, but there is a condition. What is the condition? where a registered person has claimed depreciation on under income tax law on the tax component of capital goods, he shall not be eligible to take input tax rate on such capital goods. Hey, what is this point telling? If you are claiming depreciation, on the tax amount of a capital goods, I will not give you input tax rate. See, for example, cost of the what is that, capital goods or cost of plant and machinery is 1 lakh. The GST is 18,000. So total amount including GST is what, sir? 1,18,000. So if I capitalize 1 lakh, can I say I will take depreciation on 1 lakh? If I capitalize 1,18,000, I'll have to take depreciation on 1,18,000. Lawmaker says if you are capitalizing 1,18,000, that means you are also capitalizing the tax amount. No? Okay, correct, not correct? Because you are also capitalizing the tax amount, I will not give you input tax rate. But if you want input tax rate, you should capitalize only the base value excluding tax. Now, very important is this date. Now, under GST law, if they ask you what is the last date, normally for all the things, last date is this thing only. What is the last date for taking input tax rate? What is the last date for showing the information about credit note? This date. What is the last date for taking input tax rate? Sometimes it may happen that I forgot to take input tax rate on some invoice. Now, can I take it later, sir? Yes, you can take it later. Till what time it is allowed, sir? Till when can I take it, sir? Lawmaker says last date for taking input tax rate is 30th November of next financial year, or the date of filing annual return for that financial year, whichever is earlier. Sir, purile. See, normally the due date of filing annual return, normally what am I saying? Due date of filing annual return is 31st December of next financial year. For example, for financial year 24-25, what will be the due date of filing annual return? So, for example, if I have filed the annual return on 10th of December, can I say the date of filing annual return is 10th of December? But what is the due date of filing annual return, sir? 31st of December. Now, what is the last date within which I should take input tax rate? Very important. Invoice for October 24 of rupees 10 lakh having a GST of 1.8 lakh was omitted and no input tax credit was availed on such invoice. I did not take input tax rate of 1,80,000. What is the last date of taking input tax rate if annual return is filed on 15th of August? Tell me what is the last date? 30th November of next financial year. 30th November of next financial year is what, sir? This invoice relates to October 24. So can I say financial year 24-25? So next financial year is 25-26. So next financial year ka November 30th. So November 30th of what? 25 or 26? 2025. This date or date of filing annual return. What is the date of filing annual return? 15th of August 25, whichever is earlier. Who is early? 15th of August 25. What if I have filed annual return on Rajinikanth's birthday? 12th December. Then 30th November or 12th December, whichever is earlier. Very important date. Now, some theory questions which they normally ask is, what are the other tax paying document based on which you can take input tax rate? The other tax paying documents are tax invoice under section 31, RCM invoice under section 31 subsection 3, bill of entry in case of import of goods. Based on bill of entry you can take input tax rate. Based on debit note issued under section 34 you can take input tax rate, and you can take input tax rate based on input service distributors invoice. Now compulsorily you will have to give following information. Now please note, there are some documents based on which you can take input tax credit. No, these are the documents based on which you can take input tax rate. These documents should compulsorily have this information, only then you can take input tax rate. The mandatory information required to be present in the document for taking input tax credit. What should the document have, sir? Name of the supplier, GST number of the supplier, name of the recipient, GST number of the recipient, description of goods or services, details of taxes charged, place of supply of goods in case when you are making interstate supply. What is the total value of the goods which is supplied by you? Tax amount I have not written. Breakup of tax amount. Breakup of tax charge. Breakup. Breakup of what's breakup? Okay. Okay. Now there is a new section added. What is that new section, sir? Rule number, new, it's not section, sorry. Rule number 37A, newly added rule. What is this rule telling? Normally what happens is, Karina Sadis sold goods to me. Karina Sadis sold goods to Priya Sadis. When did it sell, sir? December 24. The invoice date is 15th of December 2024. The invoice was worth rupees 10 lakh and GST amount is 1,20,000. Now Karina filed her GSTR1. Karina filed her GSTR1. So can I say that information will come in my GSTR2A and GSTR2B? So based on information, can I take input tax credit? Yes, because I have satisfied all the conditions specified in 16.2. Correct, not correct. Now what has happened is, this Gube Karina, she filed her GSTR1, but she did not pay the tax to the government. There are two returns which a person has to file. One is GSTR1 to show details of outward supply. Another return is GSTR 3B. This return is filed to pay tax. These are not returns. 2A and 2B are not returns. They are just autocomplete information still. Now she has to pay taxes by filing her GSTR 3B. Now what has happened is, Karina has filed her GSTR 1, but Karina paid the Priya and yeah, I paid the money to her. Whom, sir? No, because my mind was talking about Karina also. Priya Sadis made the payment to Karina in which month, sir? March month. So can I say that 180 days condition also I have satisfied? I have fulfilled all the condition. I have also made the payment to her. Now what Karina Gube has done? Karina has filed her GSTR1, but she has not filed her GSTR3B, meaning she has not made the payment of taxes to the government. Lawmaker says, new rule number 37A, very strict rule, Gube rule it is. Lawmaker says, even if Karina has done mistake, no, you will have to bear the loss. If rule number 37A says, if Karina does not make the payment within 30th September of next financial year, if Karina does not make the payment within 30th September of 2025, Priya Sadis should reverse the input tax credit within the time limit of 16.4. What is the time limit? 30th November or date of filing annual return. I should reverse my input tax rate. Bala, I should reverse my input tax rate if she has not. I have paid the money to Karina. Correct. I have paid the money to Karina, but still Karina did not pay to government. I cannot take input tax rate. Very bad. New section added. I am expecting a question. Newly added section. Sir, is there any provision where you are not expecting anything? Your amendments normally they will ask in May. Or normally they will ask amendment. Section 16.6, where registration of a registered person has been cancelled by the proper officer and it is subsequently revoked by any order. Meaning, first officer Gube cancelled my registration. Then I requested him. Then he took back his cancellation order. That means he revoked the cancellation. Now, what happens is, he has cancelled my registration today. He is doing the revocation after 4 months. That means 4 months I would have purchased. I cannot take input tax rate. Correct, not correct. For 4 months, whatever purchase I have made, because my registration is cancelled by him, I am an unregistered person. I cannot take input tax rate. Now later, after 4 months, that who only lifted the cancellation? No. So what about this 4 months purchases? Can I take input tax rate or not? New section has been added, which says, if the registration of a registered person has been cancelled by the proper officer and subsequently it is revoked. Subsequently it is Hey, go, you are already qualified now. Where the registration of a registered person has been cancelled by the proper officer and it is subsequently revoked by whom, sir? Any order by the officer, and if there is any unavailed input tax credit for that period of suspension or cancellation, please note, whatever ITC was not availed by me during that period. Which period, sir? Till when my suspension period, meaning from the date when he cancelled till the date of revocation of cancellation. Then ITC on such invoices can be taken or availed within time limit given in 16.4, or if the time limit has expired within 30 days from the date of revocation revocation of cancellation, whichever is later. Important. It is very important. Hey, please note, time limit under 16.4 is what, sir? There are two time limits under 16.4, within 30th number or date of filing, annual return, whichever is earlier. You see this. If this has already expired, then within 30 days from the date of cancellation order, you can take the input tax rate. Komala Devi, section 17. Oh, Komala Devi, apportionment of input tax rate and block rate. He is also saying, who's this Komala Devi? Section 17 talks about what, sir? Apportionment of input tax rate and block rate. How do I divide the input tax rate, and what are the different items on which I cannot take input tax rate? Section 17 subsection 1 says, where any goods or services are partly used for business purpose and partly used for any purpose other than business, then ITC shall be restricted to so much of input tax as attributable to business purpose. Meaning, if you are using any goods and services for business purpose and for personal purpose, I will give you ITC only for business purpose. ITC on good A, for example, my iPad, 80% of the time I am using for my classes, 20% of the time I am watching movie. 80% ITC will be allowed. 17.2, ITC on goods or services or both which is used partly for taxable supplies and partly for exempt supplies. If there are any goods or services or both which I am partly using for making taxable supplies, including zero rated supplies. What is zero rated supplies? Export of goods or services is called as zero rated supply. So a zero rated supplies are also taxable supplies only. Name is different. So where the goods or services are partly used for making taxable supplies and partly for exempt supplies, ITC shall be restricted to so much of input tax as attributable to taxable supplies, including zero rated supplies. Section 17 subsection 3. The exempt supply in 17.2 shall also include these things. Okay, normally what do you mean by exempt supplies? Supplies which are wholly exempt, supplies which are nil rated, and it includes non-taxable supplies, something like this is there. Now they say, apart from these three items, exempt supply for the purpose of 17.2 only shall include supply attracting reverse charge, sale of land, sale of building subject to para 5 of schedule 2, and transaction in securities. Please note, if there are any goods and services which I am using only for business purpose, can I take input tax rate? Yes. If I am using only for personal purpose, I cannot take input tax rate. If I am using partly, then proportionately I can take. If there are any goods I am using only for taxable supplies, I can take ITC. If I am using only for zero rated supply, I can take ITC. If I am using only for exempt supply, no ITC. If I am using pop-up, then proportionately I can. 17 subsection 5. 17.5 talks about what, sir? Block credit. Block credit means what, sir? On the following items, input tax rate cannot be taken by you. Which items? Section 17 subsection 5 gives that list. Very important section number. Some sections you should remember. This is one section. I told you one more section, section 2.6, aggregate turnover. One more section is what, sir? And I told you 4 notifications which you have to remember. And just remember that section 7 is supply. Just section 7 is supply. Remember section 8 is Taxability of composite and mixed supply. 9 you don't have to remember. 10 if you want to remember, you remember composition. 11 don't remember. 12, 13 time of supply of goods and services. 17, 5 block credit. On some items, ITC is blocked. Which items are? On motor vehicle. Motor vehicle you cannot take. Or motor vehicle which is used for transportation of persons having seating capacity not more than 13, including driver seats, you cannot take input tax credit. Please note. A motor vehicle can be of two types. Motor vehicle can be used for transportation of goods, or the motor vehicle can be used for transportation of persons. If the motor vehicle is used for transportation of goods, ITC is allowed. But if the motor vehicle is used for transportation of persons, then I will if the motor vehicle is used for transportation of goods, ITC is allowed. The motor vehicle is used for transportation of persons, I will see how many people can sit in that motor vehicle. If the seating capacity is less than 13 or equal to 13, I can not take input tax credit. But if the seating capacity of that motor vehicle is more than 13, I can take input tax credit. Please note. Normally, if the motor vehicle has a seating capacity less than or equal to 13, including driver seats, can I take input tax credit? No. But in some cases, I can take input tax rate even if the seating capacity is less than 13. When, sir, if my business is only selling motor vehicles, that is my stock in trade, no? If my business is only further supply of motor vehicle, for example, I am a dealer of motor vehicle, I am involved in the business of renting of motor vehicle, or I am giving training in motor vehicle, I am in driving school, I am involved in the business of transportation of persons, Ola, Uber, Madras Transport Corporation. I cannot take input tax rate on vessels and aircraft. On vessels and aircraft, ITC cannot be taken by me normally. However, on vessels and aircraft, I can take input tax rate. Well, sir, this you remember. Vignesh Raya, who are you? I am to here. This is Jiva, I think. Somewhere Jiva was there. Vignesh Raya, somewhere here. Oh, who died here? Kiki, where are you, Kiki? Naveen, where are you? Maja is there. Hey, why am I standing here? Vessels and aircraft. Can I take input tax rate on vessels and aircraft? I cannot take input tax rate. However, on vessels and aircraft, I can take input tax rate in 4 cases. Which 4 cases, sir? If I am further supplying vessels and aircraft, if I am giving training in vessels and aircraft, if I am in the business of transportation of persons, I am Indigo, etc. If I am in the business of transportation of goods, in these cases, I can take input tax rates on vessels and aircraft. Now, please note, I know that I cannot take input tax rate on motor vehicle used for transportation of people if less than 13 seater capacity is there. I cannot take input tax rate on vessels and aircraft. Sir, my question to you is, I have a motor vehicle which I am using for business purpose, and let us say this motor vehicle I am using for business purpose, sir. But in this motor vehicle, I know I cannot take input tax rate on the motor vehicle. But sir, my question is, can I take input tax rate on service cost, repairs cost, insurance cost? It says no. If ITC is not given to you on purchase of motor vehicle, vessels or aircraft, then I will not give you input tax rate on service cost, repairs cost and insurance cost of that motor vehicle. However, if at the time when you purchase the motor vehicle, if I have given you input tax rate, I will also give you input tax rate for service cost, repairs cost, insurance cost. For example, motor vehicle used for transportation of goods, can I take input tax rate? Yes. Then on that motor vehicle, if I am incurring service cost, repairs cost, insurance cost, I can take input tax rate. Or who else can take input tax rate, sir? Any person who is in the business of manufacturing motor vehicle, vessels and aircraft or general insurance company. Most important is this. I cannot take input tax rates on foods and beverages, outdoor catering, beauty treatment, health services, plastic or cosmetic surgery, leasing, renting, hiring of motor vehicle, business aircraft, life insurance or health insurance. I cannot take input tax rate in these situations. Which situation? If I am going and having food somewhere, foods and beverages, outdoor catering I am taking for my say office function is there, I am asking someone to supply food. Beauty treatment, health services, plastic surgery, cosmetic surgery, leasing, renting, hiring of motor vehicle. Motor vehicle, at the time of purchase also I cannot take input tax rate. If I am taking it on rent also I cannot take input tax rate. Similarly, life insurance, health insurance also ITC cannot be taken by me. Except where these inputs are for a person who is involved in same line of business. Meaning what's that? If I am a person who is a restaurant, if I take services from another restaurant, I can take input tax rate. If I am Priya Sarees, I take services from a restaurant, I cannot take input tax rate. If I am a restaurant taking services from another restaurant, ITC can be taken. Sir, one more example. If I am Priya Sarees, if I take a motor vehicle on rent, I cannot take input tax rate. If I am Priya Cars, who is in the business of renting of motor vehicles, and now if I take motor vehicles on rent, I can take input tax. Meaning my input and output is same, ITC can be taken. If I mean same line of business, ITC can be taken. Similarly, you cannot take input tax rate on membership of club, health center, fitness center, and you cannot take input tax rate on travel benefits which is extended to your employees. Very important is the next line. On all the 3 points which you studied about, food, beverages, membership, travel benefits, etc., ITC can be taken by you. The ITC can be taken by you if it is a statutory obligation. If it is a statutory obligation on the employer to provide the same to employee. If it is statutory obligation, what do you mean by statutory obligation? If it is compulsory that the employer to provide this, ITC will be allowed on above items if it is a statutory obligation on the employer to provide the same to. If some law is telling you to give, it will be allowed. ITC cannot be taken by you for works, contract services or goods or services used for construction of an immobile property other than plant and machinery. So any material which I am using for construction of this building, cement, TMT bars, bricks, etc., I cannot take input tax. But the same cement, if I am using to fix a machinery, I can take input tax. Goods and services which is received by non-resident taxable person, if non-resident taxable person is receiving any goods, he cannot take input tax rate. Composition dealer, goods and services on which I have paid tax under section 10, ITC cannot be taken. What goods and services I am using for personal purpose, ITC cannot be taken. If there are any goods which is lost, destroyed, written off, you cannot take input tax. And in all those cases wherein you have paid the taxes because of some fraud which you have done, because penalty is levied under 74, 129, 130. Section 18. Section 18 is what the input tax rate in special circumstances. Most important section is section 18.6. 18.1 is also important. Section 18 subsection 1, A, B, C, D. Section 18 subsection 1 says, if you are a person who is liable for registration and you apply for registration within 30 days of becoming liable. A, if you are a person who is liable for registration and if you apply for registration within 30 days of becoming liable, then you can take input tax rate on inputs held in stock 1 day prior to the date of liable for registration. If you are a person who is liable for registration and you apply for registration within 30 days of becoming liable, then you can take input tax rate on whatever inputs were there 1 day before liable for registration. Inputs means what's a raw material, work in progress, etc. For example, I was liable to take registration on 15th of May. I applied for registration on 26th of May within 30 days and the registration was granted to me also. I can take input tax rate on whatever stock I have 1 day prior to the date when I am liable for registration. Section 18 subsection 1 clause B says, if you are taking voluntary registration, where a person is taking voluntary registration and such person, where a person has applied for voluntary registration and if such registration has been granted to him, then he can avail input tax rate on inputs held in stock 1 day prior to the date of grant of registration. Section 18 subsection 1 clause C. If a composition dealer is converting himself to be a regular dealer, if a composition dealer becomes regular dealer, that means if he is a composition dealer, he cannot take input tax rate. If he is a regular dealer, he can take input tax rate. So, when a composition dealer converts himself into a regular dealer, he is entitled to take input tax rate on inputs which is held in stock as well as on capital goods which is held by him 1 day prior to change. 1 day prior to conversion from change from composition to regular dealer. How will I take ITC, sir? On inputs, whatever inputs are available, you take ITC proportionately. On ITC on capital goods, when you are taking, no. Whatever ITC is there on capital goods, that ITC you review, you see the invoice, you see the ITC amount. Now that ITC amount should be reduced by 5% per quarter or part thereof from the date of purchase to the date of change. You reduce the ITC by 5% every quarter. Part of quarter, even if it is 2 days, 5 days, part of quarter, you reduce 5%. From the date of purchase till the date of change, you should do that reduction. Whatever you have got, that is the ITC which can be taken by you. Section 18 subsection 1 clause D. Registered persons exempt supply is becoming taxable. So if you are a person who is making exempt supply, if a registered person was making exempt supply and now that supply became taxable supply, he will be entitled to take input tax rate on inputs held in stock as well as on the capital goods held 1 day prior to change. So what is the criteria? Just now whatever we see, stock, just same criteria. On inputs, whatever is there into the new rate which is there, and on capital goods, reduce the ITC by 5% per quarter or part thereof. Section 18(4) talks about a registered person becoming a regular dealer, becoming a composition dealer, or taxable supply becoming exempt supply. What should I do, sir? Whatever we saw under 18(1)(c) and 18(1)(d), you should do. Now, under 18(1), if any invoice is older than 1 year, you cannot take input tax rate on those invoices. No ITC shall be allowed under section 18 subsection 1 for invoice which are older than 1 year. Section 18 subsection 3. Section 18 subsection 3 says ITC in case of change in constitution of business. Whenever there is a change in constitution of business, what is change in constitution? Partnership firm is becoming, partnership. Partnership is becoming private limited. LLP is becoming partnership. Amalgamation is happening. Merger is happening. Death of sole property is happening, and business is carried on by their children, etc. In such cases, whenever there is a change in constitution of business by way of sale, merger, demerger, amalgamation, death of sole proprietor, etc., with a specific provision for transfer of liability. This amalgamation, merger, demerger, the change in constitution should happen with a specific condition that the liabilities also will be transferred to the new person. In such cases, the unutilized input tax rate of the old company can be availed by the new company. Okay, not okay? The unutilized input tax rate means what, sir? Whatever input tax rate they have in their books is unutilized. Next important section is 18(6). Supply of capital goods or plant and machinery. What do you mean by supply of capital goods or plant and machinery? My business is selling sari, but if I sell a computer, don't you think I am supplying plant and machinery or a capital goods? In such cases, 18(6) is applicable law because says I will have to pay the taxes. In case of supply of capital goods or plant and machinery on which input tax rate has been availed, the tax to be paid or the ITC to be reversed shall be the tax calculated on transaction value at whatever price I sold that product into the tax rate for that product. The tax calculated on sale price or transaction value, or whatever tax is there, no, you reduce the tax by 5% per quarter or part thereof from the date of purchase to the date of sale. Whichever is higher is the amount which you have to. Whichever is higher is the amount which you have to pay to the government. A. 18(6) important section. See this question. Priya Sadis purchased a motor vehicle for transportation of goods on 2nd of September 2022 for 15 lakh rupees and GST rate was 18%. The vehicle was sold by Priya Sadis on 31st of August 2024 for 6 lakh rupees. Calculate the input tax rate to be reversed or tax to be paid under section 18(6). Now, at what price did it sell, sir? 6 lakhs into what is the GST rate on this motor vehicle? 18%. So, can I say 6 lakh into 18%? 1,08,000 is the tax on transaction value. Or what is the ITC I would have taken? 15 lakhs into 18%. How much, sir? 15 lakhs into 18% is 2,70,000. So 2,17,000 is the tax input tax rate which I would have taken. Now I should reverse. I should subtract whatever quarters I have used this machinery. How many quarters have I used? So in the year 2002, I have used for July, August, September, October, November, December, 2 quarters. In 2003, I have used for all the 4 quarters. And 2024, I have used till 31st of August. So can I say Jan to March, April to June, and July to September, these quarters I have used. So how many quarters in total, sir? 9 quarters in total. So I should subtract 5% for 9 quarters. How many percent I subtract? 45%. 2.7 lakhs minus 45% is 4 lakh. 1,14,500. Yeah, Sundri, I wrote 15 lakhs into 18%. You see the recording here. You are a good. Now you know how to manner of utilization of input tax rate 18 subsection 9 section 49 subsection 5. How should I take input tax rates? A IGST credit can be used for making the payment of IGST credit can be used for making the payment of IGST first, then you can use it for CGST or SGST in any proportion. Once IGST money is fully gone, once IGST credit is fully utilized, then I can go to CGST. CGST will use it for CGST first, then it will give it to IGST, but it will never give it to SGST. Similarly, SGST credit should first be utilized for SGST, then it will give it to IGST, but it will never give it to SGST will give me, SGST will give the credit to IGST only when CGST's credit is fully exhausted. This is something which you will be knowing very well. Hey, what is the manner of utilization of input tax rates? IGST should first be used for IGST. Whatever is left over, I should use it for CGST and SGST in any proportion. I can give in any ratio. Then you should make sure that IGST is fully utilized. After IGST is fully utilized, I will take CGST. First use CGST for CGST, then use it for IGST. Then I will take SGST. First use it for SGST, then use it for IGST. I cannot use SGST for paying IGST unless until I make CGST 0. Meaning unless until I fully utilize CGST. I have the questions you have saw, extra question I had uploaded. Have you seen? I have stored how to present, etc. in that app wherever you have purchased. 2 theory questions, rule number 86A and rule number 86B. Rule number 86A and 86B. Theory question. Theory question can come. Restriction for utilization of input tax rate. Commissioner or the officer authorized on him may impose restriction for utilization of input tax rate. You may stop from taking input tax rate. Stop you from taking input tax rate. When, sir? If the ITC is availed by a registered person basis on document which is not in which is issued by a registered person who is not there at all, or it is issued by a supplier who is not conducting any business. ITC is availed without actual receipt of goods and services. ITC is availed on supply for which tax is not paid to the government. Registered person is availing input tax rate for is found to be non-existent. A registered person availing input tax rate does not possess valid invoice or debit note based on which she has taken. Now, if you fall under any of these categories, now what is this question telling? When will the officer not allowed to take input tax rate? These are the cases. Now, there is one more restriction on the amount of credit available in GST portal, meaning normally whatever credit is there online, I can take input tax rate on, they will put a restriction on that also. Rule number 86B restricts use of input tax rate for payment of output tax liability. 86B is applicable to a registered person having taxable supplies excluding zero rated supplies and exempt supplies exceeding 50 lakh rupees. So if I make only taxable supplies more than 50 lakhs in a month, for me this rule is applicable. This rule says 86B restricts a registered person to discharge the output tax liability in excess of 99% of such liability using identity, meaning 99% ITC I will allow, but 1% should be compulsory in cash. So if the output tax liability is 100 rupees, my output tax is how much? 100 rupees. 99 rupees I can take input tax rate, 1 rupees I should compulsory pay in tax. When said, if my taxable supplies are more than 50 lakhs rupees in a month. Now, however, the above rule shall not apply to whom, sir? This condition 86B shall not apply to a registered person who has paid income tax more than 1 lakh in last 2 years, a registered person who has received refund of more than 1 lakh, cumulative tax paid by him in a year is more than 1%, specified registered person, meaning in case of government, public sector taking local authority. A payment of tax chapter, you know, payment of tax theory questions. Now, how can I pay the tax, sir? These are all last chapters also. It is like soap. After food, we will have soap. No, it is like that good way. Not soap, good way. Tarkuri. You know, I'll tell something. You will correct me. What to do? You will just concentrate. Payment of tax. This chapter it should be read along with your input tax rate chapter. Now, if I want to pay tax, how can I pay tax? By utilization of input tax rate and cash. For example, my GST liability is 100 rupees and I have credit of 60 rupees. So can I say I will pay 60 rupees by ITC, balance 40 rupees I will pay in cash. This is how I can pay the GST liability. Now in this chapter there are totally 3 lectures. Electronic cash ledger, credit ledger and liability register. Electronic cash ledger. Form GST PMT 05. It is maintained in a form called as form GST PMT 05. Cash ledger. Whatever cash payment you are making, whether you are making the payment of interest, penalty, late fees, etc., they will all go sit in an electronic cash ledger. Whether you make it through net banking, IMPS, RTGS, etc., everyone will go and fall over here. And that amount can be utilized for paying tax, interest, penalty. Now, how do I pay the taxes, sir? How do I put some money in electronic cash ledger? There is a payment challan, very important. GST PMT 06 is the payment challan. It is used for depositing the amount in electronic cash ledger. Now, if I want to transfer the amount from one ledger to another ledger, can I transfer, sir? Yes, using a challan called as GST PMT 09. Now, sir, how can I deposit the money in cash ledger? It is only through online modes, but only one situation you can deposit offline modes also over the counter. Maximum how much, sir? 10,000 rupees. For that also you should take permission from the assessing officer. Can I transfer the amount from one ledger to another ledger? Yes, using a form called as GST PMT 09. Can I transfer from one registered person ledgers to another registered person ledger? Yes, using the same. Electronic credit ledger. Anyways, a credit ledger, whatever input tax credit you are taking by filing a form called as GSTR 3B will go and sit in your electronic credit ledger, and we know what is the manner of utilization of electronic credit ledger. Now, sometimes they'll ask you full form. What do you mean by CPIN, SIN, BRN? One of the attempt they had asked. What is BRN? What is GSTN? Goods and Services. Goods and Services Tax. Identification. CPIN. SIN. Bala is going to clear examination. No, but still she has written, that means. You have written, huh? Electronic liability. Electronic, written, huh? I made you write, so you wrote, Kube. Electronic liability register. Why should I? I have already cleared my exam. And I did not study GST at all for the exam. I started teaching only. If one more attempt I could have failed, I could have studied electronic liability. Hey, what is this? Electronic liability register. Hey, whatever liability are there, no, there can be two types of liability. What are these two types of liability? Tax dues and other dues. A registered person can have following liabilities: tax dues and other dues. Tax dues you should pay through utilization of input tax credit, and other dues you should pay compulsorily in cash. Hey, yeah, correct. Go away. Hey, this will ask for everything. Now what to do with it? Go away. A registered person can will have following liability: tax dues and other dues. Other dues is like interest, late fees, penalty, etc. They should compulsorily be paid in cash. And tax dues which are there, no, they can be paid through utilization of input tax credit or in cash. Following liabilities shall always be paid in cash. Which liabilities? Other dues which are there, tax which is payable by a composition dealer, TCS and TDS under 51 and 52, and RCM, whatever tax you are required to pay, you are liable to pay under reverse charge mechanism. Now, please note very information. I hope you know what is the format of this solution, but I'll just I made an intrastate supply of 10 lakhs. I made an interstate supply of 5 lakhs. So legal services which was taken by me, that is RCM supply, 2 lakh rupees. Total IGST credit available with me is 5 lakh. So computation of output tax liability is how much? CGST, SGST, IGST. I'll compute the taxes on outward supply. I'll see the total input tax rate available. How will I take total input tax rate? Opening input tax rate plus input tax rate on purchases plus input tax rate under reverse charge. So whatever ITC is there, I'll take the ITC. This is the total ITC. Now I should pay the taxes, correct? We just now saw RCM liability should be compulsorily paid in cash. Though I have credit of 5 lakhs, I will have to pay it in cash. Output tax liability is 90. All this 90 I will use IGST credit to pay. Then please note what is the format. First take output tax liability. Then utilize your input tax rate. First you will use IGST, then you will use CGST, then you will use SGST. Then you will have output tax liability which is liable to be paid in cash. Add the inward supply on which you are required to pay the taxes in reverse charge. That will give you net amount of tax which you have to pay in cash. Now, what is the order of discharge of these two things are important. What is the order of discharge of liability? If I have a liability, how do I discharge that liability, sir? First, you should pay self-assessed tax and other dues of previous tax period. Then you should pay self-assessed tax and other dues of current tax period. Then you should pay any other amount which is liable to be paid by you under this act. First, you should pay tax and interest, penalty, late fee related to that return of previous tax period, then current tax period, then any other amount which you are liable to pay under GST law. Sir, what are the different electronic liability register shall be debited? What are the different items with which electronic liability register will be debited? It will be debited with the amount of tax payable, interest payable, late fee payable as per the return furnished by the registered person. It will also be debited with the amount of tax, interest, penalty, late fee as determined by the GST officer. The amount of tax and interest as a result of section 50, which is interest
amount of interest that may accrue time to time. Now this is also one important section, section 50. Remember section number also if possible. 50 is what, sir? Interest liability under GST. Important. If you don't pay the taxes to the government within the due date, if you take extra input tax rate, then you will have to pay interest. Interest for delay in payment of tax. Interest is required to be paid at 18% per annum from the date following the due date of payment till the date of actual payment of tax. Meaning due date is 20th, from 21st till the date of payment of tax. Now you should pay interest on what amount, sir? You should pay interest on net GST liability payable in cash. Net GST liability means whatever your total output tax liability is there, subtract your input tax rate. The difference will be your net liability in cash. On that you will have to pay interest at 18% per annum. Sir, what if I take extra input tax credit? Then interest is required to be paid at 18% per annum. Interest is required to be paid from which date, sir? From the date when you have taken extra input tax rate till the date you reverse that input tax rate. Now please see. See, if there is a delay in payment of tax, very important. This is very, very important. Normally I should pay interest only on net amount, no? But this will change over here. Delay in payment of tax. If you have made any delay in payment of tax, and if the delay is due to late filing of return, I have filed my return late, then in such cases the interest shall be paid only on the net tax liability payable in cash. I have filed my return late, so I am paying tax late, pay interest only on net amount. There is a delay in payment of tax. Why, sir? Because of delay is due to not considering the amount in return. I have not shown, meaning my sales was 10 lakhs. I thought, how will government come to know? I'll show sales of 8 lakhs only. Can I say I have not shown 2 lakh rupees? So the delay is due to not considering the amount in return, or the delay is due to tax which is paid upon a notice which is issued by the officer. In such cases, if the delay is because you have cheated government, in both the cases, can I say you have cheated government? So in that cases, lawmaker says the interest is required to be paid, shall be payable on full tax liability, whether it is paid in cash or through utilization of credit. There are two questions over here, very good questions. Exams answer. What is there in exemption, Govind? Nothing is there in the chapter. What last? No, we'll discuss. Right? Lot of things are there in life. Registration, most important chapter. 4 marks question will come from this chapter. Registration. We'll cover chota topics. Exemption, 2 minutes I'll cover. No problem. If I don't cover also, I'll upload in video. You came for exemption. What is there in exemption? Registration. Section 22 and section 22 to section 30. Now, who is a person liable for registration, sir? Who is liable for registration? The supplier of goods or services or both shall obtain registration in that state or union territory from where he makes taxable supplies if his aggregate turnover exceeds 20 lakh rupees. So a supplier of goods and services should take registration. Where should he take registration? In the state or union territory or both, where he makes taxable supplies if his aggregate turnover exceeds 20 lakh. This limit is 10 lakhs for 4 special category states. Which are these 4 special category states? Make my trip to Nagaland. Manipur, Mizoram, Tripura and Nagaland. How much is the limit? 10 lakhs. Now, there is a notification called as notification 10/2019, which says any person who is engaged only in supply of goods, any person who is engaged exclusively in supply of goods and whose aggregate turnover does not exceed 40 lakh rupees and whose aggregate turnover does not exceed 40 lakh rupees
is exempted from taking registration. Meaning, if you are a person who is supplying only goods, then for you the limit for taking registration is what, sir? 40 lakhs. Now this notification is not applicable to a person who is required to take compulsory registration under section 24. Section 24 gives a list of different people who are required to take registration under GST law compulsory. For them this notification is not applicable. And a person who is supplying in notified goods, if you are supplying Pati bricks, for you also this notification is not applicable. Then if you are supplying from notified states, which are notified states, sir? Num must time pass. Num must already studied. Time pass will study today. Num must time pass means what, sir? Nagaland, Uttarakhand, Manipur, Meghalaya, Mizoram, Arunachal Pradesh, Sikkim, Tripura, and Telangana and Puducherry. If you are doing business in these states, for you limit of 40 lakhs will not apply. Either 10 lakhs or 20 lakhs limit will be there. And if you are a person who has taken registration on voluntary basis. Everyone. Something else. Now, sir, are there any persons who are not liable to take registration under GST law? Yes. If you are a person who is making only exempt supply, if you are a person who is making non-taxable supplies only, if I am making only exempt supply, why should I take registration? If I am supplying alcohol, why should I take registration? GST. If I am making only exempt supply, if I am making only non-taxable supplies, if I am an agriculturist who is selling the produce out of cultivation of land, and who else should not take registration, sir? If a person is making interstate taxable supply of services up to 10 lakh, 20 lakh, they don't have to take registration. If a person is making supplies which are taxable under reverse charge, because I don't have to pay tax, recipient has to pay the tax, therefore I will not take registration. If a person is making interstate supply of handicrafted goods, notified handicrafted goods, or if a person is supplying services through e-commerce operator till 10 lakh, supplying services through e-commerce operator till 10 lakh, 20 lakhs. So who are the persons who are required to take registration under GST law compulsorily? Who are the persons who are required to take registration under GST law compulsorily? Now there is a new person added over here. Who are required to take registration compulsorily, sir? A person making interstate taxable supply of goods, casual taxable person, a person who is liable to pay tax under reverse charge, non-resident taxable person, list it is. E-commerce operator is required to collect the tax under section 52. Then a person who is supplying through an e-commerce operator under 95. Then a person who is required to deduct the tax under 51. Input service distributor, IDAR service provider, online information database access and retrieval service provider. Any other person who is making taxable supplies on behalf of another person, and such persons has been notified by the government. The new person notified by the government is a person who is supplying online game services from outside India. A person is supplying poker, rummy circle, something like this games are there. What is the procedure for taking registration? Important. What is the procedure for taking registration? Any person who is liable to take registration under section 22 or under section 24 should apply for registration within 30 days of becoming liable. You should apply for registration within 30 days. If you are a casual taxable person and non-resident taxable person, you should apply for registration 5 days before commencement of business. 5 days prior to commencement of business. Normally, one single registration will be given to you in a state or union territory. But if you have business at multiple locations, you can take more than one registration also. Similarly, if you have a unit at SZ location, then for that unit, compulsory you should take separate registration. Now, can I apply for registration though I am not liable for registration? Yes, on voluntary basis you can apply. And 25.4 and 25.5 talks about deemed distinct person, which you have seen in first chapter. What is compulsory for taking registration, sir? PAN. But for a non-resident taxable person, PAN will not be there. So there are other documents specified. What are those other documents specified, sir? Here is the tax identification number of the country from where he is coming. He should give his passport details, and he should also appoint an authorized representative who is an Indian resident who should be having a valid PAN. And if you are a person who is going to take registration as a TDS or TCS person, you should be giving your TAN. Now the proper officer will grant the registration only after seeing your documents, etc. Now, what is the application for taking registration, sir? GST REG 01. And once you obtain registration, they will give you something called as GST registration certificate. What is the GST registration certificate number, sir? GST REG 06. GST number is a 15-digit number. First 2 digit will be your state code, 10 digits will be your PAN number, then next will be 1. It will always be 1. Meaning this number is basically how many registrations you have in the same state. So it will change accordingly. Then Z, and this will be a checksum digit. Section 26 talks about deemed registration. If you are registered under CGST Act, SGST Act or UTGST Act, it will be deemed that you are registered under CGST Act also. Very important is effective date of registration. Normally they ask question on this effective date of registration. What is effective date of registration? From which date is your registration valid from? See, there are two types of person. A person who has applied for registration because he was liable for registration, or a person who has applied for registration on voluntary basis. If you are a person who has applied for registration on voluntary basis, for you the effective date of registration will be the date when the registration has been granted to you. What do you mean by effective date of registration? From which date will my registration be valid? If I am a person who is applying for voluntary registration, for me my registration will be valid from effective from the date of grant of registration. But if you are a person who is applied for registration because you were liable, then I will check whether you have applied within 30 days or you have applied after 30 days. If you have applied for registration within 30 days, then for you effective date of registration will be, if you have applied within 30 days, if you have applied within 30 days, effective date of registration will be the date of liable for registration. But if I am not applied within 30 days, whenever the registration is granted to you, that will be the effective date of registration. Very important is this one. Section 27 talks about special provisions for a casual taxable person and non-resident taxable person. You know what is casual taxable person, non-resident taxable person? A person who is occasionally undertaking the activity of supply of goods or services or both at a place which is not his usual place of business is a casual taxable person. Same person, if someone from outside India is coming to India and doing business activity in India, occasionally he will be called as non-resident taxable person. They should apply for registration 5 days before commencement of business. The registration will be valid for number of days they are applying or 90 days, whichever is less. And can they extend their validity, sir? Yes, they can extend their validity only once they can extend, and their validity can be extended for how many days? Maximum 90 days they can extend. If they extend, their validity will be what, sir? Number of days they are extending or 90 days, whichever is less. And these people also have to pay tax in advance at the time of applying for registration. That tax is required to be paid on estimated turnover. Now, if they are extending their validity, for that extended period also they should pay tax in advance. Section 28 talks about amendment in registration. Any change in your registration, that change should be intimated to the government within 15 days of change. Change can be in core fields or it can be non-core fields. If the change is in core fields, then what? If the change is in core fields, officer will approve. If it is in non-core fields, officer will not approve. Automatically it will be changed. Now, please note, there may be a question which they may ask connecting cancellation of registration with your input tax credit chapter, because there is a new section added 16(6). Section 29 says cancellation or suspension of registration. Your registration will be cancelled. The registration can be cancelled by proper officer or registered person himself or legal heirs in 3 cases: when the business is discontinued, when there is a change in constitution of business, or he is no more liable to become a registered person under GST law. The registration can be cancelled by proper officer only in how many cases, sir? These many cases.
If the registration is obtained by a person by way of fraud, misstatement, suppression of facts, if the registered person has contravened the provision of the law, he is not following the law properly, he is issuing invoices without making the supply. There are some cases like this, where a person has obtained for registration on voluntary basis, but he has not started business within a period of 6 months, or where the returns are filed, where the returns are not filed by the registered person for a continuous period of 3 quarters for a composition dealer and 2 quarters for a regular dealer. Now, revocation of cancellation. Revocation means what, sir? Taking back. Revocation of cancellation, where registration is cancelled by the proper officer, the taxpayer can apply for revocation. Revocation should be done within 90 days of cancellation order. Whenever officer is cancelling your registration, you can always apply for revocation. And within how many days? Within 90 days. This can be further be extended up to a period of 180 days. You know what is suspension of registration? You know what is suspension of registration? What is suspension? What is suspension? From the date when you have applied for cancellation till the date of order of cancellation given by the officer, the period is called as suspension. Accounts and records. Hey, this tax invoice, debit note, credit note, I think we have discussed. Hey, here delivery challan we have discussed. I think we have not discussed this. One question which they'll ask in examination is, what are the contents of consignment note? What are the contents of consignment note? The consignment note can be issued by a GTA. It should have the details of gross vehicle weight, name of the consignor and the consignee, registration number of the vehicle in the which goods are going, and then details of the goods which are transported, place of origin and place of destination, GST number of the person who is liable to pay the taxes, and other information as may be required. Please note, tax invoice, debit note, credit note. These 4 questions are very important. They will normally ask. Which is that question? DTA question, delivery challan question, credit note question, what contents of tax invoice? Okay, e-invoicing related one question. E-invoicing. Now, accounts and records. Please note there are 3 chapters: tax invoice, debit note, credit note, accounts and records, and e-way bill. Out of these 3 chapters, 5 marks question will come. 5 marks question will come. It will be a theory question, or from these 3 chapters, and it is very theory, very still. Just see, that is a question which you can answer only in 3 to 5 minutes. 5 marks you will get in 3 to 5 minutes because you just have to write theory. Tax invoice, debit note, credit note, accounts and records, e-way bill. 3 chapters, 1 question, because it is only theory. Nothing practical is there in this. Out of these 3 topics, 1 theory question will be asked for sure. 1 or 2 MCQ questions will be asked from this topic. So totally weightage is 6 to 7 marks from these 3 topics only. Very easy topic. They are very easy topic. Accounts and records. Who should maintain accounts, sir? Registered person. Where should he maintain? Principal place of business. What should he maintain? He should maintain true and correct records of production and manufacture, inward and outward supply, stock, input tax aid availed by him, output tax payable and paid, and such other particulars as may be. Sir, what if I have more than 1 place of business? Can I maintain books at different location? Yes. If you have more than one place of business, books related to those places can be kept over there. Books can also be maintained in electronic form. If you are a warehouse, if you are an owner of a warehouse, or if you are a owner of a transporter, you should also maintain the details of consignor, consignee, and other relevant documents. Commissioner may ask you to maintain other documents as may be prescribed. 35.5, where the registered person fails to give the details of goods or services or both, the proper officer himself will determine the tax, and also penalty will be applicable. Now, in accounts and records, what is important is these additional documents. About this, last time one question was asked. 2 marks MCQ question.
What are the additional books of accounts required to be maintained by a registered person? Dharmi, additional books of accounts are goods and services which are imported or exported by him, supplies attracting reverse charge along with relevant documents, details of advances which is received, paid and adjusted, details of the stock received, supplied, opening balance, tax collected and remitted, name and complete address of the person who is liable to pay the taxes, name and complete address of the person who is to whom the goods and services are in on behalf of whom goods and services are received, complete address of the premises of where the goods are stored, and such other particulars. Here, this is theory. You just have to read this. What are the books which are required to be maintained by an agent? Particulars of authorization received from each principal. Particulars including description, value, and quantity of goods and services. Particulars including description, value, quantity of goods supplied on behalf of principal. Details of accounts which is furnished to every principal. Taxes paid on behalf of principal. What are the details which are required to be maintained by a manufacturer? Monthly production of accounts showing quantitative details of goods manufactured including wastage of the goods. Records to be maintained by service provider is what, sir? Quantitative details of goods used in providing services, details of input services utilized, and the services which are supplied. Records to be maintained by executor of works contract. Name and address of the person on behalf of whom the work is executed. Description, value of goods and services which are received and utilized. Details of payment received in respect of works contract. And other points with respect to this chapter are records can be whatever records you are maintaining in electronic form, they should be properly authenticated. Proper electronic backup should be maintained. Entries in register accounts and documents shall not be erased, effaced, overwritten. All incorrect entries otherwise than of clerical nature should all be sorted and assessed. Where registers and other documents are maintained in electronic form, they should not be for every edit which you are doing or every delete which you are doing, you should maintain a separate log. And volume of books of accounts can be which is maintained in manual form should be serially numbered. Section 36 talks about what, sir? For how long should I maintain books of accounts? Accounts and records should be maintained until the expiry of 72 months from the due date of furnishing annual return of the financial year to which those documents relate. For example, for you, the financial year is 24-25. What is the due date of filing annual return for this? 31st of December 2025 plus 72 months, meaning plus 6 years you should maintain. 31st of December 2020, 31 should maintain it. Now they further say, where the registered person is a party to any appeal, revision or any other proceedings, then before appellate authority, revision authority, appellate tribunal, court, then the books related to such period should be maintained for 1 more year after the disposal of such case. Next is what, sir? E-way bill. What is e-way bill? Electronic way bill. When is electronic way bill required to be generated? Whenever there is a movement of goods whose consignment value is more than 50,000 rupees, then e-way bill is required to be generated. E-way bill is required to be generated in a form called as form GST EWB 01. Consignment value means what, sir? Consignment value means value as per section 15 declared in the invoice. Also include the taxes under GST law. So it is nothing but taxable supplies plus taxes, but it should not include value of exempt supplies when you are determining this value. Then, sir, in case of bill to ship to concept, e-way bill should be issued only once. And what are the information which is required to be given in e-way bill, sir? E-way bill GST EWB 01 will have two parts, part A and part B. Part A will comprise of the details of invoice, such as details of GST number of supplier, GST number of recipient, place of dispatch of goods, place of delivery of goods, document number, that is invoice number, delivery channel number, document date, value of the goods, HSN code, etc. It is required to be furnished by a registered person who is causing the movement of goods. In part B, you will give transporter details. What is the transporter document number and vehicle number details if the goods are transported through road. Transfer of goods from one conveyance to another conveyance. Sometimes it may happen that I have transferred the goods in a particular truck, but accident happened of this truck, so goods will be shifted to new vehicle. So in that case, what procedure you should follow? Where the goods are transferred, this is theory question, okay? This should read it as it is, write it as it is. Where the goods are transferred from one conveyance to another conveyance, the consignor or the recipient who has provided the information in part A or the transporter before the transfer of the goods for further movement should update the details of conveyance in part B of e-way bill. They may assign the e-way bill number to another registered transporter for updating the information in part B. However, once the details of conveyance is already updated by the transporter in part B, the registered person or the consignor or recipient cannot, who has furnished the information in part A, shall not be allowed to assign the number. Can I cancel the e-way bill? Answer is no, e-way bill cannot be. Answer is yes, I can cancel the e-way bill within 24 hours. I can cancel the e-way bill. Now, where multiple consignments are transported, you can generate a single e-way bill called as consolidated e-way bill in a form called as GST EWB01. And what is the validity of e-way bill, sir? For every 200 kilometers or part thereof, if it is other than over dimension cargo, the validity will be 1 day. And for over this I have written ulta, okay? For over dimension cargo, it is what, sir? For every 20 kilometers or part thereof, it is 1 day. For other than over dimension cargo, for every 200 kilometers or part there, it is 1 day. Can I extend the validity? Yes, 8 hours before or after expiry of the validity, you can extend. Now, what are the cases where e-way bill is not required to be generated? If you are transporting LPG, kerosenes, jewelry, currency notes, etc. If you are transporting in non-motorized vehicle, if you are transporting from port, airport to inland container depots, where you are transporting HP man, alcoholic liquor for human consumption, etc. Now, this last attempt, they asked a question. No, I told only 3 points are there. January 10th. Blocking of e-way bill generation. E-way bill cannot be generated in following cases. Composition dealer cannot generate if he has not filed his return for 2 months. A regular registered person if he has not filed return for 2 consecutive tax period. Regular registered person who has not filed his GST 1 for 2 months. And such persons whose registration has been suspended. Returns. 2 minutes. Returns under GST. Now, 2 types of questions are asked. What is the return? Who has to file it? What is the due date of filing? And what are the late fee for filing GST returns? Now, there is a return. Regular dealer or a normal dealer has to file 2 types of return called as GSTR1 or GSTR3B. Normally, the due date of GSTR1 is the details of sales, outward supply. GSTR2 is a summary return. The due date of filing GSTR1 is 11th of next month and the due date of filing GSTR3B is 20th of next month. This is what you are supposed to do normally. Now, what are the contents of GSTR1? It will have basic details of supplier such as supplier GST number, month, trade name, legal name, financial year. Then it will have details of sales which you are making, so taxable supplies, exempt supply, interstate, intrastates, etc. Whether you have received any advances, HSN summary, document issued by you. Now, the sales can be of 2 types. B2B supplies and B2C supplies. If you are making B2B supplies, you should completely give invoice-wise details. If it is a B2C supply, then you should give state-wise, rate-wise supplies if it is within the state. And if it is B2C interstate and the value is more than 2.5 lakhs, give invoice-wise details. If it is less than 2.5 lakhs, give state-wise details. Due date for filing GSTR1. Normally, GSTR1 can be filed on monthly basis or on quarterly basis. If you are opting for monthly basis, the due date is 11th of next month. If you are opting for quarterly basis, the due date is 13th of next month following the quarter. Sir, for whom monthly basis is applicable, sir? any person who himself opts for monthly basis or whose turnover is more than 5 crore rupees, they should compulsorily file GSTR1 on monthly basis. So what if my turnover is less than 5 crores? Then you have an option to file it on quarterly basis. Aggregate turnover is more than 5 crores, compulsorily monthly. Aggregate turnover is less than equal to 5 crores, quarterly basis you can file. If you are filing it on monthly basis, the due date is 11th of next month. If you are filing on quarterly basis, it is 13th of next month following the quarter. 2.4x. What 1 lakh? $2.5 lakhs. GSTR 3B is a summary return which is used for making the payment of taxes. Due date of GSTR 3B, if you are filing on monthly basis, 20th of next month. If you are filing on quarterly basis, 22nd or 24th of next month. Now there is also a scheme called as QRMP scheme. What is QRMP scheme, sir? Quarterly return monthly payment, wherein you have to file your GSTR1 on quarterly basis and GSTR3B also on quarterly basis, but make the payment of taxes on monthly basis. Sir, how will I pay the taxes, sir? You will have to pay the taxes on monthly basis. What is the due date of paying the taxes? For the first 2 months of a quarter. Say, let us say a quarter, April, May, June quarter is there. For first 2 months, you will have to pay it by 25th of next month. For April, it is 25th of May. For May, it is 25th of June. And for last month of the quarter, you will have to combinedly pay it while filing your GSTR 3B. How much tax I have to pay? Either pay tax on self-assessment basis or pay tax on fixed sum basis. Self-assessment basis means what, sir? You yourself assess your tax liability and pay it. Fixed sum basis means what, sir? 35% of tax which is paid by you in last quarter, you should pay it in 3 installments. Now see, this question was asked. Amendment, correction, rectification of details already uploaded in GSTR. 5 marks or 3 marks question was asked. So this they will not ask. In January month they have asked. Now please, anyways I'll discuss. Now there is something called as invoice furnishing facility. Those who have opted for filing GSTR 1 and 3B on quarterly basis, they can give their B2B supply related details on monthly basis through a system called as invoice furnishing facility. Invoice furnishing facility is not a return. It is just a facility to upload the details of B2B invoices on monthly basis for those people who have opted for QRMP scheme. Due date is not due date. I mean, if you want to file, you can file it. It is 13th of next month. All the invoices, debit note, credit note, the details which are uploaded in invoice furnishing facility will automatically come in GSTR 1. Amendment, correction, rectification in GSTR 1, which is already filed. Any type of amendment if you want to make in your GST return, you cannot amend the return. You cannot refile the return. There is no concept of revised return. All the amendments can be made only by filing the return for the next month. Whichever month you identify the mistake, in that month you should make the amendment or correction. Nil return also is required to be filed by you. Late fees, if you don't file the return within the due date, then you will have to pay late fees. What is the late fees, sir? If it is a nil return, then it is rupees 20 per month. 10 rupees CGST, 10 rupees SGST. Maximum is how much? 500. If it is not a nil return, if your turnover is up to 1.5 crores, 50 rupees per day, which is 25 CGST, 25 SGST, maximum 2000. 1000 rupees CGST, 1000 rupees SGST. If your turnover is more than 1.5 crores up to 2 crores, maximum 5000. Minimum amount is same. 500 rupees per day, same. And if it is more than 5 crores, minimum amount is same, maximum is 10,000 rupees. Now there are other returns like GSTR 4, which is required to be filed by a composition dealer, 5 by non-resident taxable person. Due date is 20th of next month or within 7 days of expiry of your registration, whichever is earlier. ISD has to file a return by 13th of next month. Please note, for these people you just have to remember the due date because these concepts are not applicable at intermediate level. Tax TDS, the due date is 10th of next month. TCS, the due date is 10th of next month. GSTR 8 is the return. Annual return is required to be filed by 31st December. Now there is a return called as first return. What is the first return, sir? First return is a return which is required to be filed by a person who is liable for registration. First return is required to be filed for supplies from the date where a person is liable for registration till the date of grant of registration. It is required to be filed within 30 days of within 30 days from the date of grant of registration. Now late fees we have seen anyways. There is also a return called as final return. Once your registration is cancelled, you will have to file a return called as final return within 3 months from the date of cancellation order or within 3 months from the date of cancellation of registration, whichever is later. One last concept, TDS and TCS, important because there is a small amendment. Now, who is the person who is required to deduct? Section 51 talks about TDS. Person liable to deduct TDS. Who is required to deduct TDS, sir? Central government, state government, local authority, government agency, any person in whom more than 51% or more is invested by government, public sector undertaking, or any society which is established by central government, state government, united. When should they deduct TDS? If the contract value is more than 2,50,000. Contract value should not include GST and value of exempt supplies. So before GST value should be taken. Then how much is the rate at which TDS is required to be deducted? 2%. 1% is CGST and 1% is SGST. Deducted TDS should be paid to the government within 10th of next month. TDS should not be deducted where? Now about this they had asked an MCQ question in last examination, Jan examination. 2 marks MCQ question. No TDS is required to be deducted where supply of goods or services or both is by one public sector undertaking to another public sector undertaking, one deductor to another deductor. Similarly, where the location of the supplier is different from the place where the recipient is registered. Now, those people for whom section 51 is applicable, they should take registration under GST law compulsorily. Whatever TDS they are required to pay, they should pay it in cash only. If they don't pay the TDS, then penalty is ₹100 per day, maximum is 500 rupees. If you don't deduct the TDS, 18% is the interest which you have to pay. Now, under TCS, amendment has been made. What is the amendment, sir? The new rate is 0.5% of what, sir? Net value of taxable supplies. Before it was 1%. Okay, now it is 0.5%, which is nothing but 0.25% CGST, 0.25% SGST. Every e-commerce operator shall collect taxes at source at 0.5% on net value of taxable supplies made through the e-commerce operator. If the consideration is collected by such e-commerce operator, when will this provision will be applicable? Where I am selling through Flipkart and Flipkart is collecting money from the customer and then making the payment to me. At the time when Flipkart is making the payment to me, Flipkart should deduct or Flipkart should collect extra 1%, 0.5% as TCS. They should collect on net value of taxable supplies. What is net value of taxable supplies? Take the total value of taxable supplies, subtract values taxable under 9(5), subtract values of supplies which are returned, sales return. That will give you net. Other points are just like your TDS. TCS is applicable even on 1 rupee sale. TDS is applicable 2.5 lakh rupees contract value. Let us now go to the last topic. What is there in this? I don't know. Once I'll take little water. Huh? 1 second, I'll come online, students. 1, 2 minutes. Exemptions. For exemptions, what you should remember, sir? Notification number. See, exemptions can be of two types. Exemption can be of, I have 30 minutes to complete this. 30 minutes here. Oh, catch. Uh, water also. Exemptions. Exemptions can be of two types. One is called as one is called as what, sir? General exemption. Another one is called as special exemption. General exemptions are given by way of a notification. Special exemptions are given by way of a special order. And whatever exemptions government are giving, they are giving it in public interest. Now I'll tell you simple logic. I will tell you simple logic. You read the question. Exemption means what, sir? Genuinely, I'll tell you. I'll genuinely tell you this will work out. 80% of the time it works. 20% if you don't know how to read the question, what will I do? So I'm telling. Now what works out, sir, in this topic? You read the question and you ask yourself, exempt means what? GST is not applicable. You read the question. When you read the question, no. What is the first thing which is coming to your mind is right. Genuinely, I'm telling. Promise, I'm telling. When you read the question, what is the first thing which is coming to your mind is right. You should not overthink. If you feel it is taxable, it is taxable. Aste. Don't think at all. For example, hey, have you studied anything right now? No. Now, for example, amount received for caring and consoling mentally disabled person. What do you think? Whatever you are thinking is right. You should not say what is right. Correct. I promise it is right. Now, organization of fitness camp for Ricky aerobics received donation from participant. Aerobics, if you do, they will give exemption. Huh? No. So I hope you are understanding. Whatever is coming to your mind is absolutely right with respect to this. Meaning, what I am trying to say in simple words is, you don't have to by-heart this topic. Even if you have not studied this topic till today, one day before examination, just open. You just read. You are not understanding anything. Just read. Then I promise you just read it like a newspaper. If it is coming in examination, you will give the right answer. Trust me, you will give the right answer. Seriously. Huh? If it is not coming, what will you write? You only add your question. That means you'll cut your marks. No, no, RTP I'll prepare separately video. Income tax, that only the chota 2-hour discussion is there. I have to. What is there in deduction? Genuinely, I'm telling. What is there in deduction? 2 marks topic. What to take on time? Now I'll tell you. Income tax video is already uploaded. Okay. Today, when you are going back home, huh? No, genuinely. See, income tax deductions, etc. Set off carry forward. 15 minutes discussion. Clubbing of income, 10 minutes discussion. Deduction is around 20 to 30 minutes discussion. 1 hour will take that. 1 hour is other TDS, TCS and 115 JC and 115 BST and advanced tax. Only 2 hours discussion. Can we ignore this chapter? Answer is no, because question will come from this chapter. You just have to read like a newspaper. Don't buy at anything. Everything is exempt under notification number 12 bar 2017. Everything is exempt. That is what I am telling. She is telling. Sir, should I buy hat? I am telling don't buy hat. Read it like a newspaper. Whatever item is exempt under which number, sir? Only one notification number. Everything which you are studying, only one notification number. Now don't waste my time, please. Services given by an entity registered under section 12AA of Income Tax Act by way of charitable activity. Two conditions you should see. Entity should be registered under section 12AA of Income Tax Act, and the activities which they are performing should be charitable activity. What is charitable activity? Papa. Papa means what, sir? Public health, advancement of religion, spirituality, yoga. P for preservation of environment, watershed, wildlife sanctuary. A for advancement of educational program. Now, public health with respect to what, sir? Charitable activity means advanced activity relating to public health, caring and consoling terminally ill person, person with severe and physical or mental disability. You are caring and consoling person addicted to dependence warning substance. You are caring and consoling. You are creating awareness about preventive health, family planning, and prevention of HIV. You are advancing religion, spirituality, yoga. You are advancing educational program and skill development program. For whom are you advancing educational programs, sir? Abandoned children, orphanage children, physically, mentally traumatized children, prisoners, and persons over the age of 65 years. And you are in the business of preservation of watershed, etc. Now, next point is what, sir? Do you have to remember all these entry numbers? No. Services of training and coaching in recreational activity. This service of training, I am teaching you how to do recreational activity. If it is related to arts and culture, then it is exempt for individual. If it is related to sports, then it is exempt only for an entity registered under section 12AA. Recreational activity, mistake you will do in life. Training and coaching in recreational activity. If the training and coaching is with respect to art and culture, exemption is only for individual. If the training is in some sports, exemption is only for charitable entities. Services by an old age home run by central government, state government, entity registered under section 12AA of Income Tax Act to its residents. Who are residents of old age home? People whose age is 60 years or more, against a consideration of rupees 20 up to rupees 25,000 per month per member is exempt. Now, this is important. Services by a person by way of conducting religious ceremony. Any person, puja is coming and conducting religious ceremony, or services of renting of pursuits of religious premises, which is meant for general public. Now, this exemption will not be applicable if the pursuits of religious premises are rented for more than some limit. If you are renting room where the charges is 1,000 rupees or more, it will be taxable. If you are renting community hall, kalyana mandapas, etc., and the charges are 10,000 or more per day, it is taxable. Renting of shops, if the rent is 10,000 rupees or more per month, it is taxable. Services provided by a specified organization for religious pilgrimage, that is also exempt. Who are covered over here, sir? Kumar Mandal Vikas Nigam Limited and Hajj Committee of State Hajj Committee. Now, there are yoga camps which are happening. Now, yoga camp which are happening, is it taxable or not taxable, sir? Lawmaker says if the yoga camp is happening where yoga is taught to you, you are staying over there, eating over there, then here, if the main objective is yoga, then it is exempt. If the main objective is staying over there, then it will be taxable. If the charitable activity, if it is merely for accommodation, then it will become taxable. But if it is not for accommodation, if it is advancement of spirituality, religion or yoga, it will be exempt. Agricultural related services. agricultural related services, services related to cultivation of plants and rearing of all the different life form of animals. Why are you rearing, cultivating plants and rearing life form of animals, sir? For food, fiber, fuel, raw material, and any other similar product. It is exempt. If you are giving services relating to cultivation of plants and rearing of life form of animals for food, fiber, fuel, raw material, it is exempt. Second point says services of agricultural produce by way of agricultural operation. If you are undertaking any type of agricultural operation which are directly related to production of any agricultural produce or supply of farm labor, if you are giving services by way of supply of farm labor, if you are carrying out any if you are carrying out any process at agricultural farm such as tending, puring, cutting, which is not altering the essential characteristics of agricultural produce, renting or leasing of agro machinery, very important, renting and leasing of agro machinery or vacant land, loading, unloading, packaging, storing of agricultural produce, exempt, loading, unloading, packaging, warehousing of agricultural produce. Agricultural extension services, meaning you are giving scientific research related services for agricultural purpose. Services by way of agricultural produce marketing committee or services given by any commission agent for sale and purchase of agricultural produce. Now, breeding of fish, pisciculture, sericulture, cultivation of ornamental fires, floriculture, horticulture, etc., they all are covered under the definition of agriculture. Plantation crops like tea, coffee, rubber are also covered under agriculture. Plucking of flowers from plants is exempt. If you are loading, unloading, packaging rice, exempt. If you are warehousing minor forest produce, exempt. Storaging and warehousing of cereals, pulses, fruits and vegetables is also exempt. If you are carrying out any intermediate production process as a job worker for agriculture produce, then your process is exempt. Artificial insemination of livestock, that services if you are giving, exempt. If you are pre-conditioning, pre-cooling, ripening, waxing, retail packing of fruits and vegetables, please note here you will do a mistake. Pre-conditioning, pre-cooling, ripening, waxing, retail packing or labeling of fruits and vegetables, your services are exempt. Now, another important service is what, sir? Healthcare services. Healthcare services is little important. If healthcare services are given by only three people, which are these three people? Clinical establishment, authorized medical practitioner, and paramedics. If healthcare services are given by hospitals or doctors or paramedics, only then, paramedics means nursing staff, only then exemption will be given. What do you mean by healthcare service, sir? Healthcare services means DTC of double iPad. What is DTC of double iPad, sir? Healthcare services means diagnosis, treatment and care of illness, injury, pregnancy, abnormality, deformity through any recognized system of medicine in India. What is recognized system of medicine in India? Why Anusha? Okay, what is recognized system of medicine in India? Why Anusha? Why Anusha? Why Anusha means what, sir? Why Anusha? Yoga, Ayurveda. Anusha spelling you should tell me. A. If the healthcare services are provided through these systems only, then exemption is there. What are the systems? Yoga, Ayurveda, Naturopathy, Unani, Siddha, Homeopathy, Allopathy. Then only it will be exempt. A. What is healthcare services? DTC, diagnosis, treatment and care of illness, injury, deformity, abnormality and pregnancy through any recognized system of medicine in India. And it includes services of transportation of patients to and from clinical establishment, but it shall not include hair transplantation, cosmetic surgery, plastic surgery. However, hair transplantation, cosmetic surgery, plastic surgery will be healthcare if it is to restore or reconstruct an anatomy or function of a body which is affected due to congenital defects or development of abnormality. Now, see, hospital rents the room. If hospital is giving any room on rent, however, nothing contained in this entry shall be applicable to a clinical establishment who are giving rooms on rent whose charges is more than 5,000. If hospital is giving any room on rent to you and the charge is more than 5,000, it will be taxable. But if that room is ICU, CCU, ICCU, NICU, it is not taxable. Meaning if it is critical care units, it is not. If I am giving veterinary clinic services, it is tax exempt. But there are two items which you remember over here. Cord blood banks is now taxable. Biomedical waste operators, they are giving services, it is now taxable. Now services given by rehabilitation professions to a clinical establishment or central government, state government, etc., or any college, institutions, etc., rehabilitation professions, people will come and tell you, please don't consume drugs. Their services are exempt. Now, doctors, no. Doctors provide, see, there are two types of doctor. A doctor who is an employee of the hospital and doctor who is a consultant. Now, a doctor who is employee of the hospital, his services will be exempt because services given by employee to employer in the course of employment. The doctor who is a consultant to the hospital, his services also will be exempt because he is giving healthcare services. Now they supply food in the hospital. If they are supplying food to an admitted patient, it is exempt. If they are supplying it to a non-admitted patient, it is taxable. If they supply it to doctors and staff, of course taxable. Ambulance services exempt for everyone. Educational services. Educational services. What is educational services, sir? Say this is an educational institution. It can give services and it can take services. If educational institution is giving services by educational institution to whom, sir? Any services by educational institution to their student, faculty, staff is completely exempt, and services given by educational institution to by way of conduct of entrance examination to any person is exempt. Any services given by educational institution to student, faculty, staff exempt. Conducting examination services given by educational institution to any person is exempt. Now, if you give services to educational institute, then only chote services are exempt. Which services are? Chote services are exempt. C for catering services, including midday meals. H for housekeeping, security and cleaning services. O for online education, general services. T for transportation of student services, and E for services relating to admission to or conduct of examination services. Now please see this transportation, catering and security services will be exempt only to up to 12th standard education institution, and this online general services will not be exempt for schools. What is that? School. It is not applicable for preschool up to higher secondary school and vocational educational training. What do you mean by educational institution? Educational institution means an institution which is giving services by way of preschool education up to higher secondary school, that means up to 12th standard. Education as a part of curriculum for obtaining a qualification which is recognized by law in India for the time in force, and education as a part of approved vocational training courses. Now, you just see the amendment, this thing. There was one amendment which I am forgetting. CBSE is giving services to whom, sir? Affiliated services to the schools and colleges. There are some taxable point they have added. I will just see if I have that material with me. I will discuss that also. So private coaching centers taxable, boarding schools exempt, then food supplied at canteens of educational institution exempt. But if the canteen is run by McDonald's is giving services to college and school, taxable. Then campus placement services given by college to students exempt, college to companies taxable. Transportation of passenger services. What is this transportation of passenger services? Hey, where did it go? Transportation of Yeah, transportation of passenger services. See, a passenger can be transported through railway, roadway, airway, and waterway. If a passenger is getting transported through railway in first class or AC train, then it is always taxable. If it is getting transported in sleeper class or general class, it is exempt. If the passenger is getting transported in metro, monorail, tramway, it is exempt. If the passenger is getting transported in roadways, if it is a contract carriage or a stage carriage, if it is a AC contract carriage or AC stage carriage, it will be taxable. But if it is a non-AC contract carriage or non-AC stage carriage, it will be exempt. But if both contract carriage and stage carriage, whether it is AC or non-AC, if it is used for conducting any tour or tourism purpose, it will be taxable. Now, all the other type of road transport are, if it is Ola, Uber, it will be taxable. If it is auto rickshaw, e-rickshaw, metered cab, it will be exempt. Transportation of passenger. If you are getting transported by air, normally it is taxable, but it will be exempt if you are going to and coming from northeastern states in economy class, and in case of and if you are going to and coming from regional connectivity scheme airports. In case of water, if you are traveling within India, inland waterways are exempt. Inland waterways are also called as national waterways. It is exempt. If you are getting transported in a vessel which is used for public transport purpose, it is exempt. But if it is used for any other purpose, tourism purpose, taxable. Next, what's the transportation of goods related services? Goods can be transported by railway, roadway, airway, vessels, and other modes. If the goods are getting transported by railway, then what will happen, sir? It will normally be taxable. Similarly, if the goods are transported by vessel, it will normally be taxable. But in both vessel and railway, Dr. Namo is exempt. If you transport what goods, sir? Dr. Namo, then exemption is there. What is Dr. Namo? Defense material, relief material, and for newspaper, A for agricultural produce, M for milk, organic manure. If you are transporting these items, then it will be exempt. A, please note. Railway and vessel, normally it is taxable. Exemption will be given only for Dr. Namo. What is Dr. Namo? Defense material, relief material, newspapers, agricultural produce, milk, organic manure. If you are transporting anything through road, normally it is exempt, but it will be taxable in case of GTA and foreign agency. In case of GTA also, Dr. Namo is exempt. If you are transporting anything by air, always taxable. If you are transporting through any other ways, if it is inland waterways, exemption is there. Pipeline, conduct, etc., it is taxable. Now, advocate is giving the services. Advocate is giving the services to whom, sir? It is not senior advocate. First, I'll talk about normal advocate. Okay. Advocate is giving the services. Advocate is giving the services to government. It is exempt. Advocate is giving services to you and me, non-business entity. It is exempt. Advocate is giving services to a business entities whose turnover is less than the limit for taking registration. 10 lakhs, 20 lakhs, 40 lakhs. If it is less than the limit for taking registration, it is exempt. If it is more than the limit for taking registration, normally advocate is giving services to a business entity, taxable and record charge. But if the business entity's turnover is less than the limit for taking registration, exempt. If advocate is giving services to another advocate, normally it is exempt. But if the advocate who is giving services is a senior advocate, then it will be taxable. Then, no, see, it is over. Last service this is. Hey, this looks big, but nothing is there in this. Entertainment related service. I'll tell you one thing. Exemption, no. What are the questions mostly asked in the exemption is anything which is newly added, so see amendment, or limit based. Wherever there is a limit, see, a dancer more than 50,000 it is taxable. Renting of rooms more than 10,000 rupees, something like this we studied. Now, services provided by a recognized sports body to an individual as a player, referee, umpire, coach. Please note, services provided to whom, sir? Recognized sports body. Who is providing services? An individual as a player, referee, umpire, coach, or a team manager for participating in recognized sporting event is exempt. Services given to a recognized sports body by another recognized sports body is also exempt. Please note, services given by selectors, commentators, technical experts, they are all taxable. If the player is giving services to franchisee like CSK, etc., it is taxable. Services by way of performance of folk or classical form of art in music, dance, or theatre, where the consideration is not more than 1.5 lakhs. Can it be exactly 1.5 lakhs? Yes, not more than 1.5 lakhs. If the consideration for the dance, Kathakali, etc., which I am performing, if it is not more than 1.5 lakhs, then it is. What you are laughing? Then it is exempt. If it is more than 1.5 lakh, even 1 rupee more, fully taxable. Admission to museum, national park, wildlife sanctuary, zoo, taxable. Admission to means entry fees. Sorry, it is exempt, not taxable. If you are admission to any museum you are going, national park you are going, I came to zoo today morning, they are all exempt. Admission to means what? Entry fees. They are talking about entry fees. Admission to any monument. You are going to Taj Mahal. Admission to any monument, exempt. Right to admission to any circus, dance, or award function, or any sporting event by recognized sports body or non-recognized sports body, or you are going to any planetarium where the money charged by you is less than 500. If IPL, if they charge less than 500 rupees, it is now. From here, the services which are there, no, not everything is important. Only few items in every service is important. This though we just saw in the morning. Services of renting of residential dwelling for residential use is exempt, except where it is rented to a registered person. Now, other things should I see, sir? No, should not see. So here also, services given by unincorporated body or a non-profit entity. Services given by unincorporated body or a non-profit entity registered under any law for the time in force to its own members. If an unincorporated body is giving services to its own member, it will be exempt in following cases. If the unincorporated body is a trade union, always exempt. If the unincorporated body is giving services which are exempt, then also their services will be exempt. Very important is services given by unincorporated body which is a resident welfare association. Very important. Services by an unincorporated body or a non-profit entity to its own members up to an amount of 7,500 rupees per month per member for sourcing of goods and services from a third person for a common use of its members in a housing society or in a residential complex. So you see apartments, housing society, or in a residential complex, apartment they will collect something called maintenance charges. If the maintenance charges is up to 7,500 per month per member, exemption is there. Even if it is 1 rupees more than that, fully taxable. Now these things, other things are not important. Next, this is important. What is that, sir? Services by way of extending deposits, loans, or advances insofar as the consideration is represented by way of interest or discount. Meaning, if I am giving loan to someone and I am charging interest, that interest which I have received on that no GST is applicable, it is exempt. Inter-se among themselves. Inter-se sale and purchase of foreign currency among banks, among authorized dealers of foreign currency, or among bank and dealers is exempt. Services given by government. Services given by government, please note, wherever you see 243W, 243G, it is always exempt. Services given by government authority by way of function and entrust to a municipality under 243G, Panchayat under 243W. 243G is Panchayat, 243W is municipality, exempt. Services given by government, local authority, unit territory is always exempt, except Department of Post Services, services given by aircraft and vessel, transportation of goods, transportation of passengers, and to a business entity. Services given by government to a business entity whose turnover is up to 10 lakh, 20 lakh, 40 lakh, exemption will be given. Services provided by one government to another government, exempt. Services provided by government to any person where the consideration is less than 5,000 rupees, exempt. Services given by Department of Post is normally taxable under forward charge if that services are with respect to postcard, inland card, post, book post, or ordinary post, where the weight is less than 10 grams, it is exempt. Services provided by government by way of issuing your passport, license, birth certificate, death certificate, exempt. Services provided for tolerating non-performance of contract. Sometimes if you don't perform some contract, if government is tolerating it, it is exempt. This is newly added. Services provided by Indian Railway to individuals by way of sale of platform tickets, facility of retiring rooms, clock services, and battery operated are all exempt. Nowadays these facilities are given in railway station. And services provided one zone of railway to another zone or division of railway is exempt. Now, if you are giving services to government, if that services are related to functions interested in 243G or 240W, it is exempt. If you are giving services by way of pay price shop, ration shops, yeah, then your services will be exempt. If insurance related services, they won't ask. Now, you remember this. First, before GST and giving services to government was exempt, now it is life insurance, business services, they won't ask all these things. Atal Pension Yojana, pension scheme, general insurance services, skill development services. Other exempt services are what, sir? Services by way of transfer of going concern as a whole or independent part thereof, exempt. Supply of services associated with transit cargo to Nepal and Bhutan, exempt. Services, a transit cargo means what, sir? There are landlocked countries. From India border to Nepal border, goods will be transported. That services is exempt. Services, toll charges which you are paying on that GST should not be levied. Services by way of access to roads and bridges on payment of toll charges, exempt. Services by way of granting national permits to goods carriage. You would have seen behind the vehicle they say All India permit, All Karnataka permit, All Tamil Nadu permit. That is what, sir? National permit they are granting. That services is exempt. Transmission and distribution of electricity by electricity transmission and distribution unit. Till your house, electricity is transported by the electricity department over here. Their services are exempt. Services given by government authority by way of water supply, public health, sanitization, solid waste management, slum, improvement upgradation services are exempt. Services given by an independent journalist to the press trust of India or United Nations. Services given by public libraries, free services they give, no, exempt. Even if they charge, it is exempt. Services given by an organizer for organizing business exhibition outside India. Services given by foreign diplomatic mission in India, exempt. Services by way of public conveyance, bathroom facilities on the roadside is there, no GST will be left. That is all about your GST. That is all about your GST. This should come after exam, Bhupesh. Not good, time pass. For me, last year we have already enjoyed it. Anyways, study well. 420 I completed. 1 minute at least you would have waited. 421 I have. Okay. You have very less time. Don't do any time pass in life because this time will not come again. Exams will come again and again. But this time which you have to study will not come again. So better you study at once and clear the examination. So it depends on you how much confidence you have. If you are confident for both the groups, write both the groups. If you are not confident on both the groups, write single groups. Now whatever time you have, now whatever time is, no problem. Now whatever time you have, what you should check properly and see whether you will be able to write both the groups or not. And accordingly, at least last 25 days, of your life. Of your life and intermediate life. Okay. Please study properly. Please take proper care of your health. Eat good food. Eat pizza, burger, and all you should eat. Okay, very good food they are all. Cheese, extra cheese loaded pizza nowadays they are coming. Now please see. What kind of pizza? New pizza it has come up. They are loading first. What is there in life? Now there is, I mean, hey, nothing. See, I will tell you one thing. There is nothing like motivation in life. Seriously, I'll tell you, there is nothing like motivation. For example, in my life, no. I liked a girl. I wanted to meet that girl. Do I need motivation to meet that girl? I like that girl. I will definitely go meet that girl. Every day I used to go. Even if she was not responding, I used to go. Even when she was ignoring me, I used to go. I try until you succeed in your life. CA exam is teaching us. So that no motivation is required for that. But she ignored me. No. If I keep on thinking like that, then that means I will never be able to. So motivation should come within. If I motivate today, till you go home, you will be motivated. After home, you will feel like this. Go as a meal. I know. So if any person is motivating externally, Maja will not come in life. If you get motivated inside only, if I don't clear examination this time, then I mean, you remember my story I told you, because when you are self-motivated, I used to study, I used to sleep only for 2 hours. Why? Because I know if I don't clear my examination, who will take care of my daughter? Who will take care of my wife? Who will take care? There is no one to take care. So I have to study, I have to clear. So that motivation should come from inside. When I knew that, okay, there are people to take care of everyone, I never used to study. I used to study, but still I was not putting that much effort. Everyone has same 24 hours. You say how many days you have in examination? 20 days you have, 25 days we'll say. 25 days, if you take today is 6, 25 days you have for your examination. Now, if you study every day 8 hours, you will be getting how many hours? 25 into 8, 200 hours you will be getting. But if I was in your place, no, I would have not studied for 8 hours. I would have studied for, no, 20 days is there, 25 days is there, I would have studied for 16 hours. But because I don't want to do what average people are doing. Yeah, if I study for 16 hours, everyone has same 24 hours. No? If I study for 16 hours, can I say I will get double the time which normal people are getting? And that you have to do only for 25 days. And after that 10 days, you will have to study and write the examination. After that, go away from your house, write a letter and telling I'm running away from the house and come after 1 month whenever my result is coming. You go, because you should release your tension. Then do whatever you want to do in life. But this 25 days, this 25 days which is there, no, the importance you'll understand only say, I have not told this point to you, no. Now say for example, there is a wooden this, what is this called as wooden log, whatever this is called as, this wooden table type thing is there, no? This wooden log, LOG. There is a wooden log. If I ask you to walk on this wooden log, will you be able to walk? So if I ask someone to walk on this wooden log, it is just a normal size. Can you walk on this? Yes, sir. What if this wooden log is kept on a 24 building? From one building to another building, you have to walk. Will you be able to walk? You will not be able to walk. Why you will not be able to walk? So here, because the height is less, I am not scared of dying. But once it is on 20 floors, I will be scared. Now tell me, what if on the opposite side there is a person who is killing your, say, yes, there is a person who is killing my daughter. Now will I not walk? There is a person who is killing my mother. Will I not walk? There is a person who is, say, if I don't walk, my mother will be killed. Just take it to yourself only. Say, if you don't walk, your mother will be killed. Now will you not walk? Definitely you will walk. You know you will die, but still you will walk. Why? Because before you were thinking about yourself. Now You are thinking about some other person because before, for you, your life was most important. When your actual reason for doing something will change, no, you definitely work hard. Everyone will have that same 24 hours, but someone is clearing and someone is not clearing because they don't have that reason to clear. Unless until that internally that reason will come to you know that I should clear examination, I should pass my examination, you not clear. So that motivation will come internally only. Now tell me, will anyone come and motivate you? Come on, go, your mother will die. Come and motivate. You will have to go. You are running. Why? You don't need motivation for that. If for you this examination is important, you don't need any motivation at all. No one will, even if anyone is motivating, that person is useless, I feel. See why? If someone is motivating, he's just doing some groupism and going ahead. Yeah, he cleared his examination and he knows he has put hard work in life. And he knows that he cleared after putting so much hard work, nothing came easy to him also in his life. Now, why am I motivating you? Study well, study well. I know by telling something, nothing will happen. Do it. Better do it. Just think, there is some person opposite. Only if I clear my examination, I will get married to that person. Should I get married? Kiki? So that motivation should come with it. Okay. So, but anyways, all the very best for your examination. I am sure that definitely you all will clear your examination with very good marks. All the very best. Take care, enjoy. Anyways, you have my number. You can always call me. I will not pick your call. Okay. But you can message me. Definitely, I will reply to your message. After exams, whenever you want to. And for few days, that nail paint, lipstick, and all, you start putting. Yeah, nail paint and all. For few days. After exam, you put nail paint here also. Everywhere nail paint only you put. Okay, anyways, let us meet tomorrow same time. Tomorrow, that regular dialogue is coming, sorry. Let us meet very soon after your examination with sweet box. Sweet box you should bring. Congratulations, I will bring. Okay, all the very best. Bye bye. On this,